Very good morning. You're watching India Market Open, and yes, hopefully it will be a TGIF feel, folks. But I'm not so sure because what's happened overnight in the flip and then flop on Trump tariffs. It's astonishing how things can change every 24 hours when it comes to this.
Yeah, I mean, the interesting piece though is that I was reading an article which said that it will still go to the courts and then the courts decide. So while Trump has a victory in the tariff war for now, apparently there's still a decision to be made.
There's a long one.
Yeah.
This is a 14-day pause.
Yeah.
This goes to the Supreme Court next.
Yeah, and then
Yes,
9th June, the other side has to come and give its version. This has just started.
But the other aspect is that, and the market's looking at it, saying that it's already rolled back to a large extent. And so therefore, everything that is playing out is headlines, yes, but materially, how much does it change?
Or that because the markets don't quite know how materially does it impact, let's just play safe. And that's why I think the pullbacks that happen in the futures, etc., and all of that. Yeah. But yeah, it's... I mean, if yesterday I think was still a much more heavier news day, but today is not bad either.
Yeah, and I know lots to unpack, huge results as well. But okay, here's what we're talking about. Essentially, there is a federal court which has put a stay on the Manhattan court order, which put a pause on Trump tariffs. So we'll break it down for you. So essentially, US markets have closed in the green in regular trade. You saw key indices up through the day because of results and a whole host of factors, 117 points up on the Dow. But the real story really starts after. Futures have remained flat as an appeals court has granted relief on Trump tariffs. So no big movement there as of now, exactly for those reasons. No one knows where it's going to go. A federal court has granted a temporary pause to an earlier order by a Manhattan court. So Trump tariffs now head for a long battle which will go all the way to the Supreme Court. Meanwhile, the 10-year Treasury slipped to 4.43% on that legal fight over tariffs. Even the 30-year has come off from that 5% mark. Trump has had a busy day. He's also met Fed Chief Powell, demanded that interest rates be lowered. After this, the Federal Reserve released a statement saying monetary policy will be determined by, and I quote, careful, objective and non-political analysis. So all of that action, meanwhile, all eyes will be on core data because that's what the Fed will actually look at. So April PCE, that's personal consumption expenditure, expected to be out on Friday. And the large estimation is that there will be a 0.1 increase month on month and a 2.2% increase year on year. That's still above the 2% mark and above the comfort zone of the Federal Reserve. So that's one to mark out for. Let's pull up what Asian markets are doing this morning in the middle of all of this stress. The Nikkei down about 1.5%, Hang Seng 1.5%, because it is a reversal of trade. It is a reversal of trade that we saw yesterday. I want to pull up India implied for you as well before we move ahead. And we're looking at a completely flat day, about 8 points up. But as the legal battle over Trump's tariff begins, the White House slammed the federal court that blocked President Trump's sweeping tariffs. Here's what Press Secretary of the White House, Carolyn Levitt, said.
3 judges of the U.S. Court of International Trade disagreed and brazenly abused their judicial power to usurp the authority of President Trump to stop him from carrying out the mandate that the American people gave him. These judges failed to acknowledge that the President of the United States has core foreign affairs powers and authority given to him by Congress to protect the United States economy and national security. I can share with you that we saw, the President and I both saw the statement that the Fed put out after the meeting. That statement is correct. However, the President did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries. And the President's been very vocal about that, both publicly and now I can reveal privately as well.
Okay, so all of those fights happening. Meanwhile, by the way, if you want to know more about what Trump is doing, 11 p.m. thereabouts India time, Trump is going to have a joint press conference with Elon Musk. I don't know if it's a farewell party of sorts, but that's what he has said, that Elon is moving out from Doge for now, but will keep guiding us, etc., etc. So watch out for that. Meanwhile, Jeff Dennis joins us this morning, independent emerging markets commentator. Jeff, always great to have you on NDTV Profit, and your take early this morning. Now, this reversal of sorts, how big a setback is it to those who are cheering a pause on this tariff war?
The truth is, we just don't know. We just don't know, and I think it's all being consistent with the up and down nature of these tariffs and the legal challenges to them. And we've had so much of this recently. Now, I was pretty sure that when the federal court struck down the tariffs, that President Trump would appeal that, and obviously it's already been overturned, reinstated by an appeals court. And he clearly said as well that if he couldn't get them reinstated, he was going to go to the Supreme Court. So it was always going to be challenged. So I think the important thing is, I'm not a...
Jeff, so therefore, would it be okay to or right to interpret, and good morning to you, that the tendency of large investors is going to be to wait on the sidelines for the next couple of weeks, or, as some people are putting it, and I saw a headline, it's a nothing burger. Why? Because there was already a rolling back of the major tariffs that were announced. Okay, I think we might just have lost Jeff. Jeff, can you? Okay, we've lost Jeff Dennis. But it's interesting, the point that he was making about the fact that he just doesn't know at this point. Yeah. And we'll have to wait for clarity to see when that happens. But for now, let's turn to what happened in the equity markets yesterday. Remember, it was quite a bit of chop and churn. And it was, after all, the monthly expiry. Take a look at the flows data, and you once again had buying by both foreign institutional investors as well as domestic institutional investors, 880 crore or thereabouts on the part of foreign institutional investors. For the 1 month period, they have net bought to the extent of 20,659 crore. That has been bolstered over the course of the last few sessions. But it was a choppy day of trade, make no mistake about it. In fact, let's pull up the intraday chart for the Nifty 50 and you will see that it ended on an upswing, and that last bit of correction is what you see because there's an adjustment in the last few minutes according to VWAP. That's how the close happens. But there was a pretty strong upswing in the benchmark Nifty 50 towards the end of the session. All told, it traded in a 225-point range and then made that late dash. The top 5 contributors were only responsible for about 40 points. That's half of the gains of the Nifty 50. And there were the likes of HDFC Bank and a couple of others as well in that list. There you go. So Reliance Industries, Sun Pharmaceuticals, Infosys. Incidentally, stocks like IndusInd Bank as well as Adani Ports made a very strong comeback towards the end of the session. 2.5% gains from the low point for Adani Ports as well. The broader markets outperformed yet again, and you had the mid-cap index gaining about 0.6%, the small-cap index up about 0.4% or thereabouts. Most sectoral indices ended in the green, but you had the metal and the realty index that led the gains, rising over 1%. IT continued to play that game of tic-tac-toe we've been speaking about over the last 10 to 15 days, gained about 0.8% in trade yesterday. It ended nearly 1% off the high point of the day though. The Nifty Defense continued to chug along with gains of about 0.7%. Market breadth overall remained evenly split yet again for a second day in a row, and the VIX cooled off just a tad bit, now at 16.4.
Yeah, and it was an interesting end to the series, an interesting look forward to the June series as well. So the market-wide rollovers, and that's one of the key points of the trade setup today, are at 92.1% versus 89.6%. And very likely you could say that these were long rollovers because we know that the bias in the end of the series was on the long side. So you've seen some bit of high rollovers for the June series. And remember, by the way, it's a series that is filled with very, very important data points, right? We'll have the GDP release coming in very, very shortly in a few hours with the RBI MPC meet, the US FOMC, monsoon tracking, so much to talk about, right? And I think which is why the June series becomes a really important series, and the fact that the market is going into it slightly long, to my assessment. The only data point that likely counters it is that the 24,800 strike as opposed to the 2,500 strike has become this point of strong tussle. And Sajid has written a lovely piece, by the way, on our website. You should go and read it too. But the open interest at this 24,800 strike is at 9,054 crores. That's some serious option writing at that one particular strike, and you might want to watch out for that as being the key point of contention in a series which is filled with a lot of macro developments, even if no results. And frankly, we could do with a little bit of a break from results, because come July, we'll again hit the earnings season for quarter one.
Not much of a break.
Yeah, so not much of a gap left. It almost seems like we're in the results season for like 45, 45, 45, another 45, right? So that's about 180 days of a year any which ways. And then there are budgets and some other stuff.
And don't worry.
60, sorry. At the end is 60.
2 weeks
Yeah.
before,
Q4.
2 weeks before
yeah.
the results season, the business updates begin.
Yeah,
so
so it's just
you're
crazy.
basically tracking, and I think that's good in terms of giving information to people on what your companies are doing. But it's too
much data to track, really. The one pocket to watch out for today could be wind energy stocks. They could benefit from Suzlon numbers, and we'll talk about it. And also the April installation data. I think that's the key part, that the April installation tailwind was very, very strong. We don't have the May data as yet, obviously. But if indeed that has continued despite the monsoons in the month of May as well, that could help the wind energy and the wind equipment stocks. It's a small bucket of stocks, 3-4 stocks hardly, but fairly liquid, all of them. You might want to watch out for that.
Okay, these are some of the factors, and yes, I would totally agree with you, Neeraj, 100%. I think the GDP figure is going to be important. I know GDP data is sometimes not the most important thing for the street, because it comes with a lag. Who wants to know what's happening, last quarter in the way we track? But the fact that your third largest economy, now, fourth largest, hopefully soon will be third largest. You will hear from the chief economic advisor on how he is seeing the Trump tariff and the trade war panning out, if it's going to be any issue, geopolitical headwinds. So that is going to be important today as a factor to watch. Some of the other things that you have to look out is for monsoon. In fact, I'm going to start with this Jefferies note on their India strategy. They say monsoons are a positive, but near-term hiccups could be seen. India is set for a second consecutive good monsoon, positive for agri GDP growth, rural demand and inflation outlook. Continued low inflation should give more visibility on rate cuts. They believe a further 75 basis point of rate cuts could be seen. Early onset of monsoon will impact the June 2025 quarter, though. This is something we've been telling you consistently on NDTV Profit, that the early monsoon could be a double-edged sword. So sectors like cement could be impacted, capital goods, power, etc. This is what Mahesh Nandurkar of Jefferies is saying. What are the stocks to watch? TVS, Bharti, Vishal, Megamart and Godrej Consumer are preferred by Jefferies as rural demand picks. Move of 1.5 percentage point weight from power to metals in their model portfolio. That's important. They've cut weight on JSW Energy by 1.5% and added Jindal Stainless. So that's the Jefferies view. Let's look at the index. Now, the index, of course, experienced a very volatile session on the monthly expiry day yesterday, but managed to stage a decent recovery in the second half, closing in the green. The rebound was largely supported by positive global cues, particularly a US federal court striking down President Trump's blanket tariff imports. Remember, that has now been reversed, so you could see some pressure there. Mid-cap and small-cap indices have continued their outperformance. Overall, we're seeing consolidation. Look at a range of 25,200 to 24,400 in the last 12 sessions. In the upcoming session, 24,700 to 24,650 zone is critical for the Nifty. A break below could lead to a fall towards 24,450, while sustaining above it could push the index towards the 25,000 mark. For the Bank Nifty, it's held above its 10-day EMA, indicating stability. The RSI, which tells you if you're in oversold or undersold territory, was at 60.13. That's a positive crossover. Resistance at 55,737 and support at 55,213. So those are some of the levels to look at. But Puneet, what is setting up for the new session?
Well, thank you for that. Definitely, it's going to be a very interesting session to say the least. We've also seen the rollover data being a very interesting one, so we'll just get to that in a minute. But essentially for the Nifty futures, of course, it shows a premium of 109 to the spot markets, while the Bank Nifty, again, and we've been speaking about the 55,500 level, currently trading at a premium above that. When you look at the FII data as well as the long short ratio, it's again a very mixed trend, similar to yesterday, where the Nifty options as well as the index options have largely been longs for the FIs, but apart from that, it's largely a short on the Nifty futures as well as the stock futures that the FII are maintaining. When you also look at the index long percentage, if you can move on to the next graphic as well, that's another one. It's slipped to 19%, and a lot will be, of course, because of the expiry. But this number was 28% yesterday, indicating that the shorts have been increasing consistently, and it's fallen from 34% to 28% and now 19%, while the PCR ratio largely remaining at 1.05 as well. When you look at something the news also spoke about, increased in the open interest distribution at 25,000, that level has been consistently being maintained, and the candles actually has gotten bigger. What's interesting is yesterday we also saw 24,800 as a level for the calls being developed, and that range has actually increased from 24,500. Maybe a lot of traders expecting the range to be near 25,000 going forward, largely. And finally, in terms of stocks as well, if I can just highlight in terms of both open interest gainers and losers, we've seen a large long build up on stocks like where there was some value seen at least post quarter 4 earnings. RBL Bank is definitely one of them. We've also seen some long build up on REC, again backed by valuations, while Birla Shop, the numbers were largely weak. Short build up seen in the system yesterday as well. In terms of the open interest losers, finally, there are long unwinding seen in Max Financial, Godrej Consumers, as well as L&T Finance as well, and that's largely in terms of stocks. So overall, again, a very interesting day, because yesterday also we did start in the red and move into the green as well. GIFT Nifty again very flat to say the least, but again a lot of numbers today in terms of Nifty as well, like Bajaj Auto might react on that aspect.
In fact, let me start with Bajaj Auto. First on my watch list this morning, Puneet, and I know you're going to come back with more detailed analysis on it, but I'll quickly go through it. At first glance, definitely a thumbs up and some very positive notes out there on Bajaj Auto. Domestic sales is not what's driving this quarter, it's more exports, but overall consolidated revenues are up 5.8% to 12,147. This is above estimates. EBITDA was up 6% to 2,450 crores versus 2,306 crores, also a tad above estimates. Margins are at 20.2% versus 20.1%, so flat, but better than estimates. Margin preservation and improvement is good for a company this size. Net profits up 6% to 2,049 crores, also above estimates. Here's what Jefferies is saying on Bajaj Auto. They've maintained a hold and hiked the target price to 8,000 rupees from 7,750. Current market price is higher, so keep that as an indicator. But what they're saying is more important. They're saying it's a decent fourth quarter led by a better average selling price. That ASP figure is what all brokerages are liking this morning for Bajaj Auto. They remain positive on the growth outlook for both domestic and exports. As far as two-wheelers are concerned, they like Bajaj's rising EV franchise, but are concerned about the market share dip in domestic motorcycles and decline in volume share in India's two-wheeler exports. They expect a 13% EPS CAGR, that means increase in earnings per share in FY25 to 28 estimated, but 26 times FY26 estimate PE is not cheap, and this is important. On valuations, Bajaj Auto is not a cheap stock by any stretch of the imagination. CLSA is maintaining an outperform. They've hiked their target price to 10,149 from 9,473. They say in line results. Plans to increase share in the 125cc segment is important. That's what the management has said on their conference call today. We'll hear from the management today on NDTV Profit as well. So just a reminder there. They're expecting domestic two-wheeler growth of 5 to 6% and exports at 15 to 20% in FY26. And they've raised their FY27 earning per share estimate, led by continued cost reduction for e-two-wheelers. So e-two-wheelers could be a driver. Just quickly going to tell you what Citi is saying. So their target price for Citi has also been increased 8890, and they are saying that the numbers were ahead of estimates. The focus on market share is important in terms of what Citi is saying. So overall, good set of numbers and well received by the brokerages at least. Let's see what the street does. Senco Gold is the other stock on my radar. Thumbs up as well. Revenue up 21% to 1,378 crores. EBITDA up 45% to 127 crores. Margins have also improved from 7.7% to 9.2%. Net profit is up 93.8% to 62 crores. So optically, these numbers look pretty good. Not so much for a Mazagon Docks. Now, again, this is a space which has been in focus because of Operation Sindoor. Defense stocks have been on a roar, but we have to look at the Q4 as is, and the Q4 is not a pretty sight. Net profit down 51% at 325 crores. So this is a thumbs down basis, the numbers. They will be paying a final dividend of 2.7 rupees per share. Revenues were up 2.3% at 3174 crores, but EBITDA down 81%. Margins, I really need to understand what's happened to the margins. How have they collapsed from 17.3% to 3.2%? So Mazagon Docks is a tough one this morning. I don't know what you guys think, because the overview on defense remains steady, and this is a lumpy business, right? Your revenues are not going to come in steadily quarter on quarter.
Yeah, they call it S-shaped revenue recognition, right? It's a similar situation for Garden Reach as well.
One of the other companies had a terrible margin downtake. Was it Garden Reach or Cochin?
No, not Garden Reach. Garden Reach
so
was
must be Cochin then.
Yeah.
One of them
the
had a
shipbuilders have
terrible
that.
margin performance yet again. Just the results came 3-4 days ago, if I'm not wrong.
Because of the scale of projects that they engage in the products.
But I
that
think
they
in
make.
their case, the subcontracting costs apparently went up dramatically. Now, whether I don't know if it was a recognition of a lot of costs and the revenues get delayed or how. But yeah, you're right, Tamanna. A bit of a
tough one.
Tough one to decipher, simply because the scale of margin drop.
Yeah, it's
large.
a collapse.
And also, you don't have segmental revenue. You don't have details of.
You know what?
the
We'd
products
love
that
to
are made.
invite them, Mazagon Docks. We'd love to invite you. Come on NDTV Profit, answer some of these questions. Investors would definitely want to know. We'd want to know what's going on with your numbers, because solid company, but we need to understand what happened in Q4.
Absolutely. Speaking of numbers that aren't really up to scratch, Landmark Cars and the automotive space, we are speaking about certain areas of significant pain. Landmark Cars had a pretty decent top line growth of 26%, but the discounting that you've been seeing in the space is playing out in the numbers as well. The EBITDA up only about 2%, and there's a margin contraction coming in at 5% versus 6.2%. The net profit is down as much as 86%, and there is a higher proportion of total expenses in the current quarter. So bear in mind that this is a dealership of vehicles, and there is experience of significant discounting in the space, so that's something to watch out for as well. K&R Constructions, not the best set of numbers yet again. The revenue is down about 31% at 975 crore rupees. The EBITDA as well down on account of a significant contraction in the margins, coming in at 22.7% compared with 26.5%, as a result of which the net profit is down about 61%, coming in at 139 crore rupees as well. The last stock on the list is actually something that benefits from the consumption play that everyone's talking about. That's hospitality and Lemon Tree Hotels. It has actually posted a very solid set of numbers. Revenue uptick of as much as 16% on a year-on-year basis, 379 crore rupees. But look at the other metrics, the operational metrics. The EBITDA is up as much as 19%. The margins coming in at 53.9%. That's the highest in as many as 2 years. The question is whether it heads even higher from this point. The net profit increasing as a result by as much as 26.4%, standing at 84.6 crore rupees during the quarter. I wouldn't be surprised if this is one of the stocks to watch in trade today on the upside.
Yeah, I mean, certainly something to watch out for sure. I've got two good results and a good announcement for two companies maybe, but definitely for one, DB Realty. It's a much bigger announcement for DB Realty than Prestige maybe, because Prestige has got this fabulous array of projects going. I think CLSA upgrade today, but for DB Realty or Valor Estate, this is a big one. They've entered in the agreement with Prestige to develop projects, jointly develop projects. Apparently, the gross development value of these projects would be about 4,500 crore rupees, to be shared equally between both. So I think this should help Valor Estate today. Keep an eye out for that. A lot of talk about a deal brewing in Valor Estate as well, so keep that in mind. I would reckon this stock could see maybe some positivity because of this announcement. Suzlon, the numbers look very good. Now, I'll tell you why. So one, revenues were up 73% at 3,773 crores. EBITDA, which is the clean number, right? The PAT has one-offs, but the EBITDA is clean, and the EBITDA is up 88% at 646 versus 343 crores. Operating profit margins up 138 basis points at 17 versus 15.74%. Yes, the PAT is up 365%, but that's optical. I mean, yes, it is a very strong number, but it is also high because there was a deferred tax credit of 600 crores in the current quarter. Strip that off, yet it is a good PAT, but I'm just saying look at the EBITDA because that's cleaner. 88% uptick in EBITDA, and that is looking very strong. They have guided to about 60% growth for FY26 as well. Investec on its part believes that Suzlon will register a revenue and PAT CAGR of 49% and 26% over FY25 to 27. Now, reason viewers that the PAT CAGR is, or the profit after tax compounded annual growth rate is lower, is because Suzlon will now have a higher tax rate. So on the EPS front, that's a dampener, but the revenue growth numbers look very, very strong from brokerage estimates or from the perspective of what Suzlon has guided for. So pretty good going. And judging, like I said, by the way wind installations happen in the month of April, over 1 gigawatts of wind installations happen in the month of April alone. And the country is targeting about 5 gigawatts for the year at large. So I would suspect that Q1 could also be pretty strong. So let's wait and watch. I would suspect that the street should be pleased with this, but for the fact that the pickle in the fly in the ointment is the higher tax rate for Suzlon. So bear that in mind. The third one is ICRA, and viewers, this follows what CARE Ratings did, and we know how CARE reacted after the numbers. I'm not saying ICRA will do the same, but look at the numbers. Revenues up 10% steady state, but the margins expanded, as a result of which the bottom line up 19%. Now, nothing compared to Suzlon, but good set of numbers. You never know, ICRA could have a good reaction as well. So top three from my end, but guys, just so many stocks and so many. I just thought, guys, we were talking yesterday about how the good numbers outstrip the bad numbers. Overnight, the market decided, hey, let's give you some bad numbers as well. So a clutch of bad numbers today.
It's not over since it's over, but yeah, Suzlon I think is going to reward and the number of retail investors in Suzlon. Yeah. It's a high retail participation stock, so chalo, enough retail investors will be happy today. So that's good. All right, we have Kaustubh Jabal joining us this morning. He's Senior Vice President at Moody's Ratings. Tracks the auto space as well, and they've put out a report, an in-depth report actually, on the automotive space in India, saying local and foreign car makers vie for share of India's market despite slow electrification. So very interesting report on what the EV space is. Kaustubh, good morning, and thank you for speaking with us here at NDTV Profit. Great to have you on. Before we come to the report, and just because it's top of mind, any view on Bajaj Auto and the numbers that have come through?
Well, I'm not the lead analyst on Bajaj Auto. We don't have a rating on Bajaj Auto, but I can talk more broadly about the auto industry and our view through 2030, if that's all right.
Go ahead.
Well, we believe that India is a bright spot for car makers globally. India is the most populated country on planet Earth, as we all know. India is home to almost a fifth of the world's population. The country's population will continue to grow for the next few decades until it starts to plateau. And the car penetration in India is quite low, right? The number of cars per 1,000 people at less than 45 suggests that there is a roadmap for growth. Potentially, the car industry we forecast will grow at a CAGR of around 3.5% through the end of the decade. India's economic affordability is improving. Among emerging markets, India has a large working population. Its age dependency ratio, the proportion of dependents to the working age population, is also declining. So that's good. And today's youth from India also has an increasing propensity to spend. Rising income levels are supported by this propensity to borrow and spend. Over the last 12 odd years, we've seen vehicle loans have grown at a much faster pace than overall bank credit. So these demographic dividends, we believe, continue to weigh in terms of the India's car industry's prospects through the end of the decade.
How do you see this? Hi, Kaustubh, good morning. How do you see the mix of ICE, which is internal combustion engine, versus EV and hybrids, really, which have not gotten a large share for various reasons, tax being one of them. But how do you see that mix going? Do you anticipate that it will continue to be dominated by ICE for the foreseeable future?
Oh, indeed. I mean, electrification in India's car industry is in early stages. It's quite nascent. Penetration rates are quite low at below 2%. And if you compare this with the target, the government's target of EV penetration rates of 30%, there's a lot of ground to cover. EV adoption rates in India are low because of limited charging infrastructure, the higher upfront costs, and some bit of consumer hesitancy as well. I think China's success in building their robust infrastructure in terms of nationwide charging, localized production, that offers a good amount of blueprint for India to follow, especially if we want to reduce our reliance on oil imports. We forecast that battery electric vehicle sales, so pure BEV sales, will increase from the 2% penetration I spoke of before to around 12 to 15% by the end of the decade. So to your point, I mean, still by the end of the decade, large amount of cars are still going to be ICE, right? Internal combustion engine, vehicles. And which is why this remains an attractive market for global OEMs, global car makers who are selling electric vehicles in regulated markets, who will continue to sell in those markets, but they need to find or they need to sell their ICE vehicles in a market where there still is demand. So I think India remains attractive proposition from that standpoint as well.
Kaustubh, there was good morning. It's still good morning to you as well. Yes, so good morning to you. And just wondering the rumblings that BYD, for example, might be causing world over. India doesn't have such a large BYD presence, but if indeed in the non-conflict areas, which is the UAE or Singapore or wherever else where BYD is present, and if they're cutting prices, expanding sales, etc., does it put incremental pressure on other car companies to be very conscious on pricing or maybe take it lower? Does it come at the cost of margins? Does it therefore impact the ratings because it might impact profitability? How do you think about that piece?
Well, I mean, globally, when you look at the car industry, electric vehicles in terms of profitability are not that profitable, right? Because of the upfront cost, because the elevated cost, especially because of batteries. And until such time that the cost of batteries comes down, they need to continue to sell ICE vehicles in markets because those are the ones that are more profitable. So as battery prices come down, and they have indeed come down over the last couple of years, right? As battery prices come down, I believe the transition from ICE to EV from a consumer standpoint would also be easy. So, and in that vein, I think the investments that are happening in India in terms of laying out that infrastructure, the charging infrastructure, that will come in handy. So basically, that transition from ICE to EVs, we are talking about 12 to 15% penetration by the end of the decade. I mean, if you look at China, the pace at which it's grown in terms of electrification, it was all with the subsidies, of course, that were offered to the wider public, but also with the charging infrastructure. So if we put that in place, and if the battery prices come down, then obviously that's a transition that would be welcome.
Yeah, absolutely. You said it. But all things considered, Kaustubh, since you've studied the space, I'm just curious, among the Indian manufacturers, the OEMs, who according to you stands to grow much faster than the rest of the pack, not just because of its products, but because it has an increasing footprint globally? You have Indian companies that are looking to export also.
Mm-hmm. Well, I mean, in terms of the Indian car market, it's a crowded space. We have Indian as well as international car makers. The Indian car makers have increased their market share over the last decade or the Japanese have lost market share, but they've lost market share in a growing market. It's a very competitive space in India, and some of these foreign car makers are also using or also manufacturing in India and using India as the manufacturing base. Now, from a car maker standpoint, I mean, product development remains on top of agenda, right? I mean, so the Indian car makers obviously, have to focus on the Indian market and have to develop products for the Indian market, whereas the foreign OEMs that are operating in India can use the product slate that they have for the for the global markets and, tailor those products for the Indian market and sell those. In terms of preparedness, if you ask, I think every OEM that is operating in regulated markets, is at some stage of electrification in terms of the development. But the proof lies in the pudding, right? I mean, electric vehicles are still not that profitable. So, for instance, the large automakers, say Toyota, for instance, who sell EVs, but in terms of the proportion of EVs to their total car sales, it's still low. But still, on an overall profitability perspective, they remain quite high.
Just a word, Kaustubh, on the competition heating up in the two-wheeler space. In your assessment, is electrification going to be a larger driver in that segment compared to passenger vehicles? Because you've spoken about the issues with passenger vehicles, infrastructure, etc. How do you see key players stack up in the two-wheeler space?
Well, while this particular report that we published focuses on four-wheelers, I mean, the pace of electrification for two-wheelers is far more accelerated, right? I mean, the cost of a two-wheeler is also, significantly lower. The amount of investments, are lower, as well as the charging infrastructure is lower. So the government's targets on electrification for the two-wheeler industry are also far more accelerated, and companies are progressing on that front. Companies are also partnering or investing in in startups to get ahead in terms of getting the right technology.
Kaustubh, thanks so much for joining us this morning and for that perspective on the automotive sector. Pleasure having you.
Thank you for the opportunity. Thank you.
Let's talk about an interesting development. Of course, you've been looking at global yields spiking, and one of the geographies or economies where you've seen spiking yields is in our neighborhood, Japan. There are implications for global flows, and Neeraj is here to tell you about what the implications are for an unwinding of the carry trade in Japan. Neeraj?
Well, yen carry trade and the unwinding of it has been a bugbear for world markets and Indian markets as well for years now. Now, are we on the throes of revisiting some of those issues again? That's the question that I ask. Now, why am I doing this? Because the Japanese debt to GDP ratio is now at 250%. It's the double of what US ratio is. Remember, US was stripped of its marquee rating by Moody's just a while back. Japan has issues out there too. And as a result of that, the Japanese 30-year yields have exceeded China yields for 6 months running. And why is this important? Because Chinese yields have traditionally been higher. Now, Japanese yields have been higher than the Chinese yields for 6 months running. And remember, large portion of this Japanese debt is owned by the BOJ. Now, what is happening now, which is a departure from the past, that is what is important. So, BOJ used to engage in what is called as YCC or yield curve control for the longest time, which is the policy of buying bonds to keep yields low. BOJ has now departed from that. It's scaling back bond purchases. Unfortunately, private market investors are not able to fill up this vacuum. The demand vacuum for Japanese bonds now exists because private market investors are not coming in, as a result of which bond prices are lower and yields are higher. What this does is effectively that if the yields are higher, it could potentially trigger repatriation by Japanese investors, likely leading to unwinding of carry trades. Effectively, what happens, Japanese money floods the world markets because they do not get enough returns, or in the past, right, enough returns on their own domestic turf. Now, if the yields are higher in Japanese bonds, and if they are getting a higher return without the currency risk, at the margin, some of that money is repatriated back into Japan. This is low-cost Japanese money which has flooded the world markets, coming back to Japan or being pulled back by investors into Japan. That could create a serious headache for FI outflows from other nations and flows back into Japan. So it is something that we saw a whiff of sometime in 2024, and it was a tumultuous period for world markets, including US markets. Could something like that happen again if these yields stay higher for longer? You just got to keep an eye out for that. Something certainly watch out for.
All right, and very interesting there to see how that pans out and what the implications are for global markets. We've got more on the other side to talk about, and particularly stocks that you should watch out for ahead of the start of trade today. Do stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching India Market Open. As it stands right now, we're looking at the possibility of a marginal uptick at the start today. But you know how it's been over the past couple of days. There have been indications of a marginal downtick, and we've ended a very different place to where we started for the benchmark Nifty 50. Let's in fact talk about some of the levels that you should watch out for after that expiry session. Kush Bora joining us in the studio, and we've also got Chakri Lokpriya, who is joining us remotely. Chakri, good morning to you, and Kush, very good morning to you as well. Happy Friday. Are you in a happy mood this Friday?
I am, but I think we have to start the conversation with the question, "Ye sala kab nam de?"
I'm sorry, what?
Really? Come on, guys. This is what the Bangalore guys have been talking about for the last 18 years. RCB, this is
an IPL fan.
This is almost a prayer that they have for the last 18 years. And you know what it ties in, right? 18th year, Virat Kohli, number 18, all of that, and they're in the finals already. Right. So that has to be the question. And can Rajat Patidar do what Kohli, Faf du Plessis and Daniel Vittorius of the world couldn't? So I think that's the big question. Surprised. Any picks? Any favorites?
Not an RCB fan per se, or not. I haven't caught up too much on IPL.
On IPL at all, is it?
But yeah, I would want. Okay, if you're asking me frankly, I would want Punjab Kings to win. They haven't done it for such a long time, and such a good team.
I always bet on the underdog.
So then RCB and Punjab Kings, right? Both of them. But what a match yesterday. Now, the reason I bring that up is because could it be leadership issues? You know, as I said, can a Rajat Patidar do what Kohli couldn't? What we are seeing in the market is very similar. Bank Nifty is not performing. We're seeing a seesaw rally on the IT. Which is that sector or the subsector that is actually going to take Nifty past that line in the sand 25,000 mark? Now we've seen defense participate this week, or perhaps in the last month or so. We've seen metals, auto, perhaps even IT to some degree do their bit, but that's just not enough. Between the financials and the IT, they have 49% weight on the indices on the Nifty, right? So if they don't participate or if they seesaw, I think a sustainable move above 25,000 is going to be a bit iffy. That said, right now the setup looks like we could be consolidating but with a positive bias. Now 20 DMA on the Nifty around the 24,600 mark has been protected. PCR is close to 0.8, which means any further slip about 100-250 points or thereabouts could actually bring it into oversold territories and hence a rebound. Also, as a start of the new season, FIIs are long only by 20%, and the reason I say only is because at one point in time in May, they were 50% long. So some shorts in the system is a good thing, because as long as there is some downtick, short covering could support the markets. So all in all, I think Nifty is in a consolidative phase with a positive bias. Some of the moves will depend on how the GDP number comes out. But if I were to get any kind of dip towards 24,650, 700, I would be a buyer in this market. Concern remains on the Bank Nifty. However, there too we are seeing the 20-day moving average respected for the most part of the last week or so. 55,555, a mild resistance, a bigger one being the 56,000 mark, still acting up. Constituents, HDFC, ICICI and SBI, they don't have a extremely encouraging setup, and that is why there could be a slight concern. But yes, the bias remains positive here as well. Also coupled with the fact that the mid and the small cap segment hasn't really seen any kind of dip. In fact, they've been gaining over the last week or so. So the texture remains broadly positive. A big move, as I said, is more of a leadership issue. And let's see whether it's the IT or the banks or maybe Reliance doing its thing and pushing Nifty past 25,000.
I'm just wondering, and before I come to your stocks, Kush, over the last couple of days, we got two opposing views. And these are from top brokerages. One saying that 25,000 is where we're going to end this calendar year. 25,000 on the Nifty. And the other view saying that this calendar year, we're definitely going to hit the lifetime high of the Nifty once again. Wondering where you're veering to, and I know we talk about the day to day, but in terms of by December, what is the mood that we can see?
Why December? Let's talk Diwali. In fact, I think it was a off-air conversation that I was having with Neeraj, somewhere in early this week, which is Diwali is where I see Nifty hitting 26,000 lifetime highs or thereabouts. So squarely in the camp that Nifty and markets are in for that next leg of up move, next leg of bull run from here on as well. I don't track fundamentals so closely, but if you listen to the results, while they've been mixed, and I've heard a lot of experts on the channel say that they've been mixed, I still take that as a green shoot. And with all the other sectors participating, and to reiterate the fact that the SMID category, SMID segment also participating, I don't think there is a worry sign in the market. So it might not be a V-shaped kind of a move from here, a vertical move from here, but we don't want that because higher they go, faster they go, the harder they fall, right? So you want it to be a gradual move, but I squarely fall in the camp that by Diwali or thereabouts, we could see 26,000 or higher levels on the Nifty.
Wow, by Diwali or thereabouts 26,000, we're going to get you back on Diwali to see if that's right or not. But let's talk about some stock picks for this morning.
Sure, both of them as you would expect on the long side. The first one is MCX, brief consolidation but a good move yesterday on the back of fairly decent volumes. Nothing big, but at least touching the averages or just crossing those levels. So on the upside for MCX, you've got targets of 67.70, 69.50 and 63.50 is your stop loss. Now, Realty, as I already mentioned, was one of the top gaining sectors for the last month. While I remain a little skeptical on the medium-term move, the very clear direction is upwards for the likes of DLF as well, something like a Prestige Estate. We've discussed Macrotech as one of our calls previously. This time it's Brigade Enterprises, and for a slightly different reason. It's had 8 to 10 sessions of falls and lower high formations. Yesterday it broke out of that on the back of good volume, so I think there is a catch-up trade to be played on Brigade Enterprises. So from a near-term perspective, 1150, 1190 are your targets, 1070 is where you place that stop loss.
Okay. All right. Should we very quickly get a view from Chakri as to where he sees things going before we move forward? Chakri, hi, very good morning to you. And you've seen pretty much the entire earnings season, just a couple more trickling through. What have you made of it? What stands out as a big winner?
Good morning. I kind of agree with Kush in terms of the market is trending higher for the simple reason that fundamentally, while earnings have been mixed, you still look at an index like BSE 500 or NSE 500 odd companies. The earnings growth for them for the next 12 months still stands at about north of 16-18% median growth. Which means that companies have not really cut numbers significantly. Now, if this tariff and all the short-term confusion does indeed pan out to India's benefit, at least there is no negative impact, then numbers are likely to move higher. That is revenue and EPS estimates. So I think, but that's a wait and watch. And Trump can do any number of things between now and then. So that's a space to watch.
Okay. Big story that we're breaking this morning on NDTV Profit. Facing mounting financial stress, the Finance Ministry has now asked MTNL to take concrete steps to address its growing debt burden. There's going to be no fresh capital infusion on the table, so the focus is now shifted to asset monetization as the primary route to manage liabilities. Shrimi Chaudhary joining us with exclusive details there.
With rising bank defaults and continued financial strain, MTNL has been asked to outline a clear roadmap of its asset monetization plan in a time-bound manner. The move comes after DoT recent proposal of capital infusion into this debt-laden telecom, which was declined by Finance Ministry. Finance Ministry is apparently not happy with the roadmap which was presented by MTNL on the asset monetization plan. Now, under this monetization exercise, which is progressing well, is what sources telling us, identified and have been earmarked around 50 such assets across the country, which also include BSNL surplus non-core asset, and the valuation of those is already underway. In fact, some of the valuers have been impaneled, and a blueprint of those valuation will be soon on the government table, which will decide further course of action. In fact, National Land Monetization Corporation, which is a nodal authority, is assisting MTNL throughout the process. They are in talks and discussion with state and local authorities, understanding their issues, and they're helping in clearance of all sort of regulatory approval which is required to monetize potential asset. Now, if you remember, the total, dues towards lender is about 8,500 crore. The total liability, if you talk about, is around 33,000 crore, and which also goes towards and include 24,000 odd crore of government bond. Now, DoT already loaned around 1,100 crore to service their interest on those government bonds. Now, the whole idea of this monetization exercise, particularly in state-run enterprises, which has been facing financial strain, to adopt proactive measure in order to manage the financial health better. In MTNL case, particularly, the government is quite firm to not let lenders, take any haircut, and in fact, any kind of fiscal support is completely ruled out, at least for now.
Okay, so two important things over here that Shrimi is reporting this morning. One is fiscal support from the government is ruled out for now for MTNL. They fend for themselves, and asset monetization is the best way to go. Chakri, how do you look at MTNL listed stock? Fundamentally, of course, nothing happening with its market share. I mean, it's hanging on for dear life because it's a public-run company. It's a government-run company. But asset monetization will be a fillip for investors who are in it.
Absolutely. The company has tons of lands available, so that if they really actually can monetize it, the company will be in a financially strong. But the problem with these government entities is asset monetization is that it takes ages for them to arrive at a sale. Air India was the case in point in the past. So I think that, therefore, you should take it with a pinch of salt that how fast that they can actually sell down.
Take it with a pinch of salt as far as MTNL is concerned. That stock has actually been up 30% in the last 12 months. I don't know if you have a view on the charts at all, Kush.
I do, and it's an avoid. Very clearly. Hasn't done anything for, as you rightly said, for investors for a while now. If you want to pick anything from this sector, why not go with the likes of Bharti? So,
but Kush, the point being that you're not buying an MTNL for its telecom prowess.
Sure. Yeah.
You're now buying it because it's a troubled asset which is likely to
turn around,
do asset sales.
Oh, yeah.
And therefore, maybe there could be dividend if from special income, if not actual business operations. So, does this? So, I'm not telling you to change your view. All I'm saying is that because it's not a telecom asset, but a special asset which has gained 15%, is there a trading move here, or you would avoid that also?
So, Neeraj, my reasoning from from that perspective becomes more of strategic or tactical rather, which is why would I enter an asset which is, or rather a stock which has not really performed all those reasons given, it's not really translated into returns for me.
Any strength on the charts at all, or is it an avoid on the charts?
No, look, if I were to look for positives, then yes, it's above the 20-day
please don't,
moving
please
average, things like that. But not really, not really.
I just want to tell, lest our viewers think we are trying to push cushion to giving a buy call. We are not.
Not at all. If you're stuck, do you have a way out? Is more like what we are seeing, if anything else. Okay, that's the MTNL story. But big focus this morning also, and this is an interesting day, viewers, because you have so many brokerage notes out on various aspects, and we'll go through all of them and all the key ones on your screen also. But I want to focus on what Jefferies is saying about the Adani Group stock. 6 of 7 listed companies have ended in the green in an otherwise muted market. Jefferies has now come up with a note on the conglomerate. They believe earnings are going to grow at a compounded annual growth of 22% through FY27. My colleague Swami Sarkar is joining with more details.
Les, Jefferies has come out with this positive note on the entire Adani Group of companies. They are saying that FY25 was a year of consolidation for the Adani Group, where the EBITDA growth that we had seen compared to last year was around 14% as against the 5-year CAGR of 25%. But they are also saying that the 7 listed Adani Group companies have posted an EBITDA of close to 74,000 crore rupees, and 82% of this total EBITDA has come in from the core infra portfolio. Now, if you look at the 7 listed Adani Group companies, only Ambuja has reported a decline in its EBITDA of around 22%, but that is largely because of weak pricing that we had seen in the industry and because of the M&A related integration cost. Adani Enterprise on that front has reported a 25% growth in its EBITDA, which was largely led by the new businesses and the incubating businesses, that is the airport and the Adani New Industries Limited. Adani Green posted an EBITDA growth of 22% on a YOY basis, largely driven on the back of capacity addition and improved utilization that we had seen in FY25. For Adani Ports, we had seen, for Adani Energy, we had seen a growth of around 22%, and this was largely driven by capacity addition. For Adani Ports, the EBITDA growth stood at around 16% on a YOY basis on the back of higher realization in the port business, in the logistic business, and also because of margin expansion that we had seen in FY25. For Adani Power, the growth was around 12% on the back of higher merchant sales and acquisitions that the company had done. For Adani Total Gas, again, the growth was low at around 3%, but this was because of higher gas costs. But if you look at the volume growth for Adani Total in FY25, it stood at around 15%, which is the highest that we have seen in the industry. Now, if you look at the leverage, now yes, the leverage of the group has increased, but that is largely again because of the accelerated capital expenditure that the group has been doing towards the future growth plans of the company. Now, if you look at the net debt of the group, that has increased to around 2.7 lakh crore rupees as against 2.2 lakh crore previous year. The leverage ratio, that is net debt to EBITDA, has increased to 3.7 times from 3.3 times, but again, it is much lower compared to what it was a couple of years back, which stood at around 5 times. And again, this capital expenditure has been done towards the future growth of the company, and most of this has happened in companies like Adani Enterprises and Adani Green, and this was already all capital expenditure led debt increase that we have seen in the group. Now, what is the way ahead for the Adani Group? Now, for the entire group, Jefferies is expecting the EBITDA to grow at a CAGR of around 22% over FY25 to FY27. For Adani Enterprises specifically, new projects like the Navi Mumbai Airport, Ganga Expressway, and this copper smelter commissioning will aid the EBITDA growth. For Ambuja, it will be the organic capacity addition that one needs to watch out for. They're aiming at around 19 MTPA of capacity addition. For Adani Ports, they're expecting the marine business to grow nearly 3 times. The EBITDA of the marine business will grow nearly 3 times over FY25 to FY27. For Adani Green, they are focusing on 50 megawatt of capacity target that they have by 2030. So that is one thing that we need to watch out for. For Adani Energy, it is the growth in the smart meter which will lead the growth. In fact, the smart meter segment could grow at 30% plus EBITDA CAGR over FY25 to FY27. And lastly, when it comes to Adani Power, they have a guidance of raising the capacity by around 1.7 times to around 30.7 gigawatt by 2030, and this guidance of the company remains intact. So that is the key thing to watch out for when it comes to Adani Power.
All right, so the entire group, there's something or the other to talk about. We'll speak about some of these stocks on the other side of this very quick break. Do stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Back with India Market Open right here on NDTV Profit. The pre-open rates about to kick in about 30 seconds. We are in conversation with Chakri Lokpriya as well as Kush Bora and a lot of stocks and some very interesting numbers that we have to address. So Chakri, I want to come to you. One of the pockets which has largely shown some very good numbers, but one or two surprises is defense. Now what do you make of a Mazagon Dock wherein the margins have just collapsed? It followed one more company, I think Cochin Shipyard if I'm not wrong, or maybe some other wherein the margins again came off. I may be wrong, it may not be Cochin. So let's stick to Mazagon. What I'm asking is, what explains this very large margin collapse and what are the investing implications for something like that?
Defense in general has done very well in terms fundamentally, not just the stock prices, and in terms of the new order flow, the revenue, and translating into EPS growth. In the case of Mazagon Dock, while I have the details I have to evaluate, but it could well be, but these are all very large orders. So if you get an order which is slightly delayed, it can have a dramatic mismatch in terms of how the margins pan out. So maybe that is one of the cases in the case of Mazagon Dock, but we'll have to wait and watch. Otherwise, the company is extremely well positioned.
Yeah, okay. So, this, and we don't know whether it will start off 10% or no, but certainly seems like the street is giving a thumbs down. And I stand corrected, of course. Like I said, it may not be Cochin Shipyard. I think it was actually BD or Bharat Dynamics. Tamanna just corrected here. But that one was the other one which had this very sharp drop in margins and thereby this drop in in the stock price as well. So keep that at the back of your mind. The other one, Chakri Lokpriya, is Suzlon. Very strong set of numbers actually, but they've guided to a tax rate being higher in the subsequent years, which may impact its profitability. However, as things stand, Suzlon looks like it will be the stock of the day. Now, Chakri, come in and tell us whether it's 16%, 10%, 5%, I don't know. But are you constructive on these wind installation companies?
Absolutely, yes. And Suzlon numbers were excellent. And, it indicates revenue up 75%. And it kind of indicates that, of course, it is a market leader in the space, and the numbers have come in. The one thing which has become very clear after Trump is that the various kinds of subsidies given to green are going away worldwide. But so India is still providing some amount of, so which means all the export-related ones, those subsidies will go away, and tax rates will move higher. So that aside, underlying demand is very strong. So I think Suzlon we're very constructive on.
I want to pull up Bajaj Auto for a second. Key numbers that we've been tracking since this morning, and let's see what the first cut off the street reaction has been. Bajaj Auto is pretty much flat. Remember, a good set of numbers, but valuations has been in question. Let's see how Bajaj Auto pans out. We'll get Chakri's view on it as well. Ola Electric, very, very poor set of numbers. Losses have widened, EBITDA is widened, pain points overall. Mazagon Dock is what we've been speaking about, was on my watch list as a thumbs down, 10% down on the stock. Amara Raja, another set of numbers which were very, very weak, and the street is responding accordingly. SJVN, remember all popular retail stocks, and you've seen some pain point there. What's working on the other side? Suzlon firing on great set of numbers. Time that investors have been waiting for has come as far as Suzlon is concerned. Sobha also details a decent set of numbers. I want to look at Prestige and what's happening with Prestige this morning. Engineers India also, EIL also good set of numbers. Prestige is pretty much flat despite that CLSA note. EIL is doing fine. Work hard on the back of numbers is also doing fine. So some movers over there. Chakri, any views on Bajaj Auto?
The numbers were good. It looks like it's getting back its leadership in that the crucial 125cc segment. And on the luxurious end of the business, it's the Triumph business. Are also lots of good things are happening. Now its breadth across the EV platforms is clearly out there. So with these three things in place, I think the company is set to grow volumes fairly decently, better than the industry averages. And I think the stock has also corrected in the past. So I think fundamentally Bajaj Auto is looking good.
Bajaj Auto is looking good. Valuations might be something to consider. All right. Rahul Arora joining us this morning. He's CEO at Nirmal Bang Institutional Equities. Rahul, very good morning to you. We're pretty much at the end of results season. What's the verdict?
Morning, Tamanna. Thank you for having me on the show. Not a bad one, I think. Compared to the last three results season, I think this one's been relatively better. I think people will be relatively more optimistic. I think if you look at the upgrades to downgrades ratio, it won't be as bad. I think it might just be a neutral earnings season, which is why I think you've seen the markets where they are and the valuation sustaining where they are. I think all things considered, people were expecting a lot of negative commentary out of IT, out of consumer. People were not too sure about the outlook on banks. I think most of that has by and large been put to rest. Reliance's results were okay. So I think when you have 75% of the market with no negative surprises, I think things have gone through all right. The only question remains how much of this will be sustainable into Q1 and beyond, because the market has rolled over valuations to FY27. But I think for the moment, this looks like, just about right from a market perspective, given where the results season has concluded.
Rahul, very good morning. Alex here. I distinctly remember our last chat and we spoke, if I'm not mistaken, before a large part of the earnings came through. And so I'm glad that you're sounding a little more optimistic than you did when we spoke then. You were apologetically unoptimistic or a little pessimistic at that point. Has that changed at all?
So, Alex, you can only analyze what's in front of you.
I agree.
And I think, as analysts, it has to be in front of you to make an inference that on basis what's in front of you, you try and project what's ahead of you. But I think because the last 2 or 3 results season had been so bad from a market perspective, people entered cautiously not knowing what to expect. So I think on a relative basis, yes, we have come out a lot better in this result season. I would think this has probably been the best of the last 4 quarters. And like I was saying, while we still have a few results panned out later today, but I think overall, when you see the upgrade downgrade, I think it should be okay. The market, I think it should be able to hold a 19, 20, 21 kind of P. I don't see it going back to a 24, 25 P because I still think there are enough and more geopolitical risks on the anvil. But one thing I will tell you, Alex, I think the biggest beneficiary that India has been over the last many weeks has been crude. The fact that it has moved in this range of 60 to 63 for some time now, from an external sector standpoint, that is going to bode very well. From a currency standpoint, it will bode very well. It could put a little more pressure on the RBI to go maybe a little bit more than what they were anticipating at the start of this rate cut cycle. So sum total of all that, I think the macros are in good shape. Earnings haven't disappointed. The tariff wars seem to have somewhat stabilized. The India-Pakistan war seems to be behind us. So all things considered, I think we're in a far better position today than probably when we last spoke.
Sure, but what do we do right now is the question. I'm going to come back to Rahul Arora in just a sec, but time for our big brokerage call this morning. And Bernstein has upgraded delivery to outperform. Now, delivery numbers were pretty decent, Harsh, but what is Bernstein excited about?
Well, a couple of factors playing out here. Just to kind of give context, delivery has 2 main businesses. One is the e-commerce logistics business and the other one is the traditional trucking business. Let me talk about the e-commerce logistics business and what has changed. One is there was a downgrade last year by Bernstein, and that was on the back of the fact that insourcing attempts from Meesho was largely going to keep both volumes as well as margins in check. That has largely played out according to Bernstein. Quick commerce and management churn impacted the business, but now that is behind where delivery is concerned. So therefore the upgrade. Now long haul e-commerce faces structural challenges from quick commerce, of course. Consolidation in 3PL should support margins and volumes is what they say. And this one has a strong balance sheet is what they say. So those are three factors why what is driving their upgrade. Acquisition of e-com ventures is obviously a big shift. In fact, only 30% of e-com's volumes are, if only 30% is retained, then you'll have a boost in delivery parcel volumes and an improved margins of 200 bips or so.
Okay, not doing much this morning though. I will come back to more details on that, Harsh. Not doing much this morning as far as delivery is concerned. Rahul, just quickly before we get to markets open as well, your take on the defense play. Interested in hearing what you're saying, because we've had a lot of interest for fundamental reasons, clear reasons, Make in India shining during Operation Sindoor, and then some of the results are absolute howlers, like Mazagon Dock this morning. So do you think that there's a further upside here, or is this story done and dusted for now?
So I think purely from a valuation standpoint, Tamanna, I think from a short-term perspective, the valuations are certainly capped. There is no question. But I think if you look at the last 3 months, and this probably preludes Operation Sindoor as well, the kind of orders that have been awarded to the entire defense sector, in this I include Army, Navy, Air Force, and even other ancillary players, I think the total order awarding is close to about 2.5 lakh crores. So if you're looking at, when we talk about IT, we talk about TCV, which is total contract value getting converted into actual revenue growth. Now, the awards have been made. The question is how much of this actually comes into revenue. We were not expecting the best of quarters anyway for defense this quarter. Obviously, some of the stocks that you mentioned have been far worse. But I think if you're looking at it purely from a valuation standpoint, Tamanna, I think the short term is capped. But I think if you're looking a little more long term out, I still think Solar Industries is a good name to buy into. Yes, it is predominantly an explosives play, but I think the defense business over the last 12 to 18 months has really picked up. I think BEML's valuations on a relative basis looked fairly interesting. I think Hindustan Aeronautics, when you look at the entire space, does not look too bad from a valuation perspective. This is all relative. I'm saying this is may not be absolute, but I think if you're looking at holding these defense stocks from a 2-3 year perspective, my tilt would be more towards, say, a BEML, a Hindustan Aeronautics, and a Solar Industries, and maybe on corrections, something like a Data Patterns. But this is not a basket buy for me as it would have been, say, 18 months back, or even a few months back when the entire Trump tariff issue started. The defense stocks corrected quite substantially. So this is not a no-brainer sector for me anymore. You have to be picky and choosy, because some stocks will outperform the others, and the ones that I have enlisted for you, I think that's where we have a little more comfort on growth. But I take your point that I think on a near-term basis, it could challenge you in terms of valuations.
Okay. Comfort on growth, viewers, keep that in mind, not necessarily only valuations. Okay, very quickly, just a few stocks, and I wonder if Chakri has a view on any of those, but just want to mark whether DB Realty or Valor Estate is showing a spike on open or no, because it's entered into this Prestige agreement with Prestige, just up about 1%, nothing too dramatic. The other one, of course, is Suzlon, Inox Wind Energy, Sangvi Movers. Maybe that whole bucket has done well. Suzlon is up 9%. Inox Wind, not much. Inox Wind Energy, just about 1%. So muted relative to Suzlon, which is okay. Senco Gold is the third one, and Concord Bio is the fourth one. And I wonder if Senco or Concord Bio are doing well. Senco Gold up 4% on good numbers. Concord Biotech, fabulous numbers, up 5%. Chakri Lokpriya, any view on either of these two, Concord Bio or a Senco Gold? Some of these whole biotech CDMO space has done very well.
None of these companies we actually invest in, so we don't really have much of a view on
anything on CDMO, Chakri, before we thank you?
CDMO as a business clearly is here to grow for some more time, and therefore the earnings estimates will remain intact.
I get your point. Okay, Chakri, we'll leave it on that note. Chakri, thank you so much for joining us and wishing you a great weekend. Kush Bora, a lot of reactions to some of these stocks, right? On the upside, a Senco, a Concord, a Suzlon, anything?
So Suzlon, I think, is time to book profits. If you do get that kind of opening that the pre-open is suggesting, maybe you could just book partially at open and then hold the rest for 73, 75 kind of levels. But a Senco Gold is a good breakout. It was in the offing in the sense that yesterday there was a good up move on this one on the back of good volumes. So I think about 400, 405 are the next levels to watch for. And Concord Biotech also comes up at the resistance of 1780, 1800 thereabouts. But if it crosses that's when you could create further long positions on Concord Biotech. So Senco Gold looking good. Suzlon, time to start booking profits from a near-term perspective.
Would you look at an Amara Raja, a Bajaj Auto, any of these for a buy?
No, not really. I mean, the two-wheeler the two-wheeler vehicle space has not been doing all that well. You've had spurts here or there, but no, even Bajaj Auto, below some of the resistances. So I wouldn't really, venture a trade on them just yet.
Okay, among the Nifty 50 stocks in trade yesterday, one stock that stood out that made quite a spurt at the end of the session was Adani Ports. It ended with gains of close to 2%. Does that momentum continue in the near term?
In all likelihood, it's, in fact, from this table, this is one of the stocks that, I've consistently maintained that, if you want to invest or trade in, this is the one that you should focus on. 1550, 1580 are the levels on the upside, a slightly positional bet on this one, just under 1400. So 1380, 85 is where you can place your stop loss and still create long positions on Adani Ports. Good momentum, good volume action as well.
Any top pick after you've seen the pre-open session, and would you look any of the real estate plays?
Real estate, we've already given a call on Brigade Enterprises, so that continues. But Inox Wind, I know it's the theme with the Suzlon move that we're seeing, but we already had a call open on Inox Wind for targets of 196 and 199. Stop loss around the 192 mark. So that call continues. It could see further traction from the pre-open 1.9% uptick as well.
But Kush, sorry, at 195, the stop is 192 and the target is 198. That's just an equal risk reward, right?
Yeah, so 190, 119. So as I said, it was an already existing open call, hence the risk reward ratio seems a little skewed. But if you're trading for the day or maybe a couple of days, then I think that's still fair. I mean, about 2.5% of upside.
Okay, fair call. Stay on, gentlemen. The market's about to kickstart trade. 25 seconds left. Remember, a lot of developments on the global front and on the local front. Some data coming out, really important data coming out at the end of the day as well. So lots to unpack during the course of the day. But the morning might be dominated by auto, landmark cars, Ola Electric, Bajaj Auto, a lot of stocks from the auto pack in focus. And I wonder if metals continue their upward trajectory or no. But here come the first trades, flat for the benchmarks. The Nifty Bank is up a quarter of a percent. So IT has to be down for the index to be flat, 0.5%. Nothing dramatic, but I think this follows what the US futures are doing. Autos are flat. Bring up the mid cap and the small cap and see what's happening there. 0.33% for the mid cap index. The small cap index 0.21%. So it's a flattish morning. The banks too have flattened out completely. Let's get the heat map up on the screen. See if there are any notable movers. So clearly auto has a problem today. Bajaj Auto is the top loser, 1.7% lower. There is Infi, TechM, HCL Tech following Nasdaq, and the tic-tac-toe continues on IT. I pity people who look at IT as a positional trade these days because it's doing anything but giving a trending move. Then there is maybe some weakness in IndusInd yet again, so that stock continues to be a bit of a bummer. Eternal slightly lower, Titan slightly lower, but equal mix between the red and the green. What is doing well? ONGC, Geofin, Coal India, Grasim, nothing quite standing out. JSW Steel, okay, so metals, Tata Steel, JSW Steel, Adani Enterprises, so that metal index has some spunk to itself. HDFC Bank marginally higher, and which is giving that support. Yeah, but yeah, nothing dramatic at the large cap end, Tamanna, but for the fact that IT is soft certainly, and Bajaj Auto now down 2%. I wonder what luck you have with Ola and the landmarks.
Bajaj Auto down 2%. Maybe remember what we talked about as soon as we started the show this morning, a reversal of the Trump trade news which has come in, and Bajaj Auto exports dominating their results as well. Overall, good set of numbers, no doubt about it when you look at the numbers, but exports dominating that. So 2% down is that's perhaps one of the reasons you're seeing that on a Bajaj Auto. The IT pack also hurting because of a reversal of the hope that there is going to be a pause on the trade war, which a court put in and another court put a stay. So that's what's happening there. But you should look at the India VIX. Let's just pull up the India VIX for you, because even as markets are trending down, so is the India VIX, which is putting us in place for perhaps not such a bad overview on markets overall, under the 17 mark on the India VIX. So keep that one in mind. I'm going to pull up the small cap and mid cap indices for you as well. Are they doing as poorly as the Nifty and the Sensex? No, not really. Not really. Up in the green, mildly so, mild gains there, no fireworks, but definitely doing better than the key index. That's what the deal is on the broader markets. Let me pull up the sectoral indices for you for just a sec. Nifty Energy, they're doing okay. ONGC perhaps driving it. Mid-cap 100, mid-cap select. So you're seeing the broader markets is what's pushing it, not so much a sectoral play. Nifty India Defence down largely because of Mazagon Docks. We talked about what a miserable set of numbers that is, and once again we want to understand what's really happened there. Nifty IT down about 1% and auto following suit. So these three are where the pain point lies, but it's all about specific stocks. So let's get to that list. Results. Suzlon is what we need to look at. Is it holding up after the markets have opened with a stellar set of numbers is the question. Yes, it is. Probably the stock of the morning, 11.5% up. Mazagon Docks, very disappointing set of numbers. Complete collapse in their margins, 7%, 7.5% down. Sobha Reality was doing decently, 6.5% up. EIL, walk hard. Numbers may have come during closing yesterday or a little after, but resulted back still showing out. Engineers, EIL doing fine, so is walk hard this morning. Ola, let me look at Ola. Let's see if we've pulled up Landmark as well, and if we can. Ola Electric losses widen. Amara Raja, poor set of numbers. SJVN, not so exciting. That's why you're seeing some pain there as well. CLSA has a positive view on Prestige. Is it helping this morning? Not really, perhaps. It's completely flat. Bernstein has a positive view on Delivery. Is it helping this morning? I'm not so sure if it is. All right, maybe about 3% up, so not half bad. It was our big brokerage call this morning. I want to pull up and see what's happening to Landmark. Another poor set of numbers, about 7% down. This was on your list as well, Alex. I think another set of stocks to look at this morning would be gold loan stocks, because important statement coming out from the finance ministry as well.
Absolutely. But you know what? I'm continuing to look at the automotive pack and looking at an auto ancillary player which is up and about in trade today. Of course, it posted its results from what I remember a while back. Lumax is the name of the counter that I'm talking about, and it's in double digits at this juncture, 10-11% higher at this point. The only update that I can see overnight is that Ashish Dubey has resigned as the Chief Financial Officer. I want to first go to you, Rahul, on the reaction that we're seeing in auto, and of course quite a bit of news flow overnight. You have the likes of Bajaj Auto that have posted numbers, Ola Electric disappointed and losses widening, revenues declining, and then you have something like a Lumax that's seeing such a spurt. So if you were to play the automotive story right now, where would you deploy?
So the way we look at auto is as an extension of consumption, and I think most of the players, if you see in the auto sector that have done well over the last 2 years as well, are the ones that actually have a better premium portfolio. So while I wouldn't want to read too much into one quarter's results on Bajaj, I think if you just look at Eicher Motors numbers, both the monthly sales numbers as well as their quarterly performance, it's actually been an outlier in the overall pack. And I think that comes as no surprise, because if you look at the consumption side as well, what's doing well? You have hotels doing well, you have Alco-Bev stocks doing well, so aviation doing well. So this seems to be a natural extension. So our top recommendation there for people who want to enter into auto would still be Eicher from a two-wheeler perspective. I think if you want to play, an entire basket of auto in a sense, then you can probably look at Mahindra and Mahindra. So you get passenger vehicles, you do get tractors, through their acquisition of Swaraj. Of course, they have strengthened that play, and it's a proxy on rural recovery as well. So I think Mahindra looks like an interesting play. Of course, the stock has gone into an orbit over the last few years, ever since the management first indicated that it's now going to strictly focus on return on capital employed, something that one of their component players, Motherson Sumi, has done so well and been a great wealth creator. But since you mentioned Lumax, Alex, I would like to throw in a name that we recently initiated on, which is called ASK Automotive, which is basically into the precision space, safety cables. And I think if you look at the kind of numbers that we are projecting there, it's almost about an 18-19% CAGR on the top line with margin expansion. You're looking at about, I think low to mid 20s kind of earnings growth. The return ratios are about 23-24%, and the valuations would be around 19-20 times. In fact, they were recently at our conference as well. We saw a great deal of institutional investor interest. So from an auto-com perspective, I think our top pick would be ASK Automotive. But I think if you're playing it through large cap OEMs, I think From a auto conglomerate perspective, it would probably be M&M, and from a two-wheeler perspective, I think the top recommendation would be Eicher. And ASK actually is a proxy on two-wheelers as well. If you'd remember sometime back, Alex, there used to be a stock called Jamna Auto, which was quite the favorite of the market when the commercial vehicles were doing well. So I think you need to identify component players that are doing, good proxies on a reasonable to good OEM growth. And I think this could probably be one that will probably positively surprise over the next couple of years.
Okay, some news coming in on gold loan companies. So the Department of Financial Services has examined RBI's draft guidelines. There's actually a tweet out by the FinMin on this. And they are saying that they want this to be implemented by the 1st of Jan 2026. Vishwanath Nair joining us for more details. Is this an extension of the deadline? Just give us some context on this, Vishy.
Right, Tamanna. So, yes, there is an extension of the deadline. This is supposed to be implemented later this year. And now, because of certain ground level implementation issues, the finance ministry is suggesting, the DFS specifically is suggesting to the RBI that you implement this only from 1st January. Now, I think more importantly, this is the first time that the DFS has come out very publicly and given its feedback on certain guidelines from the Reserve Bank of India. We have seen in the past, other cases like, for example, the project finance situation where discussions were ongoing privately between the RBI and the DFS. This is the first time that the DFS has come out publicly. Now, what exactly are they saying? They're saying that the guidelines might be a little too onerous on the small value loan borrowers, and gold loans are widely used specifically by farmers for agricultural purposes, and the RBI guidelines sought to have sort of uniform guidelines between gold loans which are used for agricultural purposes and non-agri purposes. So clearly the government is showing that they want to protect the small value borrowers, specifically the agri borrowers. So up to 2 lakh rupee loan worth borrowers should not be included in the guidelines. This is the feedback that the ministry is giving to the RBI. Essentially, the RBI has said a 75% flat loan-to-value ratio, while for non-agri gold loans, 75% was always the norm. For agri purposes, banks used to give higher loans against the jewelry. Secondly, the RBI had prescribed in the draft guidelines that banks should probably check for ownership and get thorough ownership details, and only after that extend loans. This obviously would have led to some delays by the time the loan would have been disbursed. The ministry is saying that small value borrowers should not be affected. The other thing was banks were required to give a certificate of purity of the gold that they were accepting. Plus, the kind of gold that they accept was also limited to jewelry and certain specific gold coins issued by MMTC. So clearly, those were all going to be issues on the ground level. Those were all going to lead to delays in loan disbursement, and that's why you're seeing the ministry stepping in.
Okay, Vishy, thanks for that. Now, Rahul, I would want you to come in on this one. Good morning, of course, and thanks for joining in. And I also want to get a feedback from you, if you haven't spoken it about already, about what the post-conference key outcome is, because I believe you had an investor conference, Nirmal Bang investor conference. But just a word on this issue first, Rahul. What is your view on these gold loan providers and on NBFCs at large? Because the general theme seems to be that if the rates are going to come down, NIMs might contract for banks, swap out of banks, go into NBFCs, the cycle is turning.
So, Neeraj, that's been the trade for a while, and we have been very positive on gold finance for many a year now. But I think the biggest problem with gold finance companies now, Neeraj, has been the leverage. And I think these were companies that used to operate at one point in time at a 5x leverage. What I mean by that is if you had a 4% ROA, you had a 20% ROE. If you had a 5% ROE, you had a 25% ROE. And that leverage has come down substantially over the years. So let's take the industry leader in this case, which is Muthoot. I think if you look at the sectoral deployment of credit data that the Reserve Bank of India comes out with, the maximum loan growth that you're seeing in the Indian economy for many a month now, if not for a year, has been for loan against gold. It has not been personal loans, housing loans, auto loans, credit card loans. It's actually been loan against gold. it has shown up very well in the numbers. But I think from, obviously because of a lot of regulatory changes, if you look at our own numbers, I don't think we are projecting more than a 12-13% top line growth for Muthoot over the next 2 years. Your point about margins is obviously taken because that factors into the overall ROE, because ROE is a function of profitability. And in NIM's contract, that is going to have a direct bearing on the profitability of the entity. Now, you are having, while the optical ROA looks very good at about 4.5% for Muthoot, the problem is the ROE has now dipped down to less than 15. You have it coming at about 14% for an entity that used to go between 20 to 25. Now the question is, what do you want to value this entity at? Because there was a time that people used to even ascribe 4.5 times. My sense is the best you could value this entity today is probably what you would value the best bank in the country at. So I think anything more than a 3.5 would be a bit of a stretch. So if you're looking at investing in companies like Muthoot, Neeraj, I think you need to have realistic expectations of about maybe 12, 13, 15% kind of stock price growth. The other thing also, Neeraj, is that our commodities desk does not believe that gold can re-rate substantially from here because it's had a 26% growth in the last 1 year. So I think you need to keep all these things in mind. But our preference would be more towards NBFCs, and we would prefer names like AU Small Finance Bank and HUDCO to gold finance companies at this point. But if you have to be with gold finance, then Muthoot is your play.
No, thank you, Rahul. Nobody has to be, I'm presuming.
And
but
just one very quick question, since you forgot to answer, Neeraj, the mood at the conference was good.
So, Rahul, sorry, just one thing that's specific here. I just wanted to know, I mean, there's so many people trying to think, right? Should we bet on large caps, mid caps? Within mid caps, what do you bet on? You would have featured some companies, you would have got a takeaway from some companies. What stood out in terms of management commentary and the mood of the conference?
It was still very mid-cap focused, Neeraj. I think we had about 70 odd companies focused, and I think the maximum attendance that we had was for a company called Vari. And the stock was up 10% the next day. And that's just to, on a lighter note. But I think the focus definitely in terms of participation, where people were looking for ideas, I think definitely the bias was more towards mid caps. I think the maximum interest that we saw was in defense allied plays, auto component, and NBFCs. But overall, we had close to about 155, people from the buy side attend over 2 days. And I think the mood was relatively more positive than I've seen over the last couple of quarters. But definitely, I think on a relative basis, if you're asking me to classify it on a market cap basis, the focus was definitely still more towards mid caps than it was towards large caps.
Okay, Rahul, we'll leave it at that. Thank you so much for taking the time out and being with us today. Really appreciate your time.
Pleasure, Neeraj. Thank you for having me.
Kush, anything that stands out? And a bounce in Vari after that hit that happened over 3,000 now. Maybe a word on that too.
So I think this is a good move in the sense that, the markets had actually seen some downtick, at open, but we're consolidating. We'll take that. I think even the markets are waiting for the GDP number that's going to be announced, later today. So I think par for the course, if we consolidate around this level, 25,000, as I said, remains the line in the sand on the upside. Vari has also recovered rather smartly, but I think there are resistances around the 3,100 mark. So fresh positions should be initiated once that supply zone is taken out. So 3,100 remains a key resistance mark. MCX, Inox Wind, these are just a couple of stocks that we discussed, have actually rebounded rather well from the opening lows. So I think, these continue as trades. All in all, I think this is a good setup. If we end even flat to positive, I think this is a good Friday.
Okay, let's talk a bit about some movers here, EIL among them, and we actually have a conversation with EIL, which we'll talk about. That stock up 9% on the basis of numbers. Some recovery candidates this morning, I would say BSE, Olectra, Greentech, pull those up with a 5-day chart if you can, because they'd seen some pain point. That's the intraday for the BSE, recovering smartly or, zooming up smartly right now, but a sharp recovery there if you take it over a week's chart. Olectra, Greentech is the other one that I want to pull up. I had seen a huge downtick after the Maharashtra government threatened to cancel their order, and is seeming decent this morning with a bit of a up move. But EIL in focus, nearly 10% up on the stock. And my colleague Sesha caught up with Vartika Shukla, the chairman and MD of EIL. She revealed a robust order book and record-breaking inflows for FY25.
Looking at the highest order book today, We had the high we have broken the record of the 31st March of the last financial year, and today we are about 12,400 order book position. So it is growing from strength to strength, both in sectoral as well as our conventional oil and gas space. So we see that the company is very well poised. It has consolidated its financial over the years, and we hope to grow both in terms of the top line and bottom line in this financial year that's come.
In terms of the projects, which are the projects that you will be focusing for this financial year, and also in terms of your overall order book? You did mention 12,400 crores, but how much of this will be executed for this fiscal?
Sure. So see, most of the oil and gas projects have a time cycle of about 3 to 4 years for execution, but a lot of our order inflow, which is about 45% of the total order inflow that we've got from the infrastructure segment, have a time cycle of about, or urban solutions or mining or other sectors have a slightly shorter project execution cycle of 24 months. So we see significant growth, maybe upward of about 20 to 25% growth in the turnover that we will see in this current fiscal. See, most of the oil and gas projects have a time cycle of about 3 to 4 years for execution, but a lot of our order inflow, which is about 45% of the total order inflow that we've got from the infrastructure segment, have a time cycle of about, or urban solutions or mining or other sectors have a slightly shorter project execution cycle of 24 months. So we see significant growth, maybe upward of about 20 to 25% growth in the turnover that we will see in this current fiscal. We are completing a lot of projects in this financial year. We will be completing the residue upgradation facilities of Vizag. We will be completing the refinery section of Barmer refinery as well. We will be also completing some of the pipeline projects. We'll be completing polypropylene unit of GAIL Pata, among others. So there'll be a lot of projects which will complete. When the projects complete, then we have the closure and realization in the turnover. Plus the new projects that we've gone in, we will be in a phase of ordering. Substantial orders will be placed, and this will also result in the progress of these projects and resulting in our turnovers.
Okay, so that's Engineers India for you. Let's just pull up that stock for us if you can. It's having a fabulous morning. Some of the winners today, EIL, definitely one of them, Suzlon one of them. Kush, you said Suzlon time to book profits. What do you think about EIL?
Well, EIL also fairly similar. I mean, very big moves, but, it's been in that uptrend for the last 5 sessions. Yesterday and today we are seeing that, capitulation on the upside. So I think not a bad idea to maybe take partial profits off the table, and I think you'll hear that a lot from me, which is take partial profits off the table, because what's happened is that we've seen in the past when these kind of rallies come about in this mid space, even if the stocks get overheated, they do tend to extend that run, and you don't want to miss out on that. So hence a partial profit book on Engineers India, and on the upside 248 to about 255, there's a gap. There's a high probability that in this momentum that could also get filled. So that's when you want to perhaps exit the rest of the quantity that you hold.
Okay, you've already spoken about a couple of counters, and you said Suzlon, it's an opportunity to take money off the table. What about something like a Senco? And we've not spoken about the broader gold company, but Senco reacting to numbers up about 5% or so, and very close to that upper circuit. Oh, it's given up a little bit, so it's now 3.4% higher. Would you take money off the table, or would you go long?
Yeah, no, time to perhaps book profit, because Senco's not had a big move anyway. I mean, it's been consolidating, positive bias, 400 resistance coming up. Nothing to write home about. Volumes up today on the on the back of the earnings reaction perhaps, but nothing to write home about. Some of the other names, Muthoot, Manappuram, they're also consolidating. So you might see some positive uptick on these, but the momentum is so flat that you wouldn't want to take a trade in these. And I don't know if they're if they've got anything going for them in the medium term as well. So these stocks, this space for now is more of a wait and watch rather than an active trade.
I didn't get a chance to ask you about Lumax Auto, and you were nodding your head while I was talking about it. Double-digit increase. Apparently the numbers came through during market hours yesterday when the spurt up move started. It's up about 12% even as we speak. How would you trade this?
I think along with the nod, you missed a smile on my face. And as you would guess now, it's because we had an open call on this. I think the last one that we gave was on the 16th or the 17th of May, thereabouts, for a second target of 690. Of course, that's been overshot yesterday itself. But today, with this kind of a gap up, very good move. I think now is the time to book profits completely on a dip towards the 725 to 750 zone is where you can re-enter, but not a bad idea. This is a very strong formation from a medium-term perspective. You want to re-enter the same name once you see a dip closer to the 725 mark.
So you are in the mood of profit booking today. I think 3 of the 4 stocks that we've talked to you about, you're saying book profits. What are you buying? What are you buying after you've seen the market open?
So, Tamanna, that's very well pointed out. In fact, I'll tell you what, I'm having slight difficulty in identifying calls as well to buy because a lot of them are hitting those overheated territories, and that's the kind of zone we are in this mid space. So, while I look for a good risk-reward ratio, a lot of them are now starting to get to that zone where it's just not comfortable. So, perhaps that's a sign that there could be some profit taking that could come in this space as well. We saw consolidation in Nifty, Bank Nifties going through that consolidation. I would happily take a consolidation in the mid space, even some degree of profit booking, so that the risk reward ratio gets favorable and the launch pad for the next rally is created. What I'm buying, as we discussed, some of these stocks, AB Capital, Inox Wind, MCX, these are some of the names that look attractive even from the current levels. So you'd want to stick with some of these names. You might want to perhaps check the portfolio size or the position size that you take. But on the whole, some of them, yes, are started to get a little overheated. So some consolidation, will not be a bad idea in this mid space as well.
Okay. Now, Kush, one final question, and that is on a business like IRCTC, which benefited a lot out of the Kumbh Mela travel. The stock is kind of meandering along without a really substantial move, I reckon. But is there a trade, or are there levels to watch?
I'm afraid not. Because again, the stock has actually run up, consolidated and seen resistances, and it's not able to take out the 200-day moving average as well, which is the sign for a positional long trade or a positional bullish turn for the stock. That's not come about. I would rather play the railway theme with the likes of Texrail, Jupiter Wagons, RVNL, some of these. But IRCTC has seen correction, consolidation, but I wouldn't enter a trade just yet.
Okay, and well, it's posted a good set of numbers though, science to spiritual packages. Mahima has the details of RCTC's numbers. Mahima.
Right, so good set of numbers as you rightly mentioned, Neeraj. Tourism has overall aided the top line growth. Catering and ticketing business, however, has remained muted. Stronger demand boost has come in this quarter from Mahakumbh, and operating margins have taken a dip due to ticketing as well as catering business. In terms of numbers, revenue is up 10%, EBITDA up 6.4%, margins stood around 30.4 versus that of 31.5, and net profit saw growth of around 26%. Macquarie on IRCTC has maintained outperform with a target price of 900. They've said that they continue to see low teens growth outlook. They expect strong 30% FCF margins. So this is the overall view of how Q4 has fared for IRCTC.
Okay. Mahima, in fact, caught up with Sanjay Kumar Jain, CMD of IRCTC. Let's listen into a bit of that interview.
Well, Mr. Jain, my first question to you is that Q4 FY25 has been overall a very good quarter for you. For tourism, the growth is quite significant, but the ticketing and catering business has been muted. According to you, what has worked for this quarter and what has not worked?
To my mind, everything worked, but how you see it. Like in catering appears to be flat because we are comparing 2 quarters, which is quarter 4 of last year, 24. Has a exceptional business item of Astha Express, running of Astha catering facility on Astha Express, which is amounting to around 30 crore. If we subset that, then the revenue growth in catering also appears to be reasonable.
Right. The e-catering business has shown significant strength. I mean, I was just seeing your average order per day has also gone up quite significantly. What are the plans to expand your e-catering business? Because you've also partnered with platforms like Swiggy and Zomato.
You see, we are already at more than 400 stations, working with 20 aggregators and other direct business like retailers. and we will expand it to other stations also, and our rating system is robust, so it will be more convenient for passengers to book on e-catering platform. That's what we are at the moment planning. So this will certainly add to numbers.
Okay, and what are the internal targets for growing your tourism and catering business and the overall business? What are the big events that you're watching out for in FY26?
You see, catering we would like to grow for around 9 to 10%, and tourism we would like to grow by 15%. We are already in the process of finalizing our target with the ministry, and overall we are overall at IRCTC level in all the 4 segments put together. We wish to grow by 10%. We are targeting to grow by 10%.
All right, Mr. Jain, you talked about expanding your Rail Neer business in the last quarter, and I just wanted to get a sense if there has been any change in the capex plan for the same, because Rail Neer has seen quite a significant growth over the past few quarters.
So last quarter when we were talking, I was telling you about the Rail Neer expansion and improvement and in our efficiency in capacity utilization. So this has paid a good result, and we are planning to expand our 2 Rail Neer plants at Danapur and at Ambernath. We want to double the capacity, and additional 4 plants are in pipeline. We are already in discussion and at various stages for Rail Neer plants.
Right, and how will this be funded?
This is approved by BOD, and our BOD is already seized with the issue, and we are already in the process.
Okay, coming to hotel, how has the business progressed so far, and what are your future plans with respect to the same? What is the kind of investment that you'll be making to expand the hotel business?
We are already into hotel business. We are running Puri hotels, we are running BNR at Ranchi, and we have recently opened a hotel in Lucknow. So we are already working on to that, but besides that, we want to create a budget hotel kind of thing in collaboration with RLDA, and MOU is in pipeline for creating a hotel of around 30-35 hotels in years to come with an investment of around 600 crores.
Okay, and will these hotels be management contracts, or will you be owning any of these hotels?
You see, we buy land or we take land on lease from railways. So land is there. Our model is at present. Our model is PPP, where we support the hoteliers to create the infrastructure and to run it. We have the market. We have the land. We invest into their basic infrastructure. Now we take the expertise of these people in running the show, in operationalizing this thing, and that's our model, which is working very nicely at the moment.
Okay, so if you're targeting 35 odd hotels, what is the kind of investment that you'll be making in FY26?
26 we can't say at the moment, but overall we are, because MOU is under process. So it's already under discussion. Once it will finalize, then we'll start doing 1 or 2 projects initially. But you see, we go for the tendering, and also 26 we will not be able to do much. But from 27, 28 it will come.
Okay, and what will be the total amount of investment for this hotel expansion?
We are looking at around more than 600 crores.
All right, your operating margins have come down to 33% from that 35 to 36%. Is this because of the catering business, and do you expect margins to expand going forward? If yes, what will be the levers?
You see, besides our IT business, which is giving a margin of around 80%, all other our business segment is giving a margin of around 12%. And this is fair enough also, because we are into mass catering, mass tourism. And so we don't want to, our Rail Neer is also subsidized, it is being sold at 15 rupees. So we want to make everything affordable for the masses. So our criteria of working, our concept is totally different from, it is not only making profit. So we are happy if we are able to increase this product mix and earn EBITDA of around 30%.
Okay, one last question to you, Mr. Jain. What will be the growth levers for IRCTC going forward? You mentioned that you will be growing by 10% in FY26, but what are the major events that you're watching out for in FY26 that will spur this growth?
You know, the Indian economy is growing, our infrastructure is growing, rail infrastructure in particular is growing very fast. You must be knowing that a large number of trains are going to be introduced. All these are relating to our business and business only. So our challenge is how to capture that, not the business or the demand side. We have already demand, we are not able to grab that demand. So we are creating infrastructure. And one new things which we are planning to introduce this year is unified portal for our OTA platform for travel related solution to the passengers, which will give them a very easy experience in booking and execution.
All right, Mr. Jain, thank you so much for taking out the time and speaking with us at NDTV Profit.
Okay, that was a conversation with IRCTC. Markets not quite sulking. I think IT stocks are sulking more than anything else, but range bound and in negative territory for the Nifty 50. Let's pull up the Nifty contributors and just see what's dragging down the markets. My guess is Bajaj Auto. Good numbers, but valuations are not working out at all. Infosys, IT having a tough day. Auto IT is not a good day for them. And look at the top losers, and that's where it is. Some support coming in from the heavyweights, RIL, HDFC Bank, and L&T as well. Eternal also doing okay this morning. I want to see what's happening with the gold loan companies, because statement from the Finance Ministry saying that they've set the deadline for new RBI regulations on gold loan companies at 1st of Jan 2026. It was widely expected to be towards the end of the year. Muthoot is what we should pick up, because Vishwanath Nair now reporting that 60% of the loan book for Muthoot is actually below the 3 lakh mark, and that will help, because what the Finance Ministry has said right now is that exemptions will be given to loans under the 2 lakh ticket. And since a bulk of Muthoot Finance's loans are coming in there, that would be important for them.
Yeah, so this is, of course, a surge, and we spoke about it right on Open Viewers, so I hope you paid notice to it. The other few which are actually standing out today, we talked about the margin drops that come in, and Bharat Dynamics has actually rallied after that margin drop led to the stock falling 3 or 4 days back. But on good results, stocks which are doing well include a Soba, which is up 4%, Engineers India 7%, and Suzlon, which is up about 12%. So those are 2 or 3 which are really standing out on the positive side. On the negative side, Tamanna, KNR Construction, something that I think either you or Alex highlighted, down 5%. There is weakness in Mazagon Dock, of course, 4%. And there is weakness in Birlasoft, double downgrade there. That stock is down about 4% in trade. Now, the other one in focus is Adani Ports. LIC has picked up Adani Ports and Special Economic Zone's entire 5,000 crore bond issue. Anushi Johnson with more details on this. Anushi.
Hi, morning Neeraj. So as you've mentioned, LIC has entirely subscribed to the 5,000 crore of bond issue of Adani Ports. That's what we are seeing now. They have subscribed to this 5,000 crore of this 15-year bond issue which is there, and this is at a rate of 7.75% of the rate that we are looking at. Again, in a privately negotiated deal is what we are seeing. This again marks company's largest ever rupee-denominated bond issue, and it's also first 15-year bond sale as well in terms of where the long tenure is concerned. Now, where Adani Ports will be utilizing these funds for, firstly towards debt obligation, so to repay some of those debt is what we are looking, and also towards working capital side, or for capex side, the company will be utilizing this proceeds, so that we should be taking an account for. Other than that, if we look at the credit ratings also in the recent times, now CRISIL has maintained a AAA rating for its bank loan facilities and NCDs. Along with that, for commercial papers, it has maintained a A1 plus rating. While if you look at Fitch ratings, they've found a BBB minus for long-term foreign currency issuer default rating, and also alongside have removed their rating watch from negative for Adani Ports. So overall a positive we are seeing, an LIC subscribing to the entire 5,000 crore of bond issue is the main focus point for Adani Ports today.
Okay, SEBI has also released a phase 2 of new F&O norms which include relaxations for a trading limit for index options among other things. My colleague Charu joining in with more details.
Hi, so the market regulator Securities and Exchange Board of India has come out with the phase 2 of its regulations on future and option trading. Now we must understand that the first phase came out around October 2024, which consisted of a lot of curbs. However, we have seen some sort of a relaxation here in the gross limits and the net limits that have been prescribed for index options trading. Let's look into the limits once. So for net limits, it has been prescribed to allow it up to rupees 1500 crores, whereas the earlier proposed limit was about only rupees 500 crores. For gross limits, it is about rupees 10,000 crores, whereas it was earlier proposed to be only about 1500 crore rupees. Apart from this, a new method for calculating open interest has also been prescribed. Now that is going to be based on a delta based calculation rather than the already in existence currently prescribed method, which is not very stable, as due to the volatilities included in it, it leads the stocks into a ban period, which again causes a lot of instability in the market. So these are the major things that the SEBI has prescribed for now.
Okay. Now, thanks Charu for that. Now, moving on to stories, NDTV Profit, you could argue is the only channel which has been continuously flagging serious issues at Ola Electric, from week after sales service to the Maharashtra Road Transport Department's raids on its outlets over the lack of trade certificates. Fourth quarter numbers reflect the magnitude of the challenges that the company faces now going ahead as well. Net loss has widened and EBITDA too is looking wobbly. Puneet takes us through the key takeaways and the deep dive on Ola Electric and whether the company can dig itself out of this pothole that, Puneet, I dare say it is dug for itself.
Well, definitely, and I haven't seen a company report 100% negative EBITDA margin ever. That's what Ola has done in this particular quarter, and we just wanted to put together a perspective of what's happened in the last year itself, because it's been a very difficult year to say the least. If you can pull up the revenue as well, quarter one revenue roughly about 1600 odd crores for the company. Quarter 4 has consistently fallen, as visible on your screen, to roughly about 649 crores. And what has led to this fall in revenue is largely the company's weak sales profile. Quarter 1 sales at 1,25,000 units, that's subsequently fallen to 98 and now 51,000, which essentially means an average of about 17,000 units. That's made them the company the number 3 player now in terms of market share. Lower revenue, lower sales would logically mean lower losses as well, but that's not what the company is reporting. It had roughly negative EBITDA margins of 9% in quarter 1 of FY25. That subsequently increased to minus 28. And in quarter 4, actually, it's coming at minus 100%. So essentially, that means the company's revenue was 600 crores, but their losses in EBITDA was 770 crores. So it's essentially the fixed cost that's hurting the company, and the negative 100% EBITDA margins in quarter 4 has dragged FY25 profit losses much higher level as well. The net income subsequently has, of course, dragged every quarter. It's at 870 crores in quarter 4 versus revenues of 600 crores in quarter 4. So it's a very somber picture, to say the least, in terms of financial as well. But the bad news doesn't end there. There are 5 key negatives that the company highlighted in this particular quarter. They've announced another one-off impact of warranty cost of 250 crores. This is the 3rd consecutive quarter of warranty cost that the company has essentially taken in terms of financial and P&L. What this means is that the company has sold their scooters, and there has been some issues in that, and now they've fixed up. They have to put up some cost per scooter as well, and that amount has now ballooned every quarter now, almost 600 crores impact of that in FY25. The second key aspect is that they are delaying the use of their own batteries that they manufacture in their scooters. The plan was to start from Q1 of FY26. That has now again been delayed. And Ola had earlier committed to this timeline. They are now delaying it to next couple of quarters, to say the least. EV bike deliveries, they mentioned that have started this week, but the bike is not available in the showroom for a test drive as well. And the fourth one is the delaying the launch of new products that they had announced of the gig to which was starting at 49,000. No further timeline of how far this has been pushed out. And in terms of EBITDA profitability as well, the company had guided Q1 will be EBITDA break even at least. They've come out and said that minus 10% EBITDA margins is what they are expecting. Now, there are three key things that you need to know from the next quarter perspective. Ola Electric has guided for 800 to 850 crores in revenue, as they call of a one-off guidance. EBITDA break-even will only be done at 25,000 units per month. For the last quarter, the average was roughly between 17,000. So, for Ola, the IPO frenzy is now over. Reality has set in, and definitely the company needs to recharge itself from now on.
You know, the stock issue price was 75 rupees. It's at 50 right now. You were mentioning, Puneet, there is a call of 30 rupees on it, or 35?
Yes, definitely. You know, Kotak has come out with a note, and from 76, it actually rallied to 157.
Exactly.
So from there, it has fallen to this level of 48 and 49. And for Kotak, what they have actually mentioned is they've downgraded the stock to a sell. 30 rupees versus 50 was their earlier target, and a couple of key points that they're making. They are expecting the EBITDA loss to continue amid this weakening brand equity as well as increased competitive intensity, and they have actually cut their volume assumptions by 30% over the next 2 years. So 30% in FY26 and another 30% in FY27, and they feel that the company will need to really scale up to loom any kind of cash crunch right now, but that seems far-fetched is what they've said.
So, I mean, it's just wealth destruction for investors more than anything else, which is worrisome. We'll take a very short break. One of the things maybe which is a pain point for Ola is that the big boys have come into the two-wheeler EV space in a big way. Among them is Bajaj Auto. We're going to be speaking with Bajaj Auto on the other side of this break in the next segment. But before that, we have a great speaker. Kenneth Andrade will join us to talk about how to invest in volatile times. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What?
All right, back with India Market Open right here on NDTV Profit. A very special guest up next on the show, Kenneth Andrade, founder and CEO of Old Bridge Mutual Fund, with us on the show. Kenneth, so good having you. Thanks so much for taking the time out.
Morning, Neeraj.
Kenneth, we've ended or almost ending the earnings season as well. GDP data coming out later today, and a lot of global to and fro. I mean, between the US administration and the judiciary also, but the resultant impact that all of that has on world trade. How do you analyze the landscape and how to invest in such one?
So Neeraj, step back. We've always been through the situation over the last decade or two, right? There's always been an event that has impacted markets. But at the end of the day, you just have to look at fundamentals of how companies actually navigate this entire landscape. So obviously obviously international trade is going to be a little different, but that doesn't mean that there doesn't exist a market. There exists a market at a price point. You'd have to find something that is efficient. Companies have a business model and mapping into that entire business model. Okay. The domestic economy is actually slowing down, but within that domestic economy slowing down or using within that economy actually not slowing down, you just have to find places of the economy which are doing well and reallocate capital from them. So the breadth that you've had in the market so far, our sense is that it will narrow down. And you just have to play to your strengths as what do you want to own and what do you want to eliminate from your portfolio. And I think that's the strategy that we've adopted. So far, 2025 has turned out to be pretty okay, which is historical. 2026, let's see how this continues to go through.
Okay. Kenneth, is there a concern around valuations, or do you believe this is acceptable? Because last week when we were doing some math, at 25 times for the small caps and maybe circa 20 times for the large caps, do the valuations look egregious, or is this palatable?
The biggest risk to the Indian market is the way we trade, is valuations. So this is not just the mid caps, small caps, but some part of the large caps also trade at these these valuations. We haven't been here before, and we haven't stayed here for this long a period of time that we're doing at this point in time. So if I had to look at it, we're probably the most susceptible to any global macro event that takes place, just because we are placed at the top end of the entire price earning multiple band. Okay, and that's how we read it. Will it come significantly lower than where we are? I think I've been on record stating this, that as long as we maintain our cash flow positive nature of corporate balance sheets, of corporate income statements, it is unlikely that you're going to get the Indian markets extremely cheap. A 10-20% correction, maybe, but I think markets will stay elevated in terms of price earning multiple. Now you'll have to move that entire argument. We have to move the entire strategy to how can you pick growth within this entire in this entire environment, and growth which will come in at a valuation which is not very close to where markets are trading, and there are opportunities out there. So to put it short, small caps are expensive. But there is about 20% of that market which is still investable in. Mid caps, the same. Large caps, obviously it's a marketplace where if you have to participate with the broad economy, it's a place to be in at this point in time. But to make abnormal returns out of the large cap segment, I mean, it hasn't been done in the past, but it will be a great stabilization to your portfolio in any eventful time.
Kenneth, hi, good morning. Tamanna here, and always a pleasure to speak with you. I'm wondering what you made of FY25 in terms of corporate earnings, and you talked about till balance sheets are still showing some move. You can't expect valuations to come down, but now it's becoming a more stock-specific play, isn't it? You've seen some real extremes this time round.
Yes. So if you tabulate the numbers, we just about did a double-digit growth in profitability across corporate India, and my sense is, our sense is that in 2026, this number on growth should slip to about high single-digit numbers. So which is where we are. High valuations, a very uncertain environment, and not too many people are investing in this environment because there's no clarity on how things will emerge in 2027, 28 if they do emerge. So I think that's where we stuck. There's reinvestment risk, cash flow coming on balance sheet. 2026 will be yet another one of those years where you'll have a single-digit growth in profitability, and probably more cash flow coming through because there is just no significant sizable investment that is there on the ground. So I wouldn't expect too much to happen in this year and a half, and you have to navigate your portfolio very carefully because here you can't make a mistake because those mistakes are going to take you back some. You can't make a mistake because those mistakes will cost you for at least the next couple of years.
So this is important. It's you have to be more careful in this market, and you can't really make a mistake. What are the spaces which you're seeing some upside continuing, Kenneth? I'm just wondering, what do you see on the sort of tariff and geopolitical play? IT, for example, seems very susceptible. That's why you're seeing blow hot, blow cold on every alternate day. Autos, auto anks, textiles, some of those export facing. Would you say better to stay away for now?
I wouldn't really say that because look, all of these companies have most of these, or a large part of these companies have created business models which are the most efficient globally. So to take a very efficient business and penalize them because some countries put up a tariff is basically not the right way to look at it. Because if you're efficient globally, I think irrespective of what trade barriers come through, you will still find a market somewhere in the world. Okay, so US is about 24% of the world market, maybe by GDP standard, but you still have 75% of the market still addressable market that you could go out and carve a market share for yourself. So I think that's what's happening at this point in time. So it's an investment phase that companies have to go through. 2025, we saw a significant amount of that happen in some of the businesses. 2026, you'll again see people recalibrating their investments into which part of the market they want to address. So tariffs, I don't think we will be talking about so much of this in year 2027 or even at the end of 2026 because a large part of that will already been done. And most companies out there can actually go out and use this as an advantage. And gather market share out there or create new markets, either of the two, and I think that's the right way to grow. If you're going to say that there is trade barriers out there, the Indian environment is a little sluggish, capex is not happening, then maybe you're starting at the point that there is no way you could you can profit from this situation. But the more we talk to portfolio companies and outside them, some of them outside them, I think everyone understands the macros. Everyone's building out a business model to address these challenges that are there. And I'm pretty much sure at 2027-28 we'll come out of the right side of whatever is happening in the macros at this point in time.
Kenneth, we were speaking to Pranjul Bhandari of HSBC earlier in the week, and she was of the opinion that don't look at capex, but look at consumption for the next 6 to 9 to 12 months, because that's where growth for FY26 might come by. Now, with an assumption that that theory might hold true, just trying to understand, if one wants to play consumption, and if FMCG, because it's everybody's crying horse and it doesn't perform, you want to leave that out. How do you play that? Do you play it through premiumization, let's say travel and tourism, liquor, niche urban consumption, or how else do you play consumption in the current scenario?
I mean, if you want to structurally pick consumption, you would necessarily need to argue the fact that per capita GDP is going to rise secularly. Okay, and this secular rise in per capita GDP has to come with deflation or virtually no inflation in cost, and that creates a, a gap for discretionary spends that would come through. I'm not seeing a very large gap, or I can't project a very large gap in that number. So consumption will be moderately good, also because a large part of valuations have been corrected, and it will be in pockets. In pockets. So if I had to reallocate into the consumer economy at this point in time, we would essentially what we keep talking about is watch the metros, watch urban consumption. And watch high-end consumption, okay, or luxury consumption. I think that's where all the cash flows have been. That's where all the cash flows are. That's where all the spending power is going to be for a while. So you mentioned a few phrases out there. One of them is premiumization. Yes, but you can only premiumize to an X level. We do have, or we like the real estate cycle. We still like the real estate cycle at the top end of the market. It's a very consolidated market, but that's what we still like at that point, at this point in time. At the bottom end, I think there's just too much fragmentation happening, and there's no pricing power out there. So I'd be wary of consumer businesses which have absolutely no pricing power. Any industry which is fragmenting and has no pricing power, profitability is at risk in the medium term. And I think that's what's showing up in all the consumption stroke consumer businesses or the FMCG businesses out there. Pricing power is just not there in that industry. Premiumization exists, real estate exists. If you look at aviation, it's aviation, hospitality, etc. I think these are parts of the market which are not typically consumer-led businesses, but they are discretionary consumers. But urban consumption is a trend theme which could be structural at least for a while.
Okay, thank you so much, Kenneth. Always a pleasure having you on. Kenneth Andrade there on what should be the trading strategy and investment philosophy actually right now. All right, let's talk about auto, and the big numbers this morning are definitely Bajaj Auto. Good set of numbers in my view. Stock seeing some pressure at this point. Remember, high valuations is always a concern as well. Rakesh Sharma, ED at Bajaj Auto, joining us now on NDTV Profit. Mr. Sharma, always a pleasure to speak with you, and thank you so much for joining us. Looks like a robust quarter, better than most estimates. I suppose the one fly in the ointment would be domestic sales and how they've been progressing, but you do see a turnaround there.
Yeah, indeed. Certainly the area of the 125cc plus segment, which is the top half of the industry, is a key area of focus for us. And there has been some erosion of market share over there. But, to put it in perspective, this segment really started surging post-COVID. And at that time, 3-4 years ago, we were at 19-20% market share based on registrations. And that sort of grew to 25.5% in FY24. And in FY25, we are down by about 1.5% as per our estimates. But we rather, take this very strongly and react fast, because our ambition, of course, is to be at the leadership position in this segment. We are about 5-6 percentage points behind the number one. We are at a steady number two, considerably ahead of number three, number four. So we prefer to overreact. We have put in certain countermeasures in terms of expanding our portfolio to cover all the sub-segments in the 125cc plus segment. And we have seen some early signs, too early, but we are seeing some positive signs in April. And hopefully, during the course of the year, we should be able to wrest back the market share. and grow faster therefore than what the industry is going to grow.
May I ask you to elaborate, sir, on some of those strategies that you've mentioned and you're seeing green shoots in April itself?
Like I said, we have introduced new variants to cover more subsegments. We have introduced 6 variants so that all kinds of customer cohorts have a choice which is apt for them. And these range from very simple commuter variants in the 125cc to a very high performance upgrade in the Pulsar NS 400. So with the expansion of the portfolio, I think we've got a man-to-man marking, and we would be having for each competitor, and there are 3-4 competitors we compete with because we are straddling the whole segment. We would be having a model facing off with competitor models.
Right. Rakesh, good morning. Hiral on this side. With the 125cc coming in, would it be right to say that that will probably ease out the profitability pressures as well from higher share of, what came in on the back of higher share of two-wheelers, that's the entry-level ones, and the EVs? And secondly, the average selling price to an extent will improve further as well in terms of FY26.
Well, the profitability, as you know, has held rock steady at 20% plus over last 6 quarters, despite the ups and downs in the environment and the rise of the electric vehicles business, which was in FY24 10% of our domestic revenues, which is now doubled to 20% of our domestic revenue. So there has been a lot of dynamic management. It's been very helpful during the last financial year to have a slightly softer rupee because it improves the realization, and that drops down to our margins. Going forward, we will continue with the same approach of dynamically managing and trying to optimize growth, bottom line, and market share. Having said that, we will see some support from exports to KTM returning because they were always at much superior margins. Overall, exports continuing to clock 15% plus growth, and perhaps a steady cost environment. But the headwinds really are going to be, the hardening rupee. Already you know that towards the close of the last quarter, the rupee appreciated, and that would be a strong headwind for us to manage. Right. So we'll have to manage both these, the support and the headwind, and see how. But the aim, of course, is to always deliver a better class.
So Rakesh, interesting point that you made about KTM as well. Yes, the anticipation is it will start delivering in the second quarter of FY26, and that's what you've mentioned in the conference call as well. But taking KTM into its exit with regards to bankruptcy, how long will it take for the company to get back on track, and how substantial or how confident is the company to deliver on that front so that it supports this recovery that you've seen in the export business?
So the exports to KTM have already commenced in quarter one. Recommenced in April. There was a gap when they became zero because of the severe liquidity issue. There have been 2 sets of actions. One is to solve for immediately is the liquidity issue at KTM and the paying off of the pared down debt. You know that there was a court supervised process where the creditors had accepted a 70% cut, and that 30% had to be committed by 23rd of May. And that has been done. The second set of actions is our intention to take majority control in KTM. That is subject to regulatory clearances, both in India and overseas, which may take a couple of months. We obviously believe that this is a very sound opportunity for us. We have been partners with KTM since, though at a minority level, since 2007. We have produced over 1 million bikes for them, which have been sold in 80 countries. We have an inside view on the deep franchise and the differentiated franchise which the KTM brand enjoys all across the world. And of course, there has been a convergence of unfortunate factors, the demand falling off, the e-bike business loss, the misreading of the volatility in demand and the expansion of stocks and working capital. But the customer franchise remains quite vibrant. So we are very optimistic that it is a great opportunity. As soon as the regulatory clearances are through, we will put our shoulder to the wheel along with KTM and see, how it can be brought back on track, ready to race as soon as possible.
Just want to understand, Mr. Sharma, just on the EV strategy, and I know you referred to it briefly, but I want to get a little bit more into it. Is that the next growth driver you're seeing? Because the trajectory is there, but the margins perhaps are not.
Well, it's a process, Tamanna. So we've always been saying, even in the days when people were saying that, oh my God, now EVs are going to replace ICE. We on the ground, we never felt that EVs will replace ICE. I think companies like ours, which have a global business spread in 100 countries, and even in India, which is our major market, we will see the coexistence of different formats because these address different use cases and the customers' needs are very, very diverse. So we feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by Q4 of FY25, our EV business, which comprises both three-wheeler, e-auto and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery and of course, it is less than the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business. We were not in scooters. So this is a new segment which has become available to us in India and subsequently overseas. Similarly, in three-wheelers, the EVs are going, e-autos are going to areas where ICE autos were largely restricted and we couldn't do business.
That's fine, sir. I'm not alluding to any cannibalization within segmentation. I'm just trying to understand if one of the largest companies is ready to make a pivot, and if it's making sense right now to EVs. In terms of a revenue share, where do you see this going down the line?
But that's exactly what I said. There is no need to make a pivot.
Okay.
This is not a 0-1 situation.
It's an add-on.
We feel that ICE and EVs will coexist and we want to flourish in both. With EVs, there is no dilemma for us that, oh my God, we are replacing a high margin ICE with a low margin EV because it is a new business for us. Yes, when you put the percentages together, it is lower percentage. But
so Rakesh, I think, Rakesh, the question comes in over here is, one of the peers who's come out and said for them to see a EBITDA break even, they will need to sell 25,000 units a month. If I have to look at a Bajaj Auto, for the margins to become an absolute lever for the business, to see what the other part of the business is doing, how many units of EV will Bajaj Auto need to sell to get that kind of a number out?
Well, I'm not aware of this maths which you have just...
no, this 25,000 is a competitor, I'm saying, not for Bajaj
I don't
Auto.
understand where that maths is coming from, but I told you that with our 3.5 series, which I think mentioned last time also, with our 3.5 series, in two-wheelers, we are already positive, and like I just said, the entire e-portfolio which we have, which is 20% of our domestic revenues, is already positive. And on an absolute level, it is adding to the EBITDA pool. On a percentage basis at a corporate level, yes. But you see, that happens, that kind of maths is there everywhere. There are 108 countries. There are some countries which are highly profitable, and there are some countries which are negligibly profitable. And you have to manage size, growth, profitability, and a competitive position. So these are not, 0-1 black and white decisions. EV is an important segment. It is there. There is opportunity to make money, and we'll go ahead and do that.
Absolutely. Your point taken into consideration. My last question is with regards to KTM. Post the resolution, post the regulatory approvals, what's the plan with keeping Triumph and KTM business separate in Europe? How will that function? And two, who's going to head the KTM business? What's the strategy there? Is it going to be someone in-house, outside, someone with expertise in the European market? How are you looking at that aspect?
Well, these are very premature questions, but just to address one or two things so that there is clarity, there is no interrelationship between the way Triumph is working. Triumph is a strategic alliance. It's a non-equity partnership that is continuing. Triumph and KTM were coexisting even before this fracas which has happened with KTM. So that is continuing. In KTM also, we have, there is already a CEO over there, very, very efficient and very effective CEO who joined in September last year. And the CEO is building his management team, and they will continue to operate. Of course, once the regulatory approvals are through, we will work more closely with KTM to capture the synergies, primarily at the back end in manufacturing and R&D and procurement, and to some extent in the front end. And that work will begin in true earnest once those regulatory approvals are through.
One last question, Mr. Sharma. We've been speaking about FY25. We've been speaking about a longer-term outlook. You mentioned earlier in the interview that April is beginning to look good. Monsoons have hit early. Just want to get your sense of, what the feel is in terms of demand, and are you expecting this to boost?
Yeah, so what I said was that in terms of share, we are seeing improvement sequentially between Q4 and April, May, if I may also add that. But in terms of the industry, we are not seeing a big surge in the industry. Industry is in the, I'm talking of the motorcycle industry in terms of the registrations. It is in the positive zone, but it is not. We are not seeing any kind of surge. So it's a steady equilibrium position in which our countermeasures are yielding signs of some early progress.
Excellent. Thank you so much, Mr. Sharma, for that detailed conversation with Bajaj Auto. Always a pleasure to understand what's happening with the company. We're keeping the focus with the space. SAMIL numbers have come in. We'll just pull up the stock very quickly before we get Puneet in, who's tracking the company and is speaking now to Pankaj Mittal and Kunal Malani from SAMIL. Puneet.
Well, definitely, and it's been a slow quarter for the company, a weak set of numbers, because largely again the margins have actually come down from the previous quarter. They were affected by roughly 70 basis points, and those are some of the questions that we want to pose to the management as well. And what's the impact of this, and how do you expect FY26? So we are joined by Mr. Pankaj Mittal as well as Mr. Kunal Malani, who is the management at Samvardhana Motherson. The first question to you, gentlemen, and thanks so much for joining in, is on actually I want to start with the US impact as well as the tariff impact that you are seeing, because you already have a factory in Alabama, so you will be servicing a little impact from there as well. But how do you largely see the tariff impact before we get into the company's financials?
So, look, tariffs been a little bit of a volatile piece. We really still do not know what is the end piece on the tariffs. Every day seems to be a new story on it. But having said so, look, since we produce in the US, we produce in Mexico, we produce in South America, Europe, etc., etc. We do production there and supply there locally. So we really do not have as much of material flows happening across the globe. Hence, most of our products are actually USMCA compliant, and hence the tariff implications are relatively muted. Whatever else that is there, frankly, we have been in constructive discussions with our customers to see that all of those can be passed throughs to the customer. So overall, we do not see any direct impact of any major nature in our from a financial perspective. So it's not really a challenge from our perspective. Having said so, it's an opportunity at least for sure, because we are a global company spread across 45 countries. In a scenario like this, the customers are likely to ask us to produce in more favorable areas where we do have facilities, and that enables us to thereby, rejig our supply chain and our production centers to cater to the revised needs, which may not be as easily doable for many other players. And hence, we may tend to gain share. At least that's what we are seeing when some of the RFQ flows that we are seeing in our business. On top of it, in an environment like this, where the developed market continues to have uncertainties around the production side, interest rates remain elevated, inflation is higher, though lower than what it used to be, but still continues to be higher than, let's say, 5-7 years back. And hence, in an environment like this, there seems to be a lot of suppliers who are going through a painful period. And the customers are looking out for players like ourselves, which has much stronger balance sheet. You would have seen our net debt to EBITDA is 0.9x, and hence a fair amount of headroom to consume some assets. And hence, M&A seems to be a strong pipeline right now. And in a uncertain environment, it actually starts popping in that much more. As you know, ours is a customer-led strategy, so you can imagine in a situation like this, the customers are more than keen to see a player like us come and stabilize some of their supply chain issues.
Well, I just had one follow-up question to both of you, because specifically we've seen almost like 19% of your revenue come from the US. Now, I'm guessing that will also be billed revenue. It could be transported from other locations as well. So, how much is already served from within the USA, if you can quantify or give some direction, as well as how do you see, which is USMCA compliant as well, basically plants in Mexico and Canada, which President Trump has given that pardon. But how do you see that impact as well?
Look, the billing is happening from US. That is what is telling you in that 19% mark. The material moves multiple times across the borders depending upon the nature of the product that you're referring to. So difficult to put a number, but I would say a very large majority of it would be USMCA compliant. Also, what we supply finally out of our US facilities is supplied to our customers in US itself. So it's not that the end products are actually moving shores, and hence, limited impact, even if there are reciprocal tariffs that may come up in other parts of the world.
If I get into the verticals as well, Vision Systems, amongst others, has underperformed essentially in Q4 as well as FY25. Could you call out some of the impact that has happened because of that? Is it an industry issue? And how do you expect that over the next year?
Actually, we would request if things are looked at on a year basis, that gives a far better picture on the performance. You're right that the vision vertical has a relatively muted growth. Part of it is driven by the nature of the industry. You would have seen that the industry has also degrown by -1% in this year. It's also been degrowing. If I were to look at ex-China, the degrowth is even steeper at -4%. And we are a large market share player across the globe, and hence the industry outcomes are reflected in the way the revenue plays out. Having said so, I think you would have known that we had created the camera monitoring systems quite some time back. Very happy to report that we have made significant inroads in that product now. We won nearly 400 million plus lifetime order on camera monitoring systems being embedded in the commercial vehicles, which will be a completely new line and will augur really well for the growth of the vision vertical going ahead.
So just adding to what Kunal mentioned about vision systems and what I wanted to also urge you to look at how Motherson has grown over years. So what we have done is we have continued to diversify across all three Cs. So you will see 3CX10, and in that component, diversification is also there. And we have been continuously adding more and more content to support the customer. So it's not just about any one particular division or any one particular product. So with the Achusan coming in, we have now the sunroofs. We keep growing from one customer to multiple customers. In the vision system, CMS, as Kunal mentioned, that comes in, and more capability in aggregation with MSAS coming in is happening in the group. Regarding your question on in terms of how do we see the market, well, the market has volatilities and uncertainties, and the Motherson has always performed very well in these circumstances. So if you look back, over a 5-year period, we have just finished our 5-year term, and that's what the board looked upon and mentioned to us. They congratulated the entire team that in this 5-year period, which is one of the most difficult periods in our lifetime, where we had COVID, we had supply chain interruptions, we had wars, which led to many, disruptions, the company has performed very well. Over a 5-year period, we have given a CAGR of 19% on the revenue side, EBITDA 21% CAGR, and on the PAT 68% CAGR. And there has been impeccable execution. 23 new M&As, new companies got integrated into the group. So it's now 200,000 plus member Motherson family, which is performing together. So these ups and downs of the markets, uncertainties will be there. The company has shown time and again that it has the resilience to overcome them, perform under these tough circumstances, deliver quality, win many awards from the customer, and with their trust, move forward. And when there is so much of uncertainty and there are weak companies which have been there, where there are a lot of issues due to multiple reasons, geopolitical issues, customers ask us to acquire more companies, and that what gives us the opportunity to have more and more M&As. The whole idea has been to support our customers globally and support them from near shore. So always our facilities are nearby where our customers are located.
Well, I just want to take the point forward on your 5-year plan, because specifically we saw the 5-year plan has now ended in 2025, which was last announced during 2020, and it's been a strong growth, as you mentioned. Any kind of clarification that you can give us on what's your next 5-year plan? Is that already out?
Well, the detailed 5-year plan will be sometime when we do our investor conference. And that will be somewhere around September, October time, where we will give a complete details in terms of how we go ahead with our next 5-year plan. But just to share with you, I mean, today during the investor call, there were certain questions coming on this topic. So we did disclose that it's an ambition for the Motherson Group that we would like to go towards $108 billion in the next 5 years.
Well, one of your key new verticals has been the emerging businesses, and while there are a lot of other segments within that as well, which is segregated by auto and non-auto, within non-auto space, one of the key verticals is aerospace. Now that's roughly about 1,700 crores of revenue versus just about 330 last year. So I'm guessing a lot of orders were executed in this year. But if you can just talk us through what kind of products do you offer here? Is it because a lot of private defense companies in India, have a very long gestation period to qualify for these orders? Are you competing with those kind of orders? And with the two biggest giants in the aerospace, which is Boeing and Airbus, is there any kind of direct supply that you have with them as well?
Look, you're right. It takes a fair amount of time to make inroads in a space like aerospace. We actually started this journey all the way back in 2015, 16, 17. Somewhere in that time frame is when we had created a team in order to explore entry into this market. We've been working slowly, giving customers an experience of Motherson. The first product that we won was actually the seat numbers that you see on the flight. When you enter and you start looking for your seat number, that's part that was one of the first orders that we won. So it's come a journey since then. We acquired Sim Tools in 2022. This was again at the behest of the customer. We created a joint venture with them, which was doing both soft and hard metal machining, making parts for some of the door, the emergency doors that are there. They were making parts for the door frames, some of the winglets, and it's a complete machining outfit. Then the customer asked us last year to acquire AD Industries. Those were doing some of the large parts for the LEAP engine, which, if you know, is pretty much like 60% of or more of the market share of the single aisle aircrafts. So we've just followed the same philosophy that we have done on the automotive side. We have got in a small way, gave an experience to the customer. The customer has liked what we have done. We have waited for the customer to give us the right opportunity. Then after taking that opportunity, did well with it. And thereon, we got more and more opportunities. So that's exactly the philosophy with which the automotive business was created. And now we are creating the aerospace. In the time frame that we bought Sim Tools in 22 till now, we've pretty much quadrupled their order book. We've added new facilities in there. We are now also leveraging that facility for doing beyond automotive as well. So one of the things we've highlighted in this quarter as well, that we have started a greenfield for producing parts that go towards making the machines for the silicon wafers in the semiconductor industry. And that's again utilizing some of the machining capabilities that this asset has. So that's been the philosophy of utilizing again the capabilities that we have and trying to do more and more parts for different industries. So it's on a very strong footing right now with around about 1.3 billion of order book. The growth that you're seeing right now, 5x, is obviously driven partly by the M&A that's happened, and more of it will come as new greenfields kickstart next year. On the profitability, while you're seeing a 2x growth, but as AD Industries stabilizes and starts ramping up, we should be able to see more improvement on the margin front as well, besides the absolute profitability growing as well.
Well, Mr. Malani as well as Mr. Mittal, thanks so much for joining in, giving us the whole host of views on FY25 as well as what's the expectation from the next year. We wish you the best for the next and look forward to our next conversation. Well, viewers, with that, it's a wrap on this edition of Earnings Edge with a very special conversation on Samvardhana Motherson. Stay tuned to NDTV Profit for more. Ask Profit comes up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hi, thanks so much for joining in. Happy Friday to you. My name is Alex Matthew. This is Mahima Vachhrajani, and we'll take you through the next 45 minutes of trade. This is Ask Profit, of course, on NDTV Profit. And this show is geared towards getting you answers to all of your stock-related questions. To that end, you can either call us on the number that you see on the screen, the landline number, of course, or you can send us a message. Let's very quickly take you through what's happening with the markets right now. And I won't spend too much time telling you about that because you can see that on your screen for yourself. You have the benchmark Nifty 50 that's trading at the low point of the day, down about 0.4%. And you have the broader markets that have also capitulated just a tad bit, trading lower by about 0.4% for the mid-cap index, as well as it's about 0.1% for the small-cap index or thereabouts. So more strength as has been the case over the course of the week in the broader markets, and that continues to be the case. The market breadth, however, is tilted very firmly in favor of the declines, and that has changed quite dramatically over the course of the session. Most sectoral indices, if not all, are trading in the red right now. Let's pull that list up as well, just to give you some sense of what is happening. Energy, defense holding out as the relative better performers, but the metal index down about 1.7% or so. And you have this realty index that's down 1%. Auto, led by Bajaj Auto and a couple of other players, down about 1% or so. We're joined today by Jatin Gedia, a tech research analyst at Mirae Asset Sharekhan, as well as Mahesh Ojha of Hensex Securities. Thank you so much, gentlemen, for taking the time. Let me start with the first question, and that has to do with delivery. And we've got Mohit from Ludhiana who's asking about this. He's bought at levels of 280. The time frame is 3 years. Should he continue to hold is the question. He's in the green right now. Mahesh, should he hold on?
I think he can hold further. Some upside could become there. There could be a 440, 460 range. And technically, if you're looking from a delivery chart, it's also positive. So I think he can hold further for a 460, at least 460 level.
Interesting note on delivery also today from Bernstein. They have upgraded the stock in terms of the ratings, but they've cut the target price to around 430 from 450. All right, the next question is on Suzlon Energy. Priyanshu is writing in and wants to know whether he should hold, sell or add more of Suzlon at the moment. The stock is up 10% as we speak. Mahesh, I'll come to you on this one. Stellar set of numbers for Suzlon this particular quarter, and volumes have also significantly gone up by 110%. Profits have jumped almost threefold. Just wanted to get your sense as to how Q4 has panned out, and should one continue to hold right now and add more at the moment?
Definitely, number are super from all parameters. I think technically also it's giving good breakout, so it can be hold and any downside nearby 70 range can add further. I think a stock can re-rate further for 85 to 90 range at least. So this number is supporting for price. I think he can hold for if anyone want to add further and nearby 70 range. If anyone getting. So they can add further for a longer term period. I'd say bright journey. It's look like say bright journey in Suzlon in coming time.
All right. A lot of people have this stock in their portfolio. It's rewarded them well. It's bounced from recent lows as well. ITC Hotels, relatively new listing. And we've got Muzaffar Ahmed, who's writing in from Delhi and asking about the relatively short-term targets for this one. He's got 3,000 shares, which he's bought at levels of 205, and so he's making a pretty penny. The question for you, Mahesh, he's planning to hold only for the next 1 to 2 months. Should he do so, or should he extend his time frame? And what are the levels that he should look at?
I think he can hold for the 225, 228 level can become in ITC hotels if you are holding for a shorter term period. But if your horizon is 6 to 9 months, at least we can see 250 to 260 zone in ITC hotel. Technically also strong and fundamental also supporting for a price.
So that's with regards to where ITC Hotel stands. In fact, they've got a very strong pipeline of key additions that they're planning by FY30. So interesting stock to watch out for. All right, the next, in fact, the first caller of the day, Shailja, is calling in from Hyderabad. Shailja, a very good morning to you. How can we help you?
Hi, Mahima.
Hi.
Good morning. Yeah, I have a query regarding Titagarh Rail.
Okay.
I do have 13 shares at price of 1,200.
Okay.
So I want to know, I want to know the fundamental analysis and whether to average it or not.
Okay, I got your query, Shailja. I'll take this up with Mahesh. Mahesh, I'll come to you on this one. She wants a fundamental view on Titagarh. What's the outlook like? And should she continue to hold the 13 shares that she's holding?
See, fundamentals of Titagarh are strong. I think if anyone want to add, then they can add in 850, 860 range. If any coming range, that could be from current perspective, it looks like say 850, 860 zone could be a good opportunity to add. Further from taking to fundamentals, I think 1150 to 1200 level could be coming near term also. All the market are doing good and the small and mid cap are performing. So Titagarh also, we are hopeful for Titagarh also will perform in near term. So I think if anyone want to add, then 850, 860 range could be addable and upside could be 1150 to 1200 level in near term. That could be a 6 to 9 month horizon.
Sai Karthik is writing in from Dallas, Texas. Apologies. And he's got Hindalco, which he's bought at a price of 621.6. He wants to know the short to medium term time frame outlook for this stock. He's identified that as 3 to 6 months. Jatin, very good morning to you, and coming to you on this one. Metal pack under pressure today. What's the outlook on Hindalco though?
Yeah, see, overall, we believe that there is some amount of pressure in metals today. However, what we see is that the short-term trend for metal pack and in particular Hindalco is still positive. 620 is the buying price around which he has initiated his.
I think we have some audio issues there, but we'll come back to Jatin on that particular counter. Our next question is from Vishakha, who's writing in from Bengaluru. She's holding 35 odd shares of Siemens, bought 2 years back at 4085 a piece, and she's still considering it from a longer term perspective. Mahesh, I'll come to you on this one. She's sitting on a loss of 26,000 odd rupees right now. What's the outlook like for Siemens? Should she continue to hold or book losses?
See, some upside upside potential is there, but I think 4,000 is far from current view. I think 4,000 level could be very far from current view. 3,500, 3,600 level could be come in near term also. If any downside nearby, if anyone getting nearby 3,000 level, then they should average further if there is horizon is a longer term. I think 3,500, 3,600 level could be coming near term. From that perspective, they can accordingly plan their trading or investing.
Just let's complete that view though. I got your view on Siemens. Jatin is back with us. Jatin, unfortunately, we're facing a little bit of an issue with your line, but you were making a point on Hindalco. Would you like to complete that?
Yeah, see, in the case of Hindalco, the immediate, there is some amount of weakness that is creeping in because the stock is now breaching its 20-day moving average and sustaining below that. So there is a possibility that the stock slips towards 620, wherein the next crucial support level is placed. So I think you should continue to hold over a period of say 1 to 2 months. We are expecting levels of 685 in the case of Hindalco. So hold on in the case of Hindalco with a trailing stop loss placed at 605 for his investment. As of now, weakness is there. However, the downside is limited.
All right. All right. Thanks so much for that view, Jatin. And I understand that you're leaving us right now. So happy Friday and thanks so much for taking the time. Mahesh, do stay with us. We have to slip into a very quick break. Viewers, on the other side, we'll take more of your questions. So do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास पार हो या नियर सब कुछ दिखे क्लियर
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
ICICI
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching Ask Profit on NDTV Profit, and Ravi Singh, Senior Vice President Retail Research of Religare Broking, joining us on this side of the show. Ravi, thanks so much for taking the time. Pleasure having you on the program. All right, we've got our next caller from Hyderabad. Govind is calling us, asking about Natco Pharma. Govind, good morning to you. How can we help you?
Very good morning, sir. Alex, sir, Mahima and all of the team. Sir, actually, I have brought to say Natco Pharma, sir.
Yes.
on the average price of 999 rupees actually.
Right.
I brought 6 months or 8 months back, and when again I will come down to the average actually.
Okay.
Is it right time to add some more, sir, or else what is the technical view or fundamental view, sir, actually?
So, but are you intending to hold for the long term, Govind, or is this a short term?
Yes, sir. I can hold at least 2 to 3 years.
Got it. Okay. So from that perspective, Mahesh, then on the fundamentals, we're still waiting for that secular up move in some of these pharmaceutical companies. So Natco Pharma, what's the opinion here?
See, the last current quarter number came good. I think number is supportive for price also. So from a shorter to longer term perspective, I think if they even want to add in lower level, that could be range 840, 860 range could be a good range for add further. I think 940, 960 range could be coming near term. That could be 3 to 6 month horizon. After that, what we can see 1050 to 1100 level in Natco Pharma. So we are quite positive on Natco Pharma from now onwards.
So that's with regards to where Natco Pharma stands. The next question is from Parul, who's writing in from Dubai, and she wants to have a view on GPT Infra. She's bought it at the levels of 147. She wants to know if she can hold or sell now. Ravi, I'll come to you on this one. What's the view like? What are the charts indicating?
Yeah, chart is looking positive and it's consolidated around 140 to 145 level. So put the stop loss of 140 and hold for the target of 165. And once it achieve the target, then kindly ask again, because there is a very volatile counter. So I can say that just once it achieve the target, then ask again, ask profit.
Okay, so that's with regards to where GPT Infra stands. The next question is from Nagendra, who's writing in from Tokyo. We're getting a lot of international messages today. He's holding 3,184 shares of Sandhana Nitro at an average price of 37, comparatively a very small counter. Sorry, my mistake. It's Sadhana Nitro, and he wants to know if you can help with an outlook on this particular counter. I'll come to you on this one, Ravi, for the charts. What are the charts indicating?
Ma'am, chart what indicating doesn't matter because that illiquid counter. So I can say that there is a lot of stocks. They have a potential to go upside, right? If you 20 rupees or 22 rupees, then South Indian Bank is one of the option, and PSB Bank is one of the option, but not this stock. So I can say that take exit from here and buy South Indian Bank. They have enough potential to go upside around 38. So better to switch your position.
So that's with regards to where Sadhana is concerned. All right, the next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning to you. Thank you for taking up my query. And I bought ICRA, rating agency, 38 shares in December 24, at rate of 6684.
Okay.
And is it better to hold because there are very limited options in this space?
Right.
And they also give a good dividend. Is it a better option to hold after the results yesterday, which they have done recently well? Or should I switch out to other rating agencies like CRISIL or CARE?
Got it. Got your point, Murli. I'll take this up with Mahesh. Mahesh, your view on ICRA. Murli wants to have a view on ICRA specifically, and ICRA versus other credit agencies like CRISIL. What's the outlook like?
I think rating agency counter can be held for a longer term period. From a shorter term period, if you are getting something, then book partially and try to re-enter in lower level. From these counter specific, we are looking, you can hold further for a longer term period. I think it's still much more potential for rating agency companies in India, ICRA, CARE, and any other companies we see he can hold further for a longer term period.
So, but the question is, you must have seen the results yesterday, Mahesh, and the numbers look particularly good. There is an expansion in the margins as well. Would you deploy further at this stage?
I think some upside could come due to expansion, but if you're looking from a longer term perspective, all the ICRA can be do very well in upcoming time also. So from that perspective also, and from working pattern of Acra, if you're looking on a working pattern, they are day by day increasing their working pattern. So I think a longer term period, they can hold further. From a short term period, we can see some profit booking in lower level. If anyone bought, then profit booking could become and try to re-enter if anyone get origin very short term. But yes, longer term is still bullish impact.
Long term is bullish on ICRA. Murli, hopefully that answers your question. Raghu from Bengaluru is asking the next question, asking about Texmaco Infra. And this is a share that he bought at levels of 142. He's currently incurring a loss of about 17,000 rupees. The share is currently trading at 99 or thereabouts. Ravi, on the charts, what are the prospects here?
Yeah, there is a very strong support around 90 to 88 levels, but I can say that don't panic, sir. This is the very good stock, and I can say that they have enough potential to achieve 135 levels. So from current level you can achieve 35% return on longer term. So I can say that do some average and buy more at this level. Put the stop loss of 90 rupees in a closing basis, and the target is 135. So don't panic, sir. Take call easily.
Okay, all right. So that's the view on Texmaco. Don't panic is the call from Ravi. Kiran is calling us from Hyderabad. Very good morning, Kiran. How can we help you today?
Good morning, sir. I'm holding 822 shares of Swiggy at 337 rupees, sir.
All right.
So could I see an upside in the next 3 to 6 months of good targets? And are there any buying opportunities in power and pharma sector, sir?
Okay, no, I'd like to restrict it to one per viewer, Kiran, if you let me, and then maybe down the road we can take more of your questions. But let me take your question on Swiggy. You've got a relatively shorter term time frame. Ravi, I'm just wondering if you have enough data on the charts. It is a rank underperformer. It is trading below its issue price. Do you have enough data?
Sir, I can say that order some Swiggy for food, but don't buy stock because this is not good at this level. So, once you buy and do the marketing, that is the very common strategy these days. The lot of men are doing. So I can say that take exit, sir. Don't panic at this.
Take an exit and order something. Order something for food. Do you concur, Mahesh? And is it your view in the food delivery space overall, or would you prefer an eternal at this point?
My view is totally different from Raviji. Raviji are not optimistic for a food delivery space, but I think Swiggy has a potential for some upside. I think 360 to 375 range could become in near term. If you're looking on a technical basis chart, that is also giving some support on lower end that is near 310. So if anyone want to add, they can add in 325, 328 range and keep stop loss near 308. I think 360, 375 level could be coming near term.
Okay, so that's with regards to food delivery platform stocks, that is Swiggy and Eternal. And it's interesting because Swiggy has been foraying into a lot of other things and not concentrating on something that they do well, that is the food delivery and their Instamart business. In fact, they've scaled up the 10-minute delivery platform quite significantly, and they should focus on that, in my opinion.
You would know, you're the analyst, right?
Yeah. All right. Moving on with the next question. Bharat is writing in and he's asking about an outlook on Z Entertainment from a longer term perspective and wants to know if we can add at the current levels. Mahesh, I'll again come to you on this one. What's the outlook like for Z Entertainment?
I think G has a much more potential for upside, but due to compliance issues, G is not performing. Once compliance resolved slowly, I think we can see 145, 150 range at least from a longer term perspective. If anyone want to add, then they can wait for some lower. If anyone get near 115, 118, they can add further. With a stop loss of 108, I think stock has a much more potential. At least 150 range could become in 6 to 9 months at least.
So that's the view on Z Entertainment. Mayur is calling us about a stock that is in focus today. Mayur, very good morning to you. You want to know about Mazgon Dock Shipbuilders. What do you want to know?
I just want to know the long-term aspect of that company, because even after getting multiple orders, the margins and overall profit slumped in quarter four. So just want to know what will be the longer view on this stock. I have 55 stocks at the average price of 955.
Yeah. Okay. So we'll have to correct that. We thought it was 60 shares at a price of 955. 60 shares at 955. All right. So okay. So you're sitting on a sizable profit at this point. Let me go across to Mahesh. Mahesh, what he's saying is absolutely right. You had margins that fell off a cliff. They came in at 3% or thereabouts. And I understand that in the shipbuilding space and the space that Mazgon is in, there's an S-shaped revenue recognition process that they have. So there is lumpiness that the business will see. But why would it fall as much as it did?
Partly I want to congratulate for choosing a good stock at a lower level. I'm also tracking from a 200 level from a Mazgaon Dockyard, I think. So from lower level, I'm tracking the same. If you're looking from a current data, they have done provision of 501 CR. That is the concern from result are not looking good. But yes, if you're looking from a longer term perspective, order book is very good. I think these kind of stock we should hold in a delivery basis. Don't look on a 1 to 2 month or a 1 to 2 quarter. I think 3 to 5 year horizon could be there, and they will make surely money in a longer term period from here onwards only. So I think he please hold the same and don't try to 1 to 2 quarter. If any adjustment, then that should be denied. I think a longer term zone it's still intact, and we can see some more handsome upside in Mazgaon Dockyard from these levels also.
All right, so that's the view with regards to where Mazgaon Dock stands. We have our next caller. Deep is calling in from Hyderabad. Deep, a very good morning to you. How can we help you?
Hi, this is Deep, and good morning to everyone. I'm calling regarding the Dixon Technologies.
Okay.
I'm holding a stock around, the stock for present, I'm holding around 210 shares at an average price of 15,858.
Okay.
I'd like to know the short-term targets and long-term or any options. Like I want to even accumulate at this stage also around 90 shares I can accumulate.
Okay.
And hold for short-term at least.
Okay.
I'm looking for. I'd like to have proper, little higher advice on this because I thought the result was very good and this, I don't know what happened for this share actually.
Right, got your point, Deep. I'll take this up with Ravi. Ravi is sitting on a loss of 2.6 lakh rupees right now, but he wants to know if he can continue to hold from a shorter term perspective to see some kind of bounce back in the stock. Like he mentioned, results for Dixon was stunning. There was a 121% growth in their overall revenues. What's the view like where charts are concerned?
Ma'am, definitely charts are poor now in recent days, but I can say that in a longer term, stock is good. If you compare with the IT industry, then I can say that this is the stock that they have enough potential to give a return of 17 to 18% on yearly basis. So I can say that wait for some time. You may see some more correction around 14,200 to 14,300 level, but don't panic at this point of time. Wait for the 14,200 levels or 300 levels. Once achieve the level, then buy double quantity, add some more, put the stop loss of 13,800 level for the target of 16,000 level. So there lot of volatility in this counter, but I can say that sit with the patient.
Keep patience with Dixon Tech as far as the charts are concerned is the view coming in from Ravi. Sticking with the EMS space, Mario Lobo has bought Keynes Tech at 6,500 on the day of Q4 results, and he's holding around 20 odd shares and wants to know if he can continue to hold this as well from a 1 month perspective. Ravi, I'll again come to you on this one. EMS as a space this time has done significantly well. Even Keynes saw a growth of around 77 odd % in their overall revenue. What's the support and resistance levels that you're observing on the charts?
Ma'am, there is a news impact. That's why we have seen some correction. So there is a very strong support around 58.50 levels. So I can say that put the stop loss of 58.50 levels. If cross below 58-50 level, then you take exit. Otherwise, just hold and wait for the your buying price level. So I think there is no panic. There is only the news impact. That's why we have seen some correction.
So that's with regards to where Keynes is concerned. Our next caller, Sham, is calling in from Noida. Sham, a very good morning to you. कैसे मदद करें आपकी?
मैडम मेरे पास में 350 शेयर है SW सोलार के 280 की एवरेज पे।
ठीक है।
मैं इसको 1 साल तक रुक सकता हूँ, क्या लगता है आपको इसमें क्या हो सकता है मैडम?
ठीक है, और ये आपने अभी खरीदा है क्या?
हाँ, मैंने अभी पिछले 1-2 महीने में एवरेज करके 280 पे आया हूँ।
ठीक है, ओके। समझ गए आपकी क्वेरी। मैं ये क्वेरी महेश जी से लूंगी। महेश, योर व्यू ऑन SW सोलर एंड इफ यू कैन आंसर दिस क्वेरी इन हिंदी, इट विल बी बेनिफिशियल फॉर द व्यूअर।
नहीं, देखिए आपका खरीदी भाव जो है काफी ठीक है। मेरे हिसाब से आपको होल्ड करना चाहिए, और ये आपको कम से कम, अगर आपका व्यू 6 से 9 महीना और 1 साल का व्यू है, तो 375 से 400 की रेंज आपको जरूर दिखा देगा। लेकिन थोड़ा टाइम लगेगा, थोड़ा कंसोलिडेशन जोन है, इसके अंदर थोड़ा टाइम लगेगा। फंडामेंटली कंपनी बढ़िया है। अब थोड़ा सा अब मार्केट टर्न अराउंड हो रहा है, स्मॉल एंड मिड कैप में थोड़ी सी बाइंग अपॉर्चुनिटी वापस से जनरेट हो रही है। तो मेरे हिसाब से थोड़ा और इसको टाइम देना चाहिए। आपको 375 से 400 तक की रेंज 1 साल के अंदर जरूर दिखा देगा।
All right. Shailendra is asking the next question on a stock that is of interest to a lot of people, IEX, and he's bought at levels of 175. The stock is trading above that at close to 200 levels. He's got 250 shares. He says he wants to buy on a regular basis for the long term. Is this a strategy that you would suggest is appropriate, Mahesh? A kind of like a SIP approach to accumulating this stock. What's the opinion?
I think there is a much more counter we can see that kind of strategy. But from an IEX perspective, I think a 220, 225 level could be kept in near term. So if you are looking for a longer term perspective, you can evaluate another many more counter. That is the banking. We can see, just say there with banking and PSU banking specific, we are looking, there is a lot of opportunity from a longer term perspective. So from IEX perspective, I think 220, 225 level is kept for a 6 to 9 months at least, and we are not seeing much more growth potential for a longer term period from a current view. So try to another counter. Banking, private banking are preferred, PSU banking are preferred, banking like Canara Bank are preferred. So you should try to that counter, I think so.
Okay, so that's the view with regards to where Canara Bank stands. Our next caller, Ananya, is calling in from Bengaluru. Ananya, very good morning to you. How can we help you?
Hi, good morning. I just wanted to ask about Ola Electric.
Right.
It's trading at a significantly lower price from the issue,
right,
from the IPO. So is it a good entry level to Ola Electric? What does the technical chart say? I just want to know about that.
Okay, I'll take this up with Ravi. Ravi, I think the negative sides of Ola just doesn't stop, right? In terms of earnings, revenue is down 61%, losses expanded, in fact, more than doubled to 695 crores, and net loss also stood at around 870 crore, even that more than doubled. So that's with regards to where, of course, the earnings are concerned, and the stock is also seeing a significant amount of pressure in trade today. But in terms of where the charts are concerned, do you have enough data to tell us as to what are the charts indicating?
Ma'am, I can say that Ola Electric, there is no spark is there. So I can say that, sir, buy another stock. I can suggest in 50 rupees or 60 rupees stock. The lot of stocks are more potential to go upside. And I can say that there is a no uptrend or there is no space to earn any money if you invest in this counter. So I can say that buy at Morphin Lab at current level. Put the stop loss of 5 to 6 rupees, and you can get 20 to 25% return on yearly basis. So there is a risk reward ratio is better, company is better, fundamental is also supporting, technical chart is also supporting. So buy more strong company at this level.
So my team is asking, in this case, is it better to book a cab from Ola as opposed to buying the share? Going by your analogy. Anyway, we'll come to that question in a bit. We had another slightly open-ended question, and this is from David. I think it would benefit a lot of people. For a perspective of 1 to 2 years, and you've named a few stocks, Mahesh, he's looking to deploy around 5 lakh rupees, and he's asking for a diverse set of stocks, and he's not asking for too many, 5 stocks that you would pick in the and across market capitalizations. He's not really specified. He said you can talk about large, mid and small. Which 5 would you deploy in right now?
I think 3 counter in my radar, that is a BMM, Afcons Infra, particularly 2 counter we are looking, 3rd counter is Sunstar. So these are the some small market cap counter, but yes, I think a much more potential for a upside. So these counter can be looked for a longer
Mahesh,
term.
can you repeat the names, please? Mahesh, apologies. Can you repeat the names, please?
Vishal Megamart, Sunstar, and Afcons Infra.
Got it.
3 counter is on my radar. So I think these counter have a much more potential for upside in near term as well as for a longer term period. So these 3 counter one can look on a longer term based from perspective. I think these counter could have much more potential from if you are looking for a 1 year horizon. I think 30 to 35% could be upside potential there. So these 3 counter can be preferred.
Okay. All right. So those are what Mahesh likes based on the fundamentals. Prabhu is calling us from Karnataka. Very good morning, Prabhu. Where in Karnataka are you calling from, and how can we help you today?
Hi, good morning. I hold SJV and Sure 1000 quantity. Buying price is 134. Yesterday they have declared the result. Even they are into showing loss. So even is it good time to average or hold or exit in loss?
Yeah, that's a good question. You saw the numbers. I'm glad that you did. What is the time frame that you had in mind, Prabhu?
I already hold this stock from last 6 to 7 months.
Sure.
Okay, I'm ready to hold 1 year.
1 year, okay. Mahesh, if you've looked at the numbers, what he's saying is absolutely right. The numbers were not very good. This, of course, is a company that is engaged in electricity generation, specifically in the hydropower space. But the numbers were pretty poor for the 4th quarter. Would you hold on for a period of 1 year?
Yes, he can hold further, but yes, if you want to average, then try to nearby 88, 90 zone. If any level, that level coming, you can average further. From last few years, we have seen their company improving their working pattern. So I think 1 quarter should be wait and watch. We can see some improvement in coming quarters. So hold and try to average in nearby 90, 92, 88. If anyone getting in these levels, that could be range there, they can average further.
All right, our next caller is calling us from Kolkata. Gyasuddin, have I gotten your name right, and what is your question?
Yes, you're right. Thank you so much for the opportunity.
My
Actually,
pleasure.
I bought Sanzar Electronics at a price of 940. When I've gone to the con call, they are saying approximately 20% of growth, CAGR growth, and they are also provided that they'll be able to increase the margin by 10%, but still the stock is not moving. So should I hold or like what to do?
So you're saying, what is the growth that they were talking about?
Apart from smart metering, smart meter business, they still growing. They will be able to grow at 20%.
20% top line growth.
Ratio is on around 30. Yes, top line growth. Top line growth, they are saying that they will increase by 10%, like 100 BPS margin. They will increase by 100 BPS margin.
1 percentage point. Got it.
Of around 30.
Got it. I got your question. So you're looking for, you've bought already at price of 940, which is currently very, very close to the market price, and you want to know about the long-term prospects. Salza is the name of the counter, Salza Electronic. Mahesh, coverage on this counter, and as I see it, they have hovered around that margin of around 9%, 10% range over the course of the last few financial years. So improvement from 9% to 10%, not very significant. What is the view on this one?
If you're looking on a counter specific rewarding only longer term delivery basis player. So I think we are tracking from a 160 to 170 range from in Salza Electronics. Stock has a few potential for an upside that could be a range 1050, 1100 level. But the investor should hold patiently because nature of stocks is it's running differently. So I think if anyone hold, then they can hold further. But patience type investor will be rewarded in upcoming time. So nature of stock is totally differently from a normal stock. So I think they can hold and they can look like that way.
Okay. Mahesh, Ravi, it is time now to hit the rapid fire segment. And during this segment, what happens is in 2 minutes, I throw as many questions at you as possible. And you give us a short answer if you can. So the first question is on BSE. And this is a question from Chandan, who's writing from Hubli. He's sitting on a 200% profit. Should he book it right now? What's the view, Ravi?
Yeah, definitely. Don't be greedy. Book the profit. That is a good strategy.
The next question is from Pratik, who is writing from Pune. He's holding HDFC Bank, 2,000 shares at 1,500 levels. Wants a long-term view. Mahesh, should he hold?
Hold.
Adani Energy Solutions, border levels of 1,250,000 shares. This is Satish from Andhra Pradesh. Should he add more? Should he hold? Ravi, what's the view?
Add around 840 to 830 levels and hold it.
Okay, Electra Green Tech is the next counter. Shrikant is holding 2,800 shares, bought at 1,780 a piece. Wants to know whether he should continue to hold or not. Mahesh, your view?
Hold on.
Okay. Godwin wants to know about NBCC. NBCC is the name of the counter. Long-term views being sought. Mahesh, should he buy right now?
Yes, they can buy further 112 to 114 zone and hold for a longer term period.
Okay, Axida Cotton is the next counter. E. Venkatraman from Bengaluru wants to know as to whether he should continue to hold, accumulate or sell. Ravi, what's the view like?
I think this stock is lesser volume, so I can say that I just avoid these type of stocks. Buy a good mental or technical strong stocks.
Yeah, good point. Very good point. It is a penny stock. CDSL, on that note, is that a good stock to hold if you bought at levels of 1,400? Would you add more at the current price on the basis of the charts? What's the view, Ravi? Ishan wants to know.
Yeah, definitely they can hold, put the stop loss of 1,480 levels for the target of 1,780.
Okay, Electronic Smart India. Sridhar wants to know if we can enter at the current levels. Ravi, I'll come to you on this one. It's down over 50% in the past 6 months.
Yeah, it's difficult to hold. I can say that buy NBCC at the same price is 116. They have enough potential, and also the target is around 140 to 150 levels. So just switch the position. This is the good strategy.
Okay, all right. On that note, gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. And that brings us to the end of this edition of Ask Profit. Thanks so much for watching. From Mahima and myself and the team that put this show together, thanks so much for tuning in. Happy Friday, happy weekend, and do stay tuned. Up next is Know Your Company.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
Hello and welcome. You're watching KYC. I'm your host Harsh Saita. Today we're going to talk about Axis Cascades Technologies. It's a very interesting company because it's into aerospace, it's into defense, and it's into semiconductors. And it provides services to all three of those buckets and therefore becomes a very interesting confluence in the current setup, both geopolitically as well as domestically. When you're looking at the overall context of things, you also have tariffs which could well impact the company if at all they are implemented, of course, and that's the other risk, and that's what makes it interesting. Now let's look at what I want to know about an Axis Cascades Technologies. The first one is, why is there no growth in FY25? They're guiding for extremely robust growth. They're in fact expecting revenue to go up by 8x in the next 4 years. Then why is it that revenue growth is sub 10% in FY25? That's my first question. The other one is, what makes them bullish all the way through FY30? What are the levers? What are the segments which are going to help it get from 1,000 crore in terms of top line to the guided number of 9,000 crore or near 9,000 crore by FY30? Really, that's the question I'm going to be asking. Where will orders come from? Why are they implementing a product strategy over a service strategy? How will margins go up from the current mid-teens number to 24% at least, is what they've said by 2029. What will drive that? And last off, is the FY26 number in terms of profit after tax of around 160 odd crore, is that achievable? I'm going to ask all of this. Of course, the vertical in terms of what will contribute to margins, and then you have your FY26. What are the goals? They've guided for 160 to 180 crore of PAT. What we've done is we've given it a far more conservative number. Listening to all of this, because it's going to be a very interesting conversation, I'm going to start off by helping break down what Axis Cascades actually does. And I did talk about the fact that it's into aerospace, it's into defense, and it's into semiconductors. So it's at a very, very interesting confluence. But let's start right from the very top. Let's unpack this. It's a tech solutions company, mainly focused on engineering solutions and services. It's listed since 2000. So it's done this for now 25 years as a listed entity. And that is the other thing that stands out for me. Let's talk about each of the verticals that it operates in. Aerospace. It offers design, manufacturing and support as well as aftermarket services to the aerospace industry. Now there are 3-4 manufacturers within the aerospace industry, so not too many, and this caters to all of those, so therefore helping the aerospace industry in a significant fashion. I want to also understand how deep are the moats, what's the competition looking like, and that will give us valuable insights as to whether it is the only game in town with regard to aerospace. Now let's talk defense. Defense is a big theme that's playing out domestically. They do custom build solutions on drones, mission critical systems and the like. I will break up all of those for you, but I'm just first spelling out what it does broadly. So defense is the other space. They do collaborations with the DRDO in defense. The focus is on defense electronics. They work with defense PSUs. Electronic warfare systems is what they help in. They do custom drone solutions. Mind you, drone is the big technology at this point. And they do custom drone solutions. They do armed drones. They do mission critical communication systems, among a lot of other pieces that they do with regard to defense. So again, something to look at. They also do homeland security, something like mobile command vehicles, AI video analytics solutions, etc. So think about the wide array that they cover in terms of defense, and it's looking quite impressive. And that's why I want to know, why just the 8% growth when you're doing such good work? Now let's talk about ESAI, which is electronic semiconductors and AI. They custom build solutions, of course, around these, but they offer a wide range of cutting edge products and they offer it to leading semiconductor platforms. Let me talk about some of the platforms they offer it to. Qualcomm They do system on modules and development kits for robotics, drones, IoT, industrial, healthcare and consumer applications for Qualcomm. For Texas Instruments, again, a cutting edge technologies company, radar modules and development platforms for automated robotics, industrial and healthcare applications. That's what they do for Texas Instruments. Lattice Semiconductor, they do data capture, playback module and wave radars for them. NVIDIA, they do AI enabled solutions for robotics, autonomous systems, ADAS and more. So think about the kind of companies they operate with. These are some of the standout companies when it comes to technology. They are at the fulcrum of huge technology change in the world, not just in India. I will talk about aerospace for a bit as well, because that's the other vertical which I have missed. They do concept design, aerodynamic studies, they do IP validation. They literally break down an aircraft and try to design it better and see where the inefficiencies are as and when they are required to, of course. They do design optimization, that's what it is, and they do evaluation of software as well within the aircraft. So that there's plenty of things that they do. Again, what beats me is the fact that how can you grow at less than double digit when you're in the middle of all of this? So we'll ask that question. Now, in terms of service offering, I'll just now try and break it down and simplify this as much as possible. They do product design, engineering and R&D services. They do embedded software. Some of that is on your screen. Embedded software and hardware system integration and manufacturing engineering. They do digital solutions including IoT, analytics, AI and cloud services, and they do aftermarket solutions and technical publications as well. Let's talk about the business model. They provide end-to-end engineering solutions. They do consulting for each vertical. They do product as well as they do service. They work with global OEM suppliers, defense organizations. DRDO and MOD are just one of the many organizations they work with. We've spoken about plenty of them, including especially in that semiconductor and AI space that they do great work in. Now let's talk about how they make money. Service contracts for engineering design and product development for digital transformation projects as well. So all of those is what encapsulates where they get their money from. Now let's talk about domains, and we've spoken about some of these domains, so it'll become nice and easy for you to look at this screen as to how all of this is evolving. The aerospace domain is largely 30% of what they do. So is defense. So around 60% comes from these two components alone. Then you have ESAI. ESAI is, of course, AI as well as semiconductors and cutting edge technology. There, the numbers are coming down as a component of the top line. I want to understand the growth prospects here. Then there's auto components, which they also do, and then there's energy, which they do. So that's how your entire 100% of top line shapes up. But again, it's going to be interesting to understand how this will move, because this may change dramatically. In terms of geography, and why does geography become important? It's obvious, the tariff problem at this point. You look at Asia Pacific, around a third of the revenue comes from there. USA around a fourth of the revenue. Europe around, again, a third of the revenue. And then you have Canada, which are with a very, very small share. So that's how the geographic split is in terms of this one. Now let's talk about the margins, because where does profitability really come from? That holds the key, right? So you have aerospace, which commands around a 21% margin at this point. Defense is around 15%. ESAI is around 24% in terms of EBITDA margin. Then you have auto, which is -4. So you want to see whether this can improve, whether this can become big, and whether margins can start to come in significantly from here, because it's a 240 crore number where margins aren't coming through. So you want to see whether that can change. And then you have energy, where you have around a 17.5% margin, but the number is so small in terms of contribution to top line. It's not really making a significant dent on that absolute EBITDA number, but this is where the dent will be created. Defense is where the dent will get created. Can these two improve towards 20-24%? Now, so we've kind of covered what the company does. Let's quickly now look at all the parameters that we look for when we're trying to evaluate an Axis K Tech. We look at the income statement, the balance sheet, the cash flow, the return ratios. We look at shareholding, street cred. Street coverage is not there, and therefore we look at outlook and we look at valuations. Again, it's going to be critical to understand each of these individually and then thereafter take a full snapshot at the end and see how it's looking. Let's look at the income statement to start off. Again, it's an impressive looking number in terms of 3-year growth CAGR. It's around 19%. EBITDA growth is around 25%. That number is EBITDA and EBITDA margins. You're looking at net profit growth of 48%. There is two pieces here which I'm concerned about. Your EBITDA number is up 25%, yes, but the EBITDA margin number is at 14%. The guidance is 24%. How do they scale up to that number? That's point number one. Point number two, the revenue growth, while it's 19% 3-year CAGR, you're looking at 1-year revenue of less than 10%. It's just about 8% growth on a 1-year basis. Look at the way the numbers have shaped up. 955 crore in FY24, and thereafter FY25 we've seen it at just 1031 crore. So you want to see whether that number can improve substantially and which year will that kicker come in really, because that's the year you'll be waiting for. So that's how it's shaped up in terms of top line. Now let's talk about the margin picture. The margins have been between the 12 to 14% bracket. It's been 18% in FY23, but broadly in that range. So you want to see whether there is a kicker in which year will that come in. And profit after tax, you see how erratic it is. You're seeing FY23 fall. Now there are one-offs, I don't doubt that. I want to understand, of course, from management whether those one-offs can be corrected. But for the moment, you're starting to see an improvement. So therefore, and the FY26 guidance too is around 160 to 180 crore in terms of profit after tax. So it's going to be a sharp increase from here as well. So I want to kind of figure out as to whether this can continue in terms of profitability and the one-offs can be pushed to the past. Really, that's the question. But let's now talk about the balance sheet, frankly, because that looks decent, in good shape, if I can call it. You look at the net worth, around 350 crore to 650 crore in the last 3 years. You've also seen an equity raise happening at around 658 odd rupees a piece. You're seeing borrowings which are coming down consistently through equity raise and through the fact that there is some amount of decent cash balance which is coming at the end of every year because it's a cash profit which the company is making, and therefore it's headed in the right direction. Fresh investments, where will it come from? How much of that will impact profitability as well as that borrowing number is something that you want to look out for. But for the moment, on a 4,000 crore market cap, you have around a 200 crore of debt excluding lease liabilities. Not looking too bad, right? So that's how I would consider this number. So that's on the balance sheet front. Let's look at the cash flow now. Cash flow is largely lined up with the way in which profitability is going up. So no complaints here. There's a steady increase with regard to operating cash flow. That's what I look for. The net cash flow may be muted because you're seeing borrowings getting repaid, equity issuances happening. So there may be some bit of erraticity in that number. But when you're looking at operating cash flow, it's on an improving trajectory, something that looks good. I want it to scale up fairly significantly, maybe in FY26. And I'm looking for that kicker. And I'm going to ask management whether that will happen or not. Let's now look at return ratios. Now, return ratios are not impressive, frankly. Just look at the way in which return ratios have evolved. This is as per Bloomberg numbers, 11.5%. For a company in this kind of a business, you would desire more. So there's much more to be desired with regard to return ratios. Not too happy about it. We believe that this is a thumbs down, and therefore we're not giving this a favorable rating of any sort. I want to wait and watch whether that return ratio number can improve. Let's look at shareholding now. In terms of shareholding, there's a decent amount of holding which the management currently has. And I'll quickly pull that number out. The management holds around 60% even post the dilution that happened in January of 2024. So despite that, you have a decentish holding in terms of promoter ownership, and FIIs don't hold it at all. DIs, there's very little to no participation. The public though own a decent chunk, and therefore that's how really the shareholding is shaping up with regard to this one. A thumbs up only from a perspective that there's a strong promoter ownership. You have Jupiter Capital, which is owned by the promoters of Axis Cades, which owns around 60% of the company. So again, something to look out for. That's with regard to the shareholding. Let's now look at the street cred. There you go. Look at the 6-month performance, extremely strong. Look at the 1-year performance, even better. The year-to-date performance, 50% plus. No complaints whatsoever. The 5-year performance is even more impressive, 34x in the last 5 years for the company. So no complaints here. We'll have to give this a thumbs up. It's a very, very strong show over the last 3 to 5 years on a consistent basis. So again, that's something which is impressive. Let's look at outlook now. In terms of how the outlook has shaped up, they've guided for 8,500 to 9,000 crore number by 2030. They've said margins will go up from the current mid-teens to 24% at the very least. That's what they're saying. So if you just try and look at the numbers, you have 1,000 crore top line currently, and let me be absolutely precise, 1,030 crore top line currently. On $1 billion revenue number, this will mean that it will have to go up at least 8x. And then you will have a kicker coming from margins as well. So it will be an extremely impressive show if this were to play out. Let's look therefore, they want to move towards product business. We've spoken about this. They also want to pivot 80-20, which they currently do services to product. They want to move to product. They're targeting a reversal, 20 from services, 80 to product. So that's how it will shift. And they plan investments for developing new proof of concepts and products as well. So we'll quiz management with regard to the capex as well, and that's how it will shape up. Let's look at last off the valuations as well on this one. Currently trades at around 59 times price to earnings. So certainly not cheap by any standard, but the guidance of 160 to 180 crore, and let's assume that they do 150 crore, will leave this one at 30 times 1 year forward, which again doesn't look impressive, but there's a lot to be done, frankly. So we'll give this one a neutral with regard to where valuations is concerned. Quickly looking at all of the ratings as they stack up, let's look at the income statement first. Income statement neutral, balance sheet, cash flow, return ratios. Let's look at shareholding, street cred, no concerns. Outlook is a neutral, want more and want to see how they will execute. And then you have valuations also, which is neutral. Want to wait and watch whether that real kicker plays out. Let's bring on board Mr. Murali Krishnan Desayan, who is the Chief Operating Officer at Axis Cades, to talk to us about exactly that. Welcome, sir. I want to start off objectively. Why does the FY24 number look sluggish when you have such a strong outlook through to 2029? And what gives you the comfort that you'll do that 8,500 crore in terms of top line by then?
Good morning, Harsh. Hope I am audible. Thank you, NDTV. Thank you for this opportunity. So, and thanks for this introduction. Yes, Axis Cades is very optimistic of reaching 9,000 crores in 2030. And that is because of the key domains, the core domains that we operate in, and the track record of 3 decades of impressive products that are already developed and matured and they are in the market. So with all these things, we are only at 25% products and remaining is in service. So we want to flip this and play on our core competence and ensure that our model becomes 80-20. Therefore, we are very confident that we will achieve our $1 billion aspiration and vision.
So why the 8% growth in 2025? What's held you back?
80%. See, last year we have revamped the management and we started focusing on the core. So while we operate on very many verticals, so there are a few verticals which are niche and which are strategic to the organization. Number one. Number two, so there were post-COVID increases happening in sectors like aerospace, which had come back after a strong dip. And there are some programs which are happening in 2026 instead of 2025 in defense. So this is known fact for us, and we are going to come back strongly in the years coming to come.
So FY26, what will your top line be, sir, and how will the margins evolve?
See, we have indicated our margins are going to grow by 50%, and accordingly the top line would grow proportionately, and we are very bullish about it.
No, sir. Sorry, I didn't catch that. So top line FY26, what is the number that you're targeting?
See, our core domains are going to grow more than 30%.
Okay.
The defense is going to grow by 35%, aerospace by 35%, and ESI would go more than 50%.
Okay, understood. So that will take your top line at least to, I would reckon, 1,500 odd crore, if I've done the math right. Okay.
Yes, it would.
And margins, where would margins lie, sir, for FY26?
The FY26 margins we have indicated, and it is going to go substantially upward. So we are going to improve margins more than 50%.
Okay. Sir, so margins will hit 20%. Would that be right?
Margins would, see, eventually, now it is in teens. Eventually, as we explained, it will go near 24%.
Correct.
So
but
300 BPS
for the
would be
immediate,
the annual increase that we are expecting.
For FY26, for the immediate term.
So it will increase by 300 BPS.
Okay, 300 bips for FY26. Understood. And so this 30%, 40%, 50% kind of growth that we're expected to experience in FY26, somewhere closer to 40%, do you expect that clip will continue to 2029? Will it be a steady 40%? Sorry, will it be a steady 40%?
See, number one, it will be steady increase.
Okay.
So which will give us the 300 points increase. But that won't be adequate for our billion-dollar vision. We would also have step increase, non-linear increase coming from additional areas, such as we are putting up an infrastructure for defense manufacturing, integration, testing. That also includes our ESI infrastructure. We are coming up with this infrastructure both in Bangalore as well as in Hyderabad. So this infrastructure will help us flip to not only a services company, but to increase our product manufacturing and MRO. So those things would help us do a step change and non-linear growth that would help us push towards billion-dollar company.
Okay. Okay. How confident are you of becoming a billion-dollar company, or rather a billion-dollar revenue company by 2029?
Yes, 2030.
How confident are you, sir? Very likely.
So we are 100% confident.
Okay, understood. Talk to me about how the balance sheet evolves. You're saying you're making investments. You've reduced your debt. How should balance sheet look like in terms of debt number over the next 2 to 3 years?
So in fact, though you have shown a debt of 190 crores, so we have the net debt of only 15 crores. So we have cash in bank, cash, and then also margin monies.
Correct.
So therefore, our debt is very, very less. So our investments for the infrastructure is being funded internally for the phase 1, and we are looking at strategic partnerships for our subsequent phases of investment. So therefore, I would still say that our debt equity ratio will continue to be healthy as we move forward for next 3 to 5 years.
So will you consider fresh borrowing in a large fashion? No. That is the short answer.
Not in large, yes.
Okay, understood. So cash flows, some receivables going up, you work with government entities. Is that a challenge?
It is not a challenge. In fact, if you see, our cash flows has been really healthy. So we have literally no bad debts. And whatever increase in this debtor days is because...
Sir, debtor days have gone up, receivables have gone up, and hence I'm posing that question.
Understood. So that is because of the recent increase in our defense programs, and we have built it in the last few quarters. That will eventually come in the subsequent quarters. That is not a risk at all.
Not a risk at all. Okay. So how much of your top line is at risk because of US tariffs, in your opinion? Or is there no risk at all? Because, and I also want to couple that with competition. Is competition very high and therefore is that risk very real?
So US tariffs have not impacted us much because our revenues are distributed. So, and we are also, this tariffs for other countries also is helping us because customers are coming to us for more alternate supply chain and alternate solutions.
Where will your margin accretion come from? Currently you're 20% on your core, but on auto, you're on negative. Is that where the margin kicker will come from?
We are going to, we are already in the process of recalibrating our heavy engineering and auto practices.
Okay.
So we are totally converting that into our core. So that is one of the reasons, no, the margins that are impacted, it is already showing a positive trend in Q4. It will continue to, the impact on this auto and heavy engineering will continue to reduce, and that will convert into our core margins. So we are already in the process of revamping it and recalibrating it.
Very interesting. Thank you so much, sir, for joining us and giving us those candid answers. Of course, extremely interesting company, because if they were to do 8,500 crore in top line, in terms of the way in which at least they're confident and they're guiding, and if they do a 24% margin, that will mean that they do an EBITDA in a single year of 2,100 crore with negligible debt. And they're currently placed in terms of market cap at 4,400 crore. So in the next 3 to 4 years, you want to watch out and see whether execution here happens. That's going to be critical. It's already been a multi-bagger. You want to take care of that as well. Completely out of time on this edition of KYC. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Markets continue to trade in a range. Nifty off day's low, however, still below 24,800. Sensex down over 200 points. Nifty metals and autos track the most. PSU banks only sector in green. Actor Arshad Varsi, along with his wife Maria Varsi, under SEBI scanner, bans them and 58 others from markets for up to 5 years. This is over the Sadhana broadcast shares fraud. We'll bring in more on that later during the show. Bajaj Auto fails to cheer the market on its fourth quarter numbers. Two-wheelers domestic sales hit a roadblock. However, exports come to the rescue. Ola Electric in headlines again, but this time for its poor fourth quarter performance. The net loss of the company doubled to 870 crore compared to 416 crore a year ago. Revenue also saw a 62% drop. Hello and welcome to Markets at 12. I'm Anushi Vakharia. Let's currently see how the markets are faring in trade right now. Now, in terms of where the benchmark indices are concerned, so Nifty 15 particularly, what we are looking at is overall a choppy session of trade. Now, the markets at one point were at the day's low, seeing a significant drop, but have recovered so far, but still below the 24,800 mark that we are looking at. It's currently seeing cuts of over 0.4% in trade today. In fact, if you look at the point contribution table to see which are some of these stocks under pressure, we are seeing pressure coming in from stocks like Infosys, Mahindra and Mahindra and Reliance Bank, while on other side, there's some bit of respite from Eternal, HDFC Bank and L&T. In terms of how the Nifty Bank is doing, let's pull up that one as well. Nifty Bank, what we are seeing over here is 0.2% of cuts or thereabouts there as well. So this is as far as where the benchmark indices are concerned. Even if you look at the sectoral indices to see how the overall breadth is shaping up, almost everything in red is what we are looking at except for select pockets. Nifty PSU Bank, the only one in the green, seeing gains of over 0.1%, whereas Nifty Metal and Nifty Auto are the worst hit, seeing cuts of more than 1%. Also, let me look at what's happening with Nifty Realty now. That has been gaining consecutively for 3 days in trade, but is down in red today. So that is another stock in focus. Now here, Sobha is the only one in the green. Sobha Anantraj DLF. Sobha is seeing gains of over more than 5%. This is of course on the back of its fourth quarter results as well. However, Phoenix Mills, Macrotech and Prestige under pressure. Prestige also came out with their fourth quarter results, wherein the major aspect of them missing FY25 guidance was when it's the FY26 outlook, which would be interesting considering the Indipuram launch, which is going to result in higher sales for the company in the next 2 quarters or so. If you look at the overall broader markets and how that is shaping up, let's see that as well. Nifty Midcap 150 down about 0.2% in trade today, while if you are looking at small cap 250, that's the only one in green, seeing about 0.3% of an uptick over here. Let's look at the BSE 500 to see which are some of these stocks in focus. We are looking at a lot of stocks in focus again on the back of its fourth quarter results. Gujarat Pipavav was up over 10% on the back of its numbers. Rallies, LG Equipment seeing gains of over 9%. Suzlon seeing some smart moves again on the back of its fourth quarter results. Some exceptionally strong numbers that we've looked at from this counter. However, what is under pressure is counters like Masgao seeing cuts of over 6%. Concall today would be important to watch out for. Welspun Living, another stock, and SJVN seeing cuts of over 5 to 6%, while 5% of a downtick for ITI as well. Well, that's the overall breadth that we are seeing in terms of where the benchmark and the broader market indices are concerned. But let's focus on more on the stories for today. My colleague Sesha caught up with Vartika Shukla, Chairman and MD of Engineers India Limited. She revealed a robust order book and record-breaking inflows for FY25 alongside a promising 20 to 25% turnover increase in FY26. Let's listen into that.
Looking at the highest order book today, We had the high we have broken the record of the 31st March of the last financial year, and today we are about 12,400 order book position. So it is growing from strength to strength, both in sectoral as well as our conventional oil and gas space. So we see that the company is very well poised. It has consolidated its financial over the years, and we hope to grow both in terms of the top line and bottom line in this financial year that's come.
In terms of the projects, which are the projects that you will be focusing for this financial year, and also in terms of your overall order book? You did mention 12,400 crores, but how much of this will be executed for this fiscal?
Sure. So see, most of the oil and gas projects have a time cycle of about 3 to 4 years for execution, but a lot of our order inflow, which is about 45% of the total order inflow that we've got from the infrastructure segment, have a time cycle of about, or urban solutions or mining or other sectors have a slightly shorter project execution cycle of 24 months. So we see significant growth, maybe upward of about 20 to 25% growth in the turnover that we will see in this current fiscal. See, most of the oil and gas projects have a time cycle of about 3 to 4 years for execution, but a lot of our order inflow, which is about 45% of the total order inflow that we've got from the infrastructure segment, have a time cycle of about, or urban solutions or mining or other sectors have a slightly shorter project execution cycle of 24 months. So we see significant growth, maybe upward of about 20 to 25% growth in the turnover that we will see in this current fiscal. We are completing a lot of projects in this financial year. We will be completing the residue upgradation facilities of Vizag. We will be completing the refinery section of Barmer refinery as well. We will be also completing some of the pipeline projects. We'll be completing polypropylene unit of GAIL Pata, among others. So there'll be a lot of projects which will complete. When the projects complete, then we have the closure and realization in the turnover. Plus the new projects that we've gone in, we will be in a phase of ordering. Substantial orders will be placed, and this will also result in the progress of these projects and resulting in our turnovers.
And overall, a strong outlook is what we are seeing from the management of Engineers India Limited. In fact, let's pull up the stock price and see how it's faring in trade currently. Now, what we are seeing is strong gains of over 6% in trade currently. But also another focus area is also Department of Financial Services examining RBI's draft guidelines, and this is on gold lending. Vishy, talk to us about these developments that we are looking at. What is the kind of revision that we are seeing over here?
Right. So as far as the Department of Financial Services goes, they've submitted an entire group of suggestions to the Reserve Bank of India regarding the draft guidelines that the RBI put out on the 9th of April. These draft guidelines dealt with how lenders could do gold loan lending, and the Department of Financial Services, which is part of the Finance Ministry, believes that these norms might be a little too onerous for small borrowers. They've said that the rule should not adversely impact these small value borrowers. In fact, the department has said that borrowers up to 2 lakh rupees should actually not be allowed, should not be included in these guidelines. That's what the DFS has told the RBI. What DFS is also saying is that the norms should be, the final norms should only be implemented from January 1st, 2026. While the RBI had not decided a date on the implementation, they had, however, said that feedback is welcome, and typically after the draft guidelines are put out in about 3 to 5 months, the final guidelines come in and they are applicable. So a January 1st deadline seems more appropriate. The DFS also did not miss a chance to remind the RBI that it hopes that the RBI will consider all the feedback it is receiving from the stakeholders and the concerns that are being raised by the public before issuing the final guidelines. It's a little surprising because typically the government does not come out in public and announce whatever it is that they're thinking or the conversations that they're having with the RBI. This is a special case, clearly because gold loans are a widely used product, specifically by the agricultural community, and therefore the government is considering the impact it will have on these borrowers.
Well, thank you, Vishy, for all those details on what these guidelines mean for gold borrowers or lenders which are out there. Again, but moving to another important story of the day, SEBI has banned Arshad Warsi, wife Maria Warsi, and 58 others in Sadhana broadcast pump case. My colleague Charu has more details on this.
Hi, so the market regulator Securities and Exchange Board of India has come out with a scathing order against a pump and dump scheme, including a company known as Sadhana Broadcasting Limited, which has now changed its name to Crystal Broadcast Limited. Now, what has happened here is that the order has come against Arshad Warsi, his wife, and about 60 other people, and it has, in some cases, barred individuals for about 5 years, while in some others they have been ousted for a period of almost 1 year. What happened here was that one individual mentioned in the order was operating through several YouTube channels. He was maintaining all of them by himself and distributing false, misleading, fabricated lies and information about this particular company, saying that they have a contract from the Adani Group, or saying that they are getting a Hollywood order or some sort of an association, which led public to believe that the company is a turnaround story and get attracted to what their value is, and that is why their share price increased. And once the share price increased, promoters and entities related to the promoters sort of offloaded their holdings, and the retail investors who got attached to the company because of this misleading information ended up incurring a lot of losses, and that is why SEBI had to come out with such an order and also impose a penalty of about rupees 20 crores in totality.
Interesting story that we are seeing. Thanks for that, Charu. Thanks for all those key details that we are looking at. But let's get more stock specific, and this is on earnings side that we'll be focusing now. Suzlon Energy is the counter in focus, and this is after the company came out with its fourth quarter numbers. My colleague Varsha joins us with more details on this one.
Yeah, thank you for that. So yes, Suzlon is buzzing on the back of strong numbers that the company has posted. Revenue growth that you're seeing is led by higher than expected wind turbine generator deliveries, and the EBITDA was driven by uptick in gross margin. Net profit jump that you're seeing is due to exceptional gain of deferred tax gain of rupees 600 crore. But over here the highlighting point is company has guided at least 60% year-on-year improvement in deliveries in revenue, EBITDA, PAT for FY26. Now let's see what brokerages are saying. Investec maintain a buy rating with target price of 70 rupees. Now what they're saying is strong execution and order book affirm positive outlook for the company. The company has evolved into net cash entity with strong ROE and ROCE. Aided by a rapidly expanding order book, a robust pipeline for bids and fully optimized supply chain is what Investec is saying, and they forecast Suzlon to register revenue PAT CAGR of 49% and 26% over FY25 and 27, while Nuvama has retained hold with target price of 68. Now they are optimistic when it comes to order book of 5 gigawatt despite order inflow being below 100 megawatt due to some cancellations. Company is also well positioned to benefit from trend of firm and dispatchable renewable energy and hybrid projects, but the point that Nuvama is making is the valuation indicates limited upside as per Nuvama, and that's the reason they've given the whole rating to the stock.
That's the outlook in terms of how Suzlon Energy performed in the fourth quarter. What's the outlook for FY26? Along with what the brokerages are recommending for the stock. The stock is up over 9% in trade currently. So strong set of numbers that we are seeing for Suzlon. But another counter to focus in on is Prestige Estate, which also came out with its results yesterday. In fact, late in today's morning, it came out with its results. So what we are looking at in terms of where the Q4 numbers are concerned, firstly, now we've talked about how the overall FY25 operational update was. Now pre-sales were down about 19%, and this was on account of some project delays due to approval related issues that had taken place. But if you take Q4 in context, that they had recovered sharply in terms of where the pre-sales are concerned. They recorded about a 48% of growth in their pre-sales number. Collections, however, were down about 9%. Area sold, if we are seeing, saw about a 9% of a growth, while average realization was up over 35%. In terms of where FY25 was concerned, collections mainly about 1% of growth that we are looking at, while pre-sales, as we spoke about it earlier, were down about 19%, but they did miss their FY25 pre-sales guidance of 24,000 crore. So this is around 29% of a dip in terms of what we are looking at for the performance in FY25. But going forward now, it's the outlook which is interesting for the company, and this is what CLSA had to say as well. They've maintained an outperform rating, and this is with the target price of 2,380 that we are looking at. They're saying that the company is set for a strong set of numbers for FY26, and pre-sales guidance is expected to be in the range of 25,000 to 27,500 crore. Now, this would include Q1 FY26 pre-sales in the likes of 9,000 to 10,000 crores. A lot of it has to be done in terms of where the delays are concerned, so some bit of slipover coming in the first 2 quarters of this financial year as well. Faster execution is also expected to drive cash flow growth, and if we look at the valuations, the stock trades at a significant discount to its peers, which is unwarranted in their opinion. So this results in this overall kind of discount that we are seeing. So that's the view for Prestige Estates. The stock is down about 1% in trade right now. Well, that's the outlook that we are seeing for Prestige Estates. But we also had Bajaj Auto in focus in back of its numbers, and the management had to say that they're not substituting EV with any segment. This is what Rakesh Sharma, the ED at Bajaj Auto, had to say. Listen into the conversation where he talks also about the margins in the EV business.
We feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by Q4 of FY25, our EV business, which comprises both three-wheeler, e-auto and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course it is less than the the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business.
Well, that was the management of Bajaj Auto, but we also spoke to IRCTC, and this was after its fourth quarter results as well. We spoke to Sanjay Kumar Jain, CMD of IRCTC, about the company's growth outlook going forward. Listen into that as well.
You see, catering we would like to grow for around 9 to 10%, and tourism we would like to grow by 15%. We are already in the process of finalizing our target with the ministry. And overall, we are overall at IRCTC level in all the 4 segments put together. We wish to grow by 10%. We are targeting to grow by 10%.
Well, that was the management of IRCTC. Let's see how the stock is doing in trade. Currently seeing cuts of around 2%, but shifting focus, mounting financial stress is what Finance Ministry has now asked MTNL to take concrete steps to address its growing debt burden. With no fresh capital infusion on the table, the focus has shifted to asset monetization as the primary route to manage liabilities.
With rising bank defaults and continued financial strain, MTNL has been asked to outline a clear roadmap of its asset monetization plan in a time-bound manner. The move comes after DoT recent proposal of capital infusion into this debt-laden telecom, which was declined by Finance Ministry. Finance Ministry is apparently not happy with the roadmap which was presented by MTNL on the asset monetization plan. Now, under this monetization exercise, which is progressing well, is what sources telling us, identified and have been earmarked around 50 such assets across the country, which also include BSNL surplus non-core asset, and the valuation of those is already underway. In fact, some of the valuers have been impaneled, and a blueprint of those valuation will be soon on the government table, which will decide for the course of action. In fact, National Land Monetization Corporation, which is a nodal authority, is assisting MTNL throughout the process. They are in talks and discussion with state and local authorities, understanding their issues, and they're helping in clearance of all sort of regulatory approval which is required to monetize potential asset. Now, if you remember, the total, dues towards lender is about 8,500 crore. The total liability, if you talk about, is around 33,000 crore, and which also goes towards and include 24,000 odd crore of government bond. Now, DOT already loaned around 1,100 crore to service their interest on those government bonds. Now, the whole idea of this monetization exercise, particularly in state-run enterprises, which has been facing financial strain, to adopt proactive measure in order to manage the financial health better. In MTNL case, particularly, the government is quite firm to not let lenders, take any haircut, and in fact, any kind of fiscal support is completely ruled out, at least for now.
Well, another stock in focus is Adani Ports, and this is after the company is aiming for a 3 times of a revenue growth by FY29. Along with that, they've also emphasized on other key highlights on what they should be focusing on in terms of where the FY29 fiscal year is concerned. To talk to us about all that, we're joined in by Hiral for more detailed breakdown on the same.
Thank you, Anushi. So clearly, if you see the kind of long-term trajectory that they're looking at, let's first understand what the investors have gained. Adani Ports has actually outperformed Nifty 50 in the last 5 years as well, wherein 350% is the kind of returns that Adani Ports has given versus Nifty 50, which is up nearly 158%. In terms of the key highlight, 3 times revenue growth by FY29. That is the key that you should be watching out for. And in terms of overall capex, it should be in the range of 65,000 to 74,000 crores is what the company has said. A 10% ROCE is what Adani Ports is indicating or expecting to achieve in the logistics business as well by FY29. So that's the key highlight. But let's break this down. Let's understand the guidance in terms of the key numbers. If you're talking about the revenue, a CAGR growth of 20% is what they're looking at between now to FY29, and that number is seen at 65,000 crores. Similarly, a 18% compounded growth in terms of EBITDA, and that was expected to come in at 36,500 odd crores is the target. And if you talk about the net cash flow from operations, they are aiming for a number which is 34,500 crores, which is a 19% compounded growth from now to FY29. So that's with regards to your numbers. Now let's look at what the capex is expected to look like. We already spoke about the overall capex, which will be in that range of 65,000 to 74,000 crores by FY29. But if you have to break it up, domestic ports, they're targeting around 45,000 to 49,000 crore worth of spends. Logistics business is expected to see a capex of around 15,000 to 20,000 odd crores, and a 5,000 crore worth of maintenance capex is what they are targeting. Now, let's break it up in terms of the port business as well, the portfolio, what they're looking at. Total to scale up to around 1,000 MMT, and out of which 850 will be domestic, whereas 150 will be the international business. If we're talking about the logistics business as well, the capex plan that they've spoken about that will result in a significant asset accretion is what the company has highlighted. In fact, they're expecting the return on capital employed to expand to 10% from the current 5% or 6% in FY25. Talking about the trucking segment also, and the recently commenced international freight network services, these are the two businesses that are expected to drive the logistics business for Adani Ports. And they're expecting the logistics revenue itself to grow by 5 times in FY29. The agri-silo capacity is expected to grow by 3 times in FY29. And the warehousing business, that segment is expected to grow to 20 million square feet in FY29 from the current 3.1 million square feet, which they have in FY25 as well. Rakes, again, a 2.3 times is the kind of growth from now to FY29 is what they're looking at. And they're expecting 20 multimodal logistic parks by FY29, and they will be targeting East and the South Indian markets for the same. Overall, agri-silo capacity nearly 8 times is what you're looking at. And the truck fleet is expected to expand to 5,000 plus trucks, again, from the current 937. Very quickly, let's just look at what FY26 will also look like. We'll just reiterate that. 36 to 38,000 crores in terms of revenues, 21 to 22,000 crores in terms of EBITDA, 11 to 12,000 odd crores in terms of capex, and a 3 to 4 times growth in terms of trucking revenues, and your marine revenues will also grow around 2 times from the current 1,144 odd crores. So overall, strong returns for the investors, if you have to look at the last 5 years, and the trajectory from here on in terms of FY29 also looking absolutely strong from what the management and the company have been indicating in their investor presentation. 3 times revenue is what you should be watching out for.
Absolutely, Hiral. Thank you for that detailed breakdown in terms of where the long-term picture is concerned, where we are seeing more capacity coming in for the business and expansion also underway, and also about where the FY26 outlook is concerned. But there's more to Adani Ports as well. Now, what we are looking at in focus is also its bond issue. Now, LIC has entirely subscribed to the 5,000 crore of bond issue is what we are seeing. LIC has fully subscribed to this bond issue, and this is at a rate of 7.75% that we are looking at in a privately negotiated deal. Now, this is company's largest ever rupee denominated bond issue that we are seeing, and its first 15-year bond sale as well. Now, how they'll be using these bond proceeds? Firstly, proceeds will be used towards the debt obligation. So some bit of payment towards the repayment of debt also is what we are looking at. Along with that, they'll also be utilizing these proceeds for their capital expenditure also. As Hiral was just speaking about the overall capex plans of the business, now that remains on a strong trajectory. So some bit of proceeds to be used for that aspect as well. If we look at the credit ratings, now the recent credit ratings, CRISIL has maintained a AAA rating for bank facilities and NCDs of the company, while a A1 plus rating for its commercial papers. Now, Fitch Ratings has affirmed a BBB minus rating for its long-term forensic currency issuer default rating, and also have removed their rating watch from negative as well. So that's all the information that we have on Adani Ports. But shifting focus, Manchester United stars Harry Maguire, Diogo Dalot and Andre Onana made a special visit to Mumbai, engaging with fans and young footballers while offering candid insights into their season campaign. Speaking exclusive to NDTV, the trio shared their thoughts on what went wrong during the season and what lies ahead for the club.
How have you been feeling about being here? Yeah, it's been amazing. We've been here, obviously we got here last night, so we had a good night's sleep, and then to be so welcomed and to see the country, the city, it's been amazing. The fans have been amazing with us, to see so many children playing football out there as well, joining in, and to see so many smiles, I think is really important. But yeah, the country's been amazing. Really happy to be here. It's my first time here. We've had lunch, we've tried all the food. I had a chai this morning, so no, it's really nice, and I'm looking forward to see what the day brings. I saw you dribbling with a couple of kids in the morning. One of them tried to nutmeg you, by the way. Yeah, I've seen that. He got a bit cheeky and tried to put it through my legs. But no, it's all fun. The children have all been really polite, really happy. And I think that's such an important thing, that we come here and we can see the excitement on the children's faces. And that's the most important thing. The initiative, what they're doing here, giving people opportunities and children opportunities to play football. And it's really pleasing to see. Absolutely, and this is what United We Play is all about. I also want to talk to you about a little bit about the season that Manchester United have had. It has been a tough season for everyone involved. How do you assess it? What, according to you, went wrong with this season? Yeah, I think it's been really disappointing. It's been a tough season. We've not been good enough, and the players have got to take responsibility for that. Yeah, I think the last 2-3 months was difficult in the Premier League, and we went down a little bit to a false position where we took our eye off the Premier League, which shouldn't happen really, but it was tough because we was focusing on the Europa League, and the team wasn't settled, and we wasn't playing fun. I think in the last couple of games where we played a settled team away at Chelsea and then at home to Aston Villa, where we played the team what the manager wanted to play, you could see the performance levels really, really improve. So no, I think next season we've got a lot to improve on. There'll be a lot of players who leave and a lot of players who hopefully come in and improve the standards and the team a lot, because at Manchester United you can't accept what you've just done in that last season. They need some improvements, and I'm looking forward to it. Personally, for you, it has been a decent season, and your performances against Lyon and then Athletic Bilbao. A lot of people have been calling you Harry Dino. How do you respond to that? No, it's been really nice. The moments that I've had in this season have been probably the best moments I've had in Manchester United. Not the general performance. I feel like my performance levels in my first 2 years at Manchester United was at such high, consistent level. with the team keeping lots of clean sheets, finishing third and second in the Premier League. That was the best performance levels. But this year, moments have definitely been one of mine. So I've scored numerous goals, big goals, winning goals, late goals as well, which makes it all important. And it's amazing to do that for this club because they're the ones that the fans remember.
Now we conclude this bulletin by reporting a revelation that may just redefine how India invests. Check out the sponsored feature.
His approach to the game and
India, the wait is over. The enigma that gripped millions across the country has just been cracked. For 7 straight days, we followed red envelopes appearing out of nowhere, QR codes vanishing midair, a woman in red handing secrets in airport lounges, digital codings that glitched for just seconds, and a countdown that had the whole nation holding its breath. Over lakhs of Indians followed the trail, landed and registered on red envelope site, and the big question burned louder than ever. Who's behind the red envelope? Today, we have the answer. The architect of this national mystery is StockGrow, India's social investing powerhouse. And this wasn't just a campaign. It was a symbol, a signal that the gates to India's financial future are finally open to everyone. For years, the stock market felt like a club for the few. The rich, the connected, the insiders. But the red envelope has shattered that myth. Inside the mystery were the investing barriers Indians face. I don't have enough capital. I don't get news in time. I don't know who to trust. And StockGrow, it's built to answer each one. From trade calls by SEBI experts with over 70% success rate, to the strategy builder that lets you test your ideas risk-free, to AI-powered analysis tools that turn your stock picking from guesswork into a strategy. The red envelope was never about secrecy, it was about access. That creates a level playing field with access to elite investing tools for every Indian. So if you ever thought wealth creation wasn't for you, StockGrow just rewrote that story. This is not the end of the mystery, it's the beginning of India's financial awakening. And the door is wide open.
That's huge! That is a biggie! It's out there!
गोल्ड ग्लास क्लियर ग्लास पार हो या नियर सब कुछ दिखे क्लियर
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
when you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash?
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account.
Hello and welcome to Profit Buzzers. This is Hiral Datia and with me is Varsha. Let's quickly take a look at how markets are panning at this hour. If you pull up Nifty 50 on the screens, you'll see the kind of cuts that are coming in. We are trading at the day's lowest levels, 0.4% lower. And again, that 24,750 mark is where, Nifty has been hovering around over the last 2 to 3 trading sessions, and 25,000 is becoming a crucial psychological level, and that's what we've been reiterating time and again as well. Let's pull up Bank Nifty and then we'll look at the sectoral indices to understand what's it looking like. Pretty much in line, 0.2% lower. Marginal bit of outperformance from Bank Nifty as compared to Nifty 50, but the pressure does continue. Only sector which is trading in the positive right now, if you go to see, is the PSU Bank Index with gains of around 0.3% coming in there. But the sector which is taking a major beating today is the Nifty Metal Index, which is down 1.5%. Auto trading under pressure. IT is also down in trade. Oil and gas, media and pharma, these are the few ones which are down and about. Let's quickly look at what's happening in terms of the Nifty 50 components, and either you can look at the contribution or the heat map. Either of the two is okay, but Zomato 3.5% up move, L&T in the positive as well. Cipla, Apollo Hospitals, in fact, will be reporting numbers today, so ahead of that, some bit of positive moves coming in on that one. Bajaj Auto, 2.5% downtick. We did speak to the management as well. It's the domestic business, probably, which could be concerning because it's the exports that is going to drive your FY26 top line and volumes as well. Hindalco is under pressure, NTPC, Tata Motors, M&M, Infosys. In fact, the auto majors are under pressure today ahead of the auto sales numbers that will be trickling in over the weekend. So that's going to be a space we should be focusing on as well pretty closely. So that's what the markets are looking like in terms of, the benchmarks and the large caps, Varsha. What's interesting is in terms of what's happening in the broader market space right now. The key that you're picking up so far.
So, Hiral, I would say Nifty Mid Cap 150 is actually under pressure, but not the small cap 250. But let's pull out the Nifty Mid Cap 150. It's down almost 0.13%. Let's see who are the losers when it comes to Mid Cap 150. You have Mazagon Dock. On the back of weak numbers, you have SJV, and again weak numbers. This is the reason the stock is down. Alchem Labs, Ipca Labs, Deepak Nitrite are some of the counters which are on the losing side. While on the gainer side, when it comes to mid cap 150, you have Suzlon. The stock is up almost. Last time I checked, it was up 10%. There you go. It's up 8% on the back of strong numbers that the company has seen. In fact, we'll be speaking with the management at 2 o'clock, so do stay in. You have BSE, Muthoot Finance, Bharat Dynamics, SKF also buzzing when it comes to mid cap 150. Although on the small cap 250, if you see the index is up 0.26%. Now let's see who are the gainers. You have Gujarat Pipavav, which is buzzing on the back of strong numbers. LG Equipments, MMTC, EIL, Home First are also buzzing when it comes to a small cap 250. Well, on the losers side also, when it comes to small cap 250, you have few stocks which are on the downward side, but on the back of Q4 earnings that these companies have posted. But the biggest risk to markets is how to trade is a word coming in from Kenneth Andrade, who is the founder and CIO of Old Bridge Mutual Fund. Listen in as he talks about how Indian markets will fare going forward.
the biggest risk to the Indian market is the way we trade, is valuations. So this is not just the mid caps, small caps, but some part of the large caps also trade at these these valuations. We haven't been here before, and we haven't stayed here for this long a period of time that we're doing at this point in time. So if I had to look at it, we're probably the most susceptible to any global macro event that takes place, just because we are placed at the top end of the entire price earning multiple band. Okay, and that's how we read it. Will it come significantly lower than where we are? I think I've been on record stating this, that as long as we maintain our cash flow positive nature of corporate balance sheets or corporate income statements, it is unlikely that you're going to get the Indian markets extremely cheap. A 10-20% correction, maybe, but I think markets will stay elevated in terms of price earning multiple.
Well, on that note, let me also invite Sharmila Joshi, founder of sharmilajoshi.com. Well, Sharmila, welcome to the show. Always pleasure to have you. Just wanted your view on markets. How are you seeing markets, and what's your uptake on that?
So I think clearly, as you all have been discussing, it's a very difficult market to trade, and I mean, that doesn't really bother me because I'm not a trader. And for me, the good thing is that the stocks that you want to buy, you got them at a price earlier on. And even now, when you see the reactions are coming on the basis of numbers, which is always a good thing. So when the numbers are good, you're seeing some buying coming in. That would typically be the time when even you would consider if you wanted to add the stock. And I think when you've taken those positions based on some fundamental reason like that, then we've seen that the returns have also been fairly good in the past 2 or 3 months. So if you have Masgao Dock correcting today, let's not forget that it has also sort of bounced very sharply from its lows once we saw that the orders were good, and then the whole war situation, etc. And now you are seeing a bit of a correction. So I think what I'm trying to say is that be stock specific, and try to buy stocks which you have liked and where numbers are good and valuations seem reasonable. And markets will continue to be volatile because the kind of situation that we have, not globally, that warrants some amount of caution. And hopefully things will be clearer over the next couple of months. But till then, I think we just need to focus on good stocks rather than trying to catch a trend in the market.
Thank you, Sharmila, for that view. Well, Adani Ports is in focus. In fact, company has released its investor presentation. Hiral joins us with the key highlight.
So it's an interesting one to watch out for, because if you see the last 5 years performance for investors, you have Adani Ports, which has clearly outperformed Nifty 50 as well, and that's categorically seen where the stock is up nearly 350% in the last 5 years versus Nifty 50, which is up nearly 158%. The reason we're putting this into context is taking into consideration what the future holds in store for the company. Let's understand. They are looking at a 3 times revenue growth by FY29. In totality, a capex of around 65,000 to 74,000 odd crores by FY29, and targeting a 10% ROCE by FY29 from the current 6%. Now let's break this down into detail. Let's look at your FY29 guidance in terms of the revenue, EBITDA and net cash flow. Revenue, again, a 20% compounded growth is what they are looking at, to achieve a 65,000 odd crores. To achieve a EBITDA of 36,500 crores by FY29, which will indicate a CAGR growth of around 18%. And in terms of the net cash flow, a 19% compounded growth to achieve a number of 34,500 odd crores by FY29. Apart from that, now let's move on to what the capex is expected to look like as well. If you look at your FY25 to 29 capex guidance, they're looking to spend around, and this is a breakup we're giving of the first number, 45 to 49,000 odd crores is what will be spent in terms of domestic ports. 15,000 to 20,000 odd crores will be spent in terms of logistics business, and a 5,000 odd crore in terms of the maintenance capex as well. Now let's look at what the guidance in terms of growth is. FY29, the portfolio target for Adani Ports is 1,000 MMT, wherein 850 will be for the domestic business. International business will be around 150 MMT. Moving on, if you look at the logistics business as well, now what they've indicated is that between FY25 to 29, the spends that the company will be making towards the logistics business in terms of capex that will plan to result in significant asset accretion for the company. The logistics ROC is expected to expand to 10% in FY29 from the current 6% in FY25. The trucking segment, if you have to talk about that, and the recently commenced international freight network services, these are the two aspects that will drive the logistics business from here on. And the logistics revenue is expected to grow by 5 times by FY29. Agri-silo capacity to be over 3 times by FY29. And if you have to talk about the warehousing business as well, that will grow to 20 million square feet in FY29 from 3.1 million square feet, which is what the current juncture is. If you have to talk about the multimodal logistics parks as well, they're expecting that number to go to 20 from the current 12, and it's mainly your east and the southern India market that will be the target areas. Then moving on, if you have to look at the other aspects in terms of what will drive growth, your agri-silo capacity we've already spoken about. FY29 truck fleet, that is seen at 5,000 plus from a 937 in the current year. And very lastly, I mean, this is what you're talking about from FY25 to 29. But let's immediately look at what FY26 also has in store. A number target of 36 to 38,000 crores in FY26, and that's a strong number coming in there. The EBITDA is what they're looking at in that range of 21 to 22,000 odd crores. And from the overall capex that we spoke about, that is in that range of around 66 to 74,000 odd crores, around 11 to 12,000 odd crores will be spent in FY26 as a year. Let's quickly look at the port cargo volumes. They're looking at around 505 to 515 MMT, and this is in FY26. The trucking revenues are expected to grow 3 to 4 times in FY26, and the marine revenue is expected to grow by around 2 times, and that number currently is around 1,144 crores. So strong growth outlook coming in from Adani Ports as well. Over to you.
Right. Thank you so much, Hiral, for all the details. Well, viewers do know that NDTV is a subsidiary of Adani Group as well. Now, moving on, NDTV Profit is the only channel which has been continuously flagging serious issues at Ola Electric, from poor after-sales service to the Maharashtra Road Transport Department's raid on its outlets over lack of trade certificates. Now, fourth quarter numbers reflect the magnitude of challenges that the company has faced now. Net loss has widened to 870 crore rupees and EBITDA too is very poor. But my colleague Puneet tracks this sector very well. Puneet, take us through a deep dive on Ola Electric and whether the company can dig itself out of its hole.
Well, thank you for that, and definitely the company has gotten itself in a pickle, to say the least, because in terms of performance just for Q4, the company actually had an EBITDA loss of 70 crores, but the company's revenue was only 600 crores. So it's actually reported 100% negative EBITDA margins for this particular quarter. And when you look at the last 4 quarters also, it's been a very weak picture. For just in terms of revenue, as visible on your screen, 649 crores in Q4, but it was 1687 crores. So it's fallen consistently over the last 4 quarters. And one of the key reasons for that is also lower sales. Even that has subsequently fallen. So Q1 was roughly about 1.25 lakh units that the company sold, but that continues to fall in Q2, Q3 as well as Q4, which was roughly half of what the company had actually sold in Q1 at just 51,000 units. And hence, that has of course dragged the EBITDA margins as well. And that is the confusing part, because lower sales should also result in lower losses for the company, but that's not what's happened. The EBITDA margin for the company was negative 9% in Q1, but it continued to fall to 28% negative, again minus 40%, and actually minus 100% in Q4 of FY25. but there are 5 key negatives apart from the numbers as well that you should know about. And what could have happened because of these is that the first one's, of course, the company's announced another one-time impact of warranty cost of 250 crores. This is warranty cost is essentially that someone would have bought a scooter and it broke down and had some technical issue, and that has to be reimbursed by the company to the customer by giving them the free part or not charging for the service. That has subsequently piled up over the last 3 quarters, and that's been over a 500 crore impact now, and that's a key negative. The second one's the delaying its use of its own batteries in their own scooters. It was expected to come in Q1 of FY26. That has not happened. So it will be over the next couple of quarters, and that's again a key negative because that was expected to boost margins. The third one is EV bike deliveries. They said that it started last week, but actually there's no bike in the showroom yet. That's still yet to be delivered for a test ride if you want. That's not available as of now. And the fourth one is, of course, dealing the launch of the S1 as well as the gig scooters, which is expected to boost the lower end of the market price just under 50,000 rupees. That has been deferred, and the company has not mentioned the timeline. Finally, in terms of EBITDA as well, they guided to be EBITDA positive in Q1 of FY26. They have said that will not happen now. Q1 will have negative 10% EBITDA margins, and hence another big negative of that aspect. Finally, I just want to mention what to keep track as well going forward. The company has, as a one-off, mentioned that they will be giving 800 to 850 crores in terms of revenue guidance for Q1 of FY26 specifically. I mentioned negative 10% EBITDA margins, but they will only be able to sell roughly 65,000 scooters in this particular quarter, and that's lower than the EBITDA break-even of 75,000 units sold in a quarter, or roughly 25,000 in a month. So essentially, it might be difficult for the company to actually report EBITDA break-even as well, which is essentially no profit or no loss. But that seems a steep target now. So definitely the company is, from its IPO frenzy, reality has now sunk in, and the company will need to recharge itself going forward as well.
Right. Thank you, Puneet, for all the details. Well, Sharmila, what is your view when it comes to Ola Electric? Because clearly things are not in favor of the company.
Absolutely, and as was being discussed, it's really a pity because if you remember the IPO and the excitement around that time, because here you had somebody sort of pivoting to a business of manufacturing electric vehicles from being a sort of a service provider to a manufacturer. So there was a lot of excitement at that time, and it's unfortunate that things are where they are, and multiple things seem to have gone wrong for the company at various levels. And it seems a very difficult road ahead. That said, and what I also think is sort of more, which causes me more concern, just like I feel really bad that they're in this state, is that if you look at the business per se of electric two-wheelers, that's really going very well. If you look at the numbers of the other players have delivered, or even if you look at the kind of data that you're getting from tier 2, tier 3 towns, where people have shifted to electric vehicles in a big way, because there you do have a lot of people using electric two-wheelers, and the shift is very apparent when you travel, that you do see a lot of electric two-wheelers on the road, and in such an environment to be in, to sort of paint yourself in a corner is really bad. So as was outlined, I think we need to wait and see if you see an improvement in numbers, but it's a pity as we've discussed.
Right, so that's with regards to Ola. But let's shift focus to another two-wheeler which does not only do EVs, but serves across parameters, Bajaj Auto. In spite of a good set of numbers, the stock has been trading under pressure. A couple of reasons that we do pick up, but let's first understand what the management had to say in terms of their EV strategy from here on, how it will impact business as well. Let's hear out Rakesh Sharma.
We feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24. But by quarter four of FY25, our EV business, which comprises both three-wheeler, e-auto, and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course it is less than the the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business.
In fact, let's also understand what the brokerages make out of it. You have a Nuvama, which has gone ahead and maintained a buy. They have a target price of 10,700 with regards to Bajaj Auto. They're expecting a 7% volume compounded growth over FY25 to 27. And a 5% growth in domestic and a 10% growth in the export business as well. Overall, better rural demand, newer products, and better availability in terms of finance is what is going to aid. ICICI Bank as well has downgraded the stock. In fact, they have a target price of around 9,900. What they are indicating is a 16% EPS compounded annual growth over FY25 to 27. Valuations is what ICICI believes are extremely expensive. Jefferies has maintained a hold. They've hiked the target price to a 9,000. They like Bajaj's rising EV franchise. That's what Jefferies is betting on. Apart from that, they're concerned about the decline in volume share in India's two-wheeler exports and the market share dip that they're seeing in the domestic motorcycle business as well. In fact, they're expecting a 13% EPS growth in terms of 25 to 28. CLSA has maintained outperform. They have a target price of 10,149, so that's hiked. They're saying that the two-wheeler growth is what they're looking at in the range of 5 to 6%. 15 to 20% is the FY26 export growth number. And on the back of cost reduction for the electric two-wheelers, they've gone ahead and increased their EPS target for FY27. So it's slightly mixed view, but seems things are on track. Fundamentally, there is strength. There could be headwinds, which the management also indicated, and that's what they will work towards as to striving away from it. In fact, Sharmila, your quick view in terms of what a Bajaj Auto is looking like to you. You already had the other two-wheeler majors that have reported numbers. Where would you place it, and what would your call be?
As you said, we have three major two-wheeler players listed. We have TVS Motors, we have Bajaj Auto, and we have Hero Motors. And also, as we have seen over the last number of years, this is a very competitive market. Every time there is a new sort of offering which one of the players has, which the market perceives well, we see sort of fancy shifting there. And they have their sort of, each of these players has their own niche, and at different points of time, different those do well for the company. For Bajaj Auto, it has been an export-facing story. They have started exporting very widely, and they did suffer because of that. Then they sort of got back on track as things looked up over there. Now, in terms of valuations, if you frankly ask me, the one I like best is Hero Motors. Because what I really think is that this is a game that's going to play out very well between these three. They are going to sort of compete for market share and margins, and introducing more effective models, etc., and which is good for consumers like us. But having said that, there is no doubt in my mind that Bajaj Auto will go to the kind of 10,000 levels that some of the brokerages are indicating. But at this point in time, at this valuation, probably I prefer a Hero Motors to the other two. So my pecking order would be Hero, Bajaj, and then TVS. TVS was actually my number one, but because of valuations, now I think that it should be at number 3.
Right, got that view. Samvardhana Madhusumi. So sticking to auto space only, Samvardhana Madhusumi is in focus. Now this is after posting weak Q4 results. We spoke to Pankaj Mittal, the COO of the company, about the outlook for the next 5 years. Do listen in.
Well, the detailed 5-year plan will be sometime when we do our investor conference, and that will be somewhere around September, October time, where we will give a complete details in terms of how we go ahead with our next 5-year plan. But just to share with you, today during the investor call, there were certain questions coming on this topic. So we did disclose that it's an ambition for the Motherson Group that we would like to go towards $108 billion in the next 5 years.
Right. Sharmila, just a quick answer on this. SAMIL, I have been tracking. What are your views?
So I think, the trouble for them is the fact that they are also very widely sort of global in their approach. And that could come under a bit of a, because of all these tariff issues, we need to see how that plays out for them. But other than that, I think, this is a good mid-cap sort of auto ancillary player. They've also announced a bonus. So let's see how things pan out for them in the next couple of months, because they do have facilities in a whole host of countries. And we don't know how that's going to sort of work out going ahead.
Well, viewers, time for a quick short break. Stay tuned to NDTV Profit.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I've done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Markets slump over tariff concerns. Sensex falls 300 points while the Nifty tests 24,700 support. Autos, metals lead the decline.
Ola Electric hits a pothole in its fourth quarter results as net losses widened to 870 crore rupees. The stock is down 5%.
And Bajaj Auto fails to impress investors with its Q4 numbers. Slump in domestic sales of two-wheelers ring alarm bells.
Suzlon shares up 8% as Q4 net profit increases by 4 times. The company says it has clocked the highest profitability in a decade.
And the 5,000 crore rupee bond by Adani Ports has been fully subscribed by LIC. 3 times revenue growth is what they are targeting by FY29. Welcome back. You're watching Profit Buzzers. Let's just quickly pull up Nifty 50 on the screens as well. Almost 150 points kind of a cut you're seeing from the day's highest levels. So that pressure continues to build, though we are not at the day's low, but pretty much near that, 50 points away from the day's lowest levels on that front as we speak. But let's quickly look at a few of the companies that have reported numbers. Concord Biotech, Technocraft, Gujarat Pipavav, all of them, I think, trading in the positive as we speak. My colleague Mahima is with us to tell us more in terms of what the numbers are looking like and what's worked. Mahima, over to you.
Right, so I'll start with Technocraft Industries. Revenue is almost up by 19%, led by higher sales volume in the drum closures, plus revenue from textile division also saw a growth of around 63%. Rest of the divisions also saw a growth of around 8 to 11%. Now, in terms of the numbers, revenue increased by around 18.5%. to around 702 odd crores. EBITDA climbed 31% to 110 crores. Margins expanded to 15.7% versus that of 14.2%. And net profit grew around 20% to around 66 crores for the counter. The next one is Concord Biotech, where EBITDA expansion was overall led by an operating leverage advantage, and net profit was also aided by lower finance costs. Now, in terms of the numbers, revenue is up 35% to around 430 crores. EBITDA was up 42%. Margins improved significantly from 42.1% to 44.3%, and net profit was up almost 48%. They also declared a dividend of 10.7 per share. Lastly, Gujarat Pipav, revenue was at par. EBITDA was higher by around 1%. Margins maintained at around 58%. The overall performance in terms of numbers, revenue was flat at 252 odd crores, EBITDA was flat at 157 crores, but I think what the street liked was the overall net profit growth that was at around 70%. Of course, this was on the back of an exceptional item which was recorded in Q4 FY24, which stood for around 52 odd crores. In terms of key updates, container saw lower EXIM volumes, bulk sales saw lower mineral volumes, liquid saw higher non-LPG volumes, and the roll-on roll-off segment saw higher volumes in terms of OEMs. So this is the overall view of how Q4 has panned out for all of these three earnings and why they are buzzing in trade today.
Right. Thank you, Mahima, for getting us the details. Let's also welcome in Gaurav Sharma, Associate VP and Head of Research, Equity, Commodity and Currency at Globe Capital. And Sharmila continues to be with us. Gaurav, three stocks that Mahima was mentioning. What are charts indicating? Any buy preferences ahead of the already strong move that you're seeing in today's session?
GPPL is looking pretty good on charts. I would not recommend buying it at the current price. I think the prices would soften up in the next 1 to 2 days. It may drift towards 155, 156 odd levels. That would be a very attractive level to buy this stock. See, one more important thing is there that this stock has consolidated quite a lot in a range of 125 to 150 odd range. So now when it has broken out, it is set to go and test higher levels close to 180 and even 190 levels. So I think a slight dip, 4 or 5 points will be a slight dip from here, would be a very attractive level to buy.
Okay, so that's with regards to Gujarat Pipavav. Sharmila, any views on the three stocks that we mentioned, because all of them coming in from the broader markets? How are you looking at it?
So from a numbers, valuations and business perspective, I think I put my money on Concord Biotech. Technocraft to my mind looks a little expensive, and so I think Concord Biotech would be the stock that I would which I like between these three.
Thank you, Sharmila, for that view. Well, on the flip side, some of the stocks which showed negative earnings and are on radar, you have Landmark Car, Shalby and KNR Construction and Mazagon Dock as well. Anushi joins us with all the details.
Well, there's a couple of stocks in focus. First of all, when we are talking about Mazagon Dock, here they've reported a negative 51% of a drop in terms of where the net profit is concerned. This is at the likes of 325 crore versus 663 crore. Revenue also have seen about a 2% of an uptick on the other side, but it's the EBITDA and the margins which have seen a significant sort of a drop that we are seeing. So that's as far as where the EBITDA is concerned, EBITDA has seen about a 81% drop, while margins stood at the likes of 3.2% as compared to 17.3%. Whereas for Landmark and Shelby also, we are seeing some bit of that margin contraction coming by. So those are the other two stocks in focus. Otherwise, even I want to talk about the likes of Amara Raja. Now here the earnings have missed estimates on elevated alloy prices and power costs. In fact, if we look at the EBITDA, that was down about 17%. Margins have contracted to 11% as compared to 14%, and net profit saw about a 30% of a dip as well. So this is in terms of where the key earnings are concerned. I'll also want to talk about something like a Mrs. Spectre, which has seen cost of materials at 56% as compared to revenue versus a contribution of 52% earlier. So that has resulted in margins coming to 12.5% as compared to 14.4%, and net profit also saw about a minute 2% of a drop. So these are some of the couple of stocks in focus on the back of negative earnings.
Thank you, Anushi, for all the details. Well, Gaurav, let me come to you on Landmark Cars and KNR Construction and Shalby. So, all the three stocks, how are they looking on charts? Any buying opportunity seeing there?
Not really. Firstly, let's talk about Mazagon Dock. I think most people would be interested and mostly hopping onto, chasing a 6% dip in this stock. But I think that these are still not very attractive level as per charts. I see it heading towards 3,200. So that would be a level where I would even, consider putting some bets on this. And 3,000 to 3,200 would be a comfort level to start adding positions here. Other than that, the two stocks I don't find really attractive to make a trading position.
That view. Well, Sharmila, your views on Landmark Cars, Shalby and KNR Constructions?
Actually, I like all three. So, from a business perspective, to my mind, they're all the three stocks are fairly attractive. Yes, the numbers are bad, so maybe we can allow the stocks to correct a little and then look at them. We are in no hurry to buy. But that said, I think, Shalby, we are talking of healthcare, hospitals. I think that's an attractive business to be in. Stock has corrected because of numbers. But overall, I think that, they can get out of this. Landmark Cars, again, we are talking of a Mercedes dealership and, where consumption is concerned. I think that we are, soon going to be in a sort of a recovery mode. So Landmark Cars and then KNR Construction, I think, again, a sector that I like. So this is a sort of a mixed view because I like the sector and I think that, post correction, the stocks may give you an opportunity. So I think all three are good.
Thank you so much for that view. Next stock which is in focus is Suzlon Energy. Now, what a brilliant or beautiful numbers that the company has posted. The stock is up almost 8%, 9% in trade today. Now, let's see what were the key highlights when it comes to Q4 FY25. Revenue growth that you're seeing is led by higher than expected wind turbine generator deliveries. EBITDA was driven by uptick in gross margin, and net profit jump that you're seeing is due to exceptional gain, that is deferred tax gain of rupees 600 crore the company has seen. While on the guidance side, where the street is actually excited, is company has guided at least 60% year-on-year improvement in deliveries in revenue and EBITDA PAT for FY26. So 60% growth in all of the metrics. The EPC pipeline is expected to grow steadily according to company, and they're also prepared for exports, but current focus remains on fulfilling the India's demand. So very good numbers when it comes to Suzlon. Well, Gaurav, how are charts looking for Suzlon?
Suzlon is very well placed on charts. After a retracement of around 50% of this move from, I've placed a retracement from 5 rupees to 85 on the weekly charts. It has retraced to, 50 odd percent and till 45 levels, currently quoting at 71. I think this is a start of a new journey for Suzlon. A lot more is still there. I recommend, traders to hold on to their positions.
Of that view. Well, Sharmila, your views on Suzlon? Company is on the cusp of turnaround.
Oh yes, absolutely. And I think that when I was trying to see the all-time range for Suzlon, because I know that when you've been in the market as long as me, and I've sort of seen the entire journey of Suzlon to the point where it was in sort of single digits and where it is today. From 3 digits to single digits to where it is today. And it's all been on the back of the fact that they've gone through a whole sort of a lot of pain and then sort of, come out stronger on the other side. So there's hope for Ola Electric, which we were talking of a little while earlier. Maybe the pain will continue, but if they sort of hang in there and get their act together, they could turn things around. But yes, I think Suzlon, I think ever since it was about 15 rupees, 18 rupees, I've sort of started really looking at it very seriously. And they've done an amazing job, I think, given the fact that, where they were and as you're saying now at the cusp of a good turnaround. So definitely a stock that I'm positive on.
Right, so that's a Suzlon that you are watching out for as well, because that's an interesting play. In fact, we'll be joined by the management as well in India Market Close, so watch out for that conversation at 2:10 from here on. But another stock from the railway pack that is in focus is the IRCTC. A good set of numbers that were posted, but the stock is seeing cuts of nearly over 2%. We did speak to Sanjay Kumar Jain, CMD of IRCTC, with what growth could be looking like going forward. Let's quickly listen in to a slice of that conversation.
You see, catering we would like to grow around 9 to 10%, and tourism we would like to grow by 15%. We are already in the process of finalizing our target with the ministry, and overall we are overall at IRCTC level in all the four segments put together. We wish to grow by 10%. We are targeting to grow by 10%.
So that's IRCTC. Sharmila, quick view in terms of IRCTC. How are you looking at it, taking into consideration? You're talking about the ticketing business, you're talking about the food business, and it's food that is becoming a major chunk as well now, and that's what they're envisioning. How would you recommend a viewer to look at IRCTC?
So I'm positive on the stock because as you were pointing out the three monopolies that they have, water, food, as well as the ticketing on railways. And the fact that we are seeing a pickup in tourism, more and more Indians are traveling. There is, the kind of growth that we've seen in that has been pretty stupendous. And we are seeing, they had some plans which they had held back during that entire 2022 COVID period, which are now also slowly getting back on track, perhaps, which is why they're targeting more from tourism going ahead. So this is definitely a stock that I like. Again, I think, you need to temper down your return expectations as well as, going ahead, just as we have done for a lot of PSUs, defense, etc. But that said, this is one stock that I do like.
Okay. Gaurav, what are charts indicating? There is marginal pressure, good volumes on this one. Would it be a buy at current levels?
I think it's better that we should wait for some more time. We'll get more attractive levels to buy. 720 is the range that 700, 720 is the range that is where I'm eyeing at. I'll be placing my bets around those levels. So overall, it is good, but buy on dips would be the recommendation as of now.
Buy on dip should be the strategy with regards to where IRCTC goes. But moving on to the real estate pack, Soba and Prestige, both of these counters are in focus. In fact, let's quickly look at what's happened. Investec has initiated a buy on Soba. They have a target price of 2,150. They did report numbers as well. They're expecting, a long-term presence with entry in Mumbai and Noida. Valuations at a 25% discount to peers is what they're saying is where Soba is at. Cash flow is strong. Land monetization is what they're looking at as well. In fact, HSBC, they have maintained a buy. They have a target price of 2,150 as well. They're expecting improvement in terms of the operating cash flow, and the plan to enter newer cities like Mumbai and Noida could be a positive. What HSBC does not like is it's the margins which are disappointing, and they're expecting another 2 quarters of pressure. That's what the company has indicated. And the pickup in the run rate of overhead and tax related costs is what they are eyeing pretty closely. So that's with regards to where Soba goes. Stock is up 3.5% though. Prestige also reported numbers. Clearly, Q4 bookings have made a strong comeback. Their FY25 bookings have been weak on the back of the project delays. They've said that the outlook in terms of FY26 remains strong, and this is mainly on the back of the response that they've got for the Indirapuram launch as well. Approval delays is what led to the miss in terms of the pre-sales guidance for FY25. Let's understand from Sharmila. Sharmila, how are you looking at the real estate space? And if you have to look at Sobha and Prestige, your views on both these counters?
Looking at the space very positively, and coming to specific stocks, I think that both Sobha as well as Prestige, definitely I think both are attractive. Probably a little too expensive at this point in time because I've been liking them for a long time, so I was just actually trying to check the valuation. But that said, the reason I like these stocks and I started tracking them is the fact that they are focused more on other than the sort of the large cities there, and they are, even if they're in large cities, they were in sort of areas where there was good, like Sobha with its concentration in Bangalore and the southern cities. They've done really well, and Prestige, we've seen their entry into Mumbai and how that has done well for them, etc. So both stocks, I think, have given very good returns over the last couple of years, and I continue to like them. But I would wait for corrections, honestly, to buy. I wouldn't buy at this level.
Okay, so that's Sharmila's view. Gaurav, what are charts indicating? 12 months, 23% downtick in terms of Sobha. Are you expecting any recovery to come in? Because if you have to see from April onwards, there is some bit of an upward journey that has started. If we can have a similar 12-month chart of Prestige as well to understand the kind of moves. Again, a similar trend from April is when you've seen that uptrend that has started as well. Do you think someone should be jumping onto this upcycle from here on? And if so, what are the charts indicating in terms of a target price?
Firstly, I completely agree with Sharmila. Even we are bullish on the real estate sector on the whole. Now, specifically talking about these two stocks, let's take Sobha first. Sobha is looking attractive on charts. Yes, one can consider taking some positions here. If we get a dip, that'll be even better, but these levels are also reasonable enough from a charts perspective. I see it heading towards 1700, 750 levels by the year end. When we see Prestige, it is also kind of a little bit of a similar chart pattern here, and some more up move is likely, but I think Prestige is more likely to take a dip first and then start moving. So 1350 would be a more attractive level for me. One more thing, that Lodha is also one good stock in this category, which one should keep an eye at. A level close to 1350 is a very attractive level for the stock. Currently, it is trading at 1433. So I think if in a week or two the prices soften up to that level, that will be a very attractive bet to take.
Right, got that view. Well, other stock which is in focus and is expected to, post results today is Apollo Hospitals. Now, if you see, revenue growth is expected to rise 13.6%, which will be led by sustained mid-teen growth in Apollo Healthco. And healthcare services, that is their hospital business, is expected to see 10% growth year on year. And the diagnosis segment is expected to grow in low teen. EBITDA margin for hospital segment may be impacted due to slow revenue growth and increase in cost that the company will see. Well, key areas to watch out would be their expansion plans, their ARPOB growth, outlook on the ARPOB growth and outlook on the EBITDA margin. Well, Sharmila, what is your view when it comes to Apollo and whole hospital sector, considering the huge expansion plans that all the hospitals are going into?
In fact, it's my favorite stock within this space, and the three verticals that you mentioned, I think that the growth will come from each of those verticals is capable of giving better returns from where they are currently. And we had a period where hospital and healthcare was sort of a light sector during the COVID period, and then in between we saw some correction coming into especially all your pathology, etc. But the fact remains that now, as things get back to sort of normal, we are seeing increasingly international tourists. Medical tourism has picked up again, and we do have a whole host of very qualified doctors, and treatment is considerably cheaper than in a lot of countries. So that, I think, is another big key area for big hospital chains like Apollo Hospital. So overall, I'm very positive on the stock. Let's see what the numbers deliver. But as I said, I'm positive on the space, positive on healthcare, positive on pathology. And within that space, within the hospital space, possibly my preferred pick is Apollo Hospitals.
Apollo is the preferred pick when it comes to Sharmila. Well, Gaurav, how are charts looking for Apollo and, of course, other hospitals that you are tracking?
Apollo Hospital is trading close to its 52-week highs to close to its lifetime highs as well. So the charts are indicating positivity here. I don't see much of a downside unless there is a huge variation in the numbers which are due today. Other than that, KINS is one area, hospitality stock that can be considered from a trading perspective. And from a little longer perspective, I like Dr. Lal Path Lab as well. It is consolidating as of now. These are good levels. So if someone is willing to take a position from 6 months type of a perspective, these are very attractive levels for Lal Path Lab.
Regards to where hospital companies go. But moving on, you have Bernstein, which has gone ahead and upgraded a delivery to outperform from a market perform. However, they've gone ahead and cut the target price to a 430 from a 450. The stock is trading at the day's lowest levels. Harsh joins in with the complete report. Harsh, what is Bernstein looking at?
Well, a couple of factors playing out here. Just to kind of give context, delivery has two main businesses. One is the e-commerce logistics business and the other one is the traditional trucking business. Let me talk about the e-commerce logistics business and what has changed. One is there was a downgrade last year by Bernstein, and that was on the back of the fact that insourcing attempts from Meesho was largely going to keep both volumes as well as margins in check. That has largely played out according to Bernstein. Quick commerce and management churn impacted the business, but now that is behind where delivery is concerned. So therefore the upgrade. Now long haul e-commerce faces structural challenges from quick commerce, of course. Consolidation in 3PL should support margins and volumes is what they say, and this one has a strong balance sheet is what they say. So those are three factors why what is driving their upgrade. Acquisition of e-com ventures is obviously a big shift. In fact, only 30% of e-com's volumes are, if only 30% is retained, then you will have a boost in delivery parcel volumes and an improved margins of 200 bips or so, and therefore they're positive.
Right. Thank you, Harsh, for all the details. Well, Sharmila, quick view on delivery.
I like the space, but valuations look a little expensive. So I think, my target is closer to 380. But this space again has tremendous scope going ahead. Let's watch it for now.
Gaurav, how are charts looking for delivery? Any view on that?
Already the stock has ran up pretty much. And if you look at, this month only the stock is up around 17-18%. Similar kind of move was seen in the previous month as well. So not at these levels. I would wait for a dip towards 310, 320. Then I would be considering a bet on this.
Right. Okay. Thank you for that view. Well, thank you, Gaurav and Sharmila, for joining this conversation. Pleasure to have you. Well, that's all the time that we have on this edition of show. Stay tuned to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I've done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching Top Trades. I'm your host Anushi Vakharia and with me is Somit Sarkar. But before we talk about other companies in focus, let's talk about markets and see how they're faring currently. Now, in terms of where the benchmark indices are concerned, Nifty 50 down about 0.3% in trade. Currently, it's been a choppy day of trade is what we are seeing. Currently, benchmark below the levels of 2400 is what we are seeing at the mark of 24,780. Now, in terms of where the point contribution table is concerned, let's see which are some of the stocks pulling the index down in trade today. We have Infosys, which is pulling the index down. Other than that, Mahindra is under pressure as well. ICICI Bank, Bajaj Auto in red as well. Bajaj Auto also in red on the back of its fourth quarter results is what we are seeing. Whereas something in the green is the likes of HDFC Bank, Eternal and SBI, L&T, another stock which is in green as well. In terms of where the Nifty Bank is concerned, now Nifty Bank, if you are seeing that over, let's pull out Nifty Bank and see how that is doing. Now that is in green and seeing gains of around 0.3% in trade currently and at the levels of 55.17, just off the day's high is what we are looking at in terms of where the Nifty Bank is concerned. Let's also see how the sectors are faring in trade currently. So in terms of where the sectors are, Nifty PSU Bank up over almost 2.5% in trade today. Let's pull out the index to see which are some of the top contributors leading to these kind of gains that we are seeing for the Nifty PSU Bank. Meanwhile, so here we are looking all the stocks in green. Bank of Maharashtra up over 4.5%. IOB, Indian Bank, QBI seeing gains of more than 3% in trade today. But if you look at the other sectors, what is not doing so well includes the likes of Nifty Auto, which is down about 1% in trade. Whereas Nifty Metal is also seeing cuts of over 1.4% as well. But let's also talk about where the broader markets are concerned. And in terms of Nifty Midcap 150, what we are seeing almost flattish moves over here in the red, about just flat currently in trade over the last half an hour. So also similar kind of movements that we are looking at. Whereas Nifty Small Cap 250 is doing particularly well. It's up over 0.5%. So it's outperforming the benchmark and the mid cap indices. In fact, let's see the BSE 500 to get a sense on which are some of the counters in focus. if you are looking at stocks in focus, we have Gujarat Pipavav up over 11% in trade today. Now that is gaining on the back of its fourth quarter results, whereas Rallies is also seeing some sharp up moves, up over 10% in trade today. Suzlon and LG Equipments up over 8%. Suzlon is also buzzing on the back of its fourth quarter results. We've seen a stellar set of numbers coming up from this company. NBCC also buzzing in terms of where the fourth quarter earnings are concerned. Muthoot Finance buzzing in up over 7% on the RBI draft guidelines. That is what we are looking at. However, what is not working out so well is Mazgaon Dock, down about 6%. This is after its fourth quarter results. We've seen a sharp drop in terms of where the margins and the net profit is concerned for the company. Wellspun Living is also down about 6%, SJVN seeing cuts of over 6%, and Chambal Fertilizers, another stock, seeing cuts of over 5%. So, well, this is overall the picture that we are looking at in terms of where the benchmark and the broader markets are concerned. But Samit, a lot of stock-specific action is what we are seeing in trade today, right?
Right, and Adani Ports is one of them. They have released their investor presentation. Let's get in Hiral to discuss what are the key highlights that they have given in the presentation. What are the growth outlook that the company has portrayed here?
So it's an interesting one to watch out for, because if you see the last 5 years performance for investors, you have Adani Ports, which has clearly outperformed Nifty 50 as well, and that's categorically seen where the stock is up nearly 350% in the last 5 years versus Nifty 50, which is up nearly 158%. The reason we're putting this into context is taking into consideration what the future holds in store for the company. Let's understand. They are looking at a 3 times revenue growth by FY29. In totality, a capex of around 65,000 to 74,000 odd crores by FY29, and targeting a 10% ROCE by FY29 from the current 6%. Now let's break this down into detail. Let's look at your FY29 guidance in terms of the revenue, EBITDA and net cash flow. Revenue, again, a 20% compounded growth is what they are looking at, to achieve a 65,000 odd crores. To achieve a EBITDA of 36,500 crores by FY29, which will indicate a CAGR growth of around 18%. And in terms of the net cash flow, a 19% compounded growth to achieve a number of 34,500 odd crores by FY29. Apart from that, now let's move on to what the capex is expected to look like as well. If you look at your FY25 to 29 capex guidance, they're looking to spend around, and this is a breakup we're giving of the first number, 45 to 49,000 odd crores is what will be spent in terms of domestic ports, 15,000 to 20,000 odd crores will be spent in terms of logistics business, and a 5,000 odd crore in terms of the maintenance capex as well. Now, let's look at what the guidance in terms of growth is. FY29, the portfolio target for Adani Ports is 1000 MMT, wherein 850 will be for the domestic business, international business will be around 150 MMT. Moving on, if you look at the logistics business as well, now what they've indicated is that between FY25 to 29, the spends that the company will be making towards the logistics business in terms of capex, that will plan to result in significant asset accretion for the company. The logistics ROCE is expected to expand to 10% in FY29 from the current 6% in FY25. The trucking segment, if you have to talk about that, and the recently commenced international freight network services, these are the two aspects that will drive the logistics business from here on. And the logistics revenue is expected to grow by 5 times by FY29. Agri-silo capacity to be over 3 times by FY29. And if you have to talk about the warehousing business as well, that will grow to 20 million square feet in FY29 from 3.1 million square feet, which is what the current juncture is. If you have to talk about the multimodal logistics parks as well, they're expecting that number to go to 20 from the current 12, and it's mainly your east and the southern India market that will be the target areas. Then moving on, if you have to look at the other aspects in terms of what will drive growth, your agri-silo capacity we've already spoken about. FY29 truck fleet, that is seen at 5,000 plus from a 937 in the current year. And very lastly, I mean, this is what you're talking about from FY25 to 29. But let's immediately look at what FY26 also has in store. A number target of 36 to 38,000 crores in FY26, and that's a strong number coming in there. The EBITDA is what they're looking at in that range of 21 to 22,000 odd crores. And from the overall capex that we spoke about, that is in that range of around 66 to 74,000 odd crores, around 11 to 12,000 odd crores will be spent in FY26 as a year. Let's quickly look at the port cargo volumes. They're looking at around 505 to 515 MMT, and this is in FY26. The trucking revenues are expected to grow 3 to 4 times in FY26, and the marine revenue is expected to grow by around 2 times, and that number currently is around 1,144 crores. So strong growth outlook coming in from Adani Ports as well.
Well, thank you, Viral, for that. Moving on, Manappuram, gold finances like IFL, Manappuram and Muthoot have been buzzing in trade. In fact, Manappuram is up 7%. It's one of the top F&O gainers in trade, while Manappuram is up 4%, while Muthoot is up around 7%. And this is on the back of the news that the Department of Financial Services have examined RBI's draft guidelines on gold lending. And what is the outcome coming out of here, which has led to this kind of a move when it comes to gold finances? Let's get in Vishwanath Nair with more details.
Right. So as far as the Department of Financial Services goes, they've submitted an entire group of suggestions to the Reserve Bank of India regarding the draft guidelines that the RBI put out on the 9th of April. These draft guidelines dealt with how lenders could do gold loan lending, and the Department of Financial Services, which is part of the Finance Ministry, believes that these norms might be a little too onerous for small borrowers. They've said that the rules should not adversely impact these small value borrowers. In fact, the department has said that borrowers up to 2 lakh rupees should actually not be allowed, should not be included in these guidelines. That's what the DFS has told the RBI. What DFS is also saying is that the norms should be, the final norms should only be implemented from January 1st, 2026. While the RBI had not decided a date on the implementation, they had, however, said that feedback is welcome, and typically after the draft guidelines are put out in about 3 to 5 months, the final guidelines come in and they are applicable. So a January 1st deadline seems more appropriate. The DFS also did not miss a chance to remind the RBI that it hopes that the RBI will consider all the feedback it is receiving from the stakeholders and the concerns that are being raised by the public before issuing the final guidelines. It's a little surprising because typically the government does not come out in public and announce whatever it is that they're thinking or the conversations that they're having with the RBI. This is a special case, clearly because gold loans are a widely used product, specifically by the agricultural community, and therefore the government is considering the impact it will have on these borrowers.
Okay, thank you, Vishy, for all those key details on what these RBI draft guidelines, what we are seeing from that. But with that, let's welcome in our guest for today. That's Sunny Agrawal joining us, Head of Fundamental Equity Research from SBI Cap Securities. Now, with this new guidelines, what the update is, 2 stocks which are in focus today is something like Muthoot Finance along with Manappuram Finance. Want to understand your outlook on both of these counters?
Yeah, good afternoon. I think, yes, definitely the draft guideline which has been issued by the government to RBI on the gold loan definitely augurs well for all the housing finance company. For the gold finance company. Obviously, there were some restrictions as per the earlier RBI guideline that in terms of loan where they can disburse multiple loan can't be issued to one of the borrowers, so on and so forth. And that has led to the, in fact, a downgrade in terms of the growth guidance by both the company during FY26. And because of this, a new draft guideline wherein government has advised that below 2 lakh rupees there should be no restrictions, so on and so forth. That definitely will lead to an upgradation in terms of growth guidance for both these companies. Then anyway, with an gold prices at an elevated level, both these companies will enjoy higher LTV ratio. So I believe again augurs well for both these companies. Within both, if I have to choose one of them, I think Muthoot Finance is one of the stock which I would like to add in my portfolio. But again, on deep, I feel the fair value of the company is close to 2,300, 2,350. So maybe buy on deep is the right strategy as far as Muthoot Finance is concerned.
Thank you for that view, Sunny. But let's shift spotlight to Adani Group set of companies. 6 of 7 listed companies of Adani Group ended in green and an otherwise muted market. Jefferies has now come up with a note on the conglomerate. They believe earnings are going to grow at a compounded annual growth rate of 22% through FY27. Samit had earlier spoken and given a detailed breakdown on all of these companies. So let's see what the view is over here.
Well, yes, Jefferies has come out with this positive note on the entire Adani Group of companies. Now, they're saying that FY25 for Adani Group was a year of consolidation where the 7 listed Adani Group companies saw a 14% YOY growth on the EBITDA front, while for the 5-year, the CAGR has been around 25%. Now, the 7 listed Adani Group companies reported a combined EBITDA of close to 74,000 crore rupees, and 82% of this EBITDA growth has come in from the core infra portfolio. Only Ambuja reported a decline on a YOY basis, while the other companies have reported growth in the range of around 3 to 25%. Now, when it comes to Ambuja, which reported a 22% decline on a YOY basis, now this decline was on the back of weak pricing in the industry and also because of the M&A integration cost. When it comes to Adani Enterprises, that reported a 25% growth in its EBITDA, and this growth was purely led by the new incubating businesses of the group, that is the airport and the Adani New Industries Limited. When it comes to Adani Green, 22% growth is what we have seen, and this is on the back of capacity addition and improved utilization in FY25. For Adani Energy, a 22% growth was driven by completely on the back of capacity addition. For Adani Ports, we have seen a 16% growth on a YOY basis when it comes to their EBITDA, and this is purely on the back of higher realization in the port business, in the logistics business, and also because of margin expansion. For Adani Power, we have seen a 12% growth on the EBITDA, and this is on the back of higher merchant sales and on the back of acquisitions that the company has done. Now, for Adani Total, the growth was lower at around 3%, but this was purely because of the fact that gas cost was quite higher in FY25 as compared to FY24. But if you look at the volume growth for Adani Total in FY25, that was 15%, among the highest that we have seen in the city gas distribution space. Now, when it comes to leverage, yes, the group's leverage has increased because the company has taken debt for capital expenditure plans, which will bear fruit going forward. Now, if you look at the overall debt of the company, that has increased to around 2.7 lakh crore rupees as against 2.2 lakh crore that we have seen in the previous year. And when it comes to leverage, for FY25, the leverage stands at around 3.7 times as against 3.3 times last year. But yet again, this leverage number of 3.7 for FY25 is quite lower compared to what we had seen in FY23, where the group's leverage number stood at around 5 times. Now, what is the way forward for the entire group if you look at? When it comes to FY25 to FY27, Jefferies is estimating that the entire group's EBITDA will increase at a CAGR of around 22%. And for group-wise, if you look at, company-wise, if you look at, for Adani Enterprise, the growth will be led by the Navi Mumbai airport project, which will come online. Along with that, the Ganga Expressway project is also expected to come online, and copper smelter will also be commissioned over this time period. When it comes to Ambuja, the way forward, or the way to look, or the thing to look at, will be the organic capacity addition plans that the company has. They plan to add around 19 million tons of capacity going forward. When it comes to Adani Green, they are focused on their business target. For Adani Ports, if you look at, in fact, the marine business target is of around 3 times EBITDA growth over FY25 to FY27. So that's the key thing to watch out for Adani Ports. For Adani Green, they are focused on achieving the 50 gigawatt target that they have by 2030, and that's the important thing to watch out here. For Adani Green is the smart meter business sale that is expected to pull off in the coming years, and the analysts are expecting a growth of more than 30% on the EBITDA front for the smart meter business. And lastly, when it comes to Adani Power, the company has given a guidance of raising the capacity by nearly 1.7 times to 30.7 gigawatt by 2030, and this guidance continues to remain intact, and this is one of the most important thing to watch out for when it comes to Adani Power.
Okay, Adani Group set of companies in focus. But Sunny, coming to you, I want to understand if you have any top pick in these Adani Group of companies that we are looking at. In fact, Adani Ports has also been in focus today on the back of the FY29 guidance given in terms of where the revenue is, EBITDA is, the capex plans. Just want to understand your overall outlook here.
Yeah, within Adani Pack, we continue to remain bullish on ports as well as cement business. So port business is something where we find comfort in terms of valuation also, and at the same time there is strong institutional presence. So Adani Port continue to remain again a proxy play on India export growth story as well as expansion in economy. So Adani Port is the one pick. Cement Pack, I think, was not covered. So again, both ACC and Ambuja continue to look good, especially on the back of muted FY25, where we feel that in FY26 the industry can grow at 6 to 8% in terms of volume growth, and with profitability which has improved during the last 6 months, and that momentum is likely to continue in FY26. So both the cement companies as well as the port company Adani Port.
That's the view in terms of where the Adani Group companies. A quick disclaimer that the channel you're watching is a subsidiary of AMG Media Networks Limited and the Adani Group company. But let's focus on Birlasoft now, which has tanked over 4% in trade today, and this is after the company reported a 4% year-on-year increase in net profit. But what are some of the other key metrics which has dragged down the number? That is what we have to see. Macquarie has also downgraded the stock to an underperform and cut the target price as well. Puneet joins in with more details on this.
Well, thank you for that. Definitely, it was a very weak set of numbers for Birlasoft. In terms of constant currency, the revenue has fallen by 5.3% on a quarter-on-quarter basis. But one of the key aspects that's driving the stock down today is largely because of some of the key commentary that they've made. They've gone on to say that they were planning to shift some of the roles which were on-site to offshore, and that was expected to come largely in geographies like India. But the pace of that is largely now expected to slow down. So the cost savings as well as margin expansion that was expected, that might not happen in the near term. And because of that aspect, that one key comment, Macquarie has come out and downgraded the stock to an underperformed rating from an outperformed rating earlier. So it's a double downgrade on this one. Target price is now cut to 350 rupees per share from roughly about 640 earlier. So it's a 43% cut in the target price for Birlasoft. They've largely said that the revenue drop in this particular quarter was largely broad-based across vertical. That's the first key negative. And the second one is that margin expansion from offshore, which we just spoke about, is also unlikely to happen in the near term as well. Because of that, the EBIT margin was also declining despite actually attrition falling in this particular quarter, and that can largely be anticipated because of the on-site increased share. The company has roughly 85% revenues coming from the Americas region, so definitely a key negative aspect from there. Macquarie has gone on to cut earnings per share by 30% in FY26 and 28% in FY27, and hence is bearish on the stock going forward.
The takeaway from the Macquarie note, what we are looking at is also that the margins are expected to remain under pressure. Sunny, want to understand your view on the stock. What's your view on Birlasoft?
Again, would like to avoid at a current juncture looking at an weaker set of internal. I think there are other better companies within the IT pack where we would like to bet our money on. So companies like Coforge, where we have seen a very robust deal win recently, and that is a company where we feel that can grow at a double-digit rate in the FY26. So Coforge is the one among the mid-sized pack where we are bullish on, and another company is First Source Limited. Again, one of the mid-sized, small-sized company which can deliver a double-digit earning growth in FY26.
Right, and now with May almost coming to an end, all eyes will be on the auto sales. Let's get in Puneet with more details on what the street is expecting the May figure to come in from the two-wheelers, three-wheelers and the four-wheeler companies.
Well, thank you for that. So it's expected to be a decent set of numbers from the automakers, and that's largely in the two-wheeler as well as in the tractor space. While weakness will persist in the passenger car as well as commercial vehicle space. So when you look at for the two-wheeler companies specifically, we've mentioned that both Eicher as well as TVS are going to be the big winners. Roughly about 23% growth expected for Eicher on a year-on-year basis, and this will be the 7th consecutive month where the company will cross that target of 80,000 units to be sold in one particular month. So that's going to be a positive. Apart from that, we've also seen TVS continue its momentum. The scooterization has been one of the key phenomena of the last few years specifically, but we've seen that difference come in both the highest share of scooter growth versus motorcycle, and that's one of the biggest beneficiaries is TVS with their brands like Jupiter, Ntorq as well as iQube now in the EV space. When you look at the PV side, it's a weak urban sentiments that driving down the growth for four-wheelers. We've seen Mahindra and Mahindra have the biggest growth of about 13%, and that will continue in this particular month as well. They've grown double-digit constantly for the last 18 months. Again, a big positive. Apart from that, Tata Motors and Hyundai have given higher discounts in this particular quarter, but despite that, the sales performance expected to be weak. Very quickly on commercial vehicles, we've seen fleet utilization rates improve, but that is yet not translating into vehicle sales because the utilization rate is also largely maintaining at the 80% level. It will have to go higher for that. So sales for VECV is expected to grow at a decent click, but the rest of the two players are expected to report modest growth. And finally, in terms of tractors as well, both players expected to show growth of roughly between 4 to 8%, with Mahindra continuing to outperform Escorts, at least in terms of growth, along with the industry. For tractors, the farm sentiment has been positive, largely because of the onset of monsoon as well. So overall, there'll be three key winners. Mahindra definitely won both on the tractors and the passenger car side. We'll also see TVS Motors being one of the key winners, and Eicher Motors both on the bikes as well as the commercial vehicle side for this month.
Right. Sunny, coming to you on specifically Bajaj Auto. In fact, after the numbers came in and the company held the conference call, there were nearly 8 downgrades that have come in from the brokerages. What is your view when it comes to Bajaj Auto numbers for Q4, and overall, what is your outlook when it comes to the auto sector and the May sales number?
Yeah, coming to overall auto sector, I think selective companies are still looking good, at least in terms of earnings growth. The case in point, Mahindra and Mahindra, where both the portfolio SUV as well as the farm equipment, that is tractor segment, is doing well. So I think Mahindra and Mahindra continue to remain our top pick as far as auto sector is concerned. Within two-wheeler pack, yes, Bajaj Auto has reported a kind of mixed bag set of number, wherein domestic business is struggling, whereas export continue to look good. And on the other hand, EV portfolio continue to do well for Bajaj Auto. However, the recent concern on import of magnets, which is one of the key components from China. So any overhang on that can impact the volume as far as Bajaj Auto is concerned. So within two-wheeler pack, we would like to play this story through auto ancillary name. So few names such as SGS Enterprises, which is a technology agnostic player. So more into a decorative labeling and also things. So SGS Enterprises is one stock which we like. Lumax Auto, which has recently reported very good set of number. Again, they cater to both two-wheeler as well as four-wheeler as a segment. So there we continue to remain bullish as far as this segment is concerned.
Okay, so auto ancillary is preferred in this space. Thank you, Sunny, for joining and sharing perspective on various of these counters. But shifting focus, Indigo sets its sights on expanding its fleet to 600 aircraft by 2030. The airline says it has overcome recent supply chain challenges, significantly reducing aircraft groundings. My colleague Sisha Sen caught up with the CEO of Indigo, Peter Elbers, at the AGM today. Listen into that conversation as well.
You know, IATA is having its annual AGM each and every year, and it's all taking place in different locations. And I guess a bit depending on the location, also priorities are being set. I think India is a great example of aviation as a force for good. So if you see what aviation brings to the country, how we connect all these communities, how we make sure that millions and millions of Indians are now having access to air travel and can fly. I mean, all the efforts of the government to invest in new airports and new infrastructure is being used by us. And with that, we're literally giving wings to the nation. So I have the IATA AGM here and showcasing what it does for the economy, for employment, for connectivity, and for really connecting people and aspirations. I think that's a great opportunity for India and Indigo.
Right. In terms of aircraft fleet, you did mention that you intend to add one aircraft every week to reach 600. But there are also supply chain disruptions that we have seen. Do you think the worst is over?
For Indigo, for sure, yes. We moved through a situation where in the second quarter of last year, we had a significant number of planes on the ground. But I would say thanks to the agility of Indigo, we have been able to manage that and to live up to our capacity guidance and still to grow significantly. Now, if you think about prior to COVID, we had 78 million customers, and today we're having 118 million. So we have been, despite these challenges, have been able to grow. What we see is that the planes which are now grounded because of these supply chain challenges basically are getting down and down and down. So I would say, yes, we've turned the corner, the worst is over. Still, we'd like to get them back in the air, but we see light at the end of the tunnel in terms of these planes on the ground.
Well, that was the management of Indigo. But that brings us to the end of this edition of Profit Top Trades from me, Samit, and everyone who puts this show together. But do stay tuned for India Market Close coming up next.
Do you
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, as well as a very special management. But first off, let's look at where markets are at today. We're down around 0.1% thereabouts. We're off the day's lows. That's the likely positive that one can look at in terms of how we've gone through today. The Bank Nifty doing relatively well, supported by the PSU Banking Index. So that pocket seems to be doing much better, and you're seeing a bit of an outperformance. Let's look at the intraday and thereafter quickly onto the heat map on the Nifty 50. There you go. Well off the day's lows. We clocked a low of 24,717. We are currently sitting around 80 odd points higher from that point. Let's look at the heat map. There you go. Eternal SBI, HDFC Bank, and that's why there's no surprise that the Bank Nifty is holding fort, because you've got 2 out of the 3 large heavyweights within that banking pack carrying the index in some fashion, or enabling a hold at least on the index. Nearly 3% on an Eternal, so that one's really standing out. When you're looking at the losers, a Bajaj Auto, a Hindalco, a Shriram Finance among the top 3, but you're also seeing some bit of pressure with regard to an IndusInd, the Tech Mahindra, where a couple of those stocks have done well in recent times, especially an IndusInd. Let's quickly look at how the sectors are shaping up as well. And on the sector heat map, you're seeing the PSU Banking Index really shine, 2.6% higher. The Bank Nifty is up 0.4% as a result. And I'd be curious to look at the constituents on the Bank Nifty as well, to kind of understand where that gain is coming from. There you go. Look at some of the numbers. PNB up 3%, Bob up nearly 3%, Canara Bank up 2.5%. So that's how it's really shaping up, and that's what's supporting the index. You have the heavyweight as well, up 1% or thereabouts, but some of the other private sector banks sitting in the red. Well, you have the Nifty Metal, which is down 1.3, the Nifty Auto seeing some pressure, and the Nifty IT Index 0.7. Now, before I toss it to Neeraj, let's quickly look at the advanced decline and let's understand how the breadth has shaped up for the day. That's how it is. We're really in some bit of pressure where the market breadth is concerned. It's reversed at the early point of the day, and thereafter we're sitting in the red where the breadth is concerned. Neeraj, how are broader markets faring therefore?
Part of the reason why the markets may have been off the lows of the day is that Europe isn't doing too badly for itself, and the US futures as well, from being down quite significantly, are now just about 40 points. Dow futures are down just about 40 points. So there's a bit of a recovery that we've seen in our markets, never mind the fact that the advanced decline ratio seems a bit skewed on the lower side. Not too many losers worth pointing out. There is one Mazgon dock wherein the margins collapsed and the stock is still lower in trade, about 4.5% or 6.5%, but a clutch of winners today in trade. So Lumax Auto 17.5, really doing well for itself. Technocraft on the back of the numbers the last couple of days has been doing okay. Its strength in Rallis up about 10%. After a while you're seeing this one do well for itself. IFL Capital and a few others, some of these gold loan companies on the result on the back of the postponement of the implementation of the norms pushed to Jan are doing well. So IFL Caps is one. I reckon the likes of Muthoot, etc. should be doing okay. 7% for Muthoot in trade and 3% for a Manappuram as well. Now skirting around that open offer price of 236. Last but not the least, Suzlon has held firm through the day today, still up about 9.5 or 10.5 in fact, and pretty much around the levels or the average levels that it has been throughout the trading day today. And absolute delight to have with us the management of Suzlon to talk about, well, the wonderful quarter that went by, but also what is likely to be the scenario in FY26 and 27. Mr. JP Chalsani, Chief Executive Officer, Suzlon Group, and Himanshu Modi, Chief Financial Officer of Suzlon Group with us. Gentlemen, both of you, thank you so much for taking the time out to be with us. Couldn't find too many faults with the quarter for sure. You could argue that maybe there were some one-off gains that aided the profit percentage, but stripped for that also, very good performance. Is this something that you penciled in when you started the quarter? And is this a sign of what will come about in FY26?
It's not we're not looking at it as a quarterly results, Neeraj. If you see that the last 24 months, the way in the direction which we have been working on in terms of cleaning up our balance sheet, making it a zero debt company, and then keep on adding as a cash today from a debt company to zero debt plus 2,000 crores sitting on these things with the adequate working capital, large order book, and organization built up. You were seeing us gradually ramping up our performance. Even if you see quarter 3 was good, quarter 4 is. So therefore, I think it is not a one-off type of results for quarter 4. I think the efforts what we have put in for the last 24 months is what we reached here. And we expect that this to continue to be in this direction for the next at least 4 quarters. We gave the guidance of 60%. For the first time, we gave a guidance that we will grow by 60% across the board and all. We're not looking at it as 60% as a number. It more shows that we are giving a guidance. Obviously shows that internally whatever work we have done, we now have that confidence that we'll continue to deliver. So I think it's more signaling towards that rather than we're going by 50%, 60%, 70%. We're willing to commit that we'll grow at 60%.
Yeah, and I'm sure these numbers continue for the foreseeable future. But, Himanshu, where I came in terms of the quarter as well was because there was a significant beat on the megawatts delivered as well. The street estimated a number lower than 500. You've delivered higher. You've given a guidance for FY26 as well. And the times are good because the targets are great, but there are times are also uncertain because of all that's happening around the world.
Sure.
And hence I said that it was a great beat for quarter 4. Is this something that we anticipate for FY26, a beat? Are you being conservative in promising and then hoping to over-deliver?
So, well, I'm not sure whether we're being conservative or not. I think we're definitely being realistic on what we're committing for FY26. If you look at Q4, it's the cyclical nature of the business. So the second half of the financial year historically always has about 2/3 of the business that we get, and Q4 within the second half is the highest. So certainly we've delivered the highest number. Doesn't mean that we will outbeat Q4 numbers in Q1, not really. It's of course will go sequentially. So, for example, we did 274 megawatts in deliveries in Q1 last financial year. So you'll need to use that as a benchmark when we use a Q1 performance. So whilst we've proven that our execution track record now is back and here to stay, but of course quarter on quarter cyclical will be there.
Sorry, just one follow-up though. I'm inclined to ask this. The numbers that our research team threw up for the month of April pointed to nearly a 1.1 or 1.2 gigawatts of execution. So are we to assume that while you might do, let's say on balance, you might do 60 quarter because it's a seasonal business, quarter one this time around could actually be very strong because the installations, at least the quarter has started off very healthily on the on the installations front.
Yeah. There are two different things. One is installations. Second one is supply of turbines.
Okay.
Okay, because that what you're seeing 1.55 gigawatts is supply of turbines.
Okay.
So installations are happening with respect to the turbines supplied a couple of quarters back, and that's what is happening today. So what you saw 1 gigawatt, but that is significant 1 gigawatt because we always had an issue that is the wind sector going to move ahead or it is facing huge amount of headwinds. Wind is problematic, whether it will come up or not, is what is changing today. If you look at overall execution from FY23 to FY24 to FY25, there has been about 28% growth. We did about 4.15 gigawatts. In the first month of this year, as you said, that we done 1 gigawatt, we are clear that this year as a country we will do 6 gigawatts plus as a country. And then this will keep going up, and I expect that we will definitely reach 8-9 gigawatts in the coming years. That would actually enable us to supply more turbines. Today the issue is not that why we were able to do only 1.55 gigawatts supply, whereas our capacity we can supply is 4.5 gigawatts. Okay? So today if someone says that okay, we are willing to offtake 3 gigawatts, we'll supply 3 gigawatts. So what was stopping was that the execution of projects was getting delayed while we have the contracts on hand, because the supplies happen with respect to the execution. But that because now the execution happening at faster speed, your supplies also will pick up the speed. That's how it will work. So that is another reason why we are quite confident that we'll have these growth rates. And in fact, on the commissioning side, it is not 60%. We will actually do 3x to 4x of what we had done last year.
All right. Harsh, the headline should be that as a country, Suzlon believes we'll do 6 gigawatts in FY26. Sure. Yeah.
Yeah, and that's a large amount of capacity coming on stream. We've seen power rates fall to zero, at least. That's the headline, at least at this point, with regard to power. Is that at all a concern with regard to how the pipeline will evolve, or is there extremely strong traction that you continue to expect regardless of that?
I need to get on to a lecturer mode for that in the power sector, okay? Because this is not so easy.
Happy to hear that lecture.
Not so easy. You're right. The exchange prices during the solar generating hours are touched zero, okay? Because during that period, the supply has exceeded the demand. Because in addition to that, we also had the monsoon water. And not just that, even if you look at the last year, in the second half of last year, October to March, 20% of the time, the supply actually exceeded the demand. So therefore, the grid frequency went up. It is not just the prices, even the grid changes. That's happening in the solar hours. But at the same time, when you see during the peak hours in the evenings, that's where the wind generates, okay? Evening 6 to 11, we are facing shortages. And there is expectation that in July and August, you will have a shortage of 25 to 30 gigawatt, probably. So therefore, while we have increased our supply during the solar hours, but overall, if you look at our demand-wise, there are shortfalls. That's the reason you need to look at megawatts separately, and you need to look at electrons separately. The energy-wise, we'll still continue to grow at 5.5 to 6% every year. The GDP is growing.
Correct.
So your power demand will grow. But then at what point of time you need that power would change. What combination you need to set up, it's a wind plus storage or wind or solar plus wind plus storage will change. But there is nothing called the demand is not there. Demand is there, demand will be there, it will continue to grow, but it will grow at different times. As far as the wind is concerned, more and more wind generation is required today.
So if anything, so you're making a case that there is going to be only increased demand because peak hours will still require wind to continue to power India at least. So you've done execution of around 1.55 gigawatts this year. What's the outlook like for next year? And how can we see this continue to grow maybe over the next 2 to 3 years? Mr. Modi, give us some perspective on what the outlook could be.
So as we said, we've done 1.55 gigawatts in deliveries this year.
Yes.
There's a difference between delivery and the turbines commission. As we've gone on record, we are expecting for FY26, we would do at least 60% growth over FY25, which pegs us at about 2.4 to 2.5 gigawatts of deliveries in FY26. And of course, we are also conscious that we need to not only maintain but possibly strengthen our margins. So we are very clear that the WTG division would maintain our margins of 23% on the contribution level, and at a consolidated level, we'll be at about 17% in operating profits for the corporation as a whole. So we continue to maintain that outlook going forward for FY26.
And so, a follow on, maybe another 2-year outlook or so, because the 60% is largely something I already have. So what do I work with for the next 2 years, sir?
Yeah, let's look at it. We will give you the sectoral growth rate. Obviously, the sector grows, we will grow. Okay, is what you need to see. Today are at 51 gigawatts. Got to reach 100 gigawatts by 2030. So there's a 49 gigawatts in 5 years. So an average of 8 to 9 gigawatts, 9 to 10 gigawatts is what we need to do in the country. Whether we will do 9 to 10 average, we will do 8 to 9 average, but we will do. We will touch 90 and 95 gigawatts. So sector needs to go, will grow. And as far as we are concerned, we have a 4.5 gigawatts of supply capacity. So there is excess capacity sitting there. And this 4.5 can deliver 5.5 provided there is a continuous offtake of turbines. So sector is going to grow. We have a capacity. We want to push more and more turbines at the maintaining our margins. So obviously we don't see any reason that why there should be a halt in the growth. Not up to just to 2030, even beyond that. So I think let's not put the number to what happens in FY27, FY28 onwards. But the reason why we gave the growth number this year, unless there is going to be growth in the subsequent years, we're not going to come and say flash in the pan 1 year we give guidance and say subsequently it remains flat. No way. But let's not put the number to it, but we'll continue to grow. I can promise you that.
But if I do the math, both of you, and if we do 6 in FY26, wherein the average for the next 5 years should be 9.5, then the pace of growth in the subsequent years actually picks up quite dramatically. It does, right?
Yeah. No, you're seeing that the compared to FY23 to FY24, FY24 to FY25 is 28%. 25 to 26, we're talking about 50% growth. When we say 4.15 to 6 gigawatts, obviously we are seeing the increase to this thing. The reason why we are saying that is that we did have an issues on execution in terms of the land and grid connectivity. While they continue to be there, we're getting resolved. More importantly, that push will come because the point what we talked about from the grid perspective, you got to add wind capacity today for the grid stability purpose. So therefore, everyone is going to push towards the wind capacity addition. So therefore, you're right, the growth rates are going to be significantly steeper from here to 2030.
Okay. Himanshu, one of the notes says that the margins have gathered steam as execution ramps up. You are guiding to 60, 60, 60. For FY26, I think the adjusted PAT is 60, but nevertheless, let's work with that. But therefore, you're saying that the margins will remain constant as they were at the exit rate of FY25? Or is there a further pickup there? Also, just throwing in one more question. The last time that I spoke to Mr. Chalsani at your office in Pune, I was told that you are being very selective about the order wins that you do. You get the O&M, then you go and bid, etc., so on and so forth. Yep. So is there room for this to actually expand further?
So firstly, to answer your last question, we do not sell any turbine without also signing an O&M contract.
Right.
So every turbine sale contract that we do comes with an O&M contract for a long period, at least about 10-year period. So far as the margins are concerned, Q4 we've ended the consolidated operating margins at about little over 18%, but for the full year we're at about 17%. So we are saying that for the full year FY26, we would still maintain the 17% operating margin. This is despite the WTG division having a larger growth rate in FY26. Now you must realize that the WTG division has a smaller margin as compared to the O&M business, which is a services business. So the more the WTG business keeps growing, our consolidated margins would come under pressure. But despite that, we're maintaining that we would do a 17% margin, operating margin at a console level, which means that the operating synergies or the economies of scale are now clearly coming into play at the company.
Okay.
And so you're generating significant cash flow now. You're at 2,000 crore in profit after tax, which is large. Where do you reinvest? how quickly and how much?
So again, the 2,000 crore in profit after tax this year that you see is after a direct tax asset that got created of about 640 crores. So the operating profit after tax essentially is 1,447 crores for the year. Clearly, the DTA has been created with the confidence that we have the profitability in FY26 as well. So having said that, we have close to about 2,000 crores of cash on the books already, from a debt-laden company to having positive free cash. Certainly with the expectations as we move forward in executing the order book over the next few quarters, we will be generating free cash. Some of it gets deployed into working capital, also manufacturing capex for our future growth requirements that we have, despite which we would have cash available with us. We've been very selective in pursuing M&A opportunities, like we did acquisition of Renom, which is a multi-brand O&M business. So that was 51% at 400 crores. You would see our balance sheet. There's liabilities that have been created on account of residual stake purchase of Renom. So we will be cautiously optimistic and aggressive in looking out for such inorganic growth opportunities. We'll be very selective and make sure that those are EPS accretive to ensure that we put the cash at the right use.
Okay. So FY26 has this different taxation rate, and some assumptions are that you might have additional unassessed losses which might play a shield for FY27 numbers. Anything on that?
So we have about assessed losses of close to 2,500 crores. And based on the assessed losses of 2,500 crores, we've created the DTA of about 640 crores in this quarter. Looking forward, a large part of these, the DTA would get charged off the P&L over FY26. Now, in addition to that, there is close to about 11,000 crores of unassessed losses. Now, as and when we travel through the journey and we have a fair opinion or a fair view outlook on those losses getting assessed or a fair certainty on those, there is a potential of either a DTA getting created or basis the potential of the profitability of the company, we may just utilize those losses. So very difficult for me to answer that on what happens to the residual 11,000 crores that still remains unassessed, but clearly the 2,500 crore that is assessed will now see an impact on the books.
Okay. I have one final question, Mr. Tulsani, and which is that the way the industry is shaping up, I'm guessing order booking or the inflows is not a problem. A lot of people currently within different sects of the energy transition sphere talk about how power evacuation is a challenge. Now, if that continues to remain a challenge, does that in any way impact either order inflows or execution for you as a firm?
No, I think the power evacuation has been an issue. The issue from the point of view of a shift in timelines, not because evacuation not being planned or executed. So there were some delays in terms of a timeline for the power grid to execute the transmission lines and substations, but that's now catching up. So I don't think that should be an issue. There will be, but not to the extent what we faced earlier. And also second, what's going to happen now is that with the dropping of transmission tariff from 0 to, the 25% charging, 50% charging and 75% charging next 3 years, things also will slowly start now moving to the state grid. Till now, everything was in central grid. So capacities also will start coming in state grid, where you don't have the constraint to that extent. So both will complement each other, while we'll continue to see some problems in terms of evacuation, but not to the extent what we've seen in the last couple of years. There would be significant improvement.
Okay. On that note, gentlemen, thank you so much for dropping by in our studios. It was worth it because just got to know so much, and congratulations on a great year.
Thank you.
And all the best for many more.
Thank you so much.
Thank you so much, sir.
That's the top deck of Suzlon talking about how the years ahead could be like. It's not just an FY26 or not just what they've done in FY25, but the decks that have been built for maybe multiple years ahead. Well, we'll get a fundamental view on Suzlon in a bit, but since Brijesh Ali is with us, Head of Technical and Derivative Research at RDBA Caps, joining us on the show. Brijesh, good having you. Thanks for joining in. I wonder can we start with the micro first, Brijesh? I wonder if you've had a chance to look at the charts of, let's say, a Suzlon or some of the other pockets in that wind power space, and how do they look?
Yeah, afternoon, Neeraj. So basically, the chart for the Suzlon is looking positive, and I do believe this continuation of the trend will be there. Maybe sooner or later, I think we can retest this level of 86, which was the previous high. So I think slow and steady, that should be the immediate upside. And gradually, if those levels are retested, then the further formation can be seen. But on an immediate basis, we can talk of 86 on the higher side.
Okay, so that's the quick take with regard to a Suzlon. Brijesh, quick check with regard to the index, how you see it. Sum it up for us. Yesterday's late move on expiry, followed by the move that we're seeing today. What's the sense like? What are the levels you're looking at with regard to the Nifty 50 first?
So the index is looking strong. So maybe today in the morning we have seen like this. There has been 70-80 points of a decline. Even at current level, the index is down by 65 points. But my understanding is that sooner or later we should be seeing 24,900. That is the higher side trigger. So once we stay above 24,900, we should be moving for 25,200, 25,500. So the bias is positive. On the way down, 24,700. So that is the level where a lot of put writers are extremely positive. They are having a good amount of positions at 24,700. So I don't think on an immediate basis this level will be broken down. And so slowly and steadily, this market will start moving higher. One of the main reasons why I'm saying this, because I'm quite extremely positive on the Bank Nifty. So Bank Nifty is something which tells me this can take out 56,000 level, can be taken out on the higher side. So if Bank Nifty happens to do that, then the Nifty will also follow it. And I think both the indices, at least for the next week, it looks positive on charts.
Rajesh, it's fascinating what you're saying. You're saying there's enough support on 24,700 that's unlikely to get breached. And you believe that from this point or in the next 50 odd points, we're going to start to see a breakout from here. Firstly, have I heard you right? What will the trigger be therefore? And also give us your take on the Bank Nifty therefore.
So one of the reasons why I said this, because I'm having a very close watch on the 24,800 strike price call option for the next expiry. So this is holding very strong, and even in the corrective, when the market was correcting, this strike price was not losing its strength. And even at the current price, this 24,800 strike price in the almost kind of a at the money kind of a call option, it is having a very strong strength, and there is a high probability that this will have some good upside in the next week. So we are positive. Even the structure on the smaller time frame, which we talk of the hourly charts and all that, that is very strongly placed. And we just really need a trigger, 24,800. Once we see cash levels crossing 24,800, I think sooner or later we'll also see 24,900 be taken out. So we are having a positive view on the Nifty.
Okay, so that's with regard to the Nifty. Brijesh, give us your picks as well, please.
So I think one sector which is booming is the property, this one. So Godrej property is something which I'm liking at this price. So this is more of a trading bet. So one has to take a long bet in Godrej property. The stop loss would be 2179 and we'll be waiting for 2416. That's the one trade. And one more, which is again with the momentum, is the AB Capital. So this looks quite strong at current level. The stop loss is 290. We are playing for 231. So both are the trading opportunities.
Okay. So that's with regard to the trading opportunities as well. I want to have your quick take with regard to the Nifty PSU Bank and whether there is something within that pocket that you like, Brijesh.
Yeah, I do like, because today when the Bank Nifty was performing, PSU Bank was something which was leading the trend. SBI Bank, Bank of Baroda and Union Bank. These are the three banks which are extremely positive. The structure in the weekly time frame is positive. So I think this momentum should continue. So SBI, Bank of Baroda and the Union Bank. This is what I'm liking at the current price.
Okay, got it. All right. So those are three stocks as well. Brijesh, I wonder what you make of the Nifty Auto Index, because there seems to be some bit of pressure which is getting built up there. What would you do if you are in a couple of auto names? What should you do at this point? Do you have a preference within that auto basket?
So I do agree there is a slight pressure in the auto, but then having said this, the two-wheeler space like Bajaj and Hero, both are extremely well placed from the short to medium term time frame. So I think pockets of strength will be there in the Bajaj and Hero. So in case even if this sector doesn't perform, I would like to take the opportunity in the Hero and Bajaj. I think that will do good in the coming sessions.
All right, Brijesh, thank you so much for joining us this afternoon, giving us all of those views. What we're going to do is we're going to slip into a very short break as well. And the next, on the other side, we're going to take all the chatter coming from dealing rooms in our segment Heard on the Street. And of course, we'll have stock-specific action that we'll talk about as well. Stay tuned.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I've done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
All right, back with India market close right here on NDTV Profit. A clutch of stocks are doing very well for themselves. Not strangely well actually. They've done well of late. Reliance Power is up 13.5%. Really strong show. Wockhardt has jumped 8.5% in trade today. So that stock too is doing well. And a lot of stocks would be flying around because you may have missed it, but they were covered by Somit. in our in our segment Heard on the Street, sometimes the announcement come a bit later, sometimes the buying happens with a bit of a delay, but people want to know what is it that Somit Sarkar is picking up from the dealing rooms. And Somit, we hear you're going on a holiday.
Well, yes, I am going on.
So then, for the next 2 weeks, will you send us the Heard on the Street from wherever you are?
We'll definitely try to do that.
Okay, what's there today?
But today on the list, firstly, it's BHL. Now, dealers are indicating that there is a potential buzz of an OFS announcement that could come in from the government side, and hence this is also one of the reasons why the PSC index, that is the Nifty PSC index, has been a bit weakish for the last couple of sessions. BHL is one name that is standing out, and dealers are saying that there could be an OFS announcement here. Now, Government of India owns close to 63.2% stake in this company. Second stock on the list is CDSL. Multiple dealing rooms have been suggesting their clients to buy this counter on charts. They're expecting a big upside on CDSL on the basis of technical charts that they have read. Third on the list is Inox Wind. Now, dealers say that large HNIs have started to trim their positions or sell their shares in this counter just ahead of the Q4 numbers. And the stock is up in trade today. Given the fact that one of its peer company, that is Suzlon, reported a strong set of numbers, and given the fact that they also operate in a similar line of business, the stock is up 2.5% in trade. And in the last couple of months, if you see, Inox Wind has gained nearly 39% so far. Industars is another stock that is on the list. Large HNIs have started to accumulate this counter at lower levels on anticipation of some positive corporate development that could be announced for Industars. And lastly, it's Strides Pharma and HCC. Now, dealers are indicating that influential investors are accumulating both these stocks in trade today, and hence that is one of the reasons why both the counters have perked up. In fact, HCC is up 7% in trade, while Strides Pharma is up nearly 3% in trade today.
So, Somit, have you told everyone where you're going on leave?
Yeah, most of them in the newsroom at least know about that.
Okay. Look at his happy smile. You're clearly looking forward to that break. Thank you for that, Somit. And it's been quite an action-packed day in the streets, on the street today. And I just want to pull up for a second one sector which has gotten unexpected bonanza, so to speak. And I'm sure this is something that we've been discussing through the day as well. I want to talk about gold loan financiers who have been waiting for the stringent RBI guidelines on gold loans to hit, but it turns out that the finance ministry is accepting them, a 1st Jan deadline to put them in place, but also gives a huge breather, saying that gold loans under 2 lakh rupees will be exempted from all of these stringent guidelines. Now, that's a bulk of the loans that you get. They're all small ticket and under the 2 lakh mark. In fact, let's get a view on this from our guest. Kunal Shah is with us this afternoon, Senior Technical and Derivative Analyst of Mirae Asset Share Khan. Kunal, would you touch on Muthoot right now after the kind of run-up we've seen? And we'll be speaking with Muthoot in just a bit as well.
Yeah, I think definitely if you look at Muthoot, it has always on the technical charts have taken a support under 200 DMA and has bounced back sharply, and exactly the same structure has played out in today's trading session as well. So I think here we can expect some good momentum to continue on the higher end. I can expect again new all-time high levels for Muthoot going forward. So 2,400 to 2,600 could be expected in Muthoot in the series of June.
So Muthoot is your favorite. What about some of the others, Manappuram and IIFL? Would you look at some of the other gold loan financiers as well?
See, I think Manappuram also looks quite attractive at the current levels. It had been consolidating since the past 1 month, and finally we are seeing volume-based buying in today's trading session. And you can expect this move to continue as well. The stock has taken strong support at the short-term moving averages, and we expect this momentum to continue towards 270, 280 on the higher end.
Okay, let's take a look at what's buzzing at this point as well. Markets are seeing, an inability to actually hold on to gains and deeply hit by IT stocks more than anything else. But it's not just that. Broader markets also not seeing any kind of reprieve that we're seeing. I just want to understand from you, Kunal, if you're seeing any opportunities to pick up in some of the losers today. And Amara Raja, for example, not great in terms of fundamentals because of the numbers, but is it something that you'd bet on the charts?
See, I think if you look at the chart structure, it had faced resistance around 1100. So there were multiple rejection at those levels. Again, in yesterday's trading session, we had witnessed some buying momentum, but definitely post result that has been fizzled out. So till the time it doesn't surpasses 1100, I would say avoid the stock. Above 1100, we will confirm the breakout on technical charts. That would lead the stock towards the mark of 1250.
Okay. Well, the other thing really is the kind of moves that some stocks are making in the last few minutes of trade as well. Or maybe LG Equipment is always up, but some spurts out there in select stocks. And that's to be watched out for. 7.5% though, for a better part of the day has been active. A lot of banking stocks also active today. It's after a long while that you're seeing the Nifty and the Nifty IT being relatively subdued to the Nifty Bank. And that is quite interesting, at least for the day today. Kunal, you would have given a trade on the bank Nifty, but is there a, let's say for example, a private bank on which there is a trade? Because it's now been a number of days that I haven't heard any technical or a derivative analyst come and talk about going long on a ICICI, HDFC or any other.
Yeah, I think, definitely. If you look at the last 1 week or so, Bank Nifty has been trading in a very narrow range, 55,000 and 256,000, so probably 1,000-point range. And within this range, we had mixed back from the private banks. So I think now is the time that Bank Nifty is ready to break out next week. So we expect this momentum to continue towards 56,600 and 57,000 eventually for the Bank Nifty index. So that is looking strong. From there, HDFC Bank would be a play. From the current levels, I think the entire consolidation at higher levels seems to be over. And now we expect the next leg of move to begin. So that is where positive bias continues to remain. 1940s where it is trading. I'm expecting short-term targets of 2040 to 2100 on the higher end. So HDFC Bank looks promising. The risk to reward ratio is favorable. One can keep a stop loss of 1900 on the downside.
Okay, fair call. I'll spare you the call on Ola because I'm guessing it's very difficult to give a long call on Ola, and I'm guessing you can't go short on Ola because it's not in the derivative space. So I'll leave that, Kunal. But you will want to hear, Kunal, what the view on Ola is with the kind of really the developments that have happened. It is navigating a very challenging year marked by some serious service issues, regulatory probes and multiple rounds of layoffs as well. So it's something, Kunal, that all of us want to know. But Kunal, if I can I just push you with the limited chart data that you might have? Is it possible for you to kind of give a gauge of where is it that Ola might be, let's say a month or a few weeks or a couple of months down the line?
Yeah, I think if you look at the quarterly charts, that is the long-term charts, what I'm looking at. So it has been facing rejections at the higher levels on the quarterly chart at the 20 DMA, and it has been continuously we get bounced towards those levels, but then again there is a rejection. So clear-cut a downtrend is visible on the quarterly charts, and when the long-term charts doesn't look very attractive, the stock will continue to slide down further as well. So if you look at the Ola Electric, I think any pullback that could be possible because a lot of things have been discounted by the market. That is why already the stock is down from 155 to 50 levels. So a lot of things have been discounted. So you might get some pullback, but I think that pullback would be an opportunity to exit. We can expect further lower levels for Ola Electric. Probably on the technical charts, the downside levels, what I see from the current levels is somewhere around 37 to 38.
Now, like I said, right, a challenging year, a lot of issues, despite ambitious expansion plans and new product launches, facing consumer complaints as well. Tushar joins in to talk about the detailed timeline which reveals the hurdles or the speed breakers Ola has encountered on its journey to attempt to dominate the EV market. Tushar.
Good afternoon, Neeraj. So essentially the service problems at Ola Electric that first surfaced in September have actually snowballed into an avalanche of losses, so to speak, by the end of the fiscal. But let's actually rewind a little bit to the month of August. Ola Electric in early August became India's first pure play EV maker to list in India. The listing was great. What followed was actually a launch event by the company on the 15th of August called Sankalp, where the company first unveiled its electric motorcycle called the Roadster X. Things were looking even better when later in that particular month, the company actually announced its first earnings as a listed company, where actually EBITDA loss reduced. Thereon, the going has been really tough. In September, we actually conducted a ground report in Mumbai as well as Bangalore, where we came to know that thousands of Ola electric scooters were languishing at dealerships as well as service centers for want of repairs, service. Quality became a major issue, was emerging as a major issue in our conversations with customers of the company. That actually ballooned into October when various regulatory authorities, including India's Consumer Rights Authority as well as India's markets regulator, asked why these complaints are coming in. About 1 lakh complaints were registered by this time. To top it off, it's worth mentioning here actually that there was a spat between Ola Electric's chairman and founder Bhavish Agrawal as well as a comedian on Twitter regarding the service issues. Then in the month of November, the first round of layoffs happened at Ola Electric, which was seen as a cost-cutting measure by the company. Almost 100 people were getting laid off every week on Friday for about 6 weeks since the listing had happened. So what people had told us about that time, that about 100 the laptops were getting deposited at the headquarters in Koramangala on a weekly basis. Following all these moves, actually, we moved to December. Ola Electric finally moves to fix these issues by expanding its network, the sales and service network, 5-fold to 4,000 outlets. But that actually became a sore point for its troubles going even further. In the month of January, when company launched its S1 range, or the third gen S1 range of electric scooters, that came along with, again, regulatory action around disclosures that the company was making. By February, the company had launched its electric motorcycle called the Roadster X, but that again came into question because the launch was delayed significantly. Around the same time, the company severed ties with its vendors to register vehicles. Now it started registering its vehicles on its own. That particular vendor, Rosmerta, went on to file 2 insolvency petitions against the company, but by the end of the month, that also was sorted. In March, things actually came to a head. The company actually started laying off even further. About 1,500 people were laid off. More complaints were coming on the trade certificates that were issued to Ola Electric stores. Most of these electric stores, about 3,000 of them, didn't have a mandatory document, that's the trade certificate, to operate a particular dealership. Along with it, there was a reported sales mismatch in the month of February. The company claimed 25,000 units of sales in February, but it registered only 8,300 or so. That brought it under the scrutiny of central government ministries like the Ministry of the Transport Ministry as well as the Heavy Industries Ministry, because they are involved in the dispatch of the PLI that is against the sales of these scooters, of these electric scooters. Additionally, the cell manufacturing plans were also pushed back. That also attracted a penalty from the government. Come April, these issues started getting solved. But we also saw the Roadster launch getting delayed even further into May. In May, the company eventually launched the Roadster X motorcycle, and now we are actually at the company's earnings that were disclosed yesterday. What goes on from here now? Bhavish Agrawal accepted the regulatory lapses at the company. It accepted that trade certificates were not issued, that there was a sales mismatch, and now it has delayed its EBITDA break-even timeline to sometime later in FY26 from Q1 FY26 earlier. Cell production has been pushed back until and unless the auto business gets healthy. The company is focusing on the auto business first, and then we'll move on to the cell business. But even before we look into the future, it's important that we break down the earnings. That is the major problem that the company has faced in Q4. The doubling of the losses on absolute as well as operational basis. Actually, my colleague Puneet is now joining us to explain those earnings further.
Well, thank you for that. So if we can just contextualize some in numbers as well for this. We've spoken about the story now. In terms of revenue as well, over the last 3 to 4 quarters, we've seen that consistent fall. And if you can show the first graph, from 1600 crores odd, it's consistently fallen to about Q4 number of 649. And that's come at a cost as well as because of lower sales in this particular time. So when you look at the sales of the 4 quarters, from roughly 1,25,000 vehicles sold in the first quarter. If you can move on to the next graphic, it's consistently fallen to just about 51,000 vehicles. That's averaging just out at 17,000 vehicles per month, from a high of about 30,000 that it used to do in a normal average for FY25. Lower revenue and lower sales should ideally work in lower losses, but that's not what happened. In terms of EBITDA, the actual losses have actually inched up considerably from roughly negative 9% margins to all the way 100%. So in this particular quarter, the expenses are actually at 770 crores and the revenues are just 600 crores, and that's showing the minus 100% in terms of EBITDA margins for this particular quarter. Finally, just 5 key negatives that I want to highlight and just contextualize that for this particular quarter as well. It's announced warranty cost of 250 crores in quarter 4. This is the 3rd consecutive quarter where the warranty costs have inched up, and essentially that is that if you purchase a scooter, if it's still in warranty, then that cost is what the company has borne, but that has increased dramatically. The company claims this is the last time for Gen 1 and Gen 2 models, but that will be something to watch out for. The second one is delaying the use of its own battery, as my colleague Tushar highlighted. That could have boosted margins, but now that has been delayed as well from the previous committed timeline of Q1 of FY26. EV bike deliveries again has been delayed. They've mentioned that while deliveries have started last week, the vehicle is actually not in store for you to go and test drive as well. Delaying of the S1Z as well as the Gig Plus launch, again a key negative. This was expected to price just under 50,000 and open up the mass market scooters portfolio. We'll have to wait a committed timeline for that. And lastly, what they mentioned, EBITDA profitability, that's again delayed. Q1 for FY26 is what they had committed. They're now saying in terms of guidance, if we can pull up the next graphic very quickly, 800 to 850 crores in revenue for next quarter of FY26. Margins will be minus 10%, but it will still be below the EBITDA break-even of 75,000. So they'll still report negative 10% EBITDA margins, but largely it's been for the company, the IPO frenzy is now died down. They will also have to recalibrate and take note of the reality and recharge themselves going forward.
I think IPO frenzy is died down is an understatement, because like we were discussing this morning, guys, Ola was at 75 rupees was the issue price, went as high as 115 rupees, is about 50 odd right now, and Kotak says could go low as 30 bucks.
Yes, but yeah, for select companies, it's certainly been very, very choppy. At the same time, I think there are some good storied listings which are doing well. I mean, Wari, for example, or some others. So that's heartening to see, because you don't want to repeat of an Ola and a Byju's. To be honest, Byju's not listed per se.
Yeah.
So therefore, there's so much.
But from the high of 158, this is a significant correction.
You know, one part
There's
of this
plenty of
one part
pain.
of this story, if you look at the disclosures in Ola very carefully, they've actually gone and told their auditors, and this is a standard practice that auditors will raise the concern. Are you still a going concern if your losses have widened? So Ola has actually given 3 or 4 reasons why they will still be a going concern. Obviously, things can maybe turn around. Hopefully it does, but this is a bad one. All right, let's talk about Yatra. Good set of numbers. Revenue up 2 times in Q4 FY25. These are consolidated at 219 crores. EBITDA is up from 3.5 crores to 17 crores. And you are seeing margins at 3.3% to 7.8%. Net profit has gone from 5.5 crores to 15 crores. So strong quarter. On the face of it, adjusted EBITDA though surged 62% as well. Some ESOP costs have also come into the picture. Let me go across to Dhruv Shringi, co-founder and CEO of Yatra Online. Interesting to speak about your numbers, Dhruv, as well as the trends that you're seeing in this industry. But let's first start with your take on what FY25 has been like. The numbers on the face of it look pretty good. What has been the underlying growth factor?
Hi, good afternoon to you and your viewers. So, We've posted a very strong quarter. This is actually the most profitable quarter for us as a company since our inception. So in our 20-year history, this is actually the most profitable quarter. So from an underlying performance point of view, there is very strong momentum behind our corporate travel business. We are one of the largest players in the corporate travel industry in India. Both our corporate travel and our MICE business are doing extremely well at this point of time. We have a technology-based solution for corporate travel management, and that technology-based solution continues to gain more and more momentum in the Indian market. What we've seen actually post-COVID is that, as people have come out or gotten used to hybrid working, the need for adoption of technology for managing business processes has gone up exponentially. And we are definitely riding that wave, being the leading player in India for a technology-based solution for business travel management.
Okay, so growth you're saying has come by MICE, and what about the acquisition that you've done of Globe Travels? Can you give us a breakup in revenue, because you mentioned 2 or 3 drivers? Is there a segmental breakup you can give us?
So if I look at, from an overall perspective, at the gross booking level, we've got about 65% of our gross bookings that come from the B2B segment, which is basically the corporate travel part of it. And about 35% of our gross bookings come from the consumer business, which is the B2C part under the Yatra.com brand. In terms of the acquisition on an annualized basis adds just about 10% to our gross bookings. So a vast majority of the growth that you see is coming organically.
Interesting. It's organic growth. You're also, and you've talked about this before as well, you've reiterated that you want to scale up high margin verticals. What exactly are those high margin verticals?
So the high margin verticals for us basically are corporate travel, and within corporate travel, then hotels and packages. So basic hotel for corporate travelers, and then MICE. These are the segments which have much higher operating margins compared to the B2C part of the business, which is more, customer inducement, couponing, promotion led. So that's what we've been doing over the last year. We've had significant rebalancing of our business. We've in fact given up certain low value margin and low margin business on the B2C side in favor of the more profitable B2B business.
Right, Dhruv, this is Harsh joining in. So therefore, what's the outlook like? Give us a sense, FY26, and what's the thought for the next 3 years? What can one look for if one is an investor?
Hi, Harsh.
Hi.
So in terms of the outlook for the current fiscal year, FY26, the guidance that we've given is we've given a guidance of 20% growth in gross margin and about 30% growth in terms of EBITDA. So we continue to see strong underlying momentum. Our sense at least is that, if I look at this kind of compounding, we would expect our EBITDA to more than double over the course of the next 3 years. So there's strong underlying momentum. We have a large order book that we are carrying. We had almost in the year 150 new customers that we signed up worth about 750 odd crores. So that momentum carries forward as those customers get implemented in the current year.
Helps you stand out, Dhruv. It's an extremely competitive environment.
So our standout is basically our technology solution. It's a completely, comprehensive technology solution from the time of booking, so which is basically even the pre-booking approval process mechanism, etc., to the entire booking process, and then post-booking integrated within an expense management solution. So for an organization, this is a completely end-to-end and seamless solution that we offer. This obviously then gets, further sweetened by the volume that we bring and the volume-led discounts that we bring on air and hotels. So it's a technology solution backed by a great quality supply.
I'm just trying to understand, Dhruv, if you look at some of your operational metrics and then you look at your numbers, and I know you've been focusing on MICE, and you said your acquisition is contributing about 10% to revenue, but gross bookings have come down a tad, total transactions as well have come down, air passengers have come down. Why have operational metrics been a little shaky, and do you see that improving?
So that is on account of the underlying shift in the B2C business. As I mentioned, what we've done is given up certain amount of low value B2C transactions. So typically you will see a scenario where a B2C customer will book 30 days in advance, whereas a corporate traveler books 3 days in advance. The average fare on the corporate platform is about 1.5 times higher than the average fare on the B2C side. And if you look at, the current dynamics in the Indian aviation industry, there is a supply crunch, right? So suppliers would prefer a partner who can bring them high value corporate business versus just B2C business, which is typically the lower end of the market. So our endeavor has been to maybe give up a little bit of volume on the B2C side, but replace that with higher value corporate business. And that's what's driving the underlying improvement in the business.
Okay, so then let me just, I might be reiterating the question, but just to get it absolutely clear. So you may continue to see a downward trend in operational metrics, but profitability will be moving, northwards, and you continue to see, yeah? And margins will continue to be in the range we're currently seeing, which is close to about 8%.
So what will happen is, firstly, we will see the operating metrics stabilize because this was more like a one-time thing that we did in terms of rebalancing our business mix. Now that one-time effect has gone, we will see gradual growth happening on the operating metrics as well, starting from the second quarter. It would have happened in the first quarter itself had there not been the disruption of about 10-12 days on account of the war-like situation. So we will see operating metrics also continue to improve in the current year. Profit margins will improve even further because as the mix moves more and more towards the corporate part of the business, which has higher operating margins, the weighted average margins will also continue to improve like they've done in the last 4 quarters.
Okay, so you spoke about the turbulence that we saw with the regional conflict, then cancellations to Turkey, etc. Do you think you'll see some of that impact in Q1, and has this settled?
So this thankfully was more of a 10 to 12 day kind of effect only.
Okay.
The markets have bounced back very strongly post that, so that's a very good sign.
Still booking to Turkey? Have those bookings resumed or not? What are you saying?
Not really.
Not really. Okay, that's interesting. That's interesting to see.
That's a more broader agenda, right, which is there. So that I think will remain muted for the time being.
Yeah, that is good.
That's great to see.
That's great to see. That is. Thank you so much, Dhruv, for speaking with us. Yeah, in the sense that, it's not one of those very minimal things that, okay, chalo, this is in trend right now. This is something that people are saying, let's fix it first. And that's interesting to see. All right, I'm told George Alexander Muthoot is with us. He's Managing Director of Muthoot Finance. You are the VIP stock of the day, sir. Is Mr. Muthoot there? Can you hear me?
Yes, I can hear you.
So this bonanza which came this morning from the finance ministry, was this being expected? Explain to us what it means, because I think we spoke last after the RBI directives came in, or the guidelines came in more correctly, on gold loans, and it was not clear at that point what the impact would be. Today has been a relief?
Yes, I think a balanced recommendation has gone from the Department of Financial Services, Ministry of Finance, that they have put a balanced recommendation. I think the draft regulation which is there had some, gaps and some points which were not actually conducive for customers. Actually, customers would find it difficult if these were implemented. So the draft guidelines which they had given, the Ministry of Finance has given their suggestions. They are actually very good suggestions that small borrowers, especially borrowers below 2 lakhs, shouldn't be inconvenienced. So I think that is a very good suggestion, and especially to probably have a relook at this is what they have said. So we definitely welcome it. And as an association of gold loan companies and being the largest player in the industry, we also had given our representative it's only a few suggestions which we had given. I think most of that is now taken up by the Ministry of Finance itself.
I just one follow-up there. So 1st of January 2026 is what the Ministry of Finance has said, and Department of Financial Services have said as the deadline of implementation for that. Has this been moved forward? Was there an earlier deadline in place? Because can you give us some clarity on that?
Yeah, actually, although the Reserve Bank had given a draft guideline, they asked for comments. The last date for submitting the comments was 12th of this month. Okay. And many people, including the association, had submitted its comments. And they had not given a date by which they will come up with the final regulation. So that is still there. There is no clarity. There is no date given on that.
Mr. Muthoot, you suggest, or you did indicate that you also had made a bunch of suggestions, some of which have been taken up. Could you tell us what those suggestions were and the rationale behind that?
I think we have not made any bunch of suggestions because the bulk of the draft regulation which came were about the processes, how the process should be done, how the gold should be checked, how the purity to be checked, how to run it. Those are all existing things which we also do. I think the Reserve Bank wanted to put it in one comprehensive guideline. Along with that, they had suggested some change in the loan to value. That was what was actually irking us. That's all. Only the loan to value part.
Okay, and sir, this 2 lakh rupees, around 35% of your loans, or rather 35% of your loans are 3 lakh and above. So what would that number be in terms of 2 lakh and above? Because the impact will still come there. And how large do you expect that impact to be?
No, I think it is not that more than 2 lakhs or less than 2 lakhs. It is the thought behind the Ministry of Finance that customers shouldn't be inconvenienced. It's just the suggestions they have given about 2 lakhs, but 2 lakh customers below 2 lakhs are the most affected. So it's not about 2 lakhs, etc. But asking your question, I think about 70% plus of our customers are below 2 lakhs.
Okay, so 70% of the customers being below 2 lakhs. What changes for you? Does anything change for you in terms of strategy? Will you target that cohort of customers?
No, sir, it doesn't change our because it is as work as usual only. Because the draft guidelines came, it was not implemented as yet. Now it is status quo, and I think the present regulations are there. It is definitely good and should be continued. And when the final regulation comes, Reserve Bank will ask us again for a consultation, etc. If there is anything to be considered at that time, we'll do. But as it stands today, it is quite fine.
Okay, so just trying to understand, Mr. Muthoot, that obviously, as we've reported, a bulk of your loans are under the 3 lakh rupee ticket size. For some companies in your space, the strategy has been to focus on higher value loans because of margins. Will you, as strategy, now start focusing more on smaller ticket loans? Will you double down on that?
Oh, I think Muthoot, as a company, we are again a grassroots company. Okay. And today, every day, more than 1 lakh customers take gold loan from us. That's a big number of customers who take a gold loan from us every day. So most of the customers are small ticket customers who come to us, and that is why we have all these branches also. So people with less branches, etc., few branches, they may want the big tickets, but I think for us, we are a mass-based company, and large base of customers is always our forte.
How many of your loans, or what quantum of your loans is under 2 lakh rupees? Do you have that cut?
I don't know. I think about more than 70% of our loans are below 2 lakhs.
More than 70% of your loans are below 2 lakh rupees?
Yeah. I think so. Not an exact number, I know.
Okay.
Because that has never been any significance to us. Whether 2 lakhs or 1 lakh or 50,000 or 3 lakhs.
No, 2 lakhs today, 2 lakhs today, because that's the figure that has come from DFS. That's why we are asking about that 2 lakh cutoff.
Yeah. Our average loan to value today, average ticket size is 88,000 rupees.
So average ticket size is 88,000. Just wondering, since we have you here, to get a feel of what demand is looking like. Gold prices have also come off a bit recently, not on the kind of highs they were going, but is demand still robust for gold loans?
Yeah, I think the price today is quite high. And to give you some statistics, if the gold which you have today and the loans which you have given, if you look at the loan to value, it is only 58%. That means people have borrowed only 58% of their value today. Not that everybody has taken 75%, that it is only 58%. So there is a lot of people don't borrow unnecessarily because they actually want to take it back. If they want 100%, they would have sold it and got all the 100%. But they would like to take it back. That is why they are pledging it at 50, 60, or 70 or 75%. So they pledge it. Instead of losing the gold, they pledge it, they take it back, so they don't have to sell and destroy the ornaments. This is a simple business. I think it should continue to be a simple business.
Okay, thank you so much, Mr. Muthoot, for speaking with us. George Alexander Muthoot. I think this is the stock of the day as well. At least one contender. I know we've taken Ola Electric, but definitely one contender is Muthoot for this kind of a windfall. Manappuram as well. But okay, let's look at what Manappuram is doing while we're at it. But
and there is also Suzlon, sorry, just sounding off, in terms of stocks which are newsmakers and doing so well for themselves.
No, Niraj, we will not forget Suzlon. Definitely Suzlon is
beautiful
there.
Conversation with us.
Yeah, fantastic. So Suzlon is there, of course, but of course Muthoot has also been shining a fair bit. An interesting perspective that they've given.
Let's put it this way, Tamanna.
Big, beautiful.
The stock which has got a golden spoon today, or a golden move today, is Muthoot. The stock with wind beneath its sails is Suzlon.
Correct.
How's
Big,
that?
beautiful wind beneath its sails.
That's Numax Auto.
I think we're turning poetic as we're reaching the close of markets.
For the week as well.
For the weekend. Harsh is preparing for the weekend as well. No, just the point I was making is that 70% of the loans under 2 lakh was an interesting figure which came out of it. Sandeep Agarwal joining in on the conversation this Friday evening. Fund manager and co-founder at Sovilo Investment Managers. Sandeep, are you liking the gold loan companies right now?
Yeah, hi, good afternoon, and thanks for having me on the show. So yes, gold loan is one business which is very good, and we have been always liking the business, primarily because the safety and security in that lending is much higher than the other means of lending. And also, I think that, the ticket size is very attractive, and people, as the management just mentioned, I was hearing to the interaction, people actually give gold, they want to take it back. So that is the most important thing. So they use the money for some purpose, personal or business. And once that purpose is fulfilled, they repay that money. So, I think it is a very, very simple business. And I have seen that simple businesses do generate good returns. No much complexity involved.
So what's your favorite in this space, Sandeep?
So, we run a PMS, so stock-specific comments are very difficult, but I think we like the whole space. In fact, we play the whole gold asset class through the financiers, the lenders, the jewelry makers. So we love this asset class gold very, very much, and we play it across the chain, right from jewelry to the QSR side to this lender side, all the aspects we play.
Kunal, a word on these names, some of the gold financiers, maybe a Muthoot, Manappuram. And Kunal, if you can couple it up also with your stock recommendations for this afternoon. We haven't had a chance to take your ideas.
Yeah, so I think at the start of the show, we spoke about Muthoot and Manappuram, both the stocks. So I think the view continues to remain bullish on both the stocks. Coming to the stock specific idea, today has been the day where the market has been lackluster. The hero of the day could be the PSU banks. And I think here the momentum has started to build up. So here would be my first pick, would be the big boy SBI. On the technical charts, the stock has given us a fresh breakout with volumes. The volumes have been above the average, what we have seen in the last 10 days. So clear, but there is volume-based buying, plus the stock has given a symmetrical triangle breakout on the technical charts. So we believe that this momentum will continue for the next 3 to 4 trading sessions. And that's why it's a buy at the current levels, trading around 812. One can keep a stop loss of 790 on the downside and look for targets of 830 to 850 on the higher end for SBI. So that was the first stock which was looking great on the buy side. The second stock where I can see the momentum getting built up, and I think this will again keep on moving on the higher end, and that is Hudco. Again, the housing finance companies are also looking good to me, and Hudco has given us a fresh breakout in today's trading session. 241 is where the stock is currently trading. The momentum is starting to build up, and we expect this to continue on the higher end. So 254 to 260 is what I'm expecting on the stock in the very short term. One can keep a stop loss of 230 on the downside.
Hudco, SBI on his radar. I wonder if Landmark Cars is our bulls versus bear candidate today. And Puneet is joining us for more on that. Under pressure after a massive drop in profits in Q4. But Puneet has found a bull's case as well to go with the bear's case?
Well, definitely, and I had to look at the yearly performance as well, because it's been a very tough year for the company. caught between a rock and a hard place. And if you can look at the first bull and bear case, that's definitely trying to signify that, because while they've added brands like MG, M&M as well as Kia to their forte in this particular year very meaningfully, they were added in the almost the last year, I think about 6 quarters ago, but the scale up of new showrooms have happened in this year. They've of course come at a very high cost. In terms of FY25, the revenue growth was 22%, but the expenses have gone up actually by 24%, and that's largely because of increase in finance cost, high employment costs as well as other expenses. And hence the EBITDA margins have fallen for the full year as well, which already are in a very tight band of roughly between 4 to 5%. And again, it's fallen again in this particular year, a second consecutive year of margin fall. When you look at the second bull and bear case, they are one of the premium sellers of cars from brands like Mercedes-Benz. The Mercedes accounts for 40% of the company's sales as well as revenues for this year. What is interesting is what the company mentioned as one of the key reasons of why it slowed down in quarter 4. They went on to say that the sale of Mercedes-Benz in quarter 4 on a YOY basis was lower than expected due to capital market volatility. And that's essentially something that they've said in their official press release to take note of. The third one's of course the showrooms part. They've added 23 showrooms that will aid growth in the next year as well. But the finance cost has increased meaningfully by 40% for FY25, and that's largely because the company has to maintain inventory at new showrooms. So that is expected to come down next year over the second half, but definitely being impacted there. And finally, in terms of valuation, and here is where it gets interesting, it's trading in line for FY26, in line with the car makers actually. It's slightly more expensive than Mahindra and Mahindra for FY26 on a price to earning basis. But the key aspect is that the margins for the company are roughly 1/3 of the said automakers. So for a person taking a punt into this stock, what moat could it be? That's of course something to ponder about, because the OEMs which the company sells for the cars are roughly higher in terms of valuations in line, but margins almost 3x of something like a landmark car. So that's the key question for now. FY27 seems promising as of now, but still some time away. But for FY26, that's the bull as well as bear case for landmark cars.
So valuations definitely gives it some kind of a reprieve. Sandeep, I don't know if you can comment on Landmark. Did you see the results?
So, I will not comment on Landmark, but let me put it this way that, we love this space of after sales service. These businesses are actually, while they sell cars, but in selling cars, they may, break even, or they may be able, it may be only enough to take care of their cost. The whole cream is in the after sales services, because I'm sure that we all own cars, and if you see the kind of servicing charge which they put on when it goes for servicing, particularly in Mercedes, there is no free servicing. So once your car goes for servicing, it is straight away 99,000 rupees. I think out of which only maximum 10 to 15% will be the COGS cost, and balance is gross margin. So once your expansion of the workshops is over, broadly over, then that operating leverage plays out in a big way. So we are very big fan of this kind of businesses. These are structural stories. India's per capita income is going to keep on going up, and as it keeps on going up, more and more cars will have to go for sales after sales services, and more cars will get sold. So we like this kind of businesses. Very hard to comment on particular case of Landmark, but we love this kind of businesses.
In this business then, I mean, you're not talking about Landmark, but then they are, a key candidate in this space, isn't it?
Yeah, so there are not many, but you can always play through proxies as well.
Okay. Kunal, are you looking at Landmark? What do you see on the charts?
On the charts, already the stock has witnessed a sharp correction from the high levels. Now we have witnessed accumulation at the lower levels. Still not a buy candidate for me. I'll wait for dips towards 420, 400. That would be an ideal opportunity to go on the long side.
By the way, a stock that is doing really well is LIC. LIC is up 20% in the last 1 month. May not be having a rara move today, but it's trending and it's trading at the high point of the day. So bear that in mind. I wonder if the other insurance plays, which is HDFC Life or ICICI Lombard General Insurance, are also doing well or not. Just pull those stocks up for a moment. Because some of those, no, not really. So it's only an LIC specific move. 20% in the last 1 month, up today as well. Remember, the chairman in an interview with NDTV Profit mentioned that they expect that the VNB margins will move from 17.5 to about 20 odd percent. So watch out for that one. And viewers, watch out for Lumax Auto. I'm changing tracks now because that's the big buzzer of trade today. Stock has staged a very sharp up on the back of Q4 numbers and strong guidance at that. Let's get in Puneet to give us some details about this. Puneet, what is the guidance like?
Well, thank you for that. So definitely very, very strong numbers for Q4. Revenue is up 49%, EBITDA is up 50%, and that's taken the margins to 14.6% in this particular quarter, while the profits have also inched up by 54%, again taking away. Now, the company largely operates as an auto ancillary company in the lighting space, and it has supplied to players like Mahindra & Mahindra, which is one of its key customers, accounting for 27% of the revenues. And over the last 1 year, Mahindra is the only car maker which has shown double-digit growth in terms of sales, both for units as well as for revenue. So essentially, Lumax is one of the biggest beneficiaries of that, and now with the new electric vehicle launches, Lumax is the only supplier to M&M. With that, the company has actually come out, and a lot of the stock reaction today is coming from the guidance. They've given an FY31 target of roughly about 19,500 crores in terms of revenue. Revenue for FY25 was 3,600. So taking a huge growth. This will of course include 11,000 crores from acquisitions, and that is going to be a very interesting strategy, while the organic growth will be roughly about 8,500 odd crores. They've also mentioned that EBITDA margins for the company will be 20% versus the current 14 to 15% range that they have, and that will increase the profits as well meaningfully. They've also mentioned that the share of future as well as the EV mobility going forward will increase to 20% from 4%. So very, very strong guidance for this company. Market cap between 3 and 4,000 crores, but the growth targets are very, very strong for Lumax Auto.
You've had a busy day, Puneet, and I think a busy start to next week because auto numbers will be out, auto sales data, which we will start seeing from tomorrow, and we'll of course discuss that trend on Monday. What is being expected?
Well, it'll be three key players to watch out for again in this particular month, similar to the last month. At least and two of them are from the two-wheeler space. We're expecting TVS and Eicher Motors to have really strong growth again in this particular month. We've seen around a 23% growth for Eicher Motors, while there will be a double-digit growth that's expected for TVS as well in this particular quarter. What's interesting is that from the in terms of the two-wheelers, we are seeing the month-on-month recovery of Hero is what I wanted to mark, a 71% growth, because in the last month, which is April, the company just had a very big fall. They also had some inventory correction, and that is expected to reverse in this particular month. So TVS and Eicher is something to watch out for. In terms of four-wheeler space, Mahindra again continuing. We spoke about Lumax being one of the key beneficiaries, and Mahindra has continued its double-digit growth, expected to report roughly 13% growth in terms of volumes, while the rest are largely expected to have a somber month of May. And finally, in terms of commercial vehicles and tractors in CV space, we are expecting VECV, which is the commercial vehicle arm of Eicher Motors, to continue its growth. E-vehicle generation has gone up, and that's a positive for new sales, but largely we've seen financing being slightly more tighter in this environment, and hence we don't expect that kind of very high growth. But VECV is coming off a decent base and should be one of the beneficiaries. And finally, in tractors again, the early onset of monsoon is a very, very big positive for tractor makers. Almost 4 to 8% growth for both listed players, but Mahindra will have the higher growth owing to its higher share of sales in the western markets, especially Maharashtra, Karnataka being one of the key markets. So three key winners will definitely be Mahindra, Eicher as well as TVS Motor.
Out for Mahindra, Eicher and TVS Motors on Monday. Thank you for that, Puneet. All right, let's just go through some of the MSCI rebalancing, which is for May, which is taking effect today actually. So pull up Coromandel International and Nykaa, that's FSN e-commerce. You'll see some impact there because they will be added to the global standard index. In the MSCI India Domestic Index, Coromandel International and GMR Airports was added, while Sona BLW Precision Forging was excluded. Additionally, Coromandel and FSN were included in the MSCI India Mid Cap Index. Let's see what's happening with FSN and some of those impact over there. Eternal also is probably seeing some impact of MSCI rebalancing today. So those are some of the things that you can mark. Kunal Shah joining us. Kunal, what are the BTST ideas you have this Friday afternoon?
Yeah, I think for the BTST, again, I'll go with PSU banks. They're looking very strong on the chart perspective. So here, the buy side idea would be central bank press consolidation breakout, what we have seen in the stock, and we expect this momentum to continue in the coming week. So central bank is a buy. One can keep a stop loss of 38 on the downside and look for targets of 40 to 42 on the higher end.
Some other stocks are Godrej Agro, Bajaj Electricals, ICRA. We spoke about some of these and ICRA had come out with its numbers in addition to Eternal, which are doing very well. Force Motors is at 12,660. The last 2 months maybe, Force Motors has doubled. Can you just pull up the this year chart if we can and just show the kind of move that Force Motors has had, particularly in the last 2 months. Look at that chart. 3 months, okay. It's been a stellar up move for Force Motors. I don't know if Sandeep has a view here, but let me first take a view from Kunal. Kunal, if you were long here, would you take money off the table, Force Motors?
Yeah, I think I'll keep on continuing trailing my stop losses over here if I'm long. So for me now, 11,300 is a very strong support. So till the time that is not taken out, I'll continue to hold.
Okay. Sandeep, I don't know if you look at this one individually, right? And if it's a part of your portfolio, it's secondary, but is a company which was a motor supplier now doing something in vehicles at a much cheaper rate as well, and a near meteoric rise in the last 3 odd months, whereas the rest of the auto pack hasn't. So Force Motors or a view on the auto pack, if you will, two-wheelers, for example. We've had some accidents today there.
Yeah, so on the auto pack, we generally like the traditional players. We are not very gung-ho on the new players and the new technology because we believe that the whole the logistics chain, the services chain, and everything which actually makes money, that is not in place, and it will take some more time to reach there. Until that time, these companies will have challenge in generating positive cash flows. But the traditional players are much better positioned. They have a very strong balance sheet, and we are reasonably confident that they will be always better placed because of their balance sheet strength and the R&D to make more profitable business from the new technology as well. While I won't comment on Force Motor specifically, but let me put it this way, that I have been recently to many jungle safaris, and I have been seeing that the traditional gypsies which were used in safaris are now being replaced very aggressively by Force Motors. So that is some anecdotal which I can share with you. Obviously, as you showed the chart on the screen, the stock has done phenomenally well. And this company actually last 7, 8, 10 years, if you see, they do extremely well. The stock does extremely well in very small span of time. And then again, it undergoes time correction. So it is a very, very strong structural kind of story which needs a lot of patience for investors.
Just another stock that we should look at very quickly, BSE. Look at what's happening to BSE this afternoon, and it has been strong actually most of the day, but at 210 right now. Kunal, any views on a BSE?
Yeah, I think here the momentum is continue to grow stronger and stronger. The high levels, what I see is 2,900 for the stock in the very short term. So if anybody is holding long from the lower levels, continue to hold. Keep a trailing stop loss of 2,400 on the downside.
I don't know if it's a proxy play for the NSE pre-IPO buzz or what the view there is, Sandeep Agarwal. We reported a few days ago about the nearly 50% jump in the pre-IPO value of NSE per share. And, of course, we talked about the risks when you go pre-IPO and you invest there, but just any thoughts there on this entire index play and BSE as well?
So, indexes are very, very good business, to be honest, and we love them a lot. And we have always been, participated in them in some or other way. And I think the only thing is that, sometimes the valuation is very demanding. But remember that, if I recall rightly, Info Edge is one such stock which was always in scarcity. So in the sense that there were no optional plays to that, alternate plays to that. And so the premium it used to command and today also command is very, very high. Similarly, index plays across the globe. If you see, there are only one or two players majorly, and they always are at a substantial premium to other financial intermediary businesses. So I think the premium for index business will be there because it is near monopoly or duopoly at best, and it is a growing space, growing business. The penetration of equity very low in India, so it's a structural story. But when you buy at a particular valuation which is uncomfortable, then you may have to be mentally prepared for no returns or long time corrections, which I think long-term investors can definitely take a call on.
Seeing unrealistic valuations is the question.
Valuation is a multiple of many things now. If RBI cuts rate in a substantial way, then the whole Indian market will also look cheaper. The economic growth rate will pick up. So then today what we are seeing and today what we are talking about valuation can change in a very, very quickly. So very hard to comment. So it is a fact. Valuations are a factor of multiple macro aspects, and I think from macro perspective we are seeing that RBI may upfront the rate cut, and if RBI upfronts the rate cut, then the whole equity market will start looking cheap. That is the way I see it.
Okay. Thank you so much, Sandeep. Thank you so much, Kunal. I'm going to quickly go across to Pallavi because that's going to be the big story post-market close this evening, and you'll probably see that impact on Monday. Pallavi, India's GDP number is expected to come out maybe in about half an hour or so. What's being penciled in?
Right, Tamanna. So India's GDP growth is expected to continue to see at least a little bit of an improvement in the January-March quarter. It is estimated to grow by 6.8% in that quarter. That's according to a median poll of economists by Bloomberg. And that is higher than 6.2%, which we had seen in the October-December quarter, which might also see a revision. GVA is expected to expand 6.4%. And for the full year, GDP is estimated to grow by 6.3%. That's compared to 6.5% that was the second advance estimate by the CSO. Tamanna, one thing we should be careful about is the divergence between the GDP growth and GVA growth because of the high net indirect tax impact, which means that this time around you might actually want to focus specifically on the GVA growth figure as well to actually understand what the pace of economic activity has been like. Let's also quickly take a look at some of the industry-wise trends. Agriculture is expected to continue to remain resilient. Manufacturing, if the IIP growth figures are anything to go by, not so much. Services, meanwhile, might be a little bit more of a mixed bag.
Okay, thank you so much, Pallavi, for all of that. Let's quickly look at how it's looking at close. Let's look at how markets are shaping up. The Nifty down around 1/3%, 24,750 is where we are at. Let's look at the week gone by as well and put this into better perspective as to how the chart structure looks for the week. That's how the week's gone by. Absolutely flat, maybe just about 1% lower for the entire week gone by. So that's how it's played out. Let's also look at how and what stocks have moved today, and Eternal was one of them within the Nifty basket. One of the top gainers in the week today, for the day today, 5% higher on the back of index adjustment, and the top gainer on the Nifty 50 index as well. SBI, HDFC Bank are the other two which have done particularly well on a day otherwise that wouldn't have looked good had those two heavyweights not performed. I want to also look at points contributions on the Nifty 50 index. And look at that, HDFC, SBI contributed around 38 positive points out of the 60 cumulative positive points contributed on the index. You would have likely seen a 200 point, likely a 200 or maybe 150 odd points lower on the Nifty 50 had that been different. So again, something to kind of put things into perspective. Let's look at sectors as well, and let's break it up. The PSU banking index doing particularly well, 3% higher, and the Nifty Bank as a result also up around 0.4% because outside of HDFC, some of the other banks haven't really done too well in the private sector. and therefore you're seeing the private sector banking index actually sitting in the red despite the Nifty Bank being in the green. Let's look at some of the other sectors which have not done as well. Nifty Defense corrected around 1% or so, some bit of cool off seen there. Nifty Metal was down around 1.7 odd percent. You had the Nifty IT also, which was down around 1.2 odd percent. So that's how some of those have played out. Let's look at the advanced decline, the breadth, and that was largely skewed towards the negative today. So there was some bit of pressure. Let's look at the Nifty mid cap and small cap indices, because that's where likely that pressure would have reflected. The Nifty mid cap down around 1/5 of a percent thereabouts, but very close to the green, right? So not too bad as one would expect. And the Nifty small cap is up, in fact, 1/3 of a percent at close. Let's look at the weekly charts on these as well. Try and see as to how the week has gone by. For the SMID counters, we were down around we were up around 1.2% odd for the week gone by on the Nifty small cap, and the Nifty mid cap also was in the green, around 0.7 odd percent higher for the week. I want to pull up a couple of more sectors. Let's look at the Nifty Defense Index for the week gone by, because it's been a fantastic couple of weeks where it stayed in the green after that 14% move a couple of weeks ago. Another percent higher for another couple of percent higher for this week on the Nifty India Defense Index. So this one continues to roar and continues to sit in the green, a fairly decent kind of week despite today's gap down of around 1% or so that we've seen. Last off, I want to look at the BSE 500 top gainers, top losers for the day, and those are some names on your radar. Suzlon on the back of those fabulous numbers that it gave out. You also had a Muthoot Finance up 6.5%. We spoke with management as well. A Home First is up 6% as well at close. NBCC, again, a good set of numbers. Welspun Living down 10% after that move yesterday. Mazagon Dock down 7% on the back of numbers. We'll look out for commentary. Chambal Fertilizers down around 6 odd percent. Then you had an SJVN down 5.5 odd percent, again on the back of numbers. So those are some names which have really buzzed in trade. But let's look at how the weekend ought to go and what we will have on our radar for the weekend. And on the other side, you'll have India's GDP growth. We spoke about that number. India's forex reserves as well will likely get disclosed. You'll also see the shares exiting lock-in 52%. Enviro Infra Engineers in focus. Ireda, of course, doing likely a QIP. We had that on Heard on the Street, but 20% of shares within the anchor basket will exit lock-in. You will see Ather Energy as well, 6% odd of the of the market capitalization will exit lock-in in terms of the anchor lock-in that will expire. Let's also look at any earnings which may be left for this weekend, because of course the last couple of days where earnings will likely get disclosed, well, nothing material on that count. But with that, from Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek.
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. US markets end in red after a range-bound day of trade. HDFC Bank and Eternal contributes to the gains. On the other hand, Infosys and ICICI Bank dragged the most. Nifty Bank and PSU Bank were among the few sectors ending in green. Nifty Metal and Defense dragged the most. The MSCI may see rebalancing, that is underway and shaking up key indices. Now, in the MSCI Global Standard Index, Coromandel International and Nykaa are being added, while Eternal sees weightage reduction. Now, the MSCI India Domestic Index welcomes Coromandel International and GMR Airports, but also excludes Sona BLW. Meanwhile, the MSCI India Midcap Index adds Coromandel International and Nykaa. Block deals for Eternal and Nykaa are driving the market buzz as rejig unfolds. Stay tuned for more updates. Bajaj Auto shares dipped over 2% in trade after the company posted its Q4 earnings yesterday. While the top line grew by 5.8%, net profit also rose by 6%. The management expects the domestic market to grow by mid-single digits in financial year 2026. However, it forecasts the export market to surge even more by 15 to 20% in the coming quarters. Not substituting EV with any segment, says Rakesh Sharma, ED at Bajaj Auto. Now, the company also recorded healthy export sales that supported the auto players' financial health this quarter. In a conversation with the executive director, he told us that he is eyeing for Bajaj Auto to climb to #1 spot in the electric vehicles as well as the two-wheeler segment. Brokerages come out with mixed views on Bajaj Auto. Nuvama maintains buy, ICICI downgrades to add. Jefferies also maintains hold and CLSA continues to keep its outperformed rating on the stock. Now, most brokerages highlight better rural demand, new products and stronger financing to aid profitability. Now, the growth outlook in the domestic two-wheeler segment also appears positive. However, valuations remain rich. Ola Electric is facing turbulent times. Its Q4 results reveal a deepening financial strain with net losses widening to 870 crore rupees. Now, the company is also grappling with operational challenges, including poor after-sales service and raids by Maharashtra's Transport Department over missing trade certificates. Investor confidence has also taken a hit, pushing the stock down 5% with EBITDA showing weak performance. Samil remains steady despite a weak Q4 with its Vision Systems division reporting softer revenue. However, its emerging business shows resilience. COO Pankaj Mittal highlights a compounded revenue growth of 19% over the past 5 years and anticipates over $400 million in camera monitoring system orders. Now, the company also plans to unveil a detailed 5-year strategy by September to October. According to Kaustubh Chaubal, Senior Vice President at Moody's Ratings, India's automotive sector is set for steady expansion, with car volume growth projected to exceed 3% CAGR until the decade's end. Now, he says that the domestic demand remains a critical driver, fueling economic growth and reinforcing India's appeal to global car makers. IRCTC reports a solid Q4 performance driven by robust Mahakumbh package bookings. Now, the CMD Sanjay Kumar also highlights an optimistic growth outlook, expecting the catering business to expand by 9 to 10% and tourism also to grow by 15% in FY26. With an overall projected growth of 10%, IRCTC continues to capitalize on travel demand while strengthening its position in the key segments. Suzlon Energy is in focus after the company came out with its quarterly numbers. The company saw a massive jump in the net profit due to exceptional gain of 600 crore rupees. It also witnessed a massive revenue growth of 73%. Now, due to higher than expected deliveries of wind turbine. Concord Biotech delivers a strong Q4 as lower finance costs boost its net profit. The company also sees significant gains in operating performance, with revenues and operating profits rising well beyond last year's figures. Enhanced operating leverage pushes its margins higher, while a healthy dividend payout also reflects its robust financial health. Technocraft Industries delivers a solid Q4 performance, with its textile division actually driving much of the momentum by contributing a major share of the revenue. Now, the drum closure segment also plays a crucial role, propelling overall revenue growth. Year on year, the company witnesses notable increase in the revenue, EBITDA and net profit, accompanied by improved margins. Gujarat Pipavav maintained steady performance in Q4, with revenue remaining flat, reflecting consistent market demand. EBITDA also holds its ground and operating margins stay robust, signaling disciplined cost management. Notably, net profit also surges significantly, underscoring the company's ability to translate stable revenues into strong bottom line performance. In Q4, Landmark Cars posts a noticeable revenue increase while still contending with a tightening margin. Even though net profit surges sharply, the burden of higher expenses weighs down overall profitability. Now, the results also show that despite growth in revenue and a significant percentage gain in net profit, operational cost pressures also continue to erode the margins. Shalby's Q4 results face significant headwinds as interest costs soar by 65%, deeply impacting its financial performance. Now, although revenue shows a modest uptick, the surge in material and other expenses drags down the EBITDA and slashes margins dramatically. Now, this rising financial burden turns last year's profit into a net loss. KNR Constructions faces a tough Q4, with revenue dropping by 31% and EBITDA falling over 40%. Margins also shrink to 22.7% from 26.5%, reflecting rising cost pressures. Net profit also plunges 60%, signaling significant financial strain. Mascot reports a challenging Q4 as EBITDA plunges over 81%, severely impacting margins, which also dropped to just 3.2% from 17.3%. Now, while revenue edges up slightly, net profit also declines by 51%, reflecting the strain on profitability. Despite the setback, the company announces a final dividend of 2.71 rupees per share. Investec sees strong upside in Sobha, initiating a buy with 2,150 rupees target. Now, the firm also expects 18% CAGR pre-sales growth from the FY24 to FY27. Now, driven by strategic expansion into Mumbai and Noida, with projected annual launches of 9 to 10 million square feet over the next 2 years and solid cash flow backed by land monetization, Sobha's valuation remains at a 25% discount to peers. HSBC maintains buy on Sobha. The brokerage sees strong growth post recent rights issue, with notable improvement in the operating cash flow too. Now, more launches in FY26 and entry in cities like Mumbai and Noida provide an attractive visibility for growth. However, HSBC does not like the disappointing margins, especially because the company expects another 2 quarters of pressure. Prestige Estates mark a strong comeback with their Q4 bookings, while the 2025 financial year missed pre-sale guidance on deferred launches. Outlook for the 2026 financial year remains strong, owing to a good response to the Indrapuram launch. Bernstein upgrades rating on delivery to outperform. but cuts the target price to 430 rupees. Now, the brokerage sees signs of potential recovery in the logistics giant and plausible tailwinds from the industry consolidation. They've also raised EBITDA growth by 1 to 2% over financial year 26 to 27. Kiri Industries is set to sell its entire 38% stake in Dystar Global to Zhejiang Longsheng for $697 million. Now, the Singapore-based dye stuff and chemical company is set to acquire shares at 6,000 crore rupees, and the transaction is also expected to be finalized by the 2nd of October 2025. SML Isuzu delivers a solid Q4 with revenue rising 13.5% year-on-year to 771 crore rupees. EBITDA also posts a 27% growth, reflecting improved operational efficiency, while margins expand to 11.7% from 10.5%. Net profit remains stable with a 1.2% increase to 52.9 crore rupees. The company also announces a final dividend of 18 rupees per share. NBCC posts a robust Q4 fueled by a surge in revenue and operating profits. The company also benefits from enhanced other income, a significant reversal of impairment of losses, and boosted comprehensive income, all of which support a noticeable jump in the net profits. Engineers India delivers a solid Q4 with marked improvements in revenue, EBITDA, and net profit. The consultancy business shines, while lower costs in construction materials and reduced finance expenses boost margins. This sharper focus on higher margin services drives robust performance and paves the way for sustainable growth. Apollo Hospital is set to announce its Q4 results today, with analysts anticipating a revenue increase alongside improved EBITDA and net profit. The company's performance is also expected to be driven by sustained mid-teen growth, while health services are projected to expand by 10% year-on-year. SEBI has released Phase 2 of new F&O norms, which includes relaxations for trading limit for index options. Now, among other things, the norms also include new method to measure risk using delta-adjusted positions. India's GDP is expected to grow at 6.8% in the fourth quarter of FY25, according to Bloomberg's poll. Full-year GDP growth for FY25 is seen at 6.3%. Urban consumption to stay subdued, whereas rural consumption to support demand. As per the poll's private capex to remain tentative as well. Facing mounting financial stress, Finance Ministry has now asked MTNL to take concrete steps to address its growing debt burden. With no fresh capital infusion on the table, the focus has shifted to asset monetization as the primary route to manage liabilities. The Department of Financial Services reviews RBI's draft guidelines on gold lending, advising that small borrowers should not be adversely affected. The proposal, set to be implemented by January 1st of 2026, suggests that exempting borrowers up to 2 lakh. RBI is also currently evaluating the feedback. SEBI bans Arshad Varsi, wife Maria Goretti Varsi, and 58 others in Sadhana broadcast pump and dump case. As per SEBI, fake YouTube videos were circulated with false claims about the company. Along with Arshad Varsi, SEBI has also included YouTube video creators, members of the company's promoters group, and traders. Sadhana broadcast has been penalized with a sum of 20 crore rupees as well. NDTV Profit had an exclusive conversation with Indigo CEO Peter Elbers. He aims to take the airline to greater heights by increasing the fleet to 600 aircrafts. He also said that they have plans to add direct flights to 10 international destinations, including cities like Manchester, Amsterdam, Athens, and more. They also expect to fly to London and Copenhagen from 2025 winter. Kenneth Andrade, founder and CIO of Old Bridge Mutual Fund, believes the key market risk stems from trading practices. He also notices that India's market is especially sensitive to global macro events, which could trigger a short-term correction of around 10 to 12%, even though he expects markets to remain broadly elevated. 6 of 7 listed companies of Adani Group ended in green in an otherwise muted market. Jefferies has also now come up with a note on the conglomerate. They believe that earnings are going to grow at a compounded annual growth of 22% through FY27. The company's EBITDA also stood at 74,000 crore rupees, with Adani Enterprises being the top growing company in the conglomerate. The biggest bonanza for them was Navi Mumbai Airport and Ganga Expressway to see commissioning. LTIMindtree appoints former Randstad Digital Chief Executive Venugopal Lambu as CEO designate. He is also set to eventually succeed Debashish Chatterjee, who has led the company since its formation 3 years ago. Mumbai is soon to get the longest metro line. A 38-kilometer stretch from Badlapur to Kanjurmarg is all set to be the longest metro corridor. The construction is expected to be done by 2026. This line will help 7 lakh people, and it will also tackle monsoon woes by connecting key suburbs. Sources tell NDTV that the centre is spearheading efforts to restart J&K tourism. Plans include high-profile visits by ministers and celebrities, potential financial aid to the state, and the development of 3 new tourist centres, each in Jammu and Kashmir, with institutional support such as the World Bank. The initiative also focuses on preparing existing tourism infrastructure and boosting adventure and religious tourism. Andhra Pradesh Chief Minister Chandrababu Naidu has made a big statement regarding the Rayalaseema, which is also known as the land of pearls. Speaking at the event, he announced a 83 crore irrigation project and a 4,500 steel plant. He also promised a high court bench in Kurnool. Karnataka is seeing a rise in COVID cases again. The state has reported 40 new infections and the active case count has now reached 126. Health officials of the state have raised an alert, stressing the importance of testing and staying staff and prepared. A devastating explosion at a firecracker factory in Sri Muktsar Sahib, Punjab, claimed 5 lives and injured over 25 people. The blast caused a building collapse, with the injured now receiving treatment at AIIMS Bhatinda. People have also launched a full investigation into the incident. The tragedy has raised serious concerns about safety standards at such facilities. In a historic milestone, the first batch of 17 women cadets graduated from the National Defence Academy in Pune. They joined over 300 male cadets in the passing out parade, marking a step towards gender equality. Now, this breakthrough follows a 2022 Supreme Court order allowing women to join the NDA. The event, celebrated on May 30th, inspires a new era for women in India's armed forces. The Trump administration is considering a 15% tariff on global imports for 150 days, starting May 30. Now, the plan, reported by the Wall Street Journal, leverages the Trade Act of 1974 for implementation. This move also comes after legal battles over previous tariff attempts. The temporary measure aims to address trade imbalances amid ongoing economic debates. In a major crackdown, the US has deported 1,080 Indians since January 2025, with 62% flown back on commercial flights. Now, alarming videos of deportees restrained on military planes sparked outrage, prompting the MEA to monitor closely. Now, the Trump administration also targets 18,000 undocumented Indians, raising fears for their welfare. India cooperates but demands humane treatment amid global scrutiny. French President Emmanuel Macron has called the situation in Gaza not acceptable, warning that Europe may need to harden its collective position. He called for possible sanctions against Israel. Speaking at news conference in Singapore, Macron expressed hope that the Israeli government would change its stance and deliver a humanitarian response. He also emphasized that the creation of a Palestinian state is both a moral duty and a political necessity to bring stability to the region. A new report highlights the growing impact of extreme heat, with scientists saying that 4 billion people, which is half the world's population, experienced at least one extra month of extreme temperatures from May 2024 to May 2025. Now, the study, also conducted by World Weather Attribution Climate Central and the Red Cross, links the heat waves to illness, deaths, crop losses, and strain on energy and healthcare systems. Researchers warn that heat waves are silent killers. with many heat-related deaths going unreported or being attributed to pre-existing health conditions like heart disease or kidney failure. A wave of missile and drone attacks struck Kharkiv and nearby districts overnight, leaving a trail of destruction and injuring at least 11 people, including 2 children, the officials said. Now, the State Emergency Service of Ukraine reported that shelling ignited a major fire at a municipal transport enterprise, destroying a building and a trolley bus. Now, the fire spread to enterprise vehicles and residential buildings, injuring 3 people. Meanwhile, Russia also conducted drone attacks on the Odessa region, causing fire and destruction, though no injuries have been reported. Supporters of former Bolivian president clashed with police in La Paz, threatening to extend their protest beyond the capital. Wednesday marked the 4th day of demonstrations against Morales' disqualification from the August presidential elections. Protesters also launched fireworks and stones at police barricades near the government palace as police responded with tear gas to maintain control. Morales, who was served from 2006 to 2019, is attempting to run despite a constitutional ruling and rejection from the Supreme Electoral Tribunal. Now, the small political party he sought to represent was removed from the registration for failing to meet minimum vote requirements. RCB has secured their place in the IPL final after a strong performance against Punjab Kings in the playoffs. Now, this is a big opportunity for the team as they have qualified for the finals for the first time after 9 years and still chasing their first title. No more second chances for Mumbai Indians and Gujarat Titans as both are set to go against each other in a crucial eliminator match today. Now, the winners moves on to the qualifier 2, one step closer to the final. The loser is eliminated. Well, with that, viewers, it's a wrap on Market Express, but stay tuned on NDTV Profit and see me on the other side with Profit 360.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Nifty and Sensex decline end the week lower, with Nifty Metal losing the most. Mid and small cap indices outperform the benchmarks. Nifty FMCG, oil and gas, auto, IT fall for the second week in a row. Adani Ports raises 5,000 crore rupees via the issue of 15-year non-convertible debentures from the LIC. Adani Ports will use the proceeds for bond buybacks. Government asks RBI to delay gold loan norms till January 2026. Department of Financial Services may suggest exclusions of borrowers of up to 2 lakh rupees from the rules. Finance Ministry cracks the whip on MTNL, asks for a time-bound monetization plan. Sources say around 50 assets have been identified across the country. MMRDA will invite fresh tenders for the Gaimukh Bhayandar infrastructure project. Plans to reduce project costs by 3,000 crore rupees. SEBI bans actor Arshad Varsi, his wife and 57 other entities from the market for 1 to 5 years after being accused of creating misleading videos on YouTube recommending investors to buy shares of Sadhana Broadcast. US appeals court temporarily reinstates tariffs a day after the trade court blocked them. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, markets started the June series on a weak note. As the benchmarks ended lower, auto, metal and IT stocks weighed on the sentiment, dragging indices lower. Most sectoral indices except for PSU banks closed negative. Harsh joins in with a detailed market roundup of the day.
Well, indices today slightly on a muted note, especially on the Nifty 50 index. We're down around 1/3% thereabouts. We've closed around the 24,750 mark. Some amount of resistance is what we're told around the 24,700. But in terms of the breadth as well on the Nifty, it was extremely weak. You saw pretty much large baskets of stocks in the red. PSU banking index was one which was in the green and well in the green. Led by an SBI, which did fairly well in trade. And Eternal within that Nifty 50 basket also did fairly well for itself. Likely passive flows aiding that particular counter as well. HDFC Bank was the other heavyweight which did well, around 40 odd points, contributed out of the 60 positive contributors on the index by just SBI and HDFC Bank. So likely if those didn't, you would well see a deeper gash on the index. So it was the Bank Nifty and the Nifty PSU Bank especially along with an HDFC which has helped the index down just about 1/3%. For the week gone by as well, we were we closed lower. At least on the Nifty 50 index. There was some bit of outperformance in the broader markets that we saw for the week gone by. The Nifty mid cap and small cap index outperformed for the week as well as for today. We saw the Nifty small cap especially have plenty of legs and see a bit of an uptake. In fact, the breadth overall was also slightly muted, nearly 1:1, but in favor of the losers in trade, at least today on the NSE. Let's talk about sectors now. The PSU banking index, I did speak about that, a top sectoral gainer, 2.6% higher. Outside of that, we saw only about muted to negative moves. The auto index, the pharma index saw some bit of pressure through the day. The metal index was the top sectoral loser as well, 1.7% lower. So that was the one pocket which was hurting today.
Harsh, and viewers, the GDP data is out. The Q4 of FY25 GDP growth is at 7.4% and the GVA growth is at 6.8%. For more, I'm joined by my colleague Pallavi Nahata in the studios today. Pallavi, take it over.
Right now, quite a bit of a pleasant surprise there with GDP growth figures for Q4 coming in at the higher end of estimates at 7.4%. And also the fact that the Ministry of Statistics has retained the FY25 forecast at 6.5%. That is for the full fiscal year. Let's also quickly go over to Kaushik Das, Chief Economist at Deutsche Bank, for his first take on these figures. Kaushik, thank you so much for taking time out to speak to us. A positive surprise on the headline in terms of GDP growth. GVA growth, of course, at 6.8%, showing a wide divergence with the GDP growth because of net indirect taxes, presumably. Please give us a little bit more of insights into that.
Yeah, Pallavi, the first thing is that GDP has surprised to the upside, coming at 7.4%. We were expecting GDP growth to surprise more to the upside compared to the GVA growth. As you mentioned, what happened in January-March quarter is that subsidy payments were, kind of very low compared to January-March of 24. So there was a year-on-year contraction of about 45%. And the way GDP is calculated from GVA, when you adjust for the lower subsidies, the net indirect tax collection goes up quite a lot. And therefore, even if GVA growth came at 6.8, you had GDP growth coming even higher at 7.4%. Now you should remember that real GVA growth, we were expecting it to be around 6.5%. Consensus was even lower at 6.4. That itself has come close to 7%. It has come at 6.8. So that definitely is a positive surprise for the momentum of GVA and GDP. GDP, we can understand it's a bit statistical because of net indirect tax collection being higher. But even if you look at GVA, it has gone up to 6.8, which is higher than what we had expected. Also, the fact that October-December number, if you see, has been revised higher. So what I can see on my screen is that GDP number has gone up to 6.4% for October-December from 6.2, and GVA has gone up to 6.5%. So from 6.5% or 6.4% in the previous quarter, we have gone up to 6.8, which is, I think, better than anybody would have expected. We have to see more details about each of the components, how they have done. But first take is it's definitely a positive surprise compared to what market was expecting. But we expected GDP to be higher than GVA. If you remember, CSO had implicitly assumed 7.6% GDP growth for January-March. So it has come in line with CSO's estimate. So this comes definitely as a positive surprise.
All right, Garima Kapoor, welcoming you to the show as well. Thank you so much for taking time out to speak to us. I'll quickly go to some of the industry-wise estimates for Q4. For agriculture, we're looking at a print of 5.4%. For the secondary sector, manufacturing specifically, we're looking at 4.8%. For construction, we're looking at a double-digit growth of 10.8%. Trade, hotels, transport is at about 6%, while the financial sector is at 7.8%, while public administration is at 8.7%. So here again, in terms of specific industry-wise breakups, on most counts, this is very much in line with estimates, maybe a tad above what was being expected. Manufacturing, of course, not painting a particularly encouraging picture, but broadly in line with expectations given what we'd seen in terms of IIP growth for that quarter?
Yes, Pallavi, largely the internals look very much online as they were expected, except for the fact that the construction sector has shown a very sharp growth. But remember, construction sector was expected to do better because there was a lagged impact on a pickup that was anticipated on government spending. So mining and mining related activities and government construction related activities really started to pick up pace only after November and December once government spending started to pick up. So a large part of the effect that we're seeing in Q4 is owing to that particular effect. Plus, I think the trade number to my mind should have been tad higher because the trade, hotels, transport in this quarter should have captured the Kumbh Mela effect. In our assessment, the Kumbh Mela alone should have contributed 15 to 20 basis point to the Q4's numbers. But largely, if you look at the internals, particularly agriculture, which was led by a robust Rabi crop, as well as relatively better print in horticulture, I think internals look fairly in line when it comes to the internals of GVA print.
All right, coming back to you, Kaushik, we'll quickly take a look at the expenditure-wise trends as well. Private final consumption expenditure at 6% for Q4, while government expenditure has seen a contraction of 1.8%, while gross fixed capital formation at 9.4%. Help us dissect some of these trends. Can we then come to the conclusion that private capex, again looking like a positive surprise, has seen a little bit of a rebound, at least in Q4? And what are you making of private consumption recovery there?
So I think private consumption 6% was in line with our expectation, but this is lower than October-December quarter. Now we have to see what revisions have taken place. I've not seen the entire details, but if you ask me, internal wise, we were not expecting private consumption to be higher than 6%. So that's in line. Government consumption, you said, was negative, right? So that's something which has come as a downside surprise as far as our forecast is concerned. And private investment, they don't give a breakup of private and government investment. They give total investment. If that has come at 9.5%, that is definitely an upside surprise. We are not expecting that much. Maybe 7%, 7.5% is what we had in our forecast. And that is why you have got the number of 7.4 compared to 6.8 that we had in our forecast. So it has to have some upside surprise. So that has mostly come from the investment side. And we know that the government picked up their capex spending mostly from November of last year, not having spent much between April to September, and then October, November, we saw that pick up. January, March, probably that spending picked up even more. But what you're kind of implying is that it may not be completely government spending-led, increase. It may have to do with some pickup in private private investment as well. Now, the only thing is we'll not know the details immediately because they give the breakup with a very significant lag. But this 9.5%, if this number, if you were to look at it, it's not just the government investment. Some private investment would have also picked up, which is very positive. And from the GVA side, if you see 5% agriculture growth, 5.5% we had expected. The bigger surprise has come more from the manufacturing, growing close to 5%. We were expecting around 3.5%, 4%. That is where the upside surprise has come of our GVA growth forecast being at 6.5, and the actual number has come at 6.8. So more or less the numbers are okay, but the increase in GDP at 7.4 is mostly to do with the subsidy being lower, and that is what we had anticipated anyway. But now these numbers will be looked at more closely once we get the details. And what will be more important is that whether the expectations for FY26 growth change because of this momentum that we have seen in January, March, and in FY25 as a whole.
Right, Kaushik, I'll stay with you. So you said that, while of course there is a continuing divergence, a fairly wide divergence between GDP and GVA growth, these numbers do look fairly positive. So, given that we did see a little bit of a slowdown, especially early on in the last fiscal year, and looking at how the year has ended for the Indian economy, what is the picture you're sort of piecing together in terms of economic recovery? Do you think that this is a substantial pace of recovery we've shown, and what does that say along with what we're gauging out of the recovery taking place in Q4 of the ongoing fiscal? Does that look like that recovery that we had seen signs of now continues into this fiscal year as well?
So Pallavi, just to set the record straight, we were anyway not that pessimistic about FY26 growth. Our forecast has been at 6.5 when consensus has come down to 6.3. I think some of our peers also have growth at 6% or lower. So I think people who had become too pessimistic about FY26 growth, they probably would have to reassess their growth estimate for FY26. India's growth has slowed down in April, September of 24, and we know the reasons. One was because of elections, government could not spend much, and then there was this, heavy rainfall showers for which investment took a hit, and there was this cyclical slowdown of private consumption having slowed down because of exhaustion in pent-up demand. So all that had happened, but since October, December, we have seen some pickup. And it looks like the pickup in momentum is more than what anybody would have expected. At least if you go by the January, March, even if you look at the GVA number, forget the GDP number, that coming close to 7% itself is reflection of momentum being stronger than what people would have expected. Now, remember, April, September of this financial year, we'll have a very positive base effect because April, September of last year, growth had slowed down. And we also know that April, September, the government will spend a lot of their capex. And compared to last year, you will see a big year-on-year increase, and that itself would support growth, in my view, close to 6.5%. Plus, the RBI has done so much of liquidity infusion, and then rate cuts are continuing. More rate cuts will be coming. Inflation has fallen. All this is good news for private consumption going forward. So I would not be very pessimistic about India's growth, even with the global uncertainties that we have. I think India can very easily manage 6.5% growth in FY26. In fact, there could be upside risk at some point, in my view, because what can happen in FY26 is that it's a little technical, but it's worth kind of keeping an eye on, is that the GDP deflator can be very low this year because WPI inflation is likely to be around 1%, CPI inflation around 3.5%. So the GDP deflator probably would be 2.5%. So if your nominal GDP growth you manage even at 9%, your real GDP growth, because of the lower deflator, can be easily closer to 7%. So we still have our forecast at 6.5% for FY26, but I think the risk is more to the upside than the downside compared to the, even with the global uncertainties that are going on. So we would stick with 6.5% growth at this stage. And I think India is showing a very good recovery, and RBI will do more to make sure that this recovery is kind of holding up in the next few quarters as well.
All right, Kaushik, thank you so much for that. Garima, coming to you on the same question, what are you making of the pace of recovery being seen in the Indian economy? And would it be fair to say that we're continuing to see signs of that recovery spill over to the ongoing fiscal year as well?
Pallavi, I think before I address this question, we should go back a little in terms of data points. During the first and the second quarter of the last financial year, there were significant headwinds to growth, and most of which were probably domestic and none of them external. On domestic front, government was not spending. There was a bit of a policy logjam after the verdict of general elections. You had seen extremely tight liquidity. You'd seen extremely elevated real interest rates. And on top of it, you had a condition whereby the impact of the risk weights that were assigned by RBI in terms of regulatory tightening towards personal loans was starting to impact consumption. Now, the quarter one and the quarter two saw the peak of this brunt. From quarter three onwards, particularly towards the last month of the quarter three, you started to witness a turnaround, particularly a business cycle turnaround. So two large agents of the economy, the monetary policy as well as the fiscal policy, started to turn pro-growth. And hence, post that, the measures that the government has taken in terms of expediting the growth, making sure they at least reach the target that is set out on the revised estimates for budget, as well as RBI pumping in ample liquidity to basically bring in some bit of comfort for the financial players who are looking for some comfort and durable liquidity so that they can open up the lending taps has started to come in. So we are now behind, we are completely behind in terms of the peak of the regulatory tightening cycle. We are probably at the most comfortable position when it comes to liquidity cycle. We have the visibility of at least another 50 to 75 basis point of rate cuts. And on top of it, government spending will only accelerate because last year was not a good year when it came to execution. So going forward, as we enter the current financial year, you could not have had a much better supportive environment, both from monetary as well as fiscal point of view. So in my view, this should really aid spending recovery, one which has been one of the pain points for the economy for most part of last year. And the settlement of trade related uncertainty, mainly once India concludes its trade deal with US, should start to see some uptick in FDI towards the second half of the current financial year as well. Remember, FDI can have a positive impact on domestic capex as well. So private final consumption expenditure will see a support mainly from low inflation, as well as private capex could see a support from a relatively improved cycle on inflows when it comes to FDI. So broadly, the quarter four print while exaggerated for the reasons that Kaushik very well explained, I think the momentum is here to stay. Yes, there are global uncertainty challenges, mainly coming from tariff, especially going back and forth for tariffs. In my view, the domestic economic cycle is extremely favorable for our growth to see sustainable improvement and holding on to 6.5% for the current financial year, despite elevated global challenges mainly coming in from trade related uncertainty.
All right. Thank you so much, Garima and Kaushik, for taking time out to speak to us. Always a pleasure. That sums up, what we're making of these GDP figures, or at least the first take. All in all, continuing signs of recovery and signs of momentum in economic activity. Real GDP estimated to grow by 6.5% for FY25, and Q4 looking strong at 7.4% GDP growth. The gap with GVA growth remains wide, with GVA growth coming at 6.8%, but a good set of numbers nevertheless. Himakshi, over to you.
Yes, thank you so much, Pallavi, for breaking down those numbers for us. And viewers, now let's shift gears. LIC has fully subscribed to Adani Ports and Special Economic Zone's 5,000 crore bond issue. This marks the company's largest ever rupee-denominated bond sale and is also Adani Ports' first 15-year bond sale. Now, my colleague Anushi is joining us with more details on this one.
LIC has entirely subscribed to the 5,000 crore of bond issue of Adani Ports is what we are seeing now. They have subscribed to this 5,000 crore of this 15-year bond issue which is there, and this is at a rate of 7.75% of the rate that we are looking at. Again, in a privately negotiated deal is what we are seeing. This again marks company's largest ever rupee-denominated bond issue, and it's also first 15-year bond sale as well in terms of where the long tenure is concerned. Now, where Adani Ports will be utilizing these funds for, firstly towards debt obligation, so to repay some of those debt is what we are looking, and also towards working capital side, or for capex side, the company will be utilizing this proceeds, so that we should be taking an account for. Other than that, if we look at the credit ratings also in the recent times, now CRISIL has maintained a AAA rating for its bank loan facilities and NCDs. Along with that, for commercial papers, it has maintained a A1 plus rating. While if you look at Fitch ratings, they've found a BBB minus for long-term foreign currency issuer default rating, and also alongside have removed their rating watch from negative for Adani Ports. So overall a positive. We are seeing an LIC subscribing to the entire 5,000 crore of bond issue is the main focus point for Adani Ports today.
Right. Thank you so much, Anushi, for that. Now, the Department of Financial Services under the Ministry of Finance has suggested changes to the Reserve Bank of India's draft rules on gold loan lending. Now, these recommendations also aim to protect small borrowers. The government has also advised the RBI to consider exempting gold loans up to 2 lakh rupees from these norms. Additionally, it also emphasized that the feedback from the public and concerns from various stakeholders will be taken into account before finalizing the guidelines. To understand how these proposed changes could also impact the small gold loan business, we spoke with George Alexander Muthoot, Managing Director of Muthoot Finance, about his perspective on the recommendations made by the Department of Financial Services.
A balanced recommendation has gone from the Department of Financial Services, Ministry of Finance, that they have put a balanced recommendation. You think that draft regulation which is there had some, gaps and some points which were not actually conducive for customers. Actually, customers would find it difficult if these were implemented. So the draft guidelines which they had given, the Ministry of Finance has given their suggestions. They are actually very good suggestions that small borrowers, especially borrowers below 2 lakhs, shouldn't be inconvenienced. So I think that is a very good suggestion, and to probably have a relook at this is what they have said. So we definitely welcome it. And as an association of gold loan companies and being the largest player in the industry, we also had given our representative it's only a few suggestions which we had given. I think most of that is now taken up by the Ministry of Finance itself.
Facing mounting financial stress, Finance Ministry has now asked MTNL to take concrete steps to address its growing debt burden. With no fresh capital infusion on the table, the focus has shifted to asset monetization as the primary route to manage liabilities.
With rising bank defaults and continued financial strain, MTNL has been asked to outline a clear roadmap of its asset monetization plan in a time-bound manner. The move comes after DOT recent proposal of capital infusion into this debt-laden telecom, which was declined by Finance Ministry. Finance Ministry is apparently not happy with the roadmap which was presented by MTNL on the asset monetization plan. Now, under this monetization exercise, which is progressing well, is what sources telling us, identified and have been earmarked around 50 such assets across the country, which also include BSNL surplus non-core asset, and the valuation of those is already underway. In fact, some of the valuers have been impaneled, and a blueprint of those valuation will be soon on the government table, which will decide for the course of action. In fact, National Land Monetization Corporation, which is a nodal authority, is assisting MTNL throughout the process. They are in talks and discussion with state and local authorities, understanding their issues, and they're helping in clearance of all sort of regulatory approval which is required to monetize potential asset. Now, if you remember, the total, dues towards lender is about 8,500 crore. The total liability, if you talk about, is around 33,000 crore, and which also goes towards and include 24,000 odd crore of government bond. Now, DOT already loaned around 1,100 crore to service their interest on those government bonds. Now, the whole idea of this monetization exercise, particularly in state-run enterprises, which has been facing financial strain, to adopt proactive measure in order to manage the financial health better. In MTNL case, particularly, the government is quite firm to not let lenders, take any haircut. And in fact, any kind of fiscal support is completely ruled out, at least for now.
Right. Thank you so much, Trimi, for that. And viewers, that's all the time we had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should you.
Hello and welcome. You're watching KYC. I'm your host Harsh Saita. Today we're going to talk about Axis Cades Technologies. It's a very interesting company because it's into aerospace, it's into defense, and it's into semiconductors. And it provides services to all three of those buckets, and therefore becomes a very interesting confluence in the current setup, both geopolitically as well as domestically. When you're looking at the overall context of things, you also have tariffs which could well impact the company if at all they are implemented, of course, and that's the other risk, and that's what makes it interesting. Now let's look at what I want to know about an Accesscades Technologies. The first one is, why is there no growth in FY25? They're guiding for extremely robust growth. They're in fact expecting revenue to go up by 8x in the next 4 years. Then why is it that revenue growth is sub 10% in FY25? That's my first question. The other one is, what makes them bullish all the way through FY30? What are the levers? What are the segments which are going to help it get from 1,000 crore in terms of top line to the guided number of 9,000 crore or near 9,000 crore by FY30? Really, that's the question I'm going to be asking. Where will orders come from? Why are they implementing a product strategy over a service strategy? How will margins go up from the current mid-teens number to 24% at least, is what they've said, by 2029? What will drive that? And last off, is the FY26 number in terms of profit after tax of around 160 odd crore, is that achievable? I'm going to ask all of this. Of course, the vertical in terms of what will contribute to margins, and then you have your FY26. What are the goals? They've guided for 160 to 180 crore of PAT. What we've done is we've given it a far more conservative number. Listening to all of this, because it's going to be a very interesting conversation, I'm going to start off by helping break down what Accesscades actually does. And I did talk about the fact that it's into aerospace, it's into defense, and it's into semiconductors. So it's at a very, very interesting confluence. But let's start right from the very top. Let's unpack this. It's a tech solutions company, mainly focused on engineering solutions and services. It's listed since 2000. So it's done this for now 25 years as a listed entity. And that is the other thing that stands out for me. Let's talk about each of the verticals that it operates in. Aerospace. It offers design, manufacturing and support, as well as aftermarket services to the aerospace industry. Now there are 3-4 manufacturers within the aerospace industry, so not too many, and this caters to all of those, so therefore helping the aerospace industry in a significant fashion. I want to also understand how deep are the moats, what's the competition looking like, and that will give us valuable insights as to whether it is the only game in town with regard to aerospace. Now let's talk defense. Defense is a big theme that's playing out domestically. They do custom build solutions on drones, mission critical systems and the like. I will break up all of those for you, but I'm just first spelling out what it does broadly. So defense is the other space. They do collaborations with the DRDO in defense. The focus is on defense electronics. They work with defense PSUs. Electronic warfare systems is what they help in. They do custom drone solutions. Mind you, drone is the big technology at this point, and they do custom drone solutions. They do armed drones. They do mission critical communication systems, among a lot of other pieces that they do with regard to defense. So again, something to look at. They also do homeland security, something like mobile command vehicles, AI video analytics solutions, etc. So think about the wide array that they cover in terms of defense, and it's looking quite impressive. And that's why I want to know, why just the 8% growth when you're doing such good work? Now let's talk about ESAI, which is electronics, semiconductors and AI. They custom build solutions, of course, around these, but they offer a wide range of cutting edge products, and they offer it to leading semiconductor platforms. Let me talk about some of the platforms they offer it to. Qualcomm, they do system on modules and development kits for robotics, drones, IoT, industrial, healthcare and consumer applications for Qualcomm. For Texas Instruments, again, a cutting edge technologies company, radar modules and development platforms for automated robotics, industrial and healthcare applications. That's what they do for Texas Instruments. Lattice Semiconductor, they do data capture, playback module, and wave radars for them. NVIDIA, they do AI-enabled solutions for robotics, autonomous systems, ADAS, and more. So think about the kind of companies they operate with. These are some of the standout companies when it comes to technology. They are at the fulcrum of huge technology change in the world, not just in India. I will talk about aerospace for a bit as well, because that's the other vertical which I have missed. They do concept design, aerodynamic studies, they do IP validation. They literally break down an aircraft and try to design it better and see where the inefficiencies are as and when they are required to, of course. They do design optimization, that's what it is, and they do evaluation of software as well within the aircraft. So that there's plenty of things that they do. Again, what beats me is the fact that how can you grow at less than double digit when you're in the middle of all of this? So we'll ask that question. Now, in terms of service offering, I'll just now try and break it down and simplify this as much as possible. They do product design, engineering, and R&D services. They do embedded software. Some of that is on your screen. Embedded software and hardware system integration and manufacturing engineering. They do digital solutions including IoT, analytics, AI, and cloud services. And they do aftermarket solutions and technical publications as well. Let's talk about the business model. They provide end-to-end engineering solutions. They do consulting for each vertical. They do product as well as they do service. They work with global OEM suppliers, defense organizations. DRDO and MOD are just one of the many organizations they work with. We've spoken about plenty of them, including especially in that semiconductor and AI space that they do great work in. Now let's talk about how they make money. Service contracts for engineering design and product development for digital transformation projects as well. So all of those is what encapsulates where they get their money from. Now let's talk about domains, and we've spoken about some of these domains, so it'll become nice and easy for you to look at this screen as to how all of this is evolving. The aerospace domain is largely 30% of what they do. So is defense. So around 60% comes from these two components alone. Then you have ESAI. ESAI is, of course, AI as well as semiconductors and cutting edge technology. There the numbers are coming down as a component of the top line. I want to understand the growth prospects here. Then there's auto components, which they also do, and then there's energy, which they do. So that's how your entire 100% of top line shapes up. But again, it's going to be interesting to understand how this will move, because this may change dramatically. In terms of geography, and why does geography become important? It's obvious, the tariff problem at this point. You look at Asia Pacific, around a third of the revenue comes from there. USA around a fourth of the revenue. Europe around, again, a third of the revenue. And then you have Canada, with a very, very small share. So that's how the geographic split is in terms of this one. Now let's talk about the margins, because where does profitability really come from? That holds the key, right? So you have aerospace, which commands around a 21% margin at this point. Defense is around 15%. ESAI is around 24% in terms of EBITDA margin. Then you have auto, which is -4. So you want to see whether this can improve, whether this can become big, and whether margins can start to come in significantly from here, because this is a 240 crore number where margins aren't coming through. So you want to see whether that can change. And then you have energy, where you have around a 17.5% margin, but the number is so small in terms of contribution to top line. It's not really making a significant dent on that absolute EBITDA number, but this is where the dent will be created. Defense is where the dent will get created. Can these two improve towards 20-24%? Now, so we've kind of covered what the company does. Let's quickly now look at all the parameters that we look for when we're trying to evaluate an Axiscade Tech. We look at the income statement, the balance sheet, the cash flow, the return ratios. We look at shareholding, street cred. Street coverage is not there, and therefore we look at outlook and we look at valuations. Again, it's going to be critical to understand each of these individually, and then thereafter take a full snapshot at the end and see how it's looking. Let's look at the income statement to start off. Again, it's an impressive looking number in terms of 3-year growth CAGR. It's around 19 odd percent. EBITDA growth is around 25%. That number is EBITDA and EBITDA margins. You're looking at net profit growth of 48%. There is two pieces here which I'm concerned about. Your EBITDA number is up 25%, yes, but the EBITDA margin number is at 14%. The guidance is 24%. How do they scale up to that number? That's point number one. Point number two, the revenue growth, while it's 19% 3-year CAGR, you're looking at 1-year revenue of less than 10%. It's just about 8% growth on a 1-year basis. Look at the way the numbers have shaped up. 955 crore in FY24, and thereafter FY25 we've seen it at just 1031 crore. So you want to see whether that number can improve substantially, and which year will that kicker come in really, because that's the year you'll be waiting for. So that's how it's shaped up in terms of top line. Now let's talk about the margin picture. The margins have been between the 12 to 14% bracket. It's been 18% in FY23, but broadly in that range. So you want to see whether there is a kicker in which year will that come in. And profit after tax, you see how erratic it is. You're seeing FY23 fall. Now there are one-offs, I don't doubt that. I want to understand, of course, from management whether those one-offs can be corrected. But for the moment, you're starting to see an improvement. So therefore, and the FY26 guidance too is around 160 to 180 crore in terms of profit after tax. So it's going to be a sharp increase from here as well. So I want to kind of figure out as to whether this can continue in terms of profitability and the one-offs can be pushed to the past. Really, that's the question. But let's now talk about the balance sheet, frankly, because that looks decent, in good shape, if I can call it. You look at the net worth, around 350 crore to 650 crore in the last 3 years. You've also seen an equity raise happening at around 658 odd rupees a piece. You're seeing borrowings which are coming down consistently through equity raise and through the fact that there is some amount of decent cash balance which is coming at the end of every year, because it's a cash profit which the company is making, and therefore it's headed in the right direction. Fresh investments, where will it come from? How much of that will impact profitability as well as that borrowing number is something that you want to look out for. But for the moment, on a 4,000 crore market cap, you have around a 200 crore of debt excluding lease liabilities. Not looking too bad, right? So that's how I would consider this number. So that's on the balance sheet front. Let's look at the cash flow now. Cash flow is largely lined up with the way in which profitability is going up. So no complaints here. There's a steady increase with regard to operating cash flow. That's what I looked for. The net cash flow may be muted because you're seeing borrowings getting repaid, equity issuance is happening. So there may be some bit of erraticity in that number. But when you're looking at operating cash flow, it's on an improving trajectory, something that looks good. I want it to scale up fairly significantly, maybe in FY26. And I'm looking for that kicker. And I'm going to ask management whether that will happen or not. Let's now look at return ratios. Now, return ratios are not impressive, frankly. Just look at the way in which return ratios have evolved. This is as per Bloomberg numbers, 11.5% for a company in this kind of a business. You would desire more. So there's much more to be desired with regard to return ratios. Not too happy about it. We believe that this is a thumbs down, and therefore we're not giving this a favorable rating of any sort. I want to wait and watch whether that return ratio number can improve. Let's look at shareholding now. In terms of shareholding, there's a decent amount of holding which the management currently has, and I'll quickly pull that number out. The management holds around 60% even post the dilution that happened in January of 2024. So despite that, you have a decentish holding in terms of promoter ownership, and FIIs don't hold it at all. DIs, there's very little to no participation. The public though own a decent chunk, and therefore that's how really the shareholding is shaping up with regard to this one. A thumbs up only from a perspective that there's a strong promoter ownership. You have Jupiter Capital, which is owned by the promoters of Axis Cades, which owns around 60% of the company. So again, something to look out for. That's with regard to the shareholding. Let's now look at the street cred. There you go. Look at the 6-month performance, extremely strong. Look at the 1-year performance, even better. The year-to-date performance, 50% plus. No complaints whatsoever. The 5-year performance is even more impressive, 34x in the last 5 years for the company. So, no complaints here. We'll have to give this a thumbs up. It's a very, very strong show over the last 3 to 5 years on a consistent basis. So again, that's something which is impressive. Let's look at outlook now. In terms of how the outlook has shaped up, they've guided for 8,500 to 9,000 crore number by 2030. They've said margins will go up from the current mid-teens to 24% at the very least. That's what they're saying. So if you just try and look at the numbers, you have 1,000 crore top line currently, and let me be absolutely precise, 1,030 crore top line currently. On $1 billion revenue number, this will mean that it will have to go up at least 8x. And then you will have a kicker coming from margins as well. So it will be an extremely impressive show if this were to play out. Let's look therefore, they want to move towards product business. We've spoken about this. They also want to pivot 80-20, which they currently do services to product. They want to move to product. They're targeting a reversal, 20 from services, 80 to product. So that's how it will shift. And they plan investments for developing new proof of concepts and products as well. So we'll quiz management with regard to the capex as well, and that's how it will shape up. Let's look at last off the valuations as well on this one. Currently trades at around 59 times price to earnings, so certainly not cheap by any standard. But the guidance of 160 to 180 crore, and let's assume that they do 150 crore, will leave this one at 30 times 1 year forward, which again doesn't look impressive, but there's a lot to be done, frankly. So we'll give this one a neutral with regard to where valuations is concerned. Quickly looking at all of the ratings as they stack up, let's look at the income statement first. Income statement neutral, balance sheet, cash flow, return ratios. Let's look at shareholding, street cred, no concerns. Outlook is a neutral, want more and want to see how they will execute. And then you have valuations also, which is neutral. Want to wait and watch whether that real kicker plays out. Let's bring on board Mr. Murali Krishnan Desayan, who is the Chief Operating Officer at Axis Cates, to talk to us about exactly that. Welcome, sir. I want to start off objectively. Why does the FY24 number look sluggish when you have such a strong outlook through to 2029? And what gives you the comfort that you'll do that 8,500 crore in terms of top line by then?
Good morning, Harsh. Hope I am audible. Thank you, NDTV. Thank you for this opportunity. So, and thanks for this introduction. Yes, Axis Capital is very optimistic of reaching 9,000 crores in 2030, and that is because of the key domains, the core domains that we operate in, and the track record of 3 decades of impressive products that are already developed and matured, and they are in the market. So with all these things, we are only at 25% products and remaining is in service. So we want to flip this and play on our core competence and ensure that our model becomes 80-20. Therefore, we are very confident that we will achieve our $1 billion aspiration and vision.
So why the 8% growth in 2025? What's held you back?
80%. See, last year we have revamped the management, and we started focusing on the core. So while we operate on very many verticals, so there are a few verticals which are niche and which are strategic to the organization. Number one. Number two, so there were post-COVID increases happening in sectors like aerospace, which have come back after a strong dip. And there are some programs which are happening in 2026 instead of 2025 in defense. So this is known fact for us, and we are going to come back strongly in the years coming to come.
So FY26, what will your top line be, sir, and how will the margins evolve?
See, we have indicated our margins are going to grow by 50%, and accordingly the top line would grow proportionately, and we are very bullish about it.
No, sir. Sorry, I didn't catch that. So, top line FY26, what is the number that you're targeting?
See, our core domains are going to grow more than 30%.
Okay.
The defense is going to grow by 35%, aerospace by 35%, and ESI would go more than 50%.
Okay, understood. So that will take your top line at least to, I would reckon, 1500 odd crore, if I've done the math right. Okay.
Yes, it would.
And margins, where would margins lie, sir, for FY26?
The FY26 margins we have indicated, and it is going to go substantially upward. So we are going to improve margins more than 50%.
Okay. So margins will hit 20%. Would that be right?
Margins would, see, eventually, now it is in teens. Eventually, as we explained, it will go near 24%.
Correct.
So
But
300 BPS
for the
would be
immediate,
the annual increase that we are expecting.
For FY26, for the immediate term.
So it will increase by 300 BPS.
Okay, 300 bips for FY26. Understood. And so this 30%, 40%, 50% kind of growth that we're expected to experience in FY26, somewhere closer to 40%, do you expect that that clip will continue to 2029? Will it be a steady 40%? Sorry, will it be a steady 40%?
See, number one, it will be steady increase.
Okay.
So which will give us the 300 points increase. But that won't be adequate for our billion-dollar vision. We would also have step increase, non-linear increase coming from additional areas such as we are putting up an infrastructure for defense manufacturing, integration, testing. That also includes our ESI infrastructure. We are coming up with this infrastructure both in Bangalore as well as in Hyderabad. So this infrastructure will help us flip to not only a services company, but to increase our product manufacturing and MRO. So those things would help us do a step change and non-linear growth that would help us push towards billion-dollar company.
Okay. How confident are you of becoming a billion-dollar company, or rather a billion-dollar revenue company by 2029?
Yes, 2030.
How confident are you, sir? Very likely.
So we are 100% confident.
Okay, understood. Talk to me about how the balance sheet evolves. You're saying you're making investments. You've reduced your debt. How should balance sheet look like in terms of debt number over the next 2 to 3 years?
So in fact, though you have shown a debt of 190 crores,
yes.
So we have the net debt of only 15 crores. So
yes.
We have cash in bank, cash, and then also margin monies.
Correct.
So therefore our debt is very, very less. So our investments for the infrastructure is being funded internally for the phase 1, and we are looking at strategic partnerships for our subsequent phases of investment. So therefore I would still say that our debt equity ratio will continue to be healthy as we move forward for next 3 to 5 years.
So will you consider fresh borrowing in a large fashion? No. That is the short answer.
Not in large, yes.
Okay, understood. So cash flows, some receivables going up, you work with government entities, is that a challenge?
It is not a challenge. In fact, if you see, our cash flows has been really healthy. So we have literally no bad debts. And whatever increase in this
debtor days
is because...
Sir, debtor days have gone up, receivables have gone up, and hence I'm posing that question.
Understood. So that is because of the recent increase in our defense programs, and we have built it in the last few quarters. Right. That will eventually come in the subsequent quarters. That is not a risk at all.
Not a risk at all. Okay. So how much of your top line is at risk because of US tariffs, in your opinion, or is there no risk at all? Because, and I also want to couple that with competition. Is competition very high, and therefore is that risk very real?
So US tariffs have not impacted us much because our revenues are distributed. So, and we are also this tariffs for other countries also is helping us because customers are coming to us for more alternate supply chain and alternate solutions.
Where will your margin accretion come from? Currently you're 20% on your core, but on auto you're on negative. Is that where the margin kicker will come from?
We are already in the process of recalibrating our heavy engineering and auto practices.
Okay.
So we are totally converting that into our core. So that is one of the reasons. No, the margins that are impacted, it is already showing a positive trend in Q4. It will continue to the impact on this auto and heavy engineering will continue to reduce, and that will convert into our core margins. So we are already in the process of revamping it and recalibrating it.
Very interesting. Thank you so much, sir, for joining us and giving us those candid answers. Of course, extremely interesting company, because if they were to do 8,500 crore in top line, in terms of the way in which at least they're confident and they're guiding, and if they do a 24% margin, that will mean that they do an EBITDA in a single year of 2,100 crore with negligible debt. And they're currently placed in terms of market cap at 4,400 crore. So in the next 3 to 4 years, you want to watch out and see whether execution here happens. That's going to be critical. It's already been a multi-bagger. You want to take care of that as well. Completely out of time on this edition of KYC. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the
during our lifetime.
What are the rules on gifting, Sanjay?
Stamp duty is payable on an instrument which is in writing, document which is creating a record saying that you had gifted in the past.
So how do you ensure that it does stand up to that being contested?
And at least people who are bickering or who are quarreling, okay, are not that bothered because it's just 10% of what you left. Don't mingle them. Don't put
create
more
separate
than, yes, create
trust.
separate trust for each of them. Whatever asset you want to give, do it. How much do you require?
The writer Bill Bryson has a way with words. He describes the miracle of life. In the introduction to his book, A Short History of Nearly Everything, Bryson writes that the constituents of the human body can be found in any chemical laboratory. Imagine that. The thing is, at the fundamental level, the atoms that are so invested in coming together in the unique way that makes you, decide after a certain point to disperse. Death. It's not the most comfortable topic to speak about, but it is an eventuality that we can prepare for, and we should, in fact, prepare for. For most of us, our concern is not for ourselves, but for those that we leave behind. And so, today, on MoneyWise, I'd like to find out for you how best to ensure that your hard-earned assets are distributed the way that you want. In other words, I want to talk about succession. Joining me today is Sanjay Ashar, who is a senior partner at Crawford Bailey. Sanjay, thanks so much for taking the time.
Thank you.
So let me start by asking you this. You've seen decades of people contemplating this, maybe not finally signing on the dotted line. Why, in your opinion, are people so hesitant to set up everything so that the next generation doesn't have to worry? Is it fear of death?
Maybe it's fear of death. Maybe one doesn't know that if it's your hard-earned money, whether it will go to the next generation or you are leaving behind for your kith and kin, whether it would go in a timely manner, whether they will be able to enjoy, whether there will be any difficulties in implementing what is written in the will or what is your wish. Because from your grave, you cannot control anything. So how do you control it, or how do you do, or what do you do rather, a mechanism whereby you are able to effectively pass on your hard-earned assets to your loved ones. Now, will, of course, is one of the way by which you do it you can bequeath your assets to somebody whom you would want to bequeath it to. However, I would suggest the following, which is that why can't we transfer the assets during our lifetime?
Oh, that's an interesting thought. So you're saying before it gets to, and everybody talks about this, and I've had this conversation, Sanjay, so many times over the course of the last several years, the need to have a will to ensure that everything that you want to transfer goes to who you intend it to be transferred to. Because if that doesn't take place, you have nominees, of course, or your legal heirs can back
6.5%. So naturally, you're talking about a deflator number which is close to 3.3%. And moving on, the sectoral compensation of the gross value added is services sector is close to 55%, and the secondary sector, which is both manufacturing, mining, utilities, etc., is about 27%, and the primary sector is around 18%. The important thing is the interesting chart on the right side, which my team has nicely put together, giving you a flavor of how this growth rate stacks up with the pre-COVID growth rates. If you look at agriculture, it was 3.6% on average in the pre-COVID 7-year period, compared to 4.6 in this financial year. Industry numbers are about 5.9% versus 5.1% for the period average. And services sector, 8% period average versus 7.2% this financial year. And if you look at the overall domestic demand perspective, as the headline suggests, we have a fairly robust domestic demand. Private consumption share of GDP has risen to the highest level of around 61.4% since all the way going back to FY 2004. So it's the highest in 2 decades. Gross fixed capital formation is nearly 30%. As a percentage of, these are, by the way, as a percentage share of GDP at current prices rather than in constant prices. That you can see on the left side. So, and then we have export of goods and services about 21.2%. Imports are shown as a negative number in the bottom below the zero line. So overall, we can see that private consumption is holding up very well, and capital formation is very steady at around 30%. And in the fourth quarter alone, real GDP growth picked up after the first 2 quarters because of election-related slowdown in expenditure, and both in the public sector and in the private sector. You can see that fourth quarter GDP numbers are at 7.4% year-on-year compared to the previous final quarter of FY24. And then again, on the right side, you see the comparison between India's growth rate in January to March quarter compared to other countries, and India has again performed better than contemporary economies. In terms of the growth drivers, in it is off season, so to speak, whereas industry has picked up quite significantly after the first 2 quarters of slowdown. And monetary policy may also have played a part in terms of boosting liquidity and credit conditions. Growth has maintained its overall growth rate throughout the 4 quarters. And as we showed in Q4 in particular, private final consumption expenditure did quite well, and so did, in fact, the big improvement was in the case of capital formation in the fourth quarter. These are also once again as a percentage of current prices rather than constant GDP. We also wanted to show you, in general, there is a perception that India's growth rate has slowed down after the first 3 years post-COVID, FY 22-24, and FY 25, 6.5%. I think it's important to understand that globally it is a growth scarce environment. Some of you may recall that in the annual World Economic Outlook, semi-annual World Economic Outlook, that the IMF, International Monetary Fund, brings out April-October. The April edition came out badly a month ago, and global growth numbers have been revised lower for current calendar year 2025 and 2026. Now, if you look at India's growth differential in real terms, what we show here is that real GDP growth of India, the blue colored bar, real GDP growth of what IMF calls about 30-odd advanced economies, and the difference is the green line that is charted. So now the interesting thing is India's growth in comparison to the average growth rate of advanced economies was on the lower side in the boom era between 2003 and 2010, despite one COVID year in which Indian economy did quite well, even compared, not the COVID year, the global financial crisis year, even then the Indian economy did much better than advanced economies. And in 2009, advanced economies suffered a contraction. India's 2009-10 growth rate was actually on the higher side. But the point is, the growth differential in this period, post-COVID, the black line shows you, is higher than the growth differential in the boom era period. In other words, India's performance in a relatively growth scarce environment post-COVID, and in spite of the rising uncertainties due to geopolitical conflicts and trade tensions which predate 2025, I think India is actually holding up its growth numbers better than many advanced economies as well. I think that is something that we need to internalize quite a bit. That is why we put this chart together to show you that it is not the absolute growth numbers alone that matter, but how growth is holding up in an overall growth scarce environment is equally important. In the economy itself, as we now move into 25-26, how are things holding up? Because we are now 2 months into the new financial year. Actually, what is interesting to note is that both manufacturing and services, the purchasing managers indices on your top left, they are firmly in the expansionary zone. Then you look at the e-way bill generation, picked up year-on-year growth rate, actually improved to 23.4% compared to 20.2% in the previous month. And then on the bottom, you look at the average hotel occupancy rate in April was slightly better than March 2025. And then if you look at the port cargo activity, again, was much better than what it was in April 2024 and in April 2022. And growth in air cargo is 11.5% compared to 10% 1 year ago. So, or even for that matter, minus 4.5% in April 2023. So clearly, the momentum of the economy, which picked up in the fourth quarter, is continuing into the first quarter, and that's a good sign. Also, steady urban and rural demand. We covered many of this in the monthly economic review, but we just wanted to use this opportunity to share with all of you. If you look at the fast-moving consumer goods, in the fourth quarter in FY25, rural consumption was high single digits, urban consumption was slightly on the lower side, and domestic air passenger traffic in FY25 was consistently across all months above the previous 2 financial years. And vehicle sales overall, three-wheelers, passenger vehicles, and two-wheelers have been maintaining their steady upward momentum. We are giving you the year-on-year growth numbers for April 2025 in the small box tucked in between the two charts. And the tractor sales performance in FY25 was 9.4 lakh tractors sold, almost as high as 9.5 of FY23 and better than 8.7 of we all know very well that the headline inflation rate is converging towards the target, and the food inflation has eased. And it is a good news that the Met Department has predicted both spatially and temporally well-distributed monsoon in the course of the next few months, and that also augurs well. So I think the conditions are in place for a low inflation, steady growth environment supported by monetary policy and also the fiscal stability, which is resulting in a very, very record tightening of India's 10-year bond yield vis-a-vis the American 10-year Treasury note yield as well. And in terms of the external sector, core merchandise exports, what we call core is basically non-petroleum, non-gems and jewelry exports. Core merchandise exports was $344.3 billion compared to $320.2 for a growth rate of 7.5% compared to the growth rate of 0.1% in FY23 and 1.4% in FY24. So there was a pickup in the core merchandise goods export growth. And if you look at the performance in April 25, it is definitely doing much better than the previous 2 Aprils. In terms of services sector activity, the balance of services trade, the surplus of $189 billion, higher than 143.3, 162.8 surplus in the previous 2 financial years. These are FY24 is a provisional number. And the services trade per se, in FY25-26, the first month of April, you can see that on the small box in the bottom middle, it is $35.3 billion of exports compared to the previous 2 Aprils, much better. And so is the case with exports, but with imports. But therefore, the gap still is close to about $17.8 billion, which is much bigger than the surplus earned in the previous 2 Aprils. And forex reserves are at their all-time highs. In terms of the months of import cover, it is very comfortable at 11 months. Gross FDI flows have been extremely very high, signaling continued interest in the Indian economy. The net FDI numbers are on the lower side, of course. We all know that, partly because of record repatriations and also partly because of record overseas direct investment by India. But thanks to services sector surpluses and remittances, etc., overall current account has been extremely well funded. And FPIs, while they may have been relatively willing to take profits from the Indian equity markets in the course of 24-25, they have come back in the last few weeks to the Indian market, given the overall macroeconomic stability that India offers. So the external environment poses no funding risk, but at the same time, we do have to increase our efforts with respect to attracting FDI in terms of global supply chain, China plus one, etc., as the global trends give us new opportunities and openings here. The central bank's monetary policy, the cash reserve ratio, and the policy cuts are expected to aid liquidity conditions and credit growth. We can see that liquidity conditions have improved on the back of the RBI operations. And overall credit growth is at 9.9%, which is above the nominal GDP growth of 9.8%. And if you look at specifically in terms of capital formation and how downstream finished goods production is supported, you can see that capital goods imports have been steadily rising, and the share of capital goods imports is somewhere around between 20 and 25%. And if you look at the overall domestic production of capital goods in terms of index and infrastructure goods, they have been steadily rising as well. Basically, for the level of economic activity, given overall uncertainties, the infrastructure goods and capital goods production and imports are well supportive of the growth expectations in FY 25-26. The Ministry of Statistics has also come out with the first time survey of capital expenditure intentions on the part of the private sector. It's the first survey, and they did point out that there is some bit of reluctance on the part of the survey participants to share their capital expenditure plans with the public authorities, and that probably signals why FY26 numbers have been on the lower side. But what is interesting is that the FY25 numbers were a big improvement over what was happening in FY24, and that showed up in the GDP numbers when we saw that there was a big increase in the share of overall gross fixed capital formation as a percentage of GDP in FY25, which we saw in an earlier slide. So there is a consistency in the data. But at the same time, we don't need to overread into the number given for FY26, as the footnotes by Ministry of Statistics itself clearly cautions us because of the reluctance to share full details on capital formation. And the intent on the CapEx side, broken down in terms of sectors, manufacturing, information and communication, transport, and others. So it's interesting to see manufacturing occupy a very good share of the overall CapEx spending intentions in the coming financial year, in the current financial year. In terms of the private sector data on quarterly announcements of new projects in March 2025, 14.4 trillion rupees or 14.4 lakh crores, and capacity utilization has been steadily rising, which augurs well for capital formation, not to disappoint in the course of FY 25-26. In terms of labor market, again, Ministry of Statistics is now beginning to publish monthly All India numbers. Urban unemployment rate has been coming down, and the labor force participation rate is on the high side. And in terms of monthly data, we are seeing in April 2025, labor force participation rate is 55.6%, and the worker population ratio is 52.8%, and unemployment rate is steady at 5.1% on all India basis. And net payroll additions in FY25 were close to 130 lakhs or 1.3 crores. Overall, new members growth has been steady in the last 4 years, close to around 80 to 90 lakh of people. But the net payroll addition has been more than 1 crore every year. Overall outlook for the economy, in general, I think in the circumstances, which is why we have been sharing with you comparative growth performance of other countries and also comparing the growth differential with advanced economies, both in the boom era in the first decade and now, Indian growth performance has to be seen in that context. This is globally, because of uncertainties, growth is expected to slow. India has faced, therefore, similar forecast cuts from global forecasters, but at 6.5 to 6.3 to 6.8%, which is what we have. In our estimate, it is still a very good growth performance in the current context of geopolitical and geoeconomic uncertainties. High frequency indicators, we spent some time with you sharing how the trends look for the current financial year. The start is quite good and the monsoon forecast is good. Monetary policy is growth friendly. Inflation numbers are supportive of a growth-friendly monetary policy stance, and all of them together augur well. Or in fact, just before I came into this call, I was reading the weekly Greed and Fear by Mr. Christopher Wood, a long-standing India bull, and looking at the spread between Indian 10-year and US 10-year Treasury, he writes that to predict that one day the Indian 10-year G-Sec yield might be lower than the US 10-year T-note yield is not too far out because the spread used to be as high as 600 basis points, but the spread has come down to around 170 basis points these days. So that was quite interesting, and that is partly because of the exceptional commitment and adherence and also accomplishment with respect to fiscal policy goals. Now, it obviously helps the entire economy, the fiscal prudence, because of lower cost of capital. When the benchmark cost of borrowing by the government drops to 6.2%, interest rates across the spectrum in the private sector will also be capped. In that sense, it will also come down. So I think the fiscal policy stance has actually been stimulative for the economy through its impact on the cost of capital. We spoke about inflation being benign, monsoon expected to be good, etc. Export performance, again, within the context of uncertain global trade, we have done very well. Merchandise trade growth has picked up last year, and so did service sector surplus continuing into the month of April as well. And the decline in crude oil price from around $80 per barrel to the 60s, and we all expect OPEC to announce another production increase in July as well. And considering that, I think clearly the upside to crude oil prices seem to be capped, and that is a good news for India as well, from both from a fiscal perspective and from a consumption perspective. Central bank rate policies are going to diverge globally because some countries are looking at stagflation risks, whereas India is looking at this moment, in the context of where the world is, a fairly benign growth inflation environment. So we retain our growth outlook as something between 6.3 and 6.8%. Private consumption, especially the rural rebound and resilient services sector exports and steady capital formation as key growth drivers. Of course, international agencies are adjusting their growth numbers depending on global developments and domestic developments, and those the range is very similar to the kind of range that we have. So all in all, I would say, given the global environment, our economy is doing quite well. And if we continue with the efforts to bring in more foreign direct investment and the private sector, if it continues its increase in capital investment, which we saw in 24-25, and urban consumption picks up on the back of, let's say, better capital formation, hiring, and compensation, then we can probably achieve a growth rate which is at the higher end of this range. If not, we will be closer to the lower end of the range of 6.3 to 6.8 that we have. Global risk factors would naturally be, of course, how the global financial markets behave, because in the last several weeks, from the middle of April until now, global financial markets have recovered, and so have Indian financial markets. and global bond yield also have come down. So overall, if there is renewed financial market volatility, etc., bringing additional layers of uncertainty, that will naturally cast a shadow. These are the risk factors we are tracking. You are reading about them in the monthly economic review as well, and we will keep you updated on that. With that, I end my presentation. As I said, we have a representative from MOSPI on this call. He will be happy to answer any technical question that you may have. Now the floor is yours. I request my colleague, Ms. Dr. Nanu Basheen, to moderate the Q&A session. Thank you very much.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I have decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
We have Kaustubh Jabal joining us this morning. He's Senior Vice President at Moody's Ratings, tracks the auto space as well. And they've put out a report, an in-depth report actually, on the automotive space in India, saying local and foreign car makers vie for share of India's market despite slow electrification. So very interesting report on what the EV space is. Kaustubh, good morning and thank you for speaking with us here at NDTV Profit. Great to have you on. Before we come to the report, and just because it's top of mind, any view on Bajaj Auto and the numbers that have come through?
Well, I'm not the lead analyst on Bajaj Auto. We don't have a rating on Bajaj Auto, but I can talk more broadly about the auto industry and our view through 2030, if that's all right.
Go ahead.
Well, we believe that India is a bright spot for car makers globally. India is the most populated country on planet Earth, as we all know. India is home to almost a fifth of the world's population. The country's population will continue to grow for the next few decades until it starts to plateau. And the car penetration in India is quite low, right? The number of cars per 1,000 people at less than 45 suggests that there is a roadmap for growth. Potentially, the car industry we forecast will grow at a CAGR of around 3.5% through the end of the decade. India's economic affordability is improving. Among emerging markets, India has a large working population. Its age dependency ratio, the proportion of dependents to the working age population, is also declining. So that's good. And today's youth from India also has an increasing propensity to spend. Rising income levels are supported by this propensity to borrow and spend. Over the last 12 odd years, we've seen vehicle loans have grown at a much faster pace than overall bank credit. So, these demographic dividends, we believe, continue to weigh in terms of the India's car industry's prospects through the end of the decade.
How do you see this? Hi, Kaustubh, good morning. How do you see the mix of ICE, which is internal combustion engine, versus EV and hybrids, really, which have not gotten a large share for various reasons, tax being one of them. But how do you see that mix going? Do you anticipate that it will continue to be dominated by IC for the foreseeable future?
Oh, indeed. I mean, electrification in India's car industry is in early stages. It's quite nascent. Penetration rates are quite low at below 2%. And if you compare this with the target, the government's target of EV penetration rates of 30%, there's a lot of ground to cover. EV adoption rates in India are low because of limited charging infrastructure, the higher upfront costs, and some bit of consumer hesitancy as well. I think China's success in building their robust infrastructure in terms of nationwide charging, localized production, that offers a good amount of blueprint for India to follow, especially if we want to reduce our reliance on oil imports. We forecast that battery electric vehicle sales, so pure BEV sales, will increase from the 2% penetration I spoke of before to around 12 to 15% by the end of the decade. So to your point, I mean, still by the end of the decade, large amount of cars are still going to be ICE, right? Internal combustion engine, vehicles. And which is why this remains an attractive market for global OEMs, global car makers who are selling electric vehicles in regulated markets, who will continue to sell in those markets, but they need to find or they need to sell their ICE vehicles in a market, where there still is demand. So I think India remains, attractive proposition from that standpoint as well.
Kaustubh, there was good morning. It's still good morning to you as well. Yes, so good morning to you. And just wondering the rumblings that BYD, for example, might be causing world over. India doesn't have such a large BYD presence, but if indeed in the non-conflict areas, which is the UAE or Singapore or wherever else where BYD is present, and if they're cutting prices, expanding sales, etc., does it put incremental pressure on other car companies to be very conscious on pricing or maybe take it lower? Does it come at the cost of margins? Does it therefore impact the ratings because it might impact profitability? How do you think about that piece?
Well, I mean, globally, when you look at the car industry, electric vehicles in terms of profitability are not that profitable, right? Because of the upfront cost, because the elevated cost, especially because of batteries. And until such time that the cost of batteries comes down, they need to continue to sell ICE vehicles in markets because those are the ones that are more profitable. So as battery prices come down, and they have indeed come down over the last couple of years, right? As battery prices come down, I believe the transition from ICE to EV from a consumer standpoint would also be easy. So, and in that vein, I think the investments that are happening in India in terms of laying out that infrastructure, the charging infrastructure, that will come in handy. So basically, that transition from ICE to EVs, we are talking about 12 to 15% penetration by the end of the decade. I mean, if you look at China, the pace at which it's grown in terms of electrification, it was all with the subsidies, of course, that were offered to the wider public, but also with the charging infrastructure. So if we put that in place, and if the battery prices come down, then obviously that's a transition that would be welcome.
Yeah, absolutely. You said it. But all things considered, Kaustubh, since you've studied the space, I'm just curious, among the Indian manufacturers, the OEMs, who according to you stands to grow much faster than the rest of the pack, not just because of its products, but because it has an increasing footprint globally? You have Indian companies that are looking to export also.
Well, I mean, in terms of the Indian car market, it's a crowded space. We have Indian as well as international car makers. The Indian car makers have increased their market share over the last last decade or the Japanese have lost market share, but they've lost market share in a growing market. It's a very competitive space in India, and some of these foreign car makers are also using or also manufacturing in India and using India as the manufacturing base. Now, from a car maker standpoint, I mean, product development remains on top of agenda, right? I mean, so the Indian car makers obviously, have to focus on the Indian market and have to develop products for the Indian market, whereas the foreign OEMs that are operating in India can use the product slate that they have for the for the global markets and tailor those products for the Indian market and sell those. In terms of preparedness, if you ask, I think every OEM that is operating in regulated markets is at some stage of electrification in terms of the development. But the proof lies in the pudding, right? I mean, electric vehicles are still not that profitable. So, for instance, the large automakers, say Toyota, for instance, who sell EVs, but in terms of the proportion of EVs to the total car sales, it's still low, but still on an overall profitability perspective, they remain quite high.
Just a word, Kaustubh, on the competition heating up in the two-wheeler space. In your assessment, is electrification going to be a larger driver in that segment compared to passenger vehicles? Because you've spoken about the issues with passenger vehicles, infrastructure, etc. How do you see key players stack up in the two-wheeler space?
Well, while this particular report that we published focuses on four-wheelers, I mean, the pace of electrification for two-wheelers is far more accelerated, right? I mean, the cost of a two-wheeler is also, significantly lower. The amount of investments are low, as well as the charging infrastructure is lower. So the government's targets on electrification for the two-wheeler industry are also far more accelerated, and companies are progressing on on that front. Companies are also partnering or investing in in startups to get ahead in terms of getting the right technology.
Kaustubh, thanks so much for joining us this morning and for that perspective on the automotive sector. Pleasure having you.
Thank you for the opportunity.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out.
Rakesh Sharma, ED at Bajaj Auto, joining us now on NDTV Profit. Mr. Sharma, always a pleasure to speak with you, and thank you so much for joining us. Looks like a robust quarter, better than most estimates. I suppose the one fly in the ointment would be domestic sales and how they've been progressing, but you do see a turnaround there.
Yeah, indeed. Certainly the area of the 125cc plus segment, which is the top half of the industry, is a key area of focus for us. And there has been some erosion of market share over there. But, to put it in perspective, this segment really started surging post-COVID. And at that time, 3-4 years ago, we were at 19-20% market share based on registrations. And that sort of grew to 25.5 in FY24. And in FY25, we are down by about 1.5% as per our estimates. But we rather take this very strongly and react fast, because our ambition, of course, is to be at the leadership position in this segment. We are about 5-6 percentage points behind the number one. We are at a steady number two, considerably ahead of number 3, number 4. So we prefer to overreact. We have put in certain countermeasures in terms of expanding our portfolio to cover all the sub-segments in the 125cc plus segment. And we have seen some early signs, too early, but we are seeing some positive signs in April. And hopefully, during the course of the year, we should be able to wrest back the market share and grow faster therefore than what the industry is going to grow.
May I ask you to elaborate, sir, on some of those strategies that you've mentioned and you're seeing green shoots in April itself?
Like I said, we have introduced new variants to cover more subsegments. We have introduced 6 variants so that, all kinds of customer cohorts have a choice which is apt for them. And these range from, very simple commuter variants in the 125cc to a very high performance upgrade in the Pulsar NS400. So with the expansion of the portfolio, I think we've got a man-to-man marking, and we would be having for each competitor, and there are 3-4 competitors we compete with because we are straddling the whole segment, we would be having a model facing off with competitor models.
Right. With the 125cc coming in, would it be right to say that that will probably ease out the profitability pressures as well from higher share of, what came in on the back of higher share of two-wheelers, that's the entry-level ones, and the EVs? And secondly, the average selling price to an extent will improve further as well in terms of FY26.
Well, the profitability, as you know, has held rock steady at 20% plus over last 6 quarters, despite the ups and downs in the environment and the rise of the electric vehicles business, which was in FY24 10% of our domestic revenues, which is now doubled to 20% of our domestic revenue. So there has been a lot of dynamic management. It's been very helpful during the last financial year to have a slightly softer rupee, because it improves the realization and that drops down to our margins. Going forward, we will continue with the same approach of dynamically managing and trying to optimize growth, bottom line, and market share. Having said that, we will see some support from exports to KTM returning, because they were always at much superior margins. Overall exports continuing to clock 15% plus growth, and perhaps a steady cost environment. But the headwinds really are going to be, the hardening rupee. Already you know that towards the close of the last quarter, the rupee appreciated, and that would be a strong headwind for us to manage.
Right.
So we'll have to manage both these, the support and the headwind, and see how. But the aim, of course, is to always deliver a better class.
So Rakesh, interesting point that you made about KTM as well. Yes, the anticipation is it will start delivering in the second quarter of FY26, and that's what you've mentioned on the conference call as well. But taking KTM into its exit with regards to bankruptcy, how long will it take for the company to get back on track, and how substantial or how confident is the company to deliver on that front so that it supports this recovery that you've seen in the export business?
So the exports to KTM have already commenced in quarter one. Recommenced in April. There was a gap when they became zero because of the severe liquidity issue. There have been 2 sets of actions. One is to solve immediately is the liquidity issue at KTM and the paying off of the paid down debt. You know that there was a court supervised process where the creditors had accepted a 70% cut, and that 30% had to be committed by 23rd of May. And that has been done. The second set of actions is our intention to take majority control in KTM. That is subject to regulatory clearances, both in India and overseas, which may take a couple of months. We obviously believe that this is a very sound opportunity for us. We have been partners with KTM since, though at a minority level, since 2007. We have produced over 1 million bikes for them, which have been sold in 80 countries. We have an inside view on the deep franchise and the differentiated franchise which the KTM brand enjoys all across the world. And of course, there has been a convergence of unfortunate factors, the demand falling off, the e-bike business loss, the misreading of the volatility in demand, and the expansion of stocks and working capital. But the customer franchise remains quite vibrant. So we are very optimistic that it is a great opportunity. As soon as the regulatory clearances are through, we will put our shoulder to the wheel along with KTM and see how it can be brought back on track, ready to race as soon as possible.
Just want to understand, Mr. Sharma, just on the EV strategy, and I know you referred to it briefly, but I want to get a little bit more into it. Is that the next growth driver you're seeing? Because the trajectory is there, but the margins perhaps are not.
Well, it's a process, Tamanna. So we've always been saying, even in the days when people were saying that, oh my God, now EVs are going to replace ICE. We on the ground, we never felt that EVs will replace ICE. I think companies like ours, which have a global business spread in 100 countries, and even in India, which is our major market, we will see the coexistence of different formats because these address different use cases, and the customers' needs are very, very diverse. So we feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by Q4 of FY25, our EV business, which comprises both three-wheeler, e-auto, and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course it is less than the the best in class margins we have, but then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business. We were not in scooters. So this is a new segment which has become available to us in India and subsequently overseas. Similarly, in three-wheelers, the EVs are going, e-autos are going to areas where ICE autos were largely restricted, and we couldn't do business.
That's fine, sir. I'm not alluding to any cannibalization within segmentation. I'm just trying to understand if one of the largest companies is ready to make a pivot, and if it's making sense right now to EVs. In terms of a revenue share, where do you see this going down the line?
But that's exactly what I said. There is no need to make a pivot.
Okay.
This is not a 0-1 situation.
It's an add-on.
We feel that ICE and EVs will coexist, and we want to flourish in both. With EVs, there is no dilemma for us that, oh my God, we are replacing a high margin ICE with a low margin EV, because it is a new business for us. Yes, when you put the percentages together, it is lower percentage. But
so Rakesh, I think Rakesh, the question comes in over here is one of the peers who's come out and said for them to see a EBITDA break even, they will need to sell 25,000 units a month. If I have to look at a Bajaj Auto, for the margins to become an absolute lever for the business, to see what the other part of the business is doing, how many units of EV will Bajaj Auto need to sell to get that kind of a number out?
Well, I'm not aware of this maths which you have just...
no, this 25,000 is a competitor, I'm saying. Not for
so
Bajaj
I don't
Auto.
understand where that maths is coming from, but I told you that with our 3.5 series, which I think mentioned last time also, with our 3.5 series in two-wheelers, we are already positive, and like I just said, the entire e-portfolio which we have, which is 20% of our domestic revenues, is already positive. And on an absolute level, it is adding to the EBITDA pool. On a percentage basis at a corporate level, yes. But you see, that happens, that kind of maths is there everywhere. There are 108 countries. There are some countries which are highly profitable, and there are some countries which are negligibly profitable. And you have to manage size, growth, profitability, and a competitive position. So these are not, 0-1 black and white decisions. EV is an important segment. It is there. there is opportunity to make money, and we'll go ahead and do that.
Absolutely. Your point taken into consideration. My last question is with regards to KTM. Post the resolution, post the regulatory approvals, what's the plan with keeping Triumph and KTM business separate in Europe? How will that function? And two, who's going to head the KTM business? What's the strategy there? Is it going to be someone in-house, outside, someone with expertise in the European market? How are you looking at that aspect?
Well, these are very premature questions, but just to address one or two things so that there is clarity, there is no interrelationship between the way Triumph is working. Triumph is a strategic alliance. It's a non-equity partnership that is continuing. Triumph and KTM were coexisting even before this fracas which has happened with KTM. So that is continuing. In KTM also, we have, there is already a CEO over there, very, very efficient and very effective CEO who joined in September last year. And the CEO is building his management team, and they will continue to operate. Of course, once the regulatory approvals are through, we will work more closely with KTM to capture the synergies, primarily at the back end in manufacturing and R&D and procurement, and to some extent in the front end. And that work will begin in true earnest once those regulatory approvals are through.
One last question, Mr. Sharma. We've been speaking about FY25. We've been speaking about a longer term outlook. You mentioned earlier in the interview that April is beginning to look good. Monsoons have hit early. Just want to get your sense of, what the feel is in terms of demand, and are you expecting this to boost?
Yeah, so what I said was that in terms of share, we are seeing improvement sequentially between Q4 and April, May, if I may also add that. But in terms of the industry, we are not seeing a big surge in the industry. Industry is in the, I'm talking of the motorcycle industry in terms of the registrations. It is in the positive zone, but it is not, we are not seeing any kind of surge. So it's a steady equilibrium position in which our countermeasures are yielding signs of some early progress.
Excellent. Thank you so much, Mr. Sharma, for that detailed conversation with Bajaj Auto. Always a pleasure.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
Welcome. On this episode of The Disruptors, we're speaking to someone who we can safely say is the OG when it comes to at least unicorns, definitely. Naveen Tiwari had a unicorn when people were figuring out what do you mean by saying a company has now achieved unicorn status. Of course, founder of InMobi, not stopped at one. Glance is also now a unicorn. Naveen, thanks for coming in on The Disruptors. We've been wanting to have you on for a while.
Thank you for inviting, and I heard you recently started this show, and it's been a massive success. And thank you for doing this show, because I think India needs these kind of programs which actually talk about the disruption that's happening and how the world is changing.
Yeah. So a standard question that I ask people sometimes on the show is, why do you think you are a disruptor, or what exactly have you disrupted? So let's go back to 2007 when InMobi started. Of course, 2011 was when unicorn and headlines and all of that took place. What do you think that product and that idea changed?
At the time when we started, we had a very simple thought that internet on mobile is going to be large. Not many believed us. We said, we believed in that thesis. Smartphones had just started to come out. Apple had just launched the iPhone. Android wasn't necessarily there. It was just starting to come out. So we were like, hey, I think the internet on mobile phones is going to be big. And I remember going to like 40 investors, pitching to them to say, hey, internet is going to be big, and we think we will build the advertising ecosystem that will keep the internet free on mobile phones. Everybody like, okay, advertising is a brilliant idea. There is nothing that's going to happen on the phones. There is no internet that's going to come in on the phone. So please leave. But I think we believed in that. We believed in the principle of mobile mobile computation becoming really powerful, mobile consumption becoming very powerful, and we stayed at it. So I think the idea of disruption is when you believe in something that nobody else believes in, is when disruption happens. If you're doing something that everybody else believes is going to happen, that's not called disruption. That's just called like, hey, I am building, which is a commonly understood thesis. And I think the world requires a lot more of these kind of things, because how do you otherwise change?
So right now anyone listening to this will think that, oh, that's a done deal. Obviously, mobile is going to have internet on it, right? It seems so obvious right now, but for those of you who would remember 2007, it wasn't the case at all. At that point, what is the ability, or what did you see that you're saying 40 other investors did not? What was that thought process then?
It is very hard to explain why you believe something. Because if you could explain it, right, at that point, if I go back to 2007, if I could explain why I believe that, then it's a logic.
You saw something?
No, but there is no logic to it. You just believe that this is going to be the case. And many times you call it a gut feel, you call it a hunch, you call it vision when it actually comes out to be great. But if you go back to that point of time, you're just adamant about it. And there is no logic. Yes, we saw some signs here and there. Ability to be able to make a decision with 20% information or data is what you basically need to be able to do. Many a times you would fail, but those few number of times that you would succeed, the success would be very big.
Yeah. And then stick to that conviction, whether you call it intuition or vision or whatever, even when everyone around you, and these would be intelligent people, right? If you're going to them for money, it's not, just a poll you're taking. And they're telling you, कि ऐसा नहीं होने वाला है.
Correct.
What was the most cogent explanation you heard to say that what you think is going to be the future is not going to be the future, which would have almost convinced you perhaps?
I don't think I ever got convinced. I don't think anybody was cogent enough to actually give you an explanation. Everybody essentially looks for signs that it is going to happen. And I believe as an entrepreneur, you just need to have a strong conviction about something, because that's why you're an entrepreneur. Now, what everybody else says would be to say, hey, it's not happening. There is no way this would happen. All sorts of reasons. The internet is not fast enough on the phone. Everything was actually factually true. Everything was factually true. Yet, you stay at that conviction to say it'll become big. And that's why many a times it's termed as, being irrational. Or you can say, in Hindi you'll say pagal hai, right? San ki hai. But I think that's what's needed to become.
Success ke liye pagalpanti chahiye.
Absolutely. There is no other way you will disrupt anything until you believe deeply about a topic that the world would change in this way, and then it change.
So what was the breakthrough for you in InMobi? And for our viewers, explain what it does, how it's different, and how it was disruptive, the product and the idea way back in the knots, as they call it, 2007 onwards.
InMobi built an ad platform. An ad platform that was for the mobile internet. Many people think of the ad platform and say, oh, I get annoyed by the ads. But the purpose of an ad platform is very simple: to keep the internet free. If we don't build what we do, billions of users across the world will not be able to view and consume internet in a way that it is free to them. So this is a cost of keeping. Our technology is the ability with which we keep the internet free.
So he's the guy serving you ads on your phone. You know where to find him.
Yes.
You find it annoying.
And there are 15 such companies in the world that will do this. And that's why they become so powerful, because across, if you keep the internet free, that's a business model. And it's a very powerful business model, because imagine the beauty of the internet today. The beauty of the internet is that everybody has access to it. Everybody uses everything for free almost. And that's the best part about ad platforms. They are very powerful, very important, core, essential elements of any digital ecosystem. And that's what we built. And we're very proud of it. It's one of the largest platforms globally.
So the breakthrough moment that we were talking about, when you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
We, as I said, I'd done 40 investor pitches, and I had just gotten so used to the no's that it was just painful. I was running out of money. I took on, I was like, okay, nobody in India seems to be, is willing to fund us. And so I flew to the US and I started going to to investors there. So the change between India and the US at that time was to say, everybody believed that an ad platform is required and mobile internet would come. So there was a huge shift. But then everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you. And so now I'd moved from India, I'd gone from talking to the Indian investors who were saying there is no place for a mobile internet in the world to a place where there was a place for mobile internet in the world, but no place for India and Indian entrepreneurs. Because there was no success there is no past, no history of Indian entrepreneur. Now, of course, I was getting very dejected. I was almost done and dusted, had no money, nothing was there. I was staying at a friend's place, going around Silicon Valley, pitching after pitching after pitching. Then one day somebody introduced me to Ram Shriram. He was an early investor into Google, also a board member at Google. And I was just fascinated by the fact that, I'm going to meet Ram. And I was like, okay, fine, this is so cool. I will just go see him. And, of course, he's also going to say no. But you know what? I'm just going to go see him. So I just went out, made a pitch to him. 20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
We will discuss the valuation offline. Tell me, how will you make this big? Well, here is the dichotomy of this. Here is me, an entrepreneur who is almost broke. I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. And I was calculating in that time, I think the exchange rate was 40, 45 or something. So I was multiplying very rapidly. I was 30 crores or something like that. I'm like 20,000, 30 crores. And now he's asking me a tough question to say, how will you scale? I have no idea. I have no idea how to scale because my mind was on survival. My mind was not on scaling the company at that point of time because, I was almost out. And that moment when he said this, I somehow figured out the next 30, 40 minutes of the meeting, came out, sat into my rental car, and I crashed. I slept in the parking lot. I crashed because
You crashed the car or you fell asleep?
No, I fell asleep.
Okay.
I didn't crash the car. I did not ride the car. I was, it just took so much out of you, that moment to say, man, we are going to live. That moment, I remember it so vividly. I just slid into the car and I slept for 2 hours.
So,
in the parking lot.
Wait a minute. So you get out of a meeting, you finally have someone to fund you.
Yeah.
You say this is great, and instead of celebrating, you get into the car and take a nap.
Not a nap. I almost pass out. It was exhaustion for last 6 months of exhaustion and pressure. All of that just went away in the moment. And it is and I couldn't even call anybody. It was the middle of the day, so everybody in India was sleeping. My whole team was in India. Didn't call anybody, didn't do anything, just crashed.
The important lesson over here, for those who are right now maybe watching this and walking around with their pitches in their pocket or, trying to figure it out, you prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
Most probably you're not. I will give you that because the number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no. Hearing a no is not easy. It is what builds a very different level of character. It breaks your ego. You go in, you make a passionate pitch. You must buy this, what I'm telling you. Take my vision and whatever I'm trying to tell you. No. And you got to smile and you got to come out. And 2 hours later, go and make the pitch again and again
Okay. So, the space that you are in, and I'm going to come to Glance in just a bit, and related actually, in Mobi and Glance, is the challenge is also high because while you've had the first mover advantage, definitely, the moat is not high. The world figured it out, right? Internet on mobile, large platforms, advertising platforms. You're competing with some of the largest companies in the world.
Yes. And that's fine, by the way. So the way you want to think about this, there are only 15 large advertising platforms in the world. Advertising industry is close to $1 trillion economy. There will not be easily a 16th player coming or the 17th player coming. You're right. The top 2 or 3 players are really large and very powerful. But the way I think about this is if you take a fundamental innovative approach to some of these things and play the long game, it allows you to really build a very interesting moat in this business also, which today may not be as large as what these companies have put together, but the way this advertising ecosystem and the digital internet ecosystem is evolving, it is only a matter of time that you will also be a very formidable player.
No, fair enough. But okay, for example, who are some of your biggest competitors? A Google, a Meta, all also advertising platforms?
Yes.
So how do you stand a chance? I mean, I'm going to sound like some of your Silicon Valley early investors. A product company from India.
Yeah.
Standing a chance against these global giants.
But the best part is we're already standing a chance. That's the best part. We have gone after a global opportunity in the advertising space, and this is where we actually truly stand a chance. The thing that we did not have as an advertising company, which Google and Facebook have, which is a consumer business. They have a frontal consumer business, and at the back they have an advertising machinery. That's how they function.
Right.
With Glance, we actually have that consumer business also now. So therefore, you combine the power of the consumer business and the ad business, you become a holistic internet company. We have done that now. So I think the power of a global business, when you compete with the biggies, you truly come out with your own. And you have to have your own unique approach to building those kind of businesses.
Yeah, and you're competing globally, so there is a right to win there. You talked about Glance. Let's come to it and introduce our viewers to what that operation also is about. So as I understand it, using AI now to aid commerce. Why don't you tell us more?
Look, when the internet came 30 years ago, it changed the way we shop. It brought new shopping mechanisms with the likes of Amazon, etc. There's a new way which is coming, which is AI. With AI, the world has to change again. So back in December 2023, we built something as a prototype that I saw and thought that it would change the way the world shops. This was our version of Glance AI, which is a new way to shop using artificial intelligence. Currently, shopping is not an intelligent machine. Shopping, you as a consumer say, I want to buy this or I want to buy something else. Nobody is telling you intelligently to say, this is what you should buy. So first what we did is we trained a model of shopping on the world's shopping data. With generative AI, instead of showcasing the product just as a standalone product, let me put it with you. So we now put the product on you or around you in your spatial, space, and then you experience the product as if it's on you. So it is intelligent and it is generated both at the real time. And we feel with Glance AI, it is a ChatGPT moment for shopping.
Just off-field question, Naveen. A lot of times the commentary around innovators are, especially Indian innovators, what are you making to solve the problems of the country?
Yeah.
Okay, so this comment came up time and again when recently in your city, Bengaluru, roads were flooded, everything's collapsing, and they were like, listen, this is the home of all of the innovators. Ye khana fatafat bhej rahe hain. A lot of the products are there to aid consumerism, but what are they doing to solve real world problems, especially of the country that you are housed in?
Look, I think this is absolutely correct, by the way. If you think about technology, we build technology that is solving the world's problem right now. That is a much bigger level of problem solving that we are trying to do. We are creating technology that will change the way the world shops, the world would experience. Now, we're doing that from India. We're doing that from heart of Bangalore. Once you do that there, everybody around is building those kind of technologies. It's not been done before. That level of technology creation has not happened before. When you do these kind of things, amazing people stay back in your country and work on these hard problems. We eventually are going to take these kind of companies public in India over the next several years. Our own community, our country will benefit from this. Now, how does one solve the road problem in Bangalore, infrastructure problem in Bangalore, etc.? Somebody should solve it. And absolutely it should be solved. We get all pained by, the Bangalore traffic and everything. But I think we should also realize that if somebody in India, I fundamentally believe India should write the software on which the world should run. We have that level of power in our country. If you take the global powerhouses, right, the US and the China, in terms of what they have created, US creates software on which the world runs. China creates manufacturing products on which the world, mostly utilizes. We should going forward, we should create products on which the world also starts to run. That's our possibility in the next 10 to 15 years.
So we have the capability of doing it. Why don't we have, so this question comes often, why don't we have the next Google, the next Meta, the next NVIDIA, or even the DeepSeek?
Oh, we'll have it. It's only a matter of time. I think we're confusing two different things. When you try to compare a US technology evolution and a Chinese technology evolution, you should realize, firstly, the technology evolution in those countries has been happening for 30, 40 years.
Yeah.
For China, it's been happening for 30 years, the US 40 to 50 years. For us, it's only been 15 years. In the first 15 years, we've built amazing technologies that have truly changed the way the country functions right now. Now comes a time over the next several years where we can hopefully now also write software and build products that not only our own country uses, but it's used globally. What we have done with Glance AI is probably one of those, it's done for the first time. Just like when we became a unicorn, you were saying earlier, nobody knew what it meant. We also didn't know what it meant. Similarly, now when we create a global product that got launched in 140 countries, by the way, day before or last week, 140 countries. That's a scale at which nobody fathoms launching it, a product at. We have done that from India.
So, Naveen, I want to ask you this, and it's in a sense, a personal / professional question. How do you keep the enthusiasm and the passion up? Because you've also been a serial entrepreneur. You've also helped identify great ideas. We've had some of those products and brands and those people on our show, on The Disruptor as well. Razorpay, for example. So how do you keep up the passion for what you're doing? Because there's a couple of reasons people start businesses and grow big. One is that they want to get rich. That's already done for you. You want to make a successful product, already done. What is it that keeps you going and you feel you need to keep going?
Simple. We want to create technology that puts InMobi on the world map at a level at which it gets talked about alongside the likes of Google and Facebook and NVIDIA. That's the technology. That's our passion. That's what every InMobian is trying to do. To create technology, and that's what Glance AI has done. It has created a technology that has never been created before. I think it takes a lot to innovate, and innovate at a global scale, innovate for a global problem, in a way that the world functioning should change. We have tried to do that and done that, and the passion comes from the fact that the possibilities are so many in this world that it's not about getting rich, it's not about launching one product and being fine with it. It is about the possibility that exists in front of us that should excite not just me, everybody around. Our whole company, by the way. A large portion of our company has been with us for 10 plus years, large portion. They are equally excited about what we are doing today that they were 10 years ago. So it's not an individual phenomena. It is a phenomena of the company. Because innovation is a culture, not a thing to do once. And once you are innovating, you always feel very excited about, by the way, when you do innovation, you fail many times. So you have to be able to say, I'm trying, failing. Boom, here's a big success.
And then you don't know if you're going to have that moat. Is it going to continue to that level of success? Because things are changing so fast, especially with something like AI. Do you worry that how do you stay on top of an innovation which is changing at a speed that no one can understand right now?
You asked me something at the beginning. You said, hey, I think we talked something about conviction. As entrepreneurs, as innovators, we don't worry about what can go wrong. Glance AI is right now live with about 1 million users in beta. They are not engaging with the product. They are obsessed with it. They are generating commerce real time. Real-time generation of commerce was not a thing in the past. They are doing it today. And when you do see these kind of things, you see how the world reshapes itself because of your technology. That is a different level of excitement.
What is the change in trends or the way people shop that you will see because of this latest innovation that you're talking about?
In the past, trends, get created. Today, as users, you kind of follow a trend basis others' usage of products. Going forward, the trends will get created basis intelligence and basis what is great for you. So the trend will also become very personal, very individualistic. And I think that's where the world is headed. And by the way, that's going to cause changes in the way the supply chains will function, because in the past, the information from a trend to the production used to take a lot of time. Going forward, the intelligence of a change in trend or a new trend actually simultaneously passed both to the manufacturer and to the consumer.
So you're going to have shorter timelines, more personalization. Do you worry at all about privacy? In both the businesses, InMobi and Glance, I think privacy is on top of it, right? And this concern that technology, AI, whether you're serving personalized ads, that becomes a concern, or whether you have AI determine what you're going to wear based on your images.
Yes.
Is that something which is in mind?
It is not just in mind, it is paramount. Look, in the world that we live in, and it is paramount because if you don't solve for it, you don't exist as a business. These things are foundational now. They are not even to say, hey, is this it's core. So yes, it is solved at the get-go. No user information is ever released. No user information, it's all encrypted. Everything is sitting in the, the security levels are very high. All of these things are more or less resolved. They're not issues anymore.
Naveen, for people watching this, for entrepreneurs or wannabe entrepreneurs who have this fire to do something, but are looking for a problem to solve.
Yeah.
What is your advice to them? Where do you start to look for a problem to solve, and then you can find innovation?
I would say you can't go looking for a problem. You have to feel the problem. You have to feel something. Look, entrepreneurship is not a logical thing to do. You can't come in and say, oh, well, wait a second, let me go into my study and think of something and then come out. No, you have to feel it. You got to feel this to say, I think I should do this, whatever it may be. The thing to keep in mind is whether you choose a small problem or a big problem, the effort is exactly the same. So you might as well go for a big problem. Because, the chances of your success, if you choose something bigger, is actually higher. And the reason is, most people tend to solve a simple problem. For example, at Glance AI, we could have solved an image problem only. To say, hey, let me just create nice images for people. I can bet you would tell me 10 other applications that actually solve for the image problem. But we said, let's not just solve for, we will, along the way of solving the commerce problem, we will have to solve the image problem, which we did. We'll have to solve the intelligence of commerce problem, which is also what we did. We'll have to solve the shopping problem. We solved 3 problems, but we solved a much bigger problem. Back in 2008, InMobi was only India. Okay. One fine day we sat there and said, guys, let's build this into a global platform. It sounded absurd. Everyone in the board basically said, you're crazy. We agreed, but we went for it. Today, the reason why the company is so successful and so large is because we went and solved the really hard problem of building InMobi's ad platform across Asian markets, across Europe, across the United States. That is what I mean when you say, let's go solve the big problem.
So don't be afraid to bite off more than you can chew.
That is correct.
That's maybe where to start from. All right. Yes. So success mantras and much more from Naveen Tiwari. Thank you so much, Naveen, for joining us on the show today. This has been absolutely fabulous.
Thank you so much.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Thanks for staying with NDTV. You're watching the Friday edition of the World Report. I'm Arjun Samad Mahendran. Let's take a look at what's making headlines around the world. Pakistan's Prime Minister Shehbaz Sharif once again, viewers, has publicly admitted that Indian ballistic missiles indeed struck many targets inside Pakistan on the intervening night of May 9th and May 10th, with his army being caught off guard. According to Shehbaz Sharif, Pakistan was planning to attack India at 4:30 a.m. Viewers, this is just after their Fajr prayers, the morning Fajr prayers. But before that, New Delhi launched BrahMos missiles targeting many provinces in Pakistan, including an airport in Rawalpindi. Here's Shehbaz Sharif himself for you.
9th and 10th night, we decided to respond in a measured fashion to Indian aggression, and we had decided that at 4:30 in the morning after Fajr prayers, Pakistan armed forces, led very ably by our Field Marshal, Chief Army Staff sitting here, Syed Asim Munir, to teach a lesson to our enemy. But before that hour reached, India again launched missile attacks, BrahMos, and hit Pakistan's various provinces, including airport in Rawalpindi and other places.
According to reports, Hamas has said that the US plan for a ceasefire in Gaza fails to meet its core demands, but it will continue to study the proposals. Meanwhile, the White House has said on Thursday that Israel has signed off on US envoy Steve Witkoff's plan and that, in fact, it was waiting for a formal response from Hamas. The peace memorandum that Ukraine said it is expecting from Russia has in fact triggered differences between the two countries before their announced second round of negotiations scheduled for the 2nd of June. The two countries held their latest round of direct talks on the 16th of May. It was their first face-to-face negotiation since March 2022. In Istanbul, but the meeting ended without a ceasefire agreement. Meanwhile, Russian Foreign Ministry spokesperson Maria Zakharova said Tuesday that Moscow will send a draft peace memorandum to Kiev soon, which will outline the key principles of a potential settlement plan. Staying with Russia, where a top official praised North Korean troops for assisting President Vladimir Putin's military in the Ukraine war. Sergei Shoigu, Secretary of the Security Council of the Russian Federation, said the troops deployed by Pyongyang to Russia had fought valiantly in the Kursk region. Kremlin newswire TASS reported this on Thursday. A U.S. appeals court has reinstated many of President Donald Trump's tariffs. Now, this comes the day after another court, in fact, blocked them. The move puts a pause on a trade court's ruling that Trump, in fact, exceeded his authority in imposing his Liberation Day tariff regime, adding a jolt of legal chaos to the already uncertain surrounding Trump's global trade war. Now, Trump's advisors, meanwhile, who had condemned the tariff bloc as a judicial coup, celebrated the reprieve, but the possibility of the initial ruling being reinstated still weighs heavy on the White House. Despite the setback, however, Trump will likely be undeterred in his aim to rewrite the rules of global commerce in America's favor, as per many political experts.
The president's rationale for imposing these powerful tariffs was legally sound and grounded in common sense. President Trump correctly believes that America cannot function safely long-term if we are unable to scale advanced domestic manufacturing capacity, have our own secure critical supply chains, and our defense industrial base is dependent on foreign adversaries. 3 judges of the U.S. Court of International Trade disagreed and brazenly abused their judicial power to usurp the authority of President Trump to stop him from carrying out the mandate that the American people gave him.
Staying with the U.S., where Harvard University on Thursday, in fact, won another reprieve in its fight to keep enrolling international students. A U.S. judge extended a temporary block on the Donald Trump administration's plan to revoke Harvard's participation in student visa programs. Now, the move comes after the government said it would give the university 30 more days to contest the move. Here's more.
Today was graduation day for Harvard University, but it also marked another legal victory for the higher education institution. A judge in the US city of Boston banned the Trump administration from making changes to Harvard's admissions policy indefinitely. Arguing the university's case, the director of Harvard's Immigration Services said that the administration's plan to bar international students caused profound fear, concern and confusion among faculty and staff members. Ahead of the court hearing, the Trump administration backtracked on its foreign student policy, trying to diffuse the situation by issuing a letter giving Harvard 30 days to challenge the planned banning of international students. But the judge had other ideas, ruling the maintaining of a status quo, meaning that Harvard can continue to enroll international students. If President Trump's plan had come into effect, it would have affected around 7,000 Harvard students. That's more than a quarter of Harvard's students' population, who hail from 140 countries around the world, including around 800 students from India. No more international students would have been allowed to apply to Harvard, and the current students who'd been there would have had to transfer to another college or university. The Trump administration has accused Harvard of multiple wrongs over its refusal to implement government reforms. It's blamed the university of inciting pro-terrorist conduct, fostering anti-Semitism, taking away spots from American students, and colluding with the Chinese government. Nick Harper, NDTV, Washington.
Meanwhile, India is in the process of currently reviewing a U.S. federal court order that has blocked most of the sweeping tariffs announced by President Donald Trump last month. Persons privy to the development have in fact told NDTV this. Now, the Court of International Trade in its ruling said the White House cannot authorize the president to in fact unilaterally impose reciprocal tariffs on all trading partners by invoking an emergency law. Now, the development comes amid the ongoing trade talks between New Delhi and Washington. The negotiations are progressing well and the persons privy to this development have said, adding that a team of American officials will in fact be visiting New Delhi between the 5th and 6th of June. India's Ministry of External Affairs has urged Canada not to provide any political space to extremist pro-Khalistani elements advocating for violence and secession. Listen in.
Regarding pro-Khalistan elements, our position has been very consistent. Over several months and years now, we've conveyed our security concerns to the Canadian side, and we have also urged them not to give any political space to extremist elements, those who advocate violence and those who talk about secession or who talk about separatism. I hope that the Canadian side will take due note and will take due action against those who advocate anti-India agenda.
India and the European Union will conduct a joint naval exercise in the Indian Ocean from the 1st of June to the 3rd of June. The exercise will focus on advanced counter-piracy operations, interlopability, tactical maneuvers, and enhanced communication protocols, reflecting the growing maritime security cooperation between the two giants. Now, this is also in line with their shared commitment to a free, open, inclusive, and a rules-based maritime order in the Indo-Pacific region, the EU has said. It is underpinned by respect for territorial integrity and sovereignty, democracy, rule of law, freedom of navigation, and overflight, unimpeded lawful commerce and peaceful resolution of disputes in accordance with international law, notably the United Nations Convention on Law of the Sea, it said in a statement. Multiple conspiracy theories continue to swirl around the January 6 Capitol Hill riots more than 4 years later, but FBI Director Kash Patel has promised a definitive answer, in his words, to one of the most pressing questions about the nation's shattering event is coming. Listen in.
More importantly, people have had questions about January 6th and whether or not there were FBI sources, not agents, sources on the ground during January 6th. And I told you I would get you the definitive answer to that, and we have. And we are in the process, again, of working with our partners to divulge that information, and it is coming. And I will tell you this. The answer to that question will surprise and shock people because of what past FBI leaders have said about it.
Former FBI Director Chris Wray eventually admitted to Congress there were 26 FBI confidential human sources in around the Capitol January 6th, but not actual agents. Can you say that's true? Are there more than that? What you're learning from that?
I can say that that is definitely a piece of the truth. Why it took a ton of time for and questioning in Congress for the director to get that point is what I'm trying to eliminate from the FBI. If Congress asks you a question under oath, whether or not there were sources in around January 6th at the Capitol, you as the director of the FBI need to know that and not deflect and give a DC answer. You have to be prepared for that. And that's the answer we're giving. That's the answer Chris Wray should have given.
And eventually everybody's going to know the whole picture.
Yeah, because the American people deserve that. And look, no one's more frustrated than me. Remember, I was chief of staff of the Department of Defense on January 6th. We said that we were ready, and the president had previously authorized the National Guard to be there days in advance. I spent 2 years, a small fortune, grand juries, to testify to the truth. And what happens now, years later? We were right.
An American flag was hoisted outside of the long-shuttered U.S. ambassador's residence in Damascus in a sign of growing ties between Washington and the new Syrian government. In fact, the U.S. ambassador to Turkey, Tom Barrett, who has also been appointed special envoy to Syria, arrived to inaugurate the residence as per a Syrian state-run news agency. Shifting focus to Europe, Western Europe, in fact, where France will ban smoking in all outdoor places that can be frequented by children. Now, the ban will come into force or in effect on the 1st of July and will include beaches, parks, public gardens, outside schools, bus stops, and sports venues, you name it. Now, breaking the rules would incur a €135 fine, or close to around 12,000 Indian national rupees, $153, or of course, as I mentioned, around 13,000 Indian national rupees. Indian origin Republican leader Vivek Ramaswamy was viciously trolled as he made a long anniversary post with Dr. Apurva taking a journey down memory lane about, in fact, how they met each other, proposed and got married. However, amid growing tensions around the H-1B visa program in the US, the celebratory post was met with a series of racist and, in fact, anti-immigrant comments from ex-users. Apurva is that an American name? One angry comment read, "You're both going back to India," another one wrote, "Who's falling for this tour of let's pretend to be American?" A third user commented. Vivek Ramaswamy is meanwhile being viciously trolled. Faizan Zaki nearly threw away his opportunity to go from runner-up to champion at the Scripps National Spelling Bee with a shocking moment of overconfidence. Given a second chance, he seized the title of the best speller in the English language. Now, the 13-year-old from Allen, Texas, who lost in a lightning round tiebreaker last year, outlasted 8 other accomplished spellers to win the title on Thursday night. That's correct. Now, this also includes 2 that he led back into the competition after his own careless flub. Here's the report.
Hi, Faizan. So if you spell this next word correctly, we will declare you the champion of the historic 100th year of the Scripps National Spelling Bee. Now, let's all of us take a deep breath.
Yes.
And let's...
That did not help at all.
Bro.
Smile.
Well, a certain pacing would help to follow.
Yeah.
Okay. Your word is éclaircissement.
Éclaircissement. E-C-L-A-I-R-C-I-S-S-E-M-E-N-T. Éclaircissement.
Calm Liner. Oh my god, that was like, I'm definitely going to be having nightmares about that tonight. But other than that, I do regret like spending a lot of time on the spell off. Because I think I got like too over prepared because I did the practice when I got